Target of selling more cars this year due to a sharper than expected deterioration in China. So we watched that stock as well, Anna.
We were pretty evenly divided between the sectors going higher and lower in yesterday's session, but today does look as if it's going to be overall a pretty negative session for European equity markets, at least as we start things off this Friday morning. We will see where the day takes us. But the Stock 600 then, waiting for that to open. And I see the FTSE 100 is flat to positive right now, but doesn't look to have got quite into its stride. Although we are expecting that the FTSE is maybe somewhat resilient to the negativity around tech, and that seems to be the dominant theme coming to us from, yes, the US session of yesterday and the Asian session. So we're down by 0.2% on the Stock 600, but without many of these markets having opened up. So we're waiting for opening prices on the DAX, the AEX, the CAC 40, the IBEX. There we go. A tech weakness theme certainly signalled by the fact that the AEX is down by more than 1%. So we'll certainly keep an eye on ASML. Are we seeing any negativity there? And Tom, I know that this was one of the companies we've been focusing on a lot this week, with the numbers looking seemingly pretty good. The stock went higher, then eventually selling off and then bouncing again on the TSMC numbers, which in themselves didn't go down very well with investors. So a lot of complex themes, it seems, coming to us from the tech sector.
And the pain is certainly being felt in tech, and ASML is one of those names, currently down a little over 4%. So ASML, and that is a significant move lower, obviously, for a company with this kind of market weight. So across your sectors, ASML is a drag on tech. That is your biggest loser right now as a sector, currently down 1.8%. Basic Resources, which came under pressure yesterday as well, with the worst performing sector yesterday, Basic Resources continues to sell off, currently down 1.5%. We're seeing copper prices dropping, and that will be a factor there. Geopolitics, of course, and what's happening in the Strait of Hormuz continues arguably to be a factor. Food and beverage currently at the top of your list, up 1.2%. And so you're seeing about six sectors in positive territory, Anna. Majority seeing losses, and tech, the biggest downside coming through for that sector right now.
Yes, indeed. I'm just drawn to a red headline that picks up on a thing that we've been talking about earlier on in this week, of course. This is Japanese Prime Minister Takaichi talking about the GPIF, the GPIF, the pension fund, investing in Japanese assets and calling that a key initiative. So we'll be watching what this does to Japanese bond markets, seeing a bit of movement there, but we will see how that plays out. We've been tracking this, haven't we, all the way through the week, Tom, and getting really interesting steers as to whether they were going to actually rethink where the GPIF was going to invest or not. That was seen as something that could influence the yen as well, but this is taking us a little bit off topic of the European market open. But it just struck me as interesting that that red headline just dropped across these markets.
There's a modest move for the yen, 162.22, so up 0.1% versus the US dollar on the back of these comments. We have, of course, it is going to be a holiday in Japan as well. So we have seen historically, in recent history, that holidays in Japan have been used for intervention. Verbal intervention has not been working so well. So we'll see if they actually intervene. But this has been a key part of the signalling, is whether or not this giant pension fund will have greater exposure to Japanese assets.
Yeah, will there be more ability for this fund to buy JGBs? Will it be incentivised more to buy JGBs? We're actually seeing some buying at the short end of the JGB curve, it would seem, this morning. So we'll keep that under review. Let us turn back to what's happening on the European equity market picture then, because tech selling is certainly the big thing for European stocks this morning. We see that writ large over the AEX. We see that in some of the sector moves that Tom was just talking about. Let's talk to Beata Manthi, European equity strategy head over at Citi, with us on set this morning. Beata, nice to have you with us. So yes, you joined us on yet another down day, but let's not let that put us off, Beata? Because I know that you are constructive. Is this constructive on European stocks, constructive on stocks globally? You're constructive on stocks to some degree?
It's really constructive on global equities, but not over the next week or two, but over the next 6 to 12 months, right? And really what is happening right now in the market, we have to put it in the context of what has happened in the past few months. So global equities are 10% up in the first half of the year, despite all the negative news flow that we've had and potential economic shock via higher energy. And yet we are up, right? Major indices around the world are hitting or are close to all-time highs. So some pause was really inevitable. And of course, as we've been coming out of this economic potential pressures via higher oil, the market has started to hope for some broadening, the long-awaited broadening. Now, for that to happen, you need to have some rotations, and rotations tend to happen in quite a violent way sometimes, and this is what we are seeing right now. So, stepping away from the near-term volatility, the question is, over the next 6 to 12 months, do you want to own stocks? And the answer is most likely yes.
Okay, and so to see broadening then, Beata, do we have to see some reasons to be excited about things other than tech? But do we also have to see tech underperform then? Is that a feature of broadening? And we shouldn't necessarily see that as a huge negative then?
Yes, in theory, yes. So you should have two conditions. Number one, you need to see signs that from macro fundamental perspective, this broadening to other sectors is plausible. We are seeing a lot of that right now. And the other one is, of course, you should see tech being on pause, but not really selling off too much, not to drag the market down, right? So there is still a question mark how this is going to resolve in the very short term. But in terms of the signs of broadening, city economic surprise indices picking up everywhere. In Europe, actually, the strongest deltas, and historically, that correlates quite well with a relative outperformance of Europe, and that has been happening in the past few weeks for other reasons as well. And then what is the most encouraging, and that's the most encouraging, especially in Europe, but is happening around the world, is the dynamics, the latest dynamics in the earnings revisions. So the direction of the analyst forecasts, are they upgrading or are they downgrading? So earnings revisions actually have been picking up for a few weeks, but they've been picking up until recently via just upgrades to tech or commodities. So what we are seeing right now is interesting. So we have three dimensions of positivity. Number one, the levels, actually European area on Monday has hit almost all-time highs, so 30%, only a handful of times was it around these levels or higher. So from that perspective, you could say, well, maybe it's not going to go much higher as we are almost there. But there comes the second dimension, which is breadth. So 80% of sectors in Europe are seeing upgrades right now. And this broadening we are seeing in other sectors around the world, and it tends to be a good lead on outperformance of cyclicality over the next 3 to 6 months. And the final, very important, all of these upgrades have been happening against negative seasonal trends. So in pre-reporting season, 4 weeks into the reporting season, you should start seeing downgrades. We've been seeing big upgrades, and again, that's a good lead on upgrades continuing.
If what we're seeing in the Strait of Hormuz becomes the new normal, how does that change what we're seeing in terms of the earnings story and the macro data that is supporting that?
Well, it really depends what's the level of oil we are going to stabilize on, right? It's still a surplus market when it comes to oil around the world. So clearly, right now, the market has other problems to worry. If oil stays at around 80, 90, it's going to have some drag on the economic variables, right? So perhaps this city economic surprise indices are not going to go much higher. This is why the market is worried. But the question is also how long is going to last. So what do you mean by new normal, right? We won't have that happening forever, what is happening right now. So
yeah, that's interesting. Okay, so 85, 90, it's not great, but it's not a disaster. But corporates can live through that.
Correct.
They have that resilience. Which parts of the European equity space do you expect to see the most aggressive upgrades on earnings, given what you're seeing right now?
So the interesting thing is 80% of them are seeing upgrades, right? Still, the biggest upgrades are happening in tech, also around the world. This is also the reason why I am not convinced that the way forward is completely to step back from tech, right? Because perhaps tech becomes part of this broadening. It's not the only sector that you see you need to have in your portfolio, but it's part of cyclicality that you want to own. And in Europe, financials. These continue to see very, very strong upgrades. And to us, it continues to be an overweight, European banks. And it is one of these more interesting anti-AI trades, right? So it has reasons to move higher on its own, irrespective of what is happening in the AI trade.
Yeah, you don't feel quite so positive about UK stocks, or at least you, before this recent rally in oil prices had been put off, but partly because they've done so well because of the commodity exposure.
So one thing they've done so well, it's not a downgrade on its own, right? What we've done in the global portfolio, we've swapped the UK for Japan, which if you, over the next 6 months, if you see signs of broadening happens into cyclicality, and Japan has many cyclical drivers that could put higher. The UK will do well in this type of environment, but because it has so many defensive weighting, it's not going to outperform the other regions that are more cyclical. That's it, simple as that. But within the UK, we definitely like the cyclicality, right? So the UK banks, basic resources, which I know are getting a bit of a beating right now, but it is another broadening trade that potentially will start picking up again.
Beata, always a pleasure. Thank you for coming in this Friday. Beata Mante, Citi European Equity Strategy Head. Talking of individual equities or names to focus in on, let's bring you the core six right now. There's some movement in the defence space. There's some movement, of course, in luxury. So my eye is drawn to what's happening with Rheinmetall, currently down 1%. It's a different picture for other players within defence today. Luxury is a little softer, at least for LVMH, down 1.2%. Novo Nordisk in the drug space just off by 0.2%. But the biggest name that really stands out is ASML, given its market weight, the most valuable European company, currently down 3.9%. And that is despite, of course, earlier this week coming through with some very strong earnings. So some caution again for ASML and the impact being felt for that company as a result of the risk-off sentiment around semiconductors. Let's get a check on some of the other individual stocks on the move this Friday. Chloe Melly standing by. Chloe.
Good morning, Tom. So yeah, as you were mentioning, ASML is seeing a lot of weakness this morning, and it's really the same across that semiconductor sector, as we are seeing this broader chip sell-off as investors are really questioning whether those lofty valuations still make sense for those semiconductor companies. And so we are seeing ASM down the most there, more than 4.6%, but ASML, BE Semi, Infineon, we are very much in the red and quite deeply in the red across that semiconductor sector this morning. Interestingly, we're also in the red for Burberry, down almost 4%, despite actually having quite a positive update this morning and flagging particular strength in the US market. But perhaps the investors were expecting sales growth to come in ahead of expectations rather than just in line, and perhaps some of that cautious outlook around the geopolitical environment is also weighing on sentiment a little bit. And so we're down quite a bit actually there. We're also in the red for Volvo Cars, which has flagged that there was weakening demand, very weakening demand in China, and that it scrapped its sales growth target. As a result of that, it doesn't bode well, of course, for the rest of that car-making sector, which has been dealing with those higher costs and that higher competition from Chinese car makers as well. Analysts have said that this is going to be the lowest point for this latest quarter for Volvo Cars. So things might start to get better moving forward. Moving on to Nordic banks, and we are also in the red there after Swedbank actually reported a net interest income that was below expectations. And then Danske Bank, interestingly, it did boost its guidance, but we are also in the red there. And finally, let's end with one positive mover, and we've got Saab in the defense sector moving up, being in the green this morning after second quarter operating profit came in ahead of estimates, and it has really benefited from this continued demand for military capabilities. And so we're up almost 3% this morning for Saab.
Chloe, thank you. Chloe Melly with those stocks that are moving this morning. Coming up, something else that has been moving this week. Oil is heading for its biggest weekly advance since April as energy supplies continue to be disrupted by the Iran war. We will look at the outlook for crude next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to the Open Trade. We are 16 minutes into today's session. Across the European Stock 600, you're seeing losses of 0.6%. The most acute selling coming through for the tech sector. And we've seen that over in Asia and the US overnight as well. And the handoff, of course, to Europe, negative. So tech is selling off and pretty aggressively, currently down 2.2%, Anna.
Let's talk about the luxury sector because we've had some numbers out from the luxury space. Burberry, specifically, shares are lower after the British luxury fashion brand reported growing sales across all of the ranges for the first time in 3 years, with robust demand coming from the US. While sales are increasing, the industry as a whole has seen a major downturn exacerbated by the war in Iran, of course. Let's talk to our luxury reporter, Angelina Rascure, who has more details for us here. So there's sort of the war-related story here. There's the Burberry specific, and there's a lot of interesting regional breakdowns. Let's start with the latter then, Angelina. What's driving the stronger performance coming out of the US?
Hi, Anna. Indeed, I mean, basically all regions grew, and except for the Europe and the Middle East, but it was led by the US. The US, and we've seen yesterday with Richemont, Definitely the strongest region. I mean, typically, when it comes to luxury spending, you also have to look at equity markets. And if equity markets are strong, the U.S. consumers tend to spend more because they feel good about the future, about their savings, their investments, and therefore they spend more. So 12%, that was very strong for Burberry. However, on the flip side, and that's what's maybe driving the share to be down 4% now. Europe and the Middle East down. The region overall was down 3%. Had it not been for the conflict, it would have been down 1%. That's what they said. So it's not only impacting sales in the Middle East, which is a relatively tiny region for them, the Gulf, but it's also affecting tourism spend in Europe. So maybe that's what's. Maybe investors wanted something stronger from that side.
So that, yeah, they cited geopolitics, didn't they? Is there a broader read across for the luxury sector from that geopolitical hangover, from the constraints and the impact that we're seeing in the Middle East, and what this means for luxury?
I mean, yesterday we got results from Richemont and they were very good. But Richemont is in a different category because they sell essentially, Cartier and Van Cleef, they sell hard luxury, and typically in times of volatility, of uncertainty, we have a war 4 years ago. Also, we also had a war in Europe. We have a war in Europe. So people seem to appreciate putting their money and spending in gold products. And actually, Richemont did okay in the Middle East. Burberry, as we're seeing from the numbers, is still feeling a drag from the lack of spend or the lower spend from that region and those consumers. So we'll have to see for the rest of the sector. But also we have to remind ourselves that Burberry is in a turnaround phase. They appointed the CEO Joshua Schulman 2 years ago. He's modifying the strategy. He's putting front and center the outerwear category. And actually they did relatively well with the rainwear. They launched a campaign about portraits of an icon, about the trench coat. Beautiful portraits, black and white, with celebrities, British celebrities like Kate Moss. So that seems to have attracted customers. So he seems like he's doing the right things, but maybe this turnaround will take longer than expecting amid all this volatility and uncertainty.
Okay, Bloomberg's Angelina Rascouet, thank you for that update on the Burberry earnings and the broader read across as well. Let's switch focus from luxury to oil now. Oil is headed for its biggest weekly advance since April as the escalating conflict between the US and Iran disrupts supply chain flows from the Middle East. Investors now looking then to how a persistent disruption on oil supply will impact global energy markets. Let's get more from Bloomberg Asia energy reporter Stephen Stupczynski. Stephen, we were talking to Beata Mante from Citi earlier, and she said, look, it's all about, in terms of the impacts on corporates, it's all about the timing, how long this persists, and if we stay between 85 and 90, that's manageable. If this is the new normal, Stephen, what should we expect in terms of what we see in terms of oil flows and prices? Is this still an oversupplied market?
I think it depends on how you describe oversupplied, because I think if you look at different regions and different fuels, it paints a more nuanced picture. So in Asia, right now Asia is, at least for crude, somewhat oversupplied. Buyers had been preparing for this since March, and they had found replacements for the next few months. So they're basically covered. And when you look at what the Middle East has been offering, they've been having to offer their fuel at a deep discount. So that oversupply for crude barrels isn't really going away. There are fears that it could get tighter. There are different parts of the world that are tighter, but I think you also have to look at different parts of the barrel because all oil is not just crude oil. It's jet fuel, diesel, gasoline, and that's where you see a tighter market and higher prices and some of the fears, because there is refining capacity within the Persian Gulf, and that could be squeezed to a degree. I think one other thing that's being closely monitored is what happens with the Bab el-Mandeb Strait, which is that small waterway that gets through the Red Sea into Asia, and that's how Saudi Arabia has been able to reroute a lot of its oil through the East-West pipeline out of the Persian Gulf and into the Red Sea to its customers, about 7 million barrels per day. Now, if that were to be disrupted, which There are reports that Iranian officials have asked Houthi rebels to do so if their power infrastructure were hit in U.S. attacks. Then you start to see a bigger fear, because the market has been able to digest the Hormuz disruption to a degree because of the workarounds. You take away one of the workarounds, suddenly it is a much tougher situation later in the year for crude.
Stephen, thanks very much. Thanks for the update. Bloomberg's Stephen Stapczynski keeping across all of the energy-related stories and what the developments in the Middle East and indeed in Russia mean for those markets. Let's pivot to some U.S. politics. Tucker Carlson was once one of Donald Trump's most prominent allies. The U.S.-Israel war with Iran, however, marked a decisive split between the conservative commentator and the president. Carlson now argues Trump has abandoned his America First agenda and allowed Israel to drive U.S. foreign policy. He spoke to Michelle Hussein on the Michelle Hussein Show.
I'm seen as disloyal. First of all, loyalty goes two ways. Second, the loyalty that matters is the loyalty of our leaders to the country they represent, okay? And they're disloyal. Trump has been disloyal to the United States, totally disloyal to the United States. He cheated on the United States with a foreign power. So I'm not the one who's been disloyal.
President Trump, all by himself, without Benjamin Netanyahu by his side, has said the ceasefire is over. Isn't the more honest and direct thing to do hold him fully accountable for his actions as the most powerful man in the world?
I don't think he's the most powerful man in the world. I have held him directly accountable. It's his fault. He's the U.S. president. He was elected. That's his job. And a huge part of the job is resisting pressure from outside forces. I mean, many presidents have, to varying degrees, resisted, attempts to control them from outside. And he didn't. So he's weak.
Now, a White House official said no country or leader pressures President Trump to do anything, and he makes decisions based on what serves America's interests. You can watch the full episode of The Michelle Hussein Show on Bloomberg.com/videos or listen wherever you get your podcasts. For added context and to read Michelle's notes, visit Bloomberg.com/Michelle.
Okay, well, one thing that the president has been doing and has made a decision on is, number one, accusing China of interfering in the 2020 elections, of which the U.S. intelligence agencies say that there is little to no evidence at all of that, and also restricting visas for Chinese journalists in the U.S. And we've had a response from the Chinese foreign ministry to part of those decisions. China saying that it may take countermeasures, and we know that China does see reciprocity, I forget my words out, when it comes to things like journalist visas, and we've seen that in the past. So the Chinese journalists will be restricted on these decisions in the US to 90 days. In the US, you can imagine that China will reciprocate then, because that is typically what they have done. China rejecting the new US rules on journalist visas, according to this briefing from the Chinese Foreign Ministry, saying that the US should cancel the changes, also saying that China has never interfered in US elections.
Coming up on this program, we will discuss defense. We'll talk about defense tech, in fact, and innovation with the CEO of a European defense startup, Kraken Technology Group, now highly valued here in the UK. We'll talk about the future of defense spending in the UK, in Europe and beyond. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting, rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
This is the opening trade this Friday, and this is what it looks like 30 minutes into Friday's session. We are negative across European stocks, not by as much perhaps as we thought, which is interesting because US futures are still in negative territory, but there's a lot more tech exposure there, and that seems to be where the weakness is. Speaking of which, the FTSE 100 doesn't have so much of that, and so it's up by 0.2%. Also up with the oil price looking kind of firm as we go to the end of the week. The CAC 40 then and the Xetra DAX both down, Tom, by around 0.5% as we focus on the negativity around tech and a little beyond.
Yeah, it's not a rout that we're seeing in Europe. It was a rout, certainly in Asia. So you have about 318 stocks right now in Europe in negative territory. On the upside, you've got gains coming through for about 266 names. Volume's just a little lighter versus the 20-day average, just by 5% or so. Let's flip the board and have a look at some of the leaders today. In terms of that safe haven tilt, you're seeing beneficiaries within the tobacco space, dividend play. We've seen that yesterday as well. British American Tobacco then up pretty strongly today, up 3%. Volvo Trucks coming through with an earnings story that is seen as supportive and investors rewarding that stock right now, up 1%. And a very strong session as well for EQT over in Sweden. That stock rolling about 10% again on an earnings story there. Flip the board and have a look at what's on the downside. ASML, again, despite the fact that it came out on Wednesday with a strong set of numbers, post those numbers, you've seen this weakness, and that continues today. Broader ramifications, of course, of the sell-off in terms of the chip story. ASML is down 3.5%. ST Micro, also part of the same story, weaker by more than 5%. And Burberry coming through with some numbers suggesting there is strength in the US market, that maybe the turnaround story is improving, but nonetheless, not enough to satisfy investors, at least for now. That UK-listed stock currently down 5.3% annum.
Tom, here are some of the other stories that we are covering this morning. SpaceX shares fell in late trade as it scrubbed the latest test launch of its Starship rocket. CEO Elon Musk says some of the rocket's Raptor engines did not fire, triggering an automatic shutdown. He says the next attempt will probably happen early next week, with 2 of the engines to be replaced. The US has launched fresh strikes against Iran as hostilities across the Middle East continue to escalate and shipping traffic slumps in the critical Strait of Hormuz. Iran responded by attacking US bases in Kuwait, Jordan and Bahrain. The Kuwaiti armed forces said they intercepted 32 Iranian drones targeting, quote, vital institutions, with falling debris damaging residential areas. And over to Ukraine, where Volodymyr Zelensky is working to contain anger over the abrupt dismissal of Ukrainian Defense Minister Mikhailo Fedorov. Zelensky is now saying Fedorov remains a part of his team, even as Fedorov insists he has turned down the position as a presidential advisor, deepening a rift with the country's ruling elite. Fedorov's firing triggered street protests across the country and dismay among foreign allies, exposing tensions inside the Ukrainian military top.
Okay, well, let's stick with at least one angle on the military and what we're seeing in terms of autonomous warfare, because as warfare is reshaped by recent conflicts, both, of course, Ukraine and Iran, the defense industry is looking to innovation for the future. Our next guest is a former speedboat racer who spent years breaking records before starting a company to build boats without crews. That firm is now the latest European defense startup, worth north of $1 billion. We're joined now by Mal Kreis, CEO of Kraken Technology Group. Mal, good morning. Thank you for joining us. How would you characterize the state of demand for your products right now?
Good morning. Yeah, the market is getting getting very serious. We recently completed a $175 million Series B fundraise, supported and led by the Digital Transformation Capital Partners and a number of European backers, including the British Business Bank, the NATO Investment Fund, and Rheinmetall. And really the fundraise is a validation of our technology and operational capability. We are currently operational in two conflicts on two fronts, and I don't believe any other USV company can make that claim.
Can you give us a sense of the kind of contracts that you might be signing, the defense departments you're working with? What is US demand looking like? What is European and UK demand looking like? Are you will be and expecting to sign significant additional contracts in the months ahead?
Yeah, so we are currently on contracts within NATO Europe and multiple contracts within the US, including US SOCOM. And that demand is increasing exponentially and globally.
Good morning to you, Mal. So you have contracts in the US. It's interesting because there's a lot of focus on Europe supplying for Europe, and yet there are plenty of companies in the UK who will also supply to the US. What do you think about that sort of defense sovereignty conversation right now?
We are working very closely with the Royal Navy through the Beehive contract and the expansion of hybrid Navy. So we are close to the UK, obviously, but the way the platforms have been developed allows them to be completely interoperable. The architecture is open. It's following a similar path to what you've seen in the air in the Ukraine and other operational areas. And really, it means that the product is designed to be used anywhere and by anyone. It's more of a plug-and-play solution than a vertically integrated tech stack, which, of course, limits the ability to expand globally.
And you're talking there about the UK Navy. What do you make of the defence investment plan as it stands, Mal? And as we wait for a new leadership of the Labour government, what else needs to be done?
I think at the moment we have to wait and see. Obviously, a very clear statement of intent has been made, and now it's about execution. So whilst there is a transitional phase in the UK currently, I believe that this will all be completed very soon, and we look forward to participation in the Forward programme.
Mal, what can your boats do that legacy naval assets can't achieve? And what are the autonomous functions that they currently have and will have in the future?
So the five pillars around which Kraken were built were really high performance, low cost, the ability to rapidly scale, the ability to implement modular payloads, and essentially to make sure the platforms were reliable. And that is now winning through and is reflected by the orders. We are seeing a demand for mass sense and effect, the ability to interoperate between NATO partners and to repurpose the platforms through the use of modular payloads. Last week, we successfully deployed through airdrop, which means that we can now send these platforms anywhere in the world. And essentially what that gives the customer is disaggregated scale. So our current manufacturing rollout will be accelerated by this investment. Last week, the Chief Secretary opened a new 35,000 square foot manufacturing facility here in the UK for us, where we can now build up to 1,000 vessels a year across the UK and Germany. As we move into the second half of the year with funding in place, we will be standing up operational manufacturing facilities in the US, in the Baltics, in the Middle East, and in Asia Pacific.
Amal, why is it that you're able to produce these craft more cheaply than some of the bigger legacy defence players? Is it that they haven't turned their attention to uncrewed submarine vessels, or is there some other reason for this?
I believe it's a combination of automotive techniques. Many of my team originate from the automotive industry, which is about scale manufacturing. We keep the products simple. We keep the supply chains running, and I think the cost point as well. The fact that these are essentially attritable platforms means that you can buy scale and mass at a relatively efficient price point.
Now, what do you say to investors in terms of how you differentiate the product, the portfolio, and what you do as a team versus the likes of Anduril in the US or Helsing in Europe?
Well, as you may be aware, we are closely partnered with Anduril, and that partnership is growing exponentially. In Europe, there are limited numbers of companies operating in this space, but I think much of our success really comes to our heritage. We are out and out, through and through boat guys. We've been doing it for a long time at a very high level, and I think that the surface maritime domain is hard. You need to understand boats in order to be able to make a great product. And we have seen a number of companies come into this space and try and solve this problem with software alone. This is genuinely a hardware problem around which you can layer software and payloads and other capabilities on top. So we got the hardware right, and now we have full optionality in terms of where we go from here.
Okay, we'll continue to monitor the story then. Mal Crease, Kraken Technology Group CEO. Mal, thank you for your time. There's more coming up.
Yeah, absolutely. So that's the defence story this morning. Coming up, we'll talk to Claire Barkley, Chair of the Industrial Strategy Advisory Council, about the state of the UK industrial growth story as Andy Burnham heads to number 10 Downing Street over the next few days. That is next. This is Bloomberg.
would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the Opening Trade. We are almost 45 minutes into the Friday session. You are seeing some negativity across the equity space, down 0.3%, but not quite as bad as maybe had been suggested by the futures. US futures are pointing lower by 1.7%. Two key catalysts on the downside is the continuing sell-off in semiconductor stocks and AI-related names, and higher oil prices as well. Brent is currently trading up 0.5% at 84.63. Anna.
Let's turn to UK politics then. Tom, Bloomberg understands that the incoming UK Prime Minister Andy Burnham is preparing to announce new North Sea oil and gas drilling within days of taking office. He's also preparing to bring Thames Water into public control in some form. Andy Burnham is set to be confirmed as the next Labour Party leader today and as Prime Minister on Monday. Joining us now is Dame Claire Barclay, Chair of the Industrial Strategy Advisory Council. She's also Microsoft's Enterprise and Industry EMEA President. Claire, nice to have you here with us. Thank you for joining us. So, do you have any insight as to what the industrial strategy for this new version of the Labour government is going to look like? What should we look for, do you think?
Yeah, well, firstly, thank you for having me on what is an important day today, right, with Andy being announced as the Labour leader, and obviously will be announced as Prime Minister on Monday. I think most importantly, it's just such a critical time for the UK for growth. And I think from some of the mission and vision that Andy, the future Prime Minister, has set out, he does really believe in growth across the country, and making sure that is distributed across all the postcodes using his catchphrase. So I think that's where the focus is going to be, and obviously as part of the industrial strategy chair, that's where we're focused in making sure that we support that.
Okay, and so the industrial strategy then backs 8 sectors. We'll see.
That's right.
Whether that's the same sectors that Andy Burnham, as leader of the Labour Party, wants to back. But I'm sure there'll be some continuity because they look like to some degree the sectors of the future, I suppose. How does that fit with his city regions focus then? Are we going to be back to enterprise zones and regional development agencies and all the things that we've studied in the 80s and 90s to see if they work?
Yeah, the 8 sectors have been picked, as you said, because that's where growth comes from in the country. It's also, if done well, will contribute to well-paid jobs, right? Which is exactly what the mission for the Prime Minister that he's laid out. So I expect there to be continuity. Of course, there'll be tweaks. Every new leader that comes in does that. And actually, the place interjection that you've made reference to is also a really important part of the industrial strategy. London is a very central economic hub, as you will well know, and there's a lot of regional disparity in the UK, and so I think making sure that we get the other counties across the UK growing in a more effective way could unlock something like 47 billion if you've got the next 8 cities growing at a more rapid rate. You've obviously seen the work that Andy Burnham has initiated in Manchester, and actually taking the learnings from what we've done in Manchester, unlocking that for other places around the UK is really what's going to drive future growth and good jobs.
Concentration works, though, doesn't it? If we look at Silicon Valley, that's an example of where concentration of talent, of capital, of innovation, of startups and mega caps proves incredibly globally beaten success, and you know that because you work for one of them.
I do. Yeah.
So what's wrong with concentration? What's wrong with leaning into London?
Yeah, I think there's nothing wrong with the success that we have in London. I think if you compare that to other European countries in particular, there's massive concentration in London, which, of course, to your point, we have to continue that growth and innovation, particularly for the tech sector, for the scale-ups, for private equity businesses, etc. But I think if we can take some of the learnings from Manchester and think about how to scale that to sort of other cities in the north and other locations, then that would increase the growth. And if you take the 8 industrial sectors that we have and think about the intersection of place, like clean energy in the northeast, you think about military and drone innovation down in the southwest. You think about agri-tech in Wales. So I think if you can try and think of the intersection of both the industrial strategy plus the place, then we can have the best of both worlds, right?
With your two hats on, industrial strategy and tech, what would you say is a priority for the tech sector right now, the tech ecosystem? What should be top of the in tray when it comes to that sector for the incoming Prime Minister?
I mean, the good news for the UK is outside of US and China, the UK and London in particular is an absolute epicenter for the tech innovation. We've got some of the best scale-ups. We've got the universities. We've got all of the research. The things that need to be unlocked, more access to finance, more access to skills to enable businesses to scale up. There's still too many businesses getting their funding from US, Singapore, and others, and we need to make sure that we keep the businesses here and we help them grow and scale.
Claire, you mentioned one of the 8 sectors, clean energy, the clean energy industry, and you flagged the northeast. We've got some reporting from our colleagues that suggests that Andy Burnham might be about to give the okay to oil and gas drilling in the North Sea to some degree. We will wait to see if there's any details there. The conversation often becomes quite polarised between one or the other. Should the clean energy industry take any message from that or not?
No, I mean, I think there's, again, it's one of the priority growth sectors. There's huge growth opportunity and innovation that's coming from that sector. I think this is always a balance, and if you think about some of the geopolitical things that are going on, I think they're trying to look at what the balance is, but clearly that's the government's decision to make. So.
Yeah.
What do you make of proposals to take Thames Water into public ownership? Do we get more? It seems like this is an incoming Prime Minister who wants to be more assertive in terms of public ownership.
Yeah,
is that something that is broadly welcomed when it comes to strategic assets? Has that shifted?
Yeah, I mean that's not. I mean, again, I think for the incoming Prime Minister, he's going to have to make those decisions. But I think it's well reported some of the challenges that Thames Water is facing, and obviously behind that is jobs. Clearly, water is a critical infrastructure for the UK, and so we have to make sure that that's secure.
Yeah, advanced manufacturing is another area of focus, I know, for your strategy. Do we have skills shortages in that area? Is that something that holds back, having been, at the forefront of manufacturing many years ago, and still with a manufacturing base, but really importing a lot of manufactured goods now? I mean, do we have skills shortages in some of the areas that you're trying to build out?
Yeah, and I think if you think about kind of some of the regional city focus that we talked about, I think making sure that you have the right intersection of the industrial strategy and the place, and that you've got the provision of skills for good jobs. I think if I go back to some of the learnings from Manchester, the intersection of all of that is what's driven growth in Manchester. And so I think a very clear focus on the jobs plans as part of the industrial strategy across all of the 8 priority sectors is going to be critical, including advanced manufacturing.
For the international audience, then, Claire, what is it about Manchester and the success there, leaving aside the politics and what that's done for his profile, but what is it about that, what can we actually see in the evidence as the success that he then wants to take nationally?
Yeah, well, in fact, the Industrial Strategy Advisory Council is about to publish a report exactly on this. You can kind of look out for that. But I think there is a combination of things. There is an enormous amount of collaboration between government, academia, business. So they bring all of those. So there's a great level of collaboration that comes on. And I think as a result of that, they matched skills requirements to the business needs. They obviously had in-win investment as well, so they were able to attract a large amount of FDI. You had large businesses like the BBC and others relocating to there, and so you think of all of that. So I think there are. The takeaway from it is it's about taking the very best of the assets that you've got and then building a really strong partnership between business, skills and capability in order to do that.
Claire, thank you very much indeed for coming in. Really important insights as we count down, of course, to the incoming Prime Minister taking that role on Monday. Claire Barclay, Chair of the UK Government's Industrial Strategy Advisory Council. Let's bring in Bloomberg Markets Today editor Morwenna Coniam now for another take in a market's view on what is happening in the UK. Morwenna, we're seeing gilts gaining today, so yields are down, despite the fact that oil prices are up about 12%, 11 or 12% by the end of this week, and we know that as a factor in terms of the movements around gilts. We do have the politics, of course, and change at the top. How are you thinking about UK assets? What's priced in? What's not priced in? What's kind of standing out to you at this point?
I think the obvious thing is that it's going to be no surprise that Andy Burnham is going to be Prime Minister next week, and that has been priced in for some time. You know, the bond market was a little nervous about that at the beginning. He then backpedaled on some comments about not wanting to be in hot to the bond market. So in some ways, we've seen a relative period of stability, and the volatility that we have seen has been very much macro-driven. It's been very much driven by geopolitics, and as you mentioned today, you know, oil prices aren't actually having that much impact, but that is something that's really been the driving force. I think as we get more details about what Andy Burnham's premiership may look like, we may start to see a bit more movement, because there is so much uncertainty and there's so much that has been unknown. In some ways, maybe people have just been biding their time, waiting to see. There's a certain amount of risk that's been priced in ever since it became clear that perhaps Keir Starmer would not be lasting through the year. So I think there's a lot of wait and see to be there. And what we have, you know, we've seen the pound strengthening, but that, again, it's not necessarily connected to domestic politics, except for a little bit of relief every time things maybe aren't going to be as worrying as people think.
Yeah, just briefly, we're still waiting for confirmation, aren't we, about a Chancellor? We're waiting for all the positions to be filled, and of course that comes after he's becomes the Prime Minister. But the Chancellor news, there are some attributed that to the pound, and others said no, it wasn't really about that.
Exactly. I mean, there's definitely a lot of other factors going on. People have pointed out that sort of options were leveraged already. We've also had to look at what's happening with the dollar, which has really been driving a lot of currencies. And so I think that there's still quite a lot to see what happens there. Certainly, as the currency does tend to be a lightning rod for political instability. But so far, I don't think we have enough details for that to be a very clear reaction. But as soon as a policy is announced that the market doesn't like, I suspect we will see some.
We will know about it. Morwenna, thank you very much. Morwenna Coniam will be covering it on the blog, of course. Thank you very much for that. Well, Tom, that is it for the end of this programme. Time for us to look ahead to the weekend.
You're off to the movies.
Everybody else has the rest of their work day to deal with, but we're almost done. Yes, I am off to see The Odyssey, because, you know, real life is not full of drama enough that you need an epic.
96% on Rotten Tomatoes.
That sounds high.
96%. It's had amazing reviews.
Will you be tuning in for the third place playoff in the World Cup?
Do you know, I'm really torn on that, but I will be supporting Spain in the final.
In the final.
As I imagine many English fans will be. That's 8 p.m, of course,
be a popular
on
view
Sunday.
In England. That is it for the opening trade. The Pulse is up next. Have a good weekend, everybody. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Investors rotate away from technology stocks after their blistering rally this year, with Netflix and SpaceX also weighing on risk sentiment. China denies allegations from Donald Trump of election meddling as the U.S. president turns his attention to the midterms. Plus, Bloomberg understands that Andy Burnham will signal support for North Sea drilling and nationalized water within days of becoming prime minister. So there is quite a lot going on. Happy Friday, everyone. We got through to the week. Now, we're seeing the sell-off in chip makers. That seems to be gathering pace. Again, traders seem to be rushing to exit positions in stocks that have fueled this year's rally. Sentiment also hit by another day of attacks and counterstrikes in the Middle East. We also focus firmly on the UK with a big look, of course, at some of the asset classes, given Andy Burnham will become leader of the Labour Party today and then Prime Minister on Monday. So European stocks and technology down 2.5% overall. It is really these indices in Europe that are very technologically rich that are seeing the most pressure, and you can see the CAC 40 and the DAX with a bit of pressure. Now, SpaceX shares lower after the company said it's delaying the launch of its Starship rocket over engine failure. So you can see pre-market SpaceX down 4%. Netflix shares also lower after missing estimates. You can see pre-market Netflix also getting a little bit of a slamming, down 8.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, in a moment, we'll be joined by John Bilton from JP Morgan Asset Management. But first, let's also bring you up to speed as the latest on tech as the chip sell-off is deepening. We're joined by Shona Ghosh, our EMEA tech editor, and Matt Bloxham, senior strategist with Bloomberg Intelligence. So thank you both for joining us. Matt, let's start with you because SpaceX shares falling pre-market after this planned launch of Starship mission was scrubbed. So how big of a setback is this?
It's definitely a setback. I think at this point it's a small one. So, just to put it in context, Starship is the next generation rocket launch platform. Will take over eventually from Falcon 9, which is their workhorse. It has at least 5 times the capacity of Falcon 9, and it's central to SpaceX's big plans to grow revenue and expand into AI in a really big way, because they want to create this orbital data center network, and they can only do that if they've got Starship as a kind of reusable launch platform. So it looks like it was just a bit of a small glitch with the rockets. Not all of them fired, and that they'll kind of get it off the ground in a few days. It's going to have a number of version 3 satellites in it, which is the next generation of their Starlink satellite, and that's a kind of precursor to the technology they'll think of using for the orbital data center. So there's a lot riding on this mission. I think it eventually takes off and goes well, then I think actually it'll end up being a positive catalyst for the shares, because it will demonstrate that they're taking these steps forward towards this kind of vision they've got for the future.
Okay, so that's SpaceX. I mean, Netflix got battered, actually, after earnings overnight. What were your main key takeaways?
Yeah, a few things underpinning that. So, the broader picture is that the story is artificial intelligence. Obviously, investors swing here and there in terms of sentiment there, but AI has implications for the entertainment and content sector, so that's one facet. 2 is that, we've had the World Cup. People aren't really necessarily watching a ton of Netflix, especially in the UK, until this week perhaps, but, Netflix isn't necessarily known for having a ton of live entertainment sports on its platform. I think we'll see that shift. And then finally, Netflix has historically been pretty transparent about user data, the number of subscribers it's got, its growth, and particularly engagement. There have been signs that engagement is falling, and yesterday Netflix said, actually, we're going to reduce the amount of information we give to investors around engagement. Understandably, it got punished for that.
Yeah, investors don't like that. Also, we had a bit of a hiccup at Google, which has delayed the new version of Gemini. So, I mean, when you look at also what President Xi is saying on AI progress, should Silicon Valley be worried?
I think Silicon Valley already is worried, yeah. So the big thing that China has to offer in terms of frontier AI is, one, how quickly they're able to catch up with the cutting edge of technology, and even really if it matters to be on the absolute cutting edge. Like, your average person doesn't need the absolute top of the line model. China is able to offer these alternative, what they call open weight models, so slightly sort of less closed kind of technology, for much cheaper than the OpenAIs and the Anthropics. So that's likely in time to cut into their bottom lines, and these companies aren't even public yet, so this has implications for revenue. So yes, I think China's progress is definitely a worry, even as these companies all vie amongst themselves to stay at the cutting edge.
Yes, so there are plenty of things to worry about. Is there something else underpinning the sell-off?
And you mean generally in the tech? I mean, I think there's a bunch of things going on here. I think in some of the Asian markets, there's like a technical element here. You've got these single stock leverage ETFs, which have, I think, magnified some of the kind of sell-off pressure. And I think valuations had run up a lot, share prices run up a lot, and perhaps got a bit ahead of where the fundamentals are right now. And I think, really what we've seen in the recent earnings, although they've been pretty robust, from Samsung, TSMC, SK Hynix, there's not been an incremental leg of kind of fundamental positive news. And so when you've got stocks priced to some degree to perfection, without that incremental catalyst, then you start to kind of run out momentum. There's also a lot of chat about whether the AI story is as robust as the share prices might suggest. So, for example, token maxing, there's a lot of enterprise out there struggling with budgets and whether they should start to kind of manage better how they're spending on AI. So I think that is also kind of a big factor going on that's kind of causing people to think, hey, we need another kind of tangible positive to push these shares higher, and that's, I think, why we're seeing some rebalancing.
Okay, thank you both, Shona and Matt. There, Shona Ghosh, our EMEA tech editor, and Matt Bloxham from Bloomberg Intelligence. So earnings season kicking off on a strong note, but as we've been hearing, it's all the tech that's being put under pressure today. So joining us now is John Bilton, Global Head of Strategic Research for Multi-Asset Solutions at JP Morgan Asset Management. John, so good to have you. And on a day where actually, I mean, there are days like this where you see a bit of a sell-off because people worry about tech. Usually it bounces back, but could it be different this time?
Well, you know, we've been living with this for more than a year, haven't we? This hyperscaler hyperbole seems to cut both ways. It's either driving the market up or it's driving it down, and there seems to be very little in between. But if we should sort of pare it back a little bit, let's look at what's happened under the surface. One of the things that really interests me is some of these chip makers. If you look at the Philadelphia Semiconductor Index, it's just edging in towards technical bear market territory. It looks pretty bad. But actually, if we look at what's happened to valuations, they've dropped by a quarter, while the index has dropped by 20%. The only way that happens is if earnings are continuing to go up. So what we're seeing is that earnings are coming in, but for some reason the stocks aren't getting supported. What seems to be going on really is that we're seeing this move away from momentum towards something where things are a little bit cheaper. These stocks have got expensive. But crucially, dig into those earnings reports and what do you see? Commitments to faster growth, more capex, and of course, when you've got a situation where we're beginning to realize that AI is an industry, not a service, and we've got to pay to build it, then all of a sudden, investors are taking a different lens, and rightly so. And I think that's what's going on at the moment.
John, what part of the market do you still want to be invested in? Because to Shona's good point, I mean, not everyone needs a Ferrari, right? You don't need the latest model. You could have something which is cheaper, which companies can integrate just as well.
Well, I think there's an element of that going on already. We've seen some of the smaller cap index in the US, for instance, this year has really accelerated. And some of the biggest names there, of course, were very sort of geared to sort of chips, to the upper end of that value chain. And they're now beginning to rebalance into the bigger indices. So I think we are still seeing that large cap leadership because there's so much capital needing to be put to work that I think you need to have the borrowing capacity. Yeah, touch of indigestion at the moment because of some of the big bond issues, but ultimately the cash flows look strong, the earnings forecasts look good, and valuations are simply getting cheaper. Sooner or later, these momentum stocks are going to end up being value stocks.
What happens for European tech?
So I think that's an interesting one. I mean, Europe has got an interesting position here. As we build an industry out, obviously there are, industry champions here. There's also,
But in Europe, or are they kind of they're more the enterprise, right? The ones that take the really good stuff and integrate.
There's a bit of both. There's a bit of the machinery, the bit of the end users. I mean, the idea, we saw this at the beginning of the year, right? The idea enterprise software is dead. Enterprise software probably isn't dead. It's just having to rethink and adapt to a new reality. And I think what it does is it will force Europe to raise its game, as Europe has an ability to do, but there are industry leaders in Europe. So Europe's cheap at the moment. It's cheapened up meaningfully. It's where people go second string to think about broadening out diversification in their tech basket. And that matters, because if you look at the chip makers in the emerging market basket, the big three names are getting on for being a third of the market capitalization. We need the diversification. So I think Europe does get caught up with that as well.
Earnings overall seem pretty strong. I know we're just at the beginning.
Yeah.
But does it defy almost, the concerns we have on the economy in a way that makes you a little bit wary?
Not really, no, because I think what we're not seeing is exuberance from particularly households. We've seen households having to adapt. If we break apart what's been going on in the retail sales data in the US, households have begun to drop their volume of expenditure on gasoline. So, some of the concerns we had about that crowding out other spending hasn't really happened. We are seeing productivity pick up, which means that we can absorb a little bit more growth in real incomes. Employment is good. So consumers are kind of a little bit grouchy.
Yeah.
But, they're generally well protected. So a lot of capital going into the market, decent amount of fiscal spending. We believe some big promise from productivity gains into the future, and a consumer who's not exuberant doesn't feel like the mix for the blow-off top in the cycle quite just yet.
But John, when you look at the U.S., how much is actually, stocks at record highs filtering through the consumer?
Well, there's always going to be a little bit of that. There's going to be a wealth effect. When the index is up, of course, the upper income brackets spend. They feel happier to spend. Yeah. But the thing is, there is, to our mind, there's been a cheapening up of the index because the earnings are coming through. S&P 500 peaked at around 22.5 times. It's around 20.5 times now. A lot of that driven because the hyperscalers, the Mag 7, the big chip names have seen a re-rating. But the earnings are coming through. We are seeing the financials do better because we've got deal activity, we've got general economic growth underpinning that. So as a result, it looks like an economy which is moving along. But make no mistake, it has moved to a part of the cycle where it's driven by spending, investment, and by productivity. And that means with that little bit less reliance on the consumer, quite rightly, investors want to know how their money's being spent and whether it is going to drive positive return on capital.
We'll talk about inflation and the Fed in a second, but is there a part of the world away from the U.S. that you want to be invested in more? And is it emerging markets? They've had a good year.
They have. Well, you know, and we've spoken many times before, and I'm often a little bit dour on my own home nation, but you know, right now it just feels, if we look at the UK, actually it's immunised from some of this volatility in the tech space. You know, what was an Achilles heel when the market was racing upside? Maybe not so much now. It's geared to oil. But then the gilt market, second worst performer of the majors compared to, you know, with JGBs being the worst year to date. But we're just about to get more information. We've been worried about political instability, and now we're going to get some certainty. Could it be the time when gilts actually have a little bit of a run here relative to other fixed income markets?
John, I have many questions about what you think, you know, the new Prime Minister, but also the new Chancellor could put in place. We'll get back to that in a second. John Bilton, Global Head of Strategic Research for Multi-Asset Solutions at JP Morgan Asset Management. Now, coming up, China denies allegations of election meddling from the U.S. president. We discuss what the story means for foreign diplomacy, and, of course, we discuss what it means for the U.S. midterm elections. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm seen as disloyal. Disloyal? First of all, loyalty goes 2 ways. Second, the loyalty that matters is the loyalty of our leaders to the country they represent, okay? And they're disloyal. Trump has been disloyal to the United States, totally disloyal to the United States. He cheated on the United States with a foreign power. So I'm not the one who's been disloyal.
President Trump, all by himself, without Benjamin Netanyahu by his side, has said the ceasefire is over. Isn't the more honest and direct thing to do hold him fully accountable for his actions as the most powerful man in the world?
I don't think he's the most powerful man in the world. I have held him directly accountable. It's his fault. He's the U.S. president. He was elected. That's his job. And a huge part of the job is resisting pressure from outside forces. I mean, many presidents have, to varying degrees, resisted, you know, attempts to control them from outside. And he didn't. So he's weak.
Tucker Carlson there, who was one of Donald Trump's most prominent allies, and no more. A White House official said no country or leader pressures President Trump to do anything, and he makes decisions based on what serves America's interests. Well, you can watch the full episode of the Michelle Hussein Show on Bloomberg.com/videos, or also listen wherever you get your podcasts. It's a really interesting listening, and it's out today. Now, meanwhile, Donald Trump under pressure ahead of the U.S. midterms. Of course, the president is accusing China of interfering with the 2020 U.S. elections. Now, in a primetime address, he repeated unsubstantiated claims that the election was stolen and raised doubts about security of this year's midterms.
The cover-up of this colossal security breach is even more disturbing in light of the additional information showing that China engaged in other election-related activities to undermine my first administration and our 2020 campaign. They did not want, and they just didn't want it. They fought like hell not to have it, Donald Trump, to win.
Well, China denies the allegations and says it will never interfere in the presidential elections of the U.S. Let's bring in Roz Matheson, Bloomberg's chief Asia correspondent. Good morning, Roz. So is this about China, or is it about U.S. midterms, and how could it impact relations between the two countries?
Well, it does come at a delicate time in the relationship. Xi Jinping is due to visit the U.S. in a couple of months, and obviously Donald Trump went to China earlier this year, and the goal behind all of that was to put some kind of floor under the relationship, at least when it comes to trade, to avoid that deteriorating further. And it comes in a clutch of other announcements. We've got tightenings of rules around visas for foreign journalists, particularly Chinese journalists, tightening of the time limits around student visas affecting Chinese students further potentially. And is China happy, or Xi Jinping happy, that Donald Trump raises this in a prime time announcement so forcefully? Probably not, but also they can see, no doubt, that this is aimed very much at the US audience. This is about redirecting ahead of the midterm elections in the US at a time the US economy is obviously facing headwinds from Donald Trump's conflict in the Middle East and other factors as well, and trying to push this narrative again around election security going into the midterm elections. And they'll probably see that really for what it is. But obviously, you know, anything like this can come at a delicate time for the China-US relationship, and it won't please Beijing that he raised it in such a fashion.
Roz, meanwhile, Trump's media company wants traders and investors to pay for fast access to his posts on Truth Social. So I've never seen anything quite like this. Does his blurring of politics and business have any impact on the U.S. midterms?
There's a lot we don't know about this yet. We don't know what they're going to charge from Trump Media. We don't know. They say they've got companies who are interested. We don't know who they are, when this might start. But as you say, that kind of millisecond advantage potentially for algorithmic trading companies to essentially make money off what Donald Trump is saying. And it's really, again, as you say, moving towards that idea of monetizing what Donald Trump as president is saying for Donald Trump, the businessmen, and where those lines begin and where they end. But will that really resonate with US voters? I mean, US voters are already pretty set on how they feel about that question. And obviously it's been a narrative through this administration already. Are they more concerned when it comes down to it, when it comes to midterm votes around things again like the US economy, the state of the economy, the state of jobs, the outlook for inflation? And that's obviously where Donald Trump is showing some vulnerability. Will they go and vote on the day about this issue? Probably not, because again, it just continues that narrative again that we're seeing, the blurring of the lines between Donald Trump, the politician, and Trump and co. in terms of his business.
Roz, thank you so much. Rosalind Matheson there, Bloomberg's chief Asia correspondent. Now, staying with the U.S., softer U.S. inflation has eased expectations of an immediate Fed rate hike as Middle East tensions continue to drive oil prices. Let's return to John Bilton from J.P. Morgan Asset Management. John, in loss actually a couple of minutes, the NASDAQ futures extended their losses to 2%. And then if you look at the U.S.-Iran, I mean, we're in the sixth day of clashes, and there's more fears on the markets that this doesn't go away. How do you see this developing, and what does it mean for inflation?
Yeah, so I think first and foremost, if we pick apart the inflation numbers that came through on Tuesday, Wednesday this week, then actually we're seeing that inflation pressures from things like services, et cetera, are beginning to ease. We're not seeing a great deal in terms of wage inflation, and as mentioned a bit earlier, we're pretty constructive on where productivity goes, which gives that little bit more room to absorb, wage costs. So when you look at the the drivers, of core inflation, they're all moving in the right direction. no doubt, we all want to see the Hormuz issues, put to bed and a line drawn under them. But I think markets are taking them in their stride at the moment. Yeah, we've got the Strategic Petroleum Reserve is down at its lowest levels. We know in Europe we're running about 50% gas storage capacity against where we'd normally about 2/3. So yes, there are tensions there, but the reserves do exist for a reason. So,
John, I'm surprised. I mean, I'm surprised actually at how the markets have reacted so far. So I don't know if it was our analysis collectively that was wrong because we thought it'd have a bigger impact. So did we misunderstand the reserves that they had or the trade routes that they could take?
Well, I think that that's an element of it. Also the energy intensity of industry these days. It has come down. Obviously, notwithstanding data centers, as we build that out, that may bring it back up. But the immediate comparisons that got made at the start of the crisis with 1970s and the industrial chain and inevitable stagflation were probably wide of the mark because of how the economy is constructed today. Also, if we think about what the Fed have done, what the ECB have done, to some degree, they'd probably gotten to the easier end of where they needed to be. Was this a reason to be able to nudge rates back up to what they perceive as being sensible neutral territory? And that may well be what's happened here. In terms of where we go from here, don't forget that when gasoline prices go up, and Rosalind just said exactly the same thing. The US voter cares about gas prices, cares about jobs, cares about food prices. If those go up, that slows activity down, which ultimately does have a second order effect into core inflation. So I think the Fed are smart enough to be able to separate out what could be a short-term move in prices from oil versus what's actually happening beneath the surface. And we feel comfortable that inflation trajectory at the moment is still continuing to point to the downside.
So what are you expecting from the Fed? Kevin Warsh, it's like a masterclass in diplomacy.
It's amazing,
not saying much, but actually also, I guess he's just building up credibility at the moment.
Well, I think there's two things going on here because inflation is more volatile. When inflation's volatile, term risk premium's a bit higher, curves remain a bit steeper. If we had a situation where bond yields were coming down at the back end and we were getting cash rates down, financial conditions ease, you've got that kind of go-go injection into the economy. But the back end's staying up. So those financial conditions aren't tightening. The market is doing some of Kevin Warsh's work for him, and he's got the opportunity, I think, to better build his credibility in a sensible way. Hawkish talk and probably a little bit more of a sitting on hands when it comes to rate decisions. So we don't think that there is necessarily a slam dunk for a rate hike this year.
I'm still gutted about England and the football team, but you're quite optimistic about what the new Prime Minister will do.
Well, I think in large part because we in the UK have just had a prolonged period of political uncertainty. If you look at what's happened, we've got a relatively soft economy, relatively soft job market, yet leaving aside the JGB, the 10-year gilt has had one of the worst performances this year to date. Certainly, it's now pricing just shy of 5%. It went through 5% yesterday. There's a lot of expectation that the Bank of England will hike. Yet, the reality is, some of that has got to be a little bit of uncertainty premium. What happens next? If that gets removed, the gilts could actually have a reasonable repricing.
But is there a risk or, an opportunity, whatever you want to call it, for the Prime Minister to go to elections? And does that not bring, again, the markets back in focus?
Well, I think, again, you've got to see what actually happens. It strikes me that the first objectives that seem to be being pushed through at the moment are to try and actually get some party unity. And the fact that I think it was, correct me if I'm wrong, 370 or so of the parliamentarians actually said, you know what, we're behind him, that's a step in the right direction. So if he can get a sort of cohesive policy, it may not be everything that everybody wants, but he can get the appropriate trade-offs and get people moving together, then that potentially could remove some of that political risk premium that we've seen probably build up within UK assets.
John, thank you so much, as ever, for joining us. John Bilton,
pleasure.
Of course, Global Head of Strategic Research for Multi-Asset Solutions at JP Morgan Asset Management. Now, just a very, very quick reminder that there are concerns growing that the U.S. and Iran could intensify hostilities into the coming days. Both sides clashing for a sixth straight day, Tehran refusing to back down over the Strait of Hormuz. And then on that, you also have all of the uncertainties, given what we've heard from Netflix, SpaceX, and a bit of a risk-off when it comes to tech. S&P futures down 1%. Coming up, we'll have more on the policies that Andy Burnham's set to unveil on the day he officially takes over as leader of the UK's ruling Labour Party. Yes, it's today. It's Friday. We'll talk about that next, and this is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance, It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Investors rotate away from technology stocks after their blistering rally this year, with Netflix and SpaceX also weighing on risk sentiment. China denies allegations from Donald Trump of election meddling as the U.S. president turns his attention to the midterms. Plus, Bloomberg understands that Andy Burnham will signal support for North Sea drilling and nationalized water within days of becoming prime minister. So let's get more on this top story. Andy Burnham is set to become the next leader of the Labour Party later today, before becoming UK Prime Minister on Monday. Now, as speculation swirls over who as Chancellor will be, the International Monetary Fund also issued a warning against raising the top rate of income tax. Well, we have a stellar panel to talk about all of this. We're joined by Jill Rutter, the Senior Fellow at the Institute for Government, and Andrade, economist at Bloomberg Economics, and Chloe Chaplin, politics reporter for Bloomberg News. So thank you all for joining us. Chloe, let's start with you. What do we know and what do we not know? Who will be, or when do we find out who the Chancellor is?
The truth is, we'll know for sure on Monday, and I think a lot of the Cabinet will also find out what their jobs are going to be on Monday as well. It looks like Shabana Mahmood is now the front runner to be Chancellor. A matter of days ago, Ed Miliband seemed to be a sure shoe-in for the job, and that's changed in the last few days. There were some concerns among Burnham's inner circle that Miliband, he's a huge political figure and he may have perhaps dominated in the Treasury, whereas Mahmood has much more of a blank slate when it comes to her economic credentials and her policies. She's also been very loyal to Burnham. So, it looks like maybe he might be deciding that she's the person to have in the Treasury to be able to, get his policies, his priorities over the line.
Joe, what do we know about Andy Burnham's closest advisors, like who he's listening to, what are they talking about in the next couple of days?
So he's got people he's worked with in Manchester, who he's bringing in to form part of his team. People have worked with in the last 9 years when he's been doing that job in Manchester. The appointment everybody's been very interested in is that he's brought back former Cabinet Minister, long-standing friend James Purnell. He's done a variety of public and private sector jobs since leaving politics back in 2010. He's going to be his Chief of Staff. That's been a job that successive Prime Ministers, I think, have failed to get right. We saw Keir Starmer swap that job around. Boris Johnson went through Chiefs of Staff at quite a rate of knots. James Purnell is very interesting, former Labour cabinet minister, quite hawkish on things like welfare reform and things, seems to be emerging as a big dominant figure. He's also we've got some continuity. So Jonathan Powell, National Security Advisor to Keir Starmer, is going to stay on in post. Graham Cook is going to head the policy unit. He's been an advisor in the Starmer government, and it looks as though they're actually offering quite a few of the Starmer people that they can stay on for a bit if they want to do it. So there's a bit of policy continuity there.
Jill, why is it so important to have a strong chief of staff that actually sticks around for you?
You really need somebody who can take quite a lot of the burden of being Prime Minister, who can absolutely speak with authority that this is what the Prime Minister wants, but who can also give the Prime Minister really honest, good advice that something is going wrong. Where Prime Ministers go wrong is when they realise too late that they're heading for a real political meltdown. And, you know, Keir Starmer never seemed to have quite the right people around him to say, actually think twice before you do this. I mean, cabinet ministers are also incredibly important, but you need somebody who you don't think is a potential rival in waiting or whatever, have absolutely your best interest in heart, but who the rest of government know when they say the Prime Minister wants something, the Prime Minister really does want it.
Anna, what kind of economy does the Prime Minister and the new Chancellor actually inherit? Because on Monday, the hard work starts.
Yeah, I mean, the economic backdrop is not the best. We have currently headline inflation running at 3%. We expect it to remain there for the rest of the year, and that obviously means that the BOE will have very little space to cut policy. So Burnham won't have any help from the economy, and if anything, the risks are that things can get worse because we're seeing an escalation of tensions in the Middle East. If you couple that with the fiscal inheritance, so we're looking at high levels of UK debt, we're looking at a combination of low growth prospects and high interest rates, which is politically toxic for the debt dynamics going forward. And the UK is still paying a premium on credibility. So this started with Liz Truss, but it has eased. That premium has fallen a bit, but it's still around 30 basis points. So the UK government still needs to prove itself to the markets. So fiscally, economically, it will be pretty difficult for Andy Burnham in terms of the backdrop that he'll inherit.
I mean, does anyone here actually have any doubts that he sticks to the fiscal constraints that the previous Chancellor has put in place?
Well, he said that he wants to kind of keep following the fiscal rules and not go away from the manifesto. I think there was some question as to whether if Miliband was Chancellor, that interpretation of what the fiscal rules actually means might be slightly different. And I think that there remains a question mark as to the extent to which Burnham feels that he can borrow more for investment in infrastructure, and he has lots of very ambitious policies around infrastructure, house building, all of these things, whether he can do that without inadvertently increasing the cost of borrowing. That will be, I think that's where the really, really delicate balance is. But there is a question mark over that.
Chloe, I love yours. I mean, your story today did make me giggle in a slightly dark way, because you put Andy Burnham's job of disappointing people begins here. So what we know is that he's going to change Westminster by devolving power to poorer regions and redistributing some of the resources. But in the first week, what are his really hard decisions?
Well, he's been speaking very broadly about things like public control, like you say, cost of living, devolution. They're all very broad policies. We reported yesterday that he's been asking officials to prepare for some early announcements on signalling that he's willing to expand drilling in the North Sea. That's something that will help with cost of living and energy security, and move to nationalise Thames Water, whether it be temporarily, and then we know he's looking at a policy of kind of public control of that. So there will be his early priorities in office. Clearly he wants to hit the ground running. He wants to make an impact straight away. He also won't have much time. The public, we know, are very impatient for change. The cost of living is only going to become a more acute challenge and a more expensive challenge for the government to deal with. They're going to be his early, the real hurdles he will have is how in the first 6 months of power he can show he is actually acting quickly. Given we know basically nothing concrete about what he's doing, there are questions as to how quickly can you hit the ground running when you haven't really been able to prepare your ministers or the civil service as to what you're going to be doing.
Can he learn from Keir Starmer's failures? Because there was no crisis actually in the Starmer government. It's just that he did badly in the
The problem with the Starmer government was, I think, they fought an election not recognising the fiscal inheritance that they were about to come into, and therefore made some decisions which they didn't sort of adequately prepare for, and started losing support almost from the end of that first month with the decision on winter fuel allowance, so taking away an extra allowance for older people to cope with winter fuel bills. And it was basically, sort of downhill almost from there after the initial landslide victory. Chloe's absolutely right. Andy Burnham hasn't had very much time to prepare. Some of the things he wants to do will not show fruit very quickly. So his big theme, devolution of power out of the centre, may be good for the long-run growth of the economy, may make people restore their trust in politics, some of those things, but it doesn't do that overnight. It's quite a long, drawn-out, difficult process. You've got to create the capacity in local government to take on lots of those functions that are currently being exercised centrally. I don't think North Sea drilling will do much for the cost of living. It might do a bit for tax revenues. It will be a signal of a different move, but it's likely to be quite controversial within the Labour Party. But we might do concrete stuff on the cost of living, which I think, but then the question comes in exactly as Chloe was saying is, how do you afford that? If the UK's resisted doing anything on energy prices to date. It's not cut fuel duty like some other countries have done in response to the Iran crisis.
Is his first job actually keeping the party together or uniting the party?
I think the party's going to look pretty united because, 4/5 of Labour MPs have nominated Andy Burnham. There's not been a contest. But then the thing that Keir Starmer notably failed to do was not, united the party behind his leadership, but he couldn't unite them for difficult decisions. And the big political test for Andy Burnham is when he comes towards his first budget is, he and his Chancellor, can they actually take the Labour Party with them on some difficult choices that he's going to have to make?
And meanwhile, the Bank of England is looking at this. So they've had, some of the data, inflation growth is actually better than expected, but they also they have to choose interest rates without really knowing government policy.
I think they will have to wait until the autumn to see the contours of the budget that is presented. I think obviously here the risk, as Chloe said, there seems to be some willingness and some appetite to announce some cost of living support. There's two outcomes or two ways in which he can do that. On the one hand, he can announce cost of living support by fully funded plan, so that is raising taxes. On the other hand, he can just borrow more. Something that's more likely to happen is that he lands somewhere in between, where he announces some short-term support for the economy and backloads the consolidation towards the later years, and so delays the difficult decisions. That's something that Rachel Reeves, sort of the approach that Rachel Reeves has taken. And if that's the case, well, for the Bank of England, that sort of means, a little bit of a more boost, something that they need. It might sort of cap the space that they have to lower interest rates. And for markets, it would just mean, less credibility, because this is just a repeat of what we've been getting. No real willingness to tackle, the public finances and the fragility of the public finances.
And were you surprised that we saw a quite sizable gilt move, actually, when the Chancellor was no longer thought to be at Miliband?
I wasn't surprised. I think there was just pricing out the most sort of the worst outcome. I do think that credibility needs to be earned. And again, we know very little on how they will tackle this. I think most of the constraints are actual political, because obviously we don't have a lot of fiscal space, but there's stuff that can be done. The new government could consider looking at the big tax levers. It could consider reforming capital taxes in a way that doesn't undermine growth and still yields revenue. The question is whether they'll actually go for that path or not. But there's still some space to raise revenue. And also, they have been very unwilling to consider the other side of the ledger, which is spending cuts. So there are ways to deliver on growth while keeping public finances and credibility in check. The problem is that the political constraints seem to be, standing in the way right now.
Chloe, a really, really busy 4 days, even though the Prime Minister, Keir Starmer, will not be at the final on Sunday, which we're all quite sad about. Is there another appointment, apart from the Chancellor, that we should really be looking out for in terms of tone from the government and this new administration?
I think it will be interesting to see who Burnham picks to be the new business secretary. There are rumours in Westminster that it could be Jonathan Reynolds making a return to that beat. Stress, it hasn't been confirmed, and I don't think it will be till Monday, but I think that could be interesting. Of course, who he's going to appoint to run this number 10 in the north, which again, we don't really know how that's going to function, but whoever has that role, I think, will clearly be in the centre of his devolution plans. And there is also a suggestion that Angela Rayner could return to her old job as Housing Secretary. That would give her a kind of central role also in devolution plans and signal, I suppose, how ambitious Burnham is prepared to be early on, because she's already been a big driver of devolution previously when she was in the role before she had to step down. I think those are the two appointments I'm most interested in. But of course, it's going to be very fascinating to see what he does with other big hitters like Ed Miliband. If he's not Chancellor, where does he go?
Thank you all for a fantastic panel. I know we'll have plenty more of these panels. Jill Ritter, Senior Fellow at the Institute for Government, and Andrade, Economist at Bloomberg Economics, and Chloe Chaplin, Bloomberg Politics Reporter. Now, let's also bring you some breaking news. Bloomberg has learned that Germany is preparing core demands for possible discussions with UniCredit over Commerzbank. Now, the move does highlight how Berlin's focus is now shifting from stopping the proposed takeover to help shaping it. Let's bring in Chad Thomas, our executive editor for Europe. So, Chad, I mean, this is a very, very significant shift. Can you explain it? What are they looking at?
Yeah, Francine. So Friedrich Merz, the German Chancellor, this week in his summer press conference said that Germany wasn't opposed to a takeover of Commerzbank by UniCredit, but that they were looking closely at what that would mean. That is a significant shift because Germany had been publicly saying all along that they were against this takeover. And really, I think what we're seeing here is a realization by Germany that Orchel, the CEO of UniCredit, has amassed a large stake in Commerzbank, and to block that takeover would be very difficult for Germany. The German Chancellor, Friedrich Merz, of course, also has so much else on his plate. And so now we're hearing from sources that they are preparing to have talks with UniCredit on what a takeover might look like. Those talks haven't started yet, but the German government is preparing to move forward. So this really is a significant shift that we're seeing here.
Does Germany want? Chad, I don't know if you can still hear me. We're trying to figure out exactly what Germany wants or what happens next, but I think we've lost.
Yeah, I lost you there for a second, Francine, but we're back now.
Okay, we're back. So what happens next, and what do we know that Germany actually wants? What are they trying to get out of these meetings?
Yeah, so what Germany is really looking for is assurances from UniCredit that the bank would continue to focus on funding for the Mittelstand companies in Germany. Those family-owned mid-sized companies that are so important to the German economy. They also want to see a listing remain in Frankfurt, and of course, they're probably looking for some sort of job guarantees from UniCredit as well if they were to take over the bank.
Chad, thank you so much. Chad Thomas, our Europe executive editor. Now, coming up, fashion at the World Cup. We're changing tack a touch. How handbags have given luxury a lift. We'll have plenty more on that next. We'll also revisit, of course, that breaking news on Commerzbank and UniCredit. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Well, Honeywell Technology says artificial intelligence is driving demand across its business. The company was created after Honeywell completed the separation of its aerospace and automation businesses last month. Now, in the latest episode of Leaders with Francine Lacroix, the chief executive, Vimal Kapoor, explains why he believes that AI will reshape the way we work.
Where we have seen most impact is more productivity, specifically in the software development and software testing. Transformational will occur if we redraw our work,
right,
in which we can use agents as part of our workflow. And that requires us to reimagine the work by itself. Look at the steps which an agent can perform, and then the rest of the steps human has to perform. And I truly believe this is another way to drive productivity. What excites me is the opportunity it has for our customers, because we create a lot of data. Our customers have one common issue in the sectors we serve. They are short of skilled people.
Right.
Skilled people required to operate, to maintain, to run, they are increasingly becoming lesser as retirements are coming. So they are already forecasting lesser and lesser people available as a workforce for specific roles. And the only solution is you automate a portion of work, or you make the work performed by a lower skilled people. So it means we have to create more tools so that people are more productive. So a 5-year experienced person can do a 15-year experienced person's role. And that's where the AI, physical AI word comes in, where we are having leadership, that we use the data we created, we have in our systems, and we train the data to perform the task to make our customers' people more skilled, make their assets run smarter, operations run better.
I mean, workers must be anxious about it.
Yes and no. If you are in a segments we serve, there are shortage of people by default. There, the role of AI will be more agentic systems coming in over a period of time. So that's true to every company. But if I look at our customers' world, they don't have enough people to run their operations, maintain their operations efficiently. So there's less anxiety about anybody taking away a job. The more anxiety is what will happen 3 to 5 years from now. Because foundationally, pretty much in the entire world, the population is not growing. The implication of that is 10 to 15 years from now, less workforce is coming into work. So how will work happen in that case when you need a touch labor? So I think displacement will occur where work can be automated.
And you can listen to that episode from Monday wherever you get your podcasts. You can also catch it on Bloomberg TV from Monday, 10 p.m. UK time. Now, British luxury brand Burberry sales have grown across all of its ranges for the first time in 3 years, with strong demand from the U.S. Let's get more with Andrea Felstead, a columnist at Bloomberg Opinion. Andrea, it's so good to speak to you, especially on a Friday. I feel like we look at tech and then a little bit of fashion. So what's driving demand at Burberry?
It really is the U.S. That was the best performing region, in line with Richemont the other day. China was also encouraging, so that's more sign that China is perhaps going in the right direction.
So is this a sign that the Burberry turnaround plan is working?
Well, what was interesting, they've really focused on outerwear, trench coats and scarves, but they said for the first time they'd seen demand grow across all categories: menswear, womenswear, children's wear, accessories, shoes, particularly women's handbags. We know that's a very challenged category. It's also a very lucrative category, so if they can do well in that category, it will give them a boost. I think there's a feeling that Burberry's had a good turnaround, but where does it go from here? You can't just rely on outerwear and scarves. Quite a crowded category with Moncler. Ralph Lauren wants to do more in outerwear, so they really need to get that recovery broadening.
Okay, talking about handbags, don't go anywhere, because Sunday's World Cup final pits Spain against Argentina. But on the sidelines, a different kind of battle has been raging, because the world's biggest sports brands have spent the tournament fighting for sales and buzz that they hope will outlast the final whistle. Well, we're now joined by Tim Lowe, Bloomberg's consumer reporter. So, Tim, going into the tournament, how did it look between Nike and Adidas in terms of who was better prepared to seize the moment?
Yeah, so when you compare the number of teams that the companies are sponsoring with their jerseys, it was a pretty even split between Nike and Adidas and even Puma. But when you took a step back, you had the sense that Adidas was maybe more prepared. They've been coming off of a couple years hot streak with the Samba sneaker boom, whereas Nike has been really going through a bit of a reset and a lot of problems. Adidas also kind of regards football as their home turf. They've been sponsoring the World Cup with FIFA for, 50 years. And what was fun for me to see was, a month before the tournament started, Adidas had rolled out its big splashy brand campaign, which they called Backyard Legends. A video featuring Hollywood stars Timothée Chalamet, Bad Bunny with Messi, and young stars that Adidas is trying to promote, like Lamine Yamal. And so they were there a month before Nike kind of responded with its own campaign. And so there was a sense that Adidas had sort of done its homework. It was super prepared, and Nike was maybe last minute putting its thing together. But as the tournament has evolved, it's Nike has also, held its own.
Changed.
In the semifinals, 2 of the teams were Nike, 2 of the teams were Adidas.
So now that we're heading to the final, is it too early to say which brand seems to have won the World Cup, and can they milk it to the max?
Right. No, I think it's pretty clear at this point that this has been an Adidas success story. I mean, you just look at the final, you have Spain and you have Argentina. They're both wearing Adidas uniforms. And you have some of the biggest stars in Messi and Lamine Yamal. They're Adidas players. It's not to say Nike's out of the picture. They have some really good players on the field who'll be wearing Nike shoes. That said, a lot of talk has been about, the boots on the field have been all pink, whether they're Nike or Adidas in color, so it's hard to differentiate that. So that really, brings it back home to this is kind of an Adidas weekend. And if you're looking out beyond that, there's, Adidas can't really go wrong no matter who wins.
Yeah. Tim, thank you so much. Tim Lowe there with the very latest on the World Cup. And, of course, some of the players staying with the World Cup, some of the biggest names in football have also been making headlines off the field for their fashion choices. Now, it seems that luxury man bags are the must-have item among football's elite. So Andrea is still with us. Andrea, I love seeing some of the pictures, especially of the French players, because they have so many of the luxury brands. It's like a throwback from the 70s. But, some of the luxury bags have really been stealing the show for men.
Absolutely. It's really been about Erling Haaland and his hacks and his Birkins. He's really raised the profile of Hermes.
So what does it mean? Is this a growing sector of the luxury market? So men handbags, but also sports and luxury are getting close.
Absolutely. Both of those trends, sports and luxury, particularly LVMH has been making a really big push into sport. But for luxury, the handbag has really been, it's been underperforming. It's a real money spinner. And it's been underperforming. Men only account for a quarter of that market. So if they can get more men buying these luxury brands, then that's very good news. It could be a new category for luxury.
And they have to be bigger bags, right? Which goes against the trend of the smaller bags.
Exactly. These guys have all been carrying big bags. I mean, that's mainly because they're sort of a super luxe kit bag.
Yeah.
But luxury, it's been all about the mini bags. So we need a rebalancing to bigger models.
Super luxe kit bag. I like that. Andrea, thank you so much. Andrea, you've heard it here first. Andrea Felstedt from Bloomberg Opinion. Look, U.S. futures, of course, thinking of 2 things, the Strait of Hormuz with U.S. and Iran, and we'll see, of course, what happens with the tech stocks, as for the moment they're being slammed in pre-market. Up next, Bloomberg Brief, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The global chipmaker sell-off gathering pace as concerns over AI investments mount. President Trump accuses China of election interference in a primetime address. China denies the allegations. And escalation fears, concerns growing that tensions between the U.S. and Iran will intensify after a sixth day now of strikes. Asia, though, once again providing a catalyst for a tech sell-off. Let's get a check on global markets. This time, Winnie Sue, it's not Korea. Winnie is in Hong Kong for us.
Yeah, good morning, Bonnie. As you just mentioned, we are seeing this new model from China's AI startup Moonshot, and that is posing a bit of a threat to this global AI trade. And that is coming as investors think that this Chinese product can actually turn investors to choose more cheaper options versus what is already available. So that is sending some shocks across the technology shares overall in Asia, as well as in the U.S. Now, overall sentiment is lower. We have MSCI Asia here down about 3%, headed for its lowest in about 2 months as concerns continue to rise around the AI spending. We have Taiwanese stocks, in fact, headed into a correction territory, down about 10% from its June peak. Also, some concerns after TSMC's earnings, unable to impress investors. Now, flip of where we take a look at Japanese assets, because similarly, we have the Nikkei 225 in a technical territory with the Kioxia shares down about 16%, seeing its market cap halved in just the past month. Now, it was Japan's most valuable company just last month. So you can see that sentiment turning really quickly. When it comes to the cross-asset space, we are seeing Japanese yen strengthening just a bit after Prime Minister Takaichi mentioned that it is important for pension funds to invest further in domestic assets.
Winnie, a lot happening in Asia this week, and it's infecting the rest of the world. Let's get to London for a look at Europe, obviously, in Britain. More preparations for what might be announced next week. Justina Lee, what's happening?
Good morning, Vani. Now, it's a classic risk-off day in Europe today with the Stoxx Europe 600 down 0.8%, of course, also dragged down by technology shares. And the only sectors sort of in the green are the more defensive ones like utilities. And you know it's a defensive day because the FTSE 100 is down a little bit less, and that's because it tends to have less of those, growthy tech names, more value names, more defensive sectors. And also a sign of the classic risk-off mood today. I mean, we haven't seen a big move in oil, but generally bond yields are down, kind of reflecting some of the equity weakness. Now, Bonnie, as you mentioned earlier, it's a big day for UK politics, with Andy Burnham set to take over leadership of the Labour Party before becoming Prime Minister on Monday. And now we flip the board here. One surprise to a lot of market participants. Actually, the pound has done pretty well, even with all this political instability. We can see that this pound, the pound against the dollar has strengthened quite a bit lately, with actually the UBS Global Wealth Strategist actually saying that this has turned out to be a tailwind rather than a headwind, especially with kind of a lot of investors covering their shorts in sterling lately and maybe deciding that the pound is a little bit underowned. But of course, it all depends on what policies come next, and we're going to have to see just right that next week.
Yeah, that'll be a thread running through all of next week. Justina Lee, thank you so much. Here in the United States, you'll see futures pointed lower, particularly NASDAQ 100 futures. This sell-off continuing. We've seen it all week, even as most of the evidence suggests that companies are really doing just fine. TSMC even, for example, we knew most of these details earlier in the week. It didn't prevent the sell-off earlier in the week, even though TSMC's metrics were all pretty great. It is not preventing it today either. I will say the China announcement and the speech from President Xi Jinping about how China is all in on AI isn't going to help moods here today in the United States. Also, it's a little bit of an earnings theme, right? We also had Netflix disappointing investors, and that stock is lower pre-market as well. Let's get to yields. We'll be talking to Andrew Sheets a little bit later on and what's next for the Fed, but essentially the market is all but priced out a July increase at the very least. But we're down a couple of basis points on the 2-year yield, just below 412. Not once again are we down on the 30-year yield. We're still at 507, so that steepening is just gathering pace just a little bit here for yields. And then we are keeping our eye, of course, on oil, holding on to those levels that we've seen for most of the week, 80 on WTI and around 85 on Brent. Let's get to some individual market movers now. Back over to London and Chloe Melly.
Good morning, Bonnie. The tech sell-off that we have seen in Asia and Europe is now spilling over into the US and sweeping up all of those big names. And in particular, Intel is down more than 5% this morning, with investors really questioning these really super high valuations in that tech sector and questioning whether those investments into AI can actually deliver those lucrative returns. Moving on to Netflix, which is also falling quite significantly this morning after its third quarter forecast disappointed investors. It seems the company is really struggling to boost and revive that engagement, and so we're down almost 10% in pre-market trading this morning. And finally, Intuitive Surgical is also down this morning after the growth for its surgical robots slowed to the weakest pace in 4 years, and that was due partly to the growing uptake of GLP-1s and also changes to the Affordable Care Act subsidies. And so we're down more than 11% in pre-market trading this morning.
Chloe, a lot of red on the screen today. Thank you so much. Chloe Melly will be back later in the hour. Also coming up this hour, we discuss defense spending with Mikael Johansson, CEO of Saab. Later in the hour, we're going to look at inflation concerns, growth concerns, and more with Andrew Sheets of Morgan Stanley. A surprise breakthrough from Chinese AI startup Moonshot is sinking AI and semiconductor stocks today. Moonshot's new Kimi K3 model is deepening worries that U.S. companies could use Chinese models more and invest less in, for example, Anthropic. Bloomberg Intelligence analyst Matt Bloxham joins us now. A little bit of a deep-seek moment this morning, Matt. How good is Kimi K3, and should we be this worried?
Yeah, I think it's still early days to kind of see how good this is going to be against some of the big, like Anthropic OpenAI models. But definitely a sign of what's happening in the market. The corporates are getting increasingly sensitive and focused around the cost of using AI models. So anything that can potentially deliver similar or equivalent performance for substantially less money is going to become more popular. And so I think that it's going to kind of create a new pressure. Now, I think a lot of US companies may feel sensitive or may even come under pressure not to use Chinese models given the geopolitical tensions. But it is going to, I think, create pressure for those big US model developers like Anthropic, OpenAI, and Google to think about how they evolve their model so that they kind of keep the performance high, but with lower costs.
How much is the speech from President Xi Jinping impacting markets today. So he basically said, we're all in on AI and we want it to be open. We're going to send training courses to lots of other developing nations.
Yeah, so I think this, the technology battleground between China and the US is very much about these kind of third countries where they have more relaxed views on where they source technology, and that's a big opportunity for a large number of technology companies. And so that's, I think, where the kind of battleground for growth is going to be. So I think it's no surprise, really, that China is all in on AI and is looking to expand its influence on AI beyond China. But it's definitely kind of very much a kind of warning sign for the US companies that they kind of need to continue to develop and need to think about how they develop their technology to make sure that those third countries remain a lucrative growth opportunity for them too.
This Google Gemini delay, Matt, how serious is it for Google?
I don't think it's too serious, but it does highlight the fact that, as AI models have evolved very rapidly over the last few years, it's now getting harder to deliver significant incremental gains, and that when you do deliver those, you've got the likes of the US government kind of putting greater scrutiny on how widely you can make those things available. It kind of seems to me that, Google's kind of got a lot more checks and balances in place around how it develops software compared to some of its new arrivals. It's having to rethink which of those checks and balances it keeps and which it can relax to remain competitive. So I think we will see Google come out with this product relatively soon, and I think it's going to be competitive enough to keep them in the mix with OpenAI and Anthropic. I think, to be honest, Google, I think, has performed much better than people worried perhaps a year or two back in the AI race. I think a lot of people had written Google off and that AI would kind of really make a big dent in their market share, but that's not been the case. So I think Google is going to continue to be a strong player.
All right, Matt, thank you so much. We have to leave it there. Matt Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. President Trump accusing China of interfering in the 2020 U.S. elections. In a primetime speech, he claimed the Chinese government stole 220 million voter files and other sensitive data. China denied the allegations. The accusations come ahead of Chinese President Xi Jinping's visit to the U.S. in September. U.S. intelligence agencies have previously debunked these allegations. Burberry sales grow for the first time in 3 years. Same-store sales rose 5% in the first quarter, led by the performance in the U.S. The brand highlighted sales of its rainwear with its Portraits of an Icon campaign, featuring celebrities from Tiana Taylor to Wu Lei. SpaceX was forced to abort its Starship rocket mission when some of its engines failed to fire up. The company says it will aim to launch its Starship rocket again in a few days. Coming up, Swedish defense giant Saab's stock soaring after reporting strong second quarter profits. We'll be speaking with the CEO, Mikael Johansson, next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Hey,
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Saab shares are rising after the Swedish company posted profits that beat estimates in the second quarter. Saab CEO Mikael Johansson joins us now from Stockholm. Mikael, congratulations on your quarter. The NATO summit recently generated a $5 billion contract for your radar detection systems. I'm curious, what is more important going forward, that European defense spending rises or that there's greater coordination of European procurement?
Well, thank you. Thank you for having me. Well, yeah, the NATO summit was a big success, of course, and NATO announced that they will go and buy the GlobalEye, roughly 10 aircrafts. We're working the contract as we speak. It's not either or. I mean, it's really important that Europe gets together and do more collaborations to create scale in Europe. But I do think the NATO summit really pushed the message of that European countries and companies now are stepping up to take this seriously about handling their own security and investing lots in defense. So it was a really good summit from that perspective, but we still have a way to go when it comes to collaboration and doing less fragmentation in Europe, I think.
Mr. Johansson, could you tell me what is the annual production rate currently on GlobalEye, and will you need to spend additional capex in order to increase capacity?
Well, roughly the rate right now has been like 2 aircraft a year, and we are now aiming for somewhere between 4 to 6 aircraft a year to be able to deliver that rate around 2030, which we have our investments ongoing to do. And of course, it will take investment, but it's not such huge investment to increase capacity like that. And also, since Canada has selected the GlobalEye, we will also set up a hub in Canada to do all these things in industrial collaborations with Canadian industry, and maybe in Europe as well, another hub. So it will not only be in Sweden, even though Sweden will be important, our hub in Linköping, Sweden. So we're going in that direction, and it's going really well.
Can you give us a little more detail on the capex spending? How much roughly, and what are you thinking of spending and where in Canada?
Well, I think, as we've said, this will create like 3,000 jobs over time in Canada, and the investments will be on an infrastructure perspective, facilities, of course, together with Canadian industry, and also missionizing the business jet to become a GlobalEye. And then we, of course, will continuously take the responsibility for certifying the final capability, and having the type certificate for the capability will be on our side. So it will be a collaboration with companies like Bombardier and IMP and CAE and others in Canada. So a big portion of the supply chain will, of course, be focused on getting that done in Canada as well. But exactly in terms of billions of Swedish, I can't really tell. But I mean, our average yearly spending now is 10 billion Swedish, roughly $1 billion US or euros a year now in only capacity building. So this is going to be managed within that.
Let's move to Gripens. So there is a Ukraine order now that's finalized for 16 Gripens E. You previously said your annual production rate was around about 15. Do you need to expand that so that you can make 20 to 30 per year?
Absolutely. I would say rather sort of between 25 and 30. So we're doubling the capacity more or less as we speak, and that needs to be done in a very short time frame. We are getting there quickly. And but also there a potential sort of collaboration. If Canada would select to go dual fleet, of course, that would become sort of a hub for us. But there are also other potential customers And of course, we're trying to involve also Ukrainian industry into this because they are taking this in batches. This was the first batch, and they've said many times that they want to go further batches towards 150 aircrafts. So of course, in the end, Ukrainian industry will be involved as well.
France and Germany terminated the FCAS contract back in June. Have there been talks or agreements between Sweden and Germany or between yourselves and Airbus about a 6th generation fighter?
Well, not really in a sort of a specific way. Of course, we're touching bases on this and making our assessments. I really want to say that Sweden has its own sort of FCAS program ongoing, which is now focused on the collaborative combat aircraft, which we call CCA, complementing the Gripen fighter going forward. We have a new Gripen Echo version now in the market, which will be upgradable for a long time. And if there will be collaborations, we will, of course, have our doors open, but it has to be aligned from a security policy perspective, politics to politics, but also from an Air Force to Air Force perspective. You have to have the same view of capabilities, and then, of course, industry logic. So it's not only an industry thing to go about sort of trying to do something on the fighter side. All of that must sort of be in place. But we will make our assessments, keep our doors open, and we will see what happens. But not sort of a specific avenue has been launched from our side yet.
You mentioned how you're spreading out geographically a little bit. Can you continue to expand margins with this geographical expansion?
I think we can, absolutely. I mean, we're creating scale on sort of OPEX costs in the company, of course, but while we continue to increase our spending on R&D, that we will never compromise with. And we are used to having presence in many countries, and doing sort of several hubs together with other countries makes sense to us. We're not the biggest countries. We are the biggest engineering company in Sweden today. We employ net up like 3,000 people a year into our company. So, of course, we need to expand outside Sweden to grow the company. And I still think that will also have a positive effect on the margins going forward. So I'm not worried about that. It's a way of growing the whole company.
Well, Mr. Johansson, we have to leave it there. But thank you so much. A pleasure chatting with you this morning. That is Saab CEO Michael Johansson. Coming up, we'll look at the challenges small businesses are facing getting their tariff refunds. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
What is going to
the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Medika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting, rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Small businesses were hit hard by President Trump's sweeping tariffs. But as Wall Street Week found out, getting a refund after the Supreme Court struck those tariffs down is not quite as easy as it sounds.
Now the Supreme Court has ruled, and there's a fair amount of money, according to press accounts, that has been refunded of those tariffs. How much of that have you realized?
None.
Well, how does that work?
It's pretty frustrating, actually. So I have to contact my vendor, who is in turn waiting for a refund from the shipping company so that I can still pass through that refund to my customer as well. It's just really a big mess all the way around.
But what about now, going forward, putting aside for the moment what's already been paid, has your business largely returned to where it was before the tariffs?
I want to say it's different. So prior to tariffs and prior to the expiration of R&D tax credits, we did a fair amount of work in R&D. That went away. I believe that the tariffs had the effect of slowing down the pace of innovation because there was so much waiting and unpredictability in components. So that really slowed that process down. The tariffs are not doing anything to move the supply chain in the way that they are intended to move the supply chain. The reason is that the tariffs simply aren't high enough to make it painful enough for behaviors to change. I'm not
Bloomberg Wall Street Week's Simon Hampton joins us now. So Simon, how much of the tariff revenue has been refunded to businesses?
So it's a little under half at the moment. So there was about $166 billion of tariff revenue collected across around just over 300,000 businesses. About $71 billion of that has been refunded at the moment. And as you heard there, it's a pretty hard process for some businesses. You know, FedEx or UPS is the shipper, and that's where the refund goes to. So they have to go to other businesses to get the refund to flow down. And it's a big undertaking for customs as well to build a new system to give out these refunds.
And even if it arrives, how has the environment changed for these SMEs?
Well, it's really tough because their markets have contracted. They've been changing their prices a lot. We spoke to a wine importer who changed his prices 4 times after the tariffs came in. So it's been a really unsettling time, and I think that's what they're looking for is just some stability.
Well, it's a fantastic story and well reported out. Bloomberg's Simon Hampton, thank you. And do catch Bloomberg Wall Street Week tonight at 6 p.m. New York time, 11 p.m. London time. This is Bloomberg.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so
incredibly valuable.
We're coming back. It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off. So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The global chipmaker sell-off gathering pace as concerns over AI investments mount. President Trump accuses China of election interference in a primetime address. China denies those allegations. And concerns growing that tensions between the U.S. and Iran will intensify after a sixth day now of strikes. So let's get to those markets. As you can see, futures are pointed lower. We're off our lows of the session, but Nasdaq 100 futures leading the pack. A global tech sell-off continuing today, even after TSMC beat and gave us some more details. But in Japan, for example, flash memory maker Kioxia was down 16%. It's lost more than half its value in recent weeks. We also had heavy selling in Taiwan. That index, the TAIEX, now in a technical correction, and it continued across Asia. We also had some announcements out of China overnight that seem to have created this DeepSeek moment. We have a Kimi K3 model that is spooking investors. And we also have Xi Jinping all in on AI, an open kind of a version of AI in a speech last night. So that's impacting the trade as well today. In terms of yields, we are seeing the front end come down just a little bit, just another 2 basis points, but we're back down to below 412 now, even as the 30-year yield stays pretty elevated, just below 507 at this point, and that 10-year yield continues to stay above 450. We're at 453, even though we're down 2 basis points today. We'll speak about all of that in a moment with Andrew Sheets of Morgan Stanley, but let's get to some individual pre-market movers. Here's Chloe Melly.
Good morning, Vonnie. The chip sector is seeing that extended sell-off this morning, with Nvidia, Micron and Intel all quite steeply in the red in pre-market trading. Investors are questioning the sustainability of AI spending following the breakthrough of a Chinese open source model. So there's this rising potential competition, and that is creating some deeper pressure on that market this morning. Moving on to Netflix, which is getting investors quite worried. Its forecast for the third quarter was seen as quite underwhelming. It seems that the company is struggling to sort of rekindle this engagement from customers, and so we are seeing that really pressure the shares this morning. We're down almost 10%. And finally, another mover in the red is Intuitive Surgical, which is seeing that slowing demand for its surgical robots. Some of it is because of changes to Affordable Care Act subsidies, and some of it is due to growing uptake of GLP-1s, and so that is leading to a lot of weakness and slowing pace of growth for that business, and we are seeing that reflected in those shares this morning, taking quite the hit at 11% drop for Intuitive Surgical.
Chloe, thank you so much. Chloe Melly there in London. The chip rout deepening, the scale of the AI build-out now starting to really affect investor appetite. It's one of the risks our next guest said could derail conditions this summer. Joining us now is Andrew Sheets, Global Head of Fixed Income Research at Morgan Stanley. So, Andrew, you absolutely nailed the CPI data. You said it would come in a little bit less than markets expected, and that would allow the Fed hold for the rest of the year. But you also said that a couple of risk factors such as this sell-off in chips and potentially a re-escalation of the Iran war could derail things. Are you now having to rethink your base case for the rest of the year?
Yeah, thanks, Bonnie. It's great to be here. So our economists did, I think, have a great call on inflation, and that remains a really important view for us at Morgan Stanley over the balance of the year. We don't think it was just about one print of benign CPI, that those inflation numbers continue to moderate through the second half of the year, and that allows the Fed to stay on hold this year and ultimately cut. So the Fed is not the problem in our view in terms of markets, but there is going to be ongoing concern around AI spending, and there is going to be, I think, rightly concern if the Strait of Hormuz does not open as normal. And I think for now, it's the AI piece in focus. It's such a big part of the economic story. It's such a big part of the earnings story, and it's such a big part of the positioning story for investors that there's just no way to get around it.
It's also such a big part of Kevin Warsh's outlook, right? How would this sell-off and maybe just a little bit less confidence in the AI story impact the Fed share?
Well, I do think there's this interesting debate with investors because, I think core to Chair Warsh's view is that AI represents a boost in productivity, and a boost of productivity over time should be disinflationary. But I think when you talk to a lot of investors, they see a timing issue, that yes, kind of eventually that productivity improvement comes through, but that productivity improvement is fundamentally, in the future, and the cost pressures are happening right now. The memory cost pressures are happening right now, and that doesn't change. So again, what makes us kind of optimistic about the inflation story is that we're starting to see signs of these numbers moderating, even though we know that memory costs are up a lot and chip costs are up a lot, and we're already in the midst of all this AI spending. But I think this is where, earnings season the next couple of weeks is really important. I think markets are worried that you might see some pullback in spending. That's not our base case. We think ultimately these companies remain committed to that investment. They remain committed to that spending. And quarter after quarter, we've seen these numbers revised up, not down. But I think the market, for all the reasons you just mentioned, is going to want to see evidence of that before it rekindles confidence.
So still not your base case at the same time, the very beginning of earnings season, if, even with the big banks, but basically for all companies, we've seen a sell-off. And that's not what you typically see in July. July tends to be a fairly strong month. So are you thinking about maybe just wavering a little bit in, the confidence that you have for this earnings season?
Yeah, so I think it is a great point you make on seasonality. I think the last time the S&P 500 was negative in the month of July was 2014. It's been quite a while. But we do remain at Morgan Stanley fundamentally positive. I mean, we do think that you're continuing to see strong earnings growth. The global economy looks solid. We don't think the Fed is going to be as hawkish as markets expect. And, I think there's this debate over whether or not, kind of more AI spending or less AI spending is the better outcome. Our analysts, and we do a lot of work trying to marry kind of the top-down and bottom-up views across Morgan Stanley Research. Our bottom-up analysts remain very optimistic about AI spending, and that should continue to support that growth in earnings outlook. So look, you've had very extreme levels of positioning that can drive volatility. I think that's been part of what's driving the volatility. I think part of the good news is that when we look at those positioning measures, they've started to correct quite significantly. And I think if we see price action like we're seeing today, hang up over another couple of sessions, then you really are starting to wash out some of this positioning in an important way.
Back to the inflation data. After studying it, Andrew, and having made the right call and so on, is there still uncertainty about where inflation is coming from in this economy?
Yeah, I think there is an enormous amount of uncertainty. And again, we have had, one good print, but prior to that, most of the prints this year have been too high. And I do think this is a challenge that Chair Warsh is facing. I think he is aware that inflation has been much higher than the Fed wants it, and that's been true, really over the last 5-6 years. I think you have a Fed committee that is worried that inflation's been too high and has been sounding more hawkish. And some of the productivity improvements that could improve that longer-term story are still maybe some ways away. So, I think with inflation, the market is really in a wait-and-see mode. I think a positive factor is if you look at some of the break-even inflation, the kind of implied inflation numbers that you can find on the Bloomberg terminal, you are seeing a big drop in those. And so I do think that there is some confidence. It's not just, our models are saying that. Some of the market implied numbers are giving a much more benign 1 to 2 year inflation outlook than they were a little while ago.
Well, in fact, if you look even further out, the 10-year moving more than the 5-year, which caused inversion. Andrew, is that telling us that the market is pricing in more transitory inflation in the immediate term or more elevated short-term risk?
Yeah, so I think this is another important factor that we're watching. So, I think coming into this year, there was a wide-ranging expectation that the yield curve would steepen. And as often the case, the opposite has happened. We've had a flattening of the yield curve, and that's been true in the U.S., and that's been true in Germany and other markets. And that intensified recently. Now, I think that flattening of the curve and any inversion, say, of 2s, 10s, we treat as a bad thing. When that's happened previously, it's been quite bad for fixed income and bond flows, and a slowdown in flows at a time when there is so much corporate issuance would be a pretty severe threat to the credit market. What you've started to see a little bit more recently is that curve steepening back out. I think a steeper curve is much more consistent with economic confidence and economic strength. And I think a steeper curve is also good for demand from insurance companies and banks and real money investors. So I think the steeper curve is what we should be rooting for. I think we've seen some of that, which I think is a good sign for fixed income demand. But it's been a little bit touch and go, and we obviously need to see that continue.
Andrew, I know that your base case is still that there's no move from the Fed this year, and I think you're still thinking about the possibility of maybe a cut next year. But if there's a non-zero chance the Fed has to hike this year, where are you pricing that at? Like, how non-zero of a chance is it?
Yeah, no, I think it's still a realistic probability. I mean, again, I think if you look at what the market is pricing, and the market's very smart and made up of a lot of very kind of thoughtful investors, that the market is still pretty confident that the Fed will raise rates. And so, again, I think this is something that, we need to take seriously. I think it's probably one of our more out of consensus views when we come to our macro outlook that they will not hike. But it's a very realistic probability. The market's assigning well over a 50% chance that it happens. And again, I think the challenge to markets with a hike is always that once you hike, the natural question is, well, when's the next hike? There's a little bit of this extrapolation risk that always exists. So again, even though we think we're going through a little bit of a chop and churn at the moment, our fundamental optimism for the second half of the year is the Fed stays on hold, and that's good for confidence. I think once you introduce even one hike into the mix, that extrapolation risk does present itself.
Yeah, it looks like the beginning of a cycle. Andrew, thank you so much. Pleasure speaking with you. Andrew Sheets of Morgan Stanley. Now to other top stories trending on the terminal this morning. President Trump's media company wants to sell traders fast access to his posts. Trump Media will launch a data feed meant for organizations such as high-frequency and algorithmic trading firms that need information quickly. It's the latest example of how Trump's political role is overlapping with his business interests. The president is the largest shareholder in Trump Media. U.S. regulators traced the Cyclospora outbreak to shredded lettuce served at Taco Bell. The parasite has sickened thousands in Michigan and other nearby states. And New York City Mayor Zoran Mamdani says no thanks to more money. The mayor said he'll forego an 18% pay raise that would have increased his salary to more than $305,000. Coming up, President Trump makes blistering accusations against the Chinese government. We recap his address next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Hello there. Just wanted to say,
Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Over a period of years, starting during the 2020 election cycle, the People's Republic of China carried out what is believed to be the largest compromise of election data in history, resulting in China's illicit acquisition of 220 million U.S. voter files. That information includes names, addresses, phone numbers, political party preferences, and other sensitive data that would be needed to register to vote.
President Trump speaking last night, accusing China of interfering with the 2020 U.S. elections, accusations which have already been debunked. Bloomberg's government's Jonathan Tamari joins us now from Washington. Jonathan, why lob this at China and the Chinese president now, 2 months before the proposed visit to the U.S.?
Yeah, I think this is much more of Trump focusing on his domestic audience than he is on that visit from Xi Jinping in September. He is laying the groundwork, many people believe, many Democrats certainly believe, to say that that Congress needs to pass his voter ID bill that he's been pushing for several months and that he's not been able to get through Congress, and he's making that case last night. And many Democrats believe that because polls are moving against Trump right now, that he's laying the groundwork to claim that this election, if it goes in Democrats' direction, is fraudulent and possibly to contest it the way he contested the 2020 election. So I think this is much more of a domestic call. It is, as you point out, it's a little bit strange considering he just called Xi Jinping his good friend and is hosting him in September. But I think this is more of an election-focused speech than it is anything directed at international affairs.
So can we expect more of these speeches again then as, you know, the tempo picks up before the midterms? And if so, won't they be at odds with what's actually happening on the ground? We're still in Iran, for example, or striking Iran at least.
Yeah, I mean, the Homeland Security Secretary, Marco Mullen, is supposed to speak today to some of the claims that the president made last night. So, yes, it does seem the administration is going to keep emphasizing it. The issue for them, and even what many Republicans are saying, is that, yeah, voters are concerned about the cost of living. They're concerned about inflation. There is an ongoing war, which is usually the type of thing you would see a president use a national address to speak to. And so he's talking about things that matter very much to him, but are not, according to polls, the top issue that many voters are considering as they decide who they're going to vote for this fall.
Speaking of Iran and U.S. involvement there, we have tankers doing U-turns. We have the U.S. hitting southern Iran overnight, striking 6 road bridges. It's getting a little messier, isn't it, Jonathan? What are the odds that we, go beyond some red line that it's very difficult to come back from?
It's certainly looking more likely over the last week. The ship movement, according to our colleagues at Bloomberg, is an indication that the current blockade is actually a little tougher, a little wider than the previous blockade that the United States had imposed. So the president has tried military conflict. He's tried negotiations, has not gotten the results he's wanted. it looks like they're preparing to try to escalate, but we've also seen him not want to go back into a full-blown war. He's openly said that he's concerned about the economic impacts, particularly this close to election time. So he does not have a lot of good options or options that he seems really eager to take. But the military strikes appear to be escalating. It appears every day that we're getting closer and closer to going back to full-scale conflict.
Jonathan, thank you so much. That is Bloomberg Government's Jonathan Tamari. Chip stocks facing one of their worst months since the global financial crisis. The success of Chinese AI startup Moonshot's new Kimi K3 model is igniting fears U.S. companies may use Chinese models more and invest less in the Anthropics and OpenAIs of the world. Bloomberg senior strategist Neil Campling joins us now. We know that companies are already doing some of this. Neil, how good is Kimi K3 and is this another DeepSeek moment?
I was about to use that exact term, Bonnie. You beat me to it. I mean, this is quite stunning in terms of the performance capabilities. Clearly, a couple of the leading models that we have out of the US are still ahead, but in Mythos 5. But as a way of example, Opus 4.8, which was launched by Anthropic just 6 weeks ago, this is now as powerful as that particular AI model. So the speed with which they managed to catch up is going to set some alarm in some of the AI frontier models in the US. And as you mentioned, with the chip sector coming under increasing pressure and the hyperscalers investing hundreds of billions of dollars in their capex, this is going to raise those questions again about whether these massive tech companies are going to see good returns on investment capital from these chip investments. It's a big wake-up call, I think.
It is a big wake-up call. What does it mean then for the hyperscalers and their capex plans? I mean, wouldn't they want to rethink them, quick smart?
Well, this is the problem. If we look at the CDS spreads of the hyperscalers in terms of the cost of debt, keeps going higher. More expensive from some measures that we've had than we've seen in some of the high-yield debt markets. It's a worry, especially when for the hyperscalers, free cash flow is now very much on the decline. So I do think that's a concern for the markets. And look out for what the hyperscalers say at the end of this month in their earnings reports and their plans for capex going forward.
All right, sounds like a warning to me. Neil, thank you so much. Bloomberg senior strategist Neil Campling. Sunday's World Cup final pits Spain against Argentina, but there's a different kind of battle on the sidelines. The world's biggest sports brands had been fighting for sales and for buzz. Bloomberg consumer reporter Tim Lowe joins us now. So going into the tournament, Tim, what did it look like? Who was battling who in terms of sponsorships and vibes, essentially?
Yeah, this is really like the high-stakes competition, particularly between Adidas and Nike every 4 years now. And this time around, it kind of felt like Adidas had the edge coming into the tournament. They've been riding high on their Samba sneaker boom in recent years, whereas Nike has been struggling in this kind of corporate reset mode. Adidas also, they came out with their jerseys and their products months ahead of Nike, and also their kind of splashy brand campaign featuring Hollywood star Timothée Chalamet and Bad Bunny and Messi. So Nike was kind of reacting, and that was sort of where things stood at the start of the tournament. Since then, it's been the usual back and forth, leading up until the semifinals, where there were 2 Adidas teams and 2 Nike teams. And Adidas came ahead on both fronts.
Yeah, exactly. So there are not 2 of each anymore. In fact, it seems like we're all Adidas for the final. Explain.
Yeah, and what a great position if you're an Adidas marketer. They have, on the one hand, Argentina with Messi. If they pull off the title, again, Messi essentially becomes a football god if he's not one already. And if Spain manages to win, Adidas happens to have this 19-year-old, Lamine Yamal, who is the heir apparent, particularly in Adidas's eyes, and what a potent vehicle they can use that for to sort of set him up in the world's eyes for years to come.
Absolutely. Tim, thank you so much for all of that elucidation. That is Bloomberg's Tim Lowe. Coming up, we're going to get you set up for your trading day. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television. Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Bloomberg Brief. I'm Vonnie Quinn in New York, and now a look at what's ahead for your Friday trading session. Well, it's been a big week so far, but we're not finished with the economic data. We do get housing starts and building permits at 8:30 a.m. Eastern. UMich sentiment also comes out. That's at 10 a.m. Eastern. And then we get more regional bank earnings. We have Truist and Fifth Third reporting before the bell. But of course, it's your macro picture that really sets things up because we've had such a week, not just of economic data, but also earnings. We've really kicked off earnings season with fantastic earnings from the banks. And then we got Netflix yesterday. Netflix shares down pre-market. And look at this. It's the AI trade that's really taking over. We had some announcements out of China, a new Kimi K3 model from a company called Moonshot that's sending tremors through the market. It certainly sent Taiwan into a technical correction. Also Japan as well. Kioxia was down 16%, bringing its decline down to 50% of its market value. Obviously, it had run up a huge amount before then, but those jitters across Asia are absolutely bleeding into the futures here in the United States. NASDAQ 100 futures down 2% almost, and the SOX index is down more than 3% after 2 days of declines already, so expect that to decline today. Yields-wise, we're seeing the 2-year down just a couple of basis points. We're back below 412. Similarly, the 30-year is down, but we're still pretty elevated there. All right, that is it for Bloomberg Brief. Surveillance is ahead.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
It's been an incredible first half of the year with respect to the equity capital markets.
It's not just one narrow group of companies and everything else is lackluster. It's really broad.
I think you want to be really thoughtful about the positioning that you have.
You want to avoid places that have not had good earnings momentum.
We think that this has legs.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, the sell-off deepens. The once high-flying chip stocks on the brink of a bear market as Netflix quarterly earnings are falling short of expectations. SpaceX is sliding after scrubbing its latest launch attempt, trading lower following engine failure.
So everyone's trying to understand what is the latest catalyst when it comes to what is happening in the technology space. And potentially, it's coming this morning from Beijing. This new Kimi moment, as investors are calling it, sort of like deja vu to the DeepSeek moment. We are seeing a model out of China that people are saying rival those of Anthropic and OpenAI.
Kimi moment, DeepSeek Volume 2, another China shock. We're responding to that this morning, and already we were seeing weakness in the tech trade, and that's the problem. We got weakness in the chip trade. The once high-flying chip names that were up by something like 90% in Q2, down aggressively on the brink of a bear market. This is another knock to sentiment at a pretty fragile time.
Right, pick your poison in terms of what you think the actual catalyst is. Jim Reed over at Deutsche Bank this morning talking about TSMC. They had great numbers, absolutely blockbuster numbers, but they raised their 2026 CapEx forecast to 60 to 64 billion. That's up from prior guidance. Are they having to spend more? And is it going to be there in terms of, is this real AI trade and the hyperscaler build out actually real?
And not just TSMC, earlier this week, ASML. Numbers have been really decent so far this week. This started a few weeks ago. Samsung came out, fantastic results, traded lower. How the market's responding to the information right now tells you a lot about positioning and price. We'll be talking about the latest out of China in just a moment from Aaron Cannon. I want to talk about the latest as well in the crude market. Commodities, elevated this morning, Brent up by close to 2%, 85, north of that approaching 86, WTI around 80. 6 consecutive days of strikes by the US on Iran. The strikes in the last 24 hours different. The scope has started to broaden, to widen. This is something we haven't seen so far this week.
They are broadening, and if you look at reports coming out of the likes of the Wall Street Journal, the Associated Press, they're expanding. Multiple bridges were hit in Iran yesterday. This is an effort to really cut off potentially the supply links that the IRGC uses, and the AP says they've expanded as well this morning. So the latest we heard from CENTCOM was last night, 9:40 p.m. They said that was the 6th night of strikes. And they're continuing again this morning. And also, vessels going through the Strait of Hormuz. If you're an Iranian vessel, beware. We are seeing an incredibly aggressive U.S. blockade.
We had some decent data earlier this week, softer CPI, softer PPI. How much comfort can you take from that when we've just seen a bounce back in crude, higher on the week by more than 10%? Coming up this hour, we'll catch up with Aaron Cannon of Clear Harbor Asset Management with chip stocks on the brink of a bear market. Tobin Marcus of Wolfe Research as the U.S. strikes Iran for a 6th straight day. And Alicia Reese of Wedbush as Netflix fails to impress. We begin this hour with stocks extending tech-led declines. Aaron Cannon of Clear Harbor Asset Management writing leadership is steadily expanding beyond semiconductor manufacturers towards the broader AI ecosystem. Aaron joins us now for more. Aaron, we've got to talk about the latest out of China. Moonshot's new Kimi K3 model. Maybe a lot of people aren't familiar with what's coming out of China. They're telling us, as they might, that this can rival the models coming out of Anthropic and OpenAI. Aaron, do you see this as another DeepSeek type moment, or is this different?
Sure, feels that way, Jonathan. Clearly it's a question around, how competitive is this Kimi 3 model relative to the closed source models that we have here in the United States, made by Anthropic, OpenAI, Grok, and others. It also questions, how much CapEx have we spent this year across the hyperscalers, what will be spent next year, could we see the slope change as perhaps the return on invested capital question comes into the fore? I mean, the other question that I think is worth pondering too is Kimi's made a model that's competitive with U.S. models, and they do not have the leading chips that are designed here in the United States by the likes of NVIDIA, like the Blackwell chip or the Rubin chip. And so that would suggest that perhaps they're creating more output, more intelligence per unit of compute power with perhaps an inferior chip. And that could be very disruptive to the semiconductor ecosystem. I'm just postulating here that there's a risk to that.
I would just say, Aaron, in response, we've got no idea. I've personally got no idea how compliant they have been with export controls, but certainly raises questions about the kind of access they do have, the kind of developments they're making right now with the chips they have locally, domestically. That raises a lot of concerns, and here's one. You mentioned it. Are we getting to a position where it's harder and harder to justify the amount of money that the hyperscalers here in America have been spending and start to question the wealth transfer we've seen from them to the chip players over the last 12 months? Is that trade becoming more and more vulnerable?
Yeah, I think it feeds into a broader question around are we going to see some sort of level of regulation within the AI ecosystem, both in the United States and perhaps globally? And there's been a discussion about that this week in the marketplace as well. And how does open source versus closed sort of function under that regime? I would just say as it relates to the return on invested capital question that you just posed, it's a real question. But you know, the likes of Alphabet, OpenAI, Grok, and others, they are playing the long game, and so I suspect that they're not huddling up this morning, altering their CapEx estimates for the coming months.
When it comes to technology space, we also have Google potentially behind on their Gemini model. You have SpaceX overnight. What do you think the next catalyst is going to be?
Well, Anne-Marie, it's been a stunning week. For mid-July, we have geopolitics, the Strait of Hormuz, the escalation that you just reported on. We have earnings, which have been coming out fast and furious. Bank earnings have been very strong, a little mixed on the other side, but 20+% annualized growth rate in the second quarter. These are the types of growth rates we tend to see coming out of a deep recession. So it's not all glass half empty for sure. And of course, we have Fed Warsh in play with the Fed, and it's been quite a week.
So do you think this isn't even so much chip specific when it comes to the sell-off, but other factors like what's going on in the conflict in the Middle East?
Yeah, I think it's a healthy breather. The semiconductor trade has been a volatile one. The equity trade through just a week or so ago was heavily momentum driven. The momentum factors come off. Kimi just was released yesterday, and so we're seeing increased volatility again this morning. I want to be a little careful that the narrative of the last 12 hours around Kimi, it is akin to sort of the DeepSeek moment. But I think it does raise some very important questions about how the AI build out, how that ecosystem evolves. What are the efficiencies that are going to be brought perhaps by the open source models from China? And how does that impact the demand for things like memory, which is all of the rage right now, with the likes of SK Hynix just having come with their ADR, and of course Micron and SanDisk and others in that space. And so it'll be interesting to see how this all evolves.
If you strip down the muscle of big tech, just looking at the index, go to the equal weight, and we closed at an all-time high just yesterday. The banks, not just the big ones, some of the regional players as well, Citizens, Fifth Third, PNC, take your pick, closed at records just yesterday, and we saw the big players on Wall Street deliver record highs as well. I just wonder from your perspective, if we do have this fragile moment in tech, how isolated it will be, and whether it will really start to unravel the other part of the market as well that's doing quite well and holding up in the meantime.
That's right. I mean, yesterday, the equal weight, I believe, was actually positive, and market cap weight was negative. We have now the equal weight up about 250 basis points year to date, in excess of the S&P market cap weighted index. And so, you know, you look at all the sectors, all the 12 sectors, I think only one is down year to date. And so it suggests that there is a broadening, but we have to be a little careful too to deduce too much, the relationship of the sectors within the AI ecosystem across industrials, technology, within technology, semiconductors. As semis go up, it seems like software goes down. That's been an inverse trade year to date. And of course, banks, they're seeing increased activity on trading, but they're also seeing increased activity as it pertains to the AI build out in M&A. And so we have to keep a close watch on the correlation across sectors. But, growth looks strong. I think 5% nominal is possible this year. Inflation is decelerating out on the core side of things, and that'll be a focus for the next several months.
To your point, Aaron, it all feels like one trade, and that's the problem. Can you help us navigate that? This note just dropped from Jonathan Krinsky of BTIG. He sits in a different seat. He focuses on the technicals. He said there's a risk of a high correlation accident and that the risks continue to grow. Do you think it's avoidable?
I think it's avoidable if you don't just own the market, right? If you own the market, then you have 20% in the semiconductors in the United States. You have 25% in EM. And so if you own semis, you also are correlated to all the other aspects that we just discussed. So as an asset allocator, even within equities, I think there are other places to move. The banking sector looks strong. It's not just the semi trade, obviously. There's a lot of M&A, regulatory environment's positive for the banking sector, trading activities up, wealth activities up. We know that's related to AUM. And so, we think that there are opportunities across the landscape, but there's a lot of correlation going on, even down to utilities, as we know, as it pertains to this AI trade.
It's all felt like one trade, without a doubt. Aaron, thank you. Appreciate it. Aaron Cannon there at Clear Harbor Asset Management. If you're just joining us, the S&P 500 negative, the NASDAQ underperforming. We're going to be spending the whole morning. You're going to hear this a lot. People are going to be talking about the Chinese AI startup Moonshot and its new model, Kimi K3.
A new surprise at this AI conference as well, where Xi Jinping spoke, really talking about taking on the dominance when it comes to the AI trade. And according to the company, they think this rivals the United States top models when it comes to Anthropic and OpenAI. And that's why people are a little bit concerned. And interesting point there you brought up with Aaron about, are they really export compliant?
Yeah,
how are they making these models?
We don't know. The president has been talking about election interference with regards to China. Let the president say what he's got to say, and we'll let the experts talk about that if they want. I would just say this, from the perspective of the economy and the perspective of financial markets here in the United States, the greatest threat to them right now, one of them, is developments on tech in China. Never mind election interference. These kind of things could upend this market, and in some ways, given the amount of money that's being spent and how dependent this economy has been on all of that spending, it could upend this economy too.
Absolutely. That's only also one key to the puzzle. There's also the geopolitical key to this entire trade, which is the fact that we are so reliant on Taiwan, 90% when it comes to chips that are fueling this entire hyperscaler demand, AI build out in the United States. And there has been a growing threat on that island.
We've had moments like this before. We worked through DeepSeek and then people just stopped talking about it. Yeah. And we'll see if this is one of those moments or if it's slightly different. Equity futures on the S&P, we're down by 0.9. On the NASDAQ, we're down hard. With an update on stories worldwide with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. The U.S. completing a 6th straight day of strikes on Iran. The Associated Press reporting that bridges were among the assets targeted. Iranian state media saying 3 civilians were killed. President Donald Trump using a roughly 25-minute primetime address to revive claims that the 2020 election was stolen.
Of years, starting during the 2020 election cycle, the People's Republic of China carried out what is believed to be the largest compromise of election data in history, resulting in China's illicit acquisition of 220 million U.S. voter files.
Trump also accusing U.S. government officials of trying to cover up Chinese interference. Netflix reporting a 2nd straight quarter of slower revenue growth. The company projecting sales of just under $13 billion in the current quarter, slightly below estimates. Investors questioning the platform's growth trajectory as it bets on new offerings, including live sports. And that is your Bloomberg Brief. John.
Stock is down almost 10% in the pre-market. Vonnie, thank you. Appreciate it. Up next on the program, widening attacks on Iran.
We're making a record investment in our armed forces. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly.
In just a moment, we'll catch up with Bloomberg's Tyler Kendall. Plus, we'll touch base with Tobin Marcus of Wolf Research, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I've got the air quality index at 169 this morning. You don't follow the air quality index, that is super bad.
Very bad. I saw that the level was in the red of, quote, unhealthy, AKA don't go outside, which is why I'm worried about this weekend when it comes to the World Cup. I know it's supposed to clear, but is it really? Can you imagine running around 90 minutes in this terrible, foggy, hazy? It's very uncomfortable.
As bad, perhaps even worse in the last 24 hours than some of the most populous cities in places like India, which are well known for being very, very polluted. We're blaming Canada, right? Canadian wildfires.
Yes, it's their fault.
We saw this about 3 years ago, I think. That orange glow in the sky from the wildfires in Canada.
It's pretty for a moment, and then you go outside, you breathe it in, you're like, ooh, this is terrible. But yes, it did feel like some very polluted cities I've spent time in, like Delhi or Beijing. That's how New York feels right now.
Do you want to have a go at Carney this morning? Is it his fault?
Yeah.
Prime Minister?
Prime Minister Mark Carney, fix it, please. We can't breathe
Fix the
here
air
in New
quality.
York.
You know, come on. Look at what we're importing here. Okay. Equity futures right now in the S&P 500. Stay safe. Seriously, it's brutal. Got a headache just walking in it yesterday. Seriously.
I know. I feel really bad. Like my brother, he works outside all day. I feel for him. He's breathing this in. He didn't feel great last night.
Not good. Futures down 0.8%. This isn't good either. Stakes lower, of course. On the Nasdaq 100, we're down by 1.5%. On the Russell, we're down by 0.5%. It's obvious on that picture right now where the pain is. The pain is in tech, and there are so many reasons for this. Positioning. This market was super bullish. Look at how we've responded to some of the decent earnings we've had. Stocks have traded lower, even though numbers from TSMC, ASML, Samsung over the past few weeks have been really quite tremendous on the tech side. The market has not exactly embraced it. Then the likes of Alphabet behind on a new Gemini model. That was the news from yesterday. The news this morning that China's maybe advancing with its own models from its own startups. That's dragging down the whole tech sector so far today.
Yeah, you could pick your poison when it comes to the catalyst and what you don't like right now in the technology space. And as you've been saying, it's almost priced for perfection. Bar has been so high for these companies. The shock this morning really does seem to be coming out of Beijing. Individuals saying this feels like a DeepSeek moment. To your point earlier, though, we moved through DeepSeek, and it was fine. It was behind us. Is that going to be this time around, or potentially can Kimmy linger
The Nasdaq down by 1.5%. Some risk aversion in the bond market driving yields a little bit lower, backing off the last week or so, particularly the front end of the curve at one point threatening to break into 430 kind of territory. This morning 411 and down another 2 basis points. This move in crude notable. We're up by 2% this morning. Brent pushing 86, WTI pushing 81. Under surveillance this morning, widening attacks on Iran.
I'm proud to report that our country is safer, stronger, and far wealthier than it has ever been before. We're making a record investment in our armed forces. Fortunately, we're forced to use it now. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly.
So here's the latest this morning. The US and Iran clashing for a 6th consecutive day, with the US expanding targets overnight. Tehran refusing to back down on the Strait of Hormuz as the US enforces its blockade. Bloomberg's Tyler Kendall has the latest. Hey, Tyler.
Hey, John, good morning. Well, it is increasingly clear that the U.S. is widening its list of targets by targeting Iranian infrastructure overnight, but also the fact that we're seeing the U.S. enforce its naval blockade now deeper into the Persian Gulf. Iran confirms that the U.S. targeted and hit at least 6 bridges as part of an apparent effort by the U.S. to cut off supply routes to a key port city and naval base that the IRGC uses to disrupt commercial traffic. Now, CENTCOM says that it is still actively working to ensure freedom of navigation in the strait, saying in a post overnight that so far the U.S. military has redirected at least 3 vessels, has disabled 1, and boarded another for verification purposes, this time in the Gulf of Oman, seeming to indicate a wider boundary for their operations. Observable traffic in the strait remains subdued today as data compiled by Bloomberg News shows the transits that are happening have actually largely been limited to Iranian-linked vessels that are using that Iranian-approved route in the northern corridor of the strait that gets them closer to that country, showing that Iran still has this great leverage when it comes to what is actually happening and moving through the waterway. And John, at this point, we've gotten very little indication that Iran is willing to give up that leverage, now stepping up its retaliation against U.S. allies in the region. That includes new this morning, Kuwait confirming that Iran hit a water desalination and power generation plant that is now threatening water supplies in that country.
Tyler, appreciate your time. More from Tyler in the next hour. Tyler Kendall there, down to the nation's capital. To build on this, Tobin Marcus of Wolf Research writing the following. The outlook in Iran is starting to look more genuinely concerning. It's not clear to us that the outlook on the war is any better than it was in the ceasefire period. Tobin joins us now for more. Tobin, welcome back. Let's talk about this. What do you think is happening here? This is developing pretty quickly. How do you think things will change over the weekend?
Good morning. Thanks for having me. Yeah, so look, I mean, the U.S., as you just noted, clearly is expanding the scale of attacks, going after some infrastructure targets, even if they're geographically confined to that area around Bandar Abbas on the northern shore of the strait. That is a new qualitative category of targets that, I mean, that's generally been what President Trump talks about when he talks about how we might escalate, what the next set of targets we would reach for would be. It's things like bridges and the retaliatory Iranian target set now seems to be including things like water desalination plants. So we are seeing the scale expand. I'm seeing no sign yet that either side is reaching the limits of their resolve. It looks like things will get worse before they get better.
Tobin, do you think the United States will then start targeting energy facilities?
I wouldn't expect that we're going to want to put energy targets specifically into this tit-for-tat escalation. There's enough targets that we have to hit that are focused on what's still nominally the thrust of CENTCOM's operations, which is degrading Iran's ability to threaten traffic in the strait. There have been some targets around the country, but this has been really focused on that area around the strait rather than focused, say, on the capital in Tehran. I suspect that we're going to stay focused there. But as we're starting to hit, those kinds of infrastructure targets in that region, we need to worry about what the Iranians might try to hit in response.
The greater escalation would be, of course, the president decides to send ground troops. This was some reporting earlier this week from the Wall Street Journal. How likely do you think that is, or do you think that is almost a negotiating tactic, a threat that this administration wants to socialize in the media?
Yeah, I have never thought that the options for sending ground troops make a lot of sense. We once again have reports about the possibility of occupying Kharg Island, but the point of that Kharg Island operation was always aimed at the exact same target that the blockade, I think, has addressed in a more effective and lower risk manner, which is cutting off Iran's oil exports. The blockade is working at its stated purpose. It is successfully interdicting ships. Whether or not that changes the Iranians' decision-making is a different question. But I think with the blockade in place, there's really no reason for those ground operations. And they do come with quite a lot of risk. Once you've put troops on the ground, then you're in a position of needing to potentially kind of get in deeper to protect the escalation you've already done, which is a really challenging position to be in.
Tobin, I want to ask you about China. Does the president potentially poke the bear with his speech last night when it comes to China, given the fact that China has been the country that has really put a lid on oil prices, given the fact that we've seen very soft import numbers from Beijing?
Yeah, they've been a hugely important buffer in global oil markets adjusting to this crisis. And of course, we depend on stability, so-called constructive strategic stability, using the language coming out of the last Trump-Xi summit, to maintain manageable situation in terms of export controls. So there definitely is some risk about antagonizing China. I think in a world where he's just going out in that speech yesterday and talking about Chinese election interference, but not actually doing anything about it, I suspect that Beijing is going to be willing to tolerate that. There's obviously been lots of tough talk on both sides, but if it's accompanied by sort of actual substantive consideration for this truce, that probably works well enough. And, based on the content of those allegations, which from the Chinese perspective mostly seems to be acquiring publicly available voter files, that's not something I would necessarily expect is going to be accompanied by concrete policy action against China.
Tobin, I appreciate your time. As always, Tobin, thank you. Tobin Marcus there of Wolf Research. Two big reasons that crude this morning is in the 80s and not in triple digits. One is inventory, and the second one is, as you said, China and China's strategy towards energy.
And everyone in the market is just questioning, when will China potentially start to ramp up imports going back to where we were before the war? And what does that mean for the oil price? It means it's going to be higher.
Futures this morning down by close to 1% on the S&P, a whole lot worse for tech. Coming up, we'll catch up with Alicia Reese of Wedbush as Netflix fails to meet expectations.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication and the collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a blame game this morning. So many reasons for this sell-off in tech, China being one of them. We'll get into that in just a moment. Here are the scores. Equity futures pulling back. We're down by 0.8% on the S&P, heading towards the first week of losses so far this month. Coming into Friday, as of the close on Thursday, chip stocks down by more than 8%. The semis facing the biggest weekly drop since the Liberation Day week mess of last April. It's been that long. On the Nasdaq, we're down by 1.6%. Let's turn to the bond market, 2s, 10s and 30s. Yields pulling in. There's your risk aversion. That's a picture of it. We're down 2 basis points to about 412. On the week, at the front end of the curve, yields have dropped by almost 10 basis points, around 10 basis points so far this week. Softer CPI and PPI have helped that move, contributed towards the story that maybe we can avoid the urgency of hiking interest rates sometime soon. Perhaps just removing that and taking July off the table for now. This, though, will keep the pressure on. This move in crude, WTI and Brent just elevated through the week, and so far on the week higher by more than 10%. Brent around 86, WTI north of 80.
And it looks like the escalation is going to continue, even more so into the weekend. And as we just heard from Tobin Marcus, you see this administration expanding their targets, going after bridges, going after ports, making sure that there's any sort of infrastructure that the IRGC is reliant on to then go after commercial vessels they're going to attack. Also, yesterday, we got some more color about how this blockade is working, even with the U.S. having to board a ship. So this blockade is very aggressive. Iranian crude, which at one point the administration lifted sanctions on, allowed it to go freely, is definitely sanctioned, and they are physically going after that product.
6 days of strikes. Another day, and this day slightly different, to Anne-Marie's point. As we count down to the opening about 3 hours away, let's get into China and the latest moves. Yahara has more. Hi, Yahara.
Exactly, John. And because of that, we are seeing the chip stocks lower with NVIDIA, Intel, and AMD all falling in the pre-market, extending yesterday's losses. And the cause for the jitters is the release of this new AI model out of China from the company Moonshot. And its AI model supposedly rivals the strongest offerings from the likes of OpenAI and Anthropic. So that is raising fresh concerns about whether cheaper AI models will mean less spending on these pricey chips. And it is just reviving memories from our DeepSeek moment last year when that groundbreaking model shook the markets. Meanwhile, we are seeing SpaceX lower, and for the first time since its blockbuster IPO, it closed below its offering price yesterday, and now shares are down 3.6% in the pre-market after the company scrubbed its latest Starship launch when several engines failed to launch. Now, the company does plan to try again in the coming days, but it is a setback for the rocket at the center of Elon Musk's ambitions with this company. And we end on a big mover to the downside, and that is Netflix, now down more than 10% in the pre-market after the streaming giant forecasts a second straight quarter of declining sales growth. And with the stock down 40% over the past year, patience is wearing thin. Investors concerned that the company is just not delivering the hits that it used to. John?
Yahara, thank you. Reaction from Wedbush just moments away. on that stock. On our radar this morning, let's talk about it. SpaceX calling off its first Starship rocket launched since its IPO. Plumes of smoke erupting from the rocket's engines as it's attempted to take off. The company aiming for another attempt in just the coming days. The stock, as Yohara pointed out, is down by close to 4%. Elsewhere, Google facing significant delays to its latest AI model. Sources telling us here at Bloomberg the new Gemini model is running into issues with coding capabilities. Google struggling to keep up with OpenAI, Meta and Anthropic in the AI arms race. And finally, let's talk about that arms race. China. The Chinese AI startup Moonshot releasing a powerful new model that the company says rivals the performance of top US tech firms. The release triggering a major global chip sell-off, sparking fresh fears about the industry's massive spending spree.
And people are saying potentially this is China's version of Fable when it comes to what Anthropic has and Mythos. And this is going to be open source. And it challenges this idea that we have here in the United States that, one, China is months or years behind us, potentially not. And Jensen Huang once said this to me. They are right there with us when it comes to the race. And two, how much money does it cost? Because this looks to be a lot cheaper than what individuals are paying up for some of these top models out of OpenAI and Anthropic.
If it is truly export compliant, right?
100% agree
And to
with
your
you.
point, I don't know that this morning. We were told, I remember when we had that DeepSeek moment, I think NVIDIA came out pretty quickly and said it was export compliant. I'd be looking for something similar in the next 24 hours.
Yeah, I think we would want to know exactly how they are building these models, because our models are built on the most advanced chips that China is not supposed to have access to. And we do know that they want access to the highest US models, but those have export restrictions on them. Now, can they get them on the black market? Yes, potentially. And if so, is that what they're using to create this new Kimi model that everyone's having this DeepSeek moment this morning
That
about?
DeepSeek moment didn't last too long. We had this kind of price action, then we moved on. You wonder whether this is different. I don't know. The backdrop for me is slightly more important right now. You think about the backdrop. Positioning and price is important, and I think that with the earnings we've had so far from ASML, from TSMC, from Samsung more recently, it just exposed how long this market was. Earnings were great, market didn't respond to it. So that's your backdrop right now for positioning. Then you get to the substance, the recent developments. It's just been a fragile 24 hours. The latest from Google, that the Gemini model has been delayed. That's not helpful. This is like a 1-2 punch to sentiment with this again this morning.
Right. It wasn't even just what happened with Google and Gemini. They seem to be behind, but also what is going on in terms of SpaceX. Those rocket launches are incredibly important, and now SpaceX is a publicly traded company. Broader tech sector. Netflix not doing so hot this morning and overnight, slowing when it comes to how quickly that company is keeping up. So there's a lot of different catalysts you can choose. And as we've been saying this entire week, the bar for these companies is just so high.
Still the number one question, can we justify the massive spending in this market right now that's really supported the huge moves we've seen in chip names? Anne-Marie mentioned Netflix. Let's talk about it. Shares of Netflix sliding in the pre-market, down by 10% following underwhelming earnings. The streaming giant forecasting a second consecutive quarter of slowing sales growth. Alicia Reese of Wedbush maintaining her outperform on the stock, but lowering her price target to 105, writing, "This is less a change in conviction on the destination, but rather an admission that it's a longer runway to the next growth spike." Alicia joins us now for more. Alicia, welcome to the program. Ahead of earnings, you talked about the failed pursuit of Warner Brothers. Can we just back up and start there? Why this stock has traded so poorly since the collapse of that pursuit?
Yeah, I think it was less to do with the collapse of that pursuit and more to do with underwhelming earnings along the way, underwhelming guidance, and Reed Hastings exiting the board. Those factors altogether just didn't give a lot of confidence. And since a lot of people have been digging into the data dump numbers that Netflix provides on a semi-annual basis and got concerned about, some of the things they were seeing, with the second seasons and engagement pulling off. A lot of that's been going on for some time now. It's not new, but the digging into it has been a little newer. What I'd say from the results that they just hit is that second season, the hits do hold. The weaker shows have been fading, like Bridgerton held up 4 seasons, and Running Point both fell 50 to 60%. It's not a crisis, but the Discovery is favoring new titles overall. But there were concerns this quarter.
Alicia, I know you've touched on engagement. Can we just build on that a little bit more? I was reading through your recent note. How much of it has just been mechanical because of the password sharing crackdown? How much of it is really a reflection of a weak slate of content? How do you draw a distinction between one and the other?
Yeah, so I'd say early on it was an issue of the password sharing crackdown. It took some time to, see that wasn't the only issue. But I would say the data dump that we got yesterday, the engagement is back. The first half of 26, the hours were up almost 2%, and Netflix confirmed that on the call. This is the third straight half of acceleration. So really the bear case's core metric is moving in the wrong way for the bears. That being said, there are still some concerns, but I'd say on the engagement front, the data is moving in the right direction. But right when the data is moving in the right direction, Netflix decides to shift that data disclosure to an annual cadence starting in 2027. So investors are going to get less proof, and that's right when the data is starting to turn their favor.
How are they doing in terms of new podcasts, video games, live sports? Is that where they're driving some of the growth?
Yeah, it certainly seems so. I'd say live sports is really a Trojan horse. It's 1% of the hours that we see in that engagement report. And so the engagement, if it was, more reflective of overall revenue growth for the company relative to the amount of spend, we'd see, a really significant growth driver there. But it's really just 1% of the hours, but it's really effective hours. That's, 6 of the last 10 sign-up days and significant advertising revenue growth on there. So that's a really active engagement. Games, on the other hand, sounds like it's doing great. Cloud players up to, 11% since October, or 11 times since October, but we don't have any real data to dig into, to sink our teeth into there. So I'd say on the surface, it looks like it's doing great. It's got a long way to go, but it's really, encouraging. But not a lot of data to go on with the podcasts and the games at this point.
How does Netflix fend off basically what we're seeing on the internet every day, which is short videos, whether that's even on Twitter or YouTube, made by AI with a generation that has an incredibly short attention span?
Yeah, I think pulling on the podcasts, doing games, and all of these things are more mobile friendly, mobile first. And so they are seeing more people connecting on their phones and connecting with this type of content. They're going to have more lifestyle content. I think a lot more content creators putting shows on Netflix and creating probably shorter content, and a lot of that is accessible on phones. So they just have to train their users to access them in the ways that they need in any given moment, and then still win them in the living room.
That's a shift. That's a change. Alicia, thank you. Alicia Reese of Wedbush. The stock is down by close to 10% of the pre-market following results. I would just say X has done a phenomenal job with the algo, particularly around the World Cup. The content has been phenomenal. And Anne-Marie, it's been so good that the other day I went into the settings of my iPhone and limited the amount of time that I could spend on X to an hour a day, because I found myself with the World Cup content just going deeper and deeper down some kind of burrow where I've just been sort of like scrolling. And before you know it, time's just passed. Just like that.
Doom scrolling. That's what the kids do.
It's crazy.
That's what the kids do on TikTok. And it's interesting because people now are also starting to just watch full-on videos and movies on their phone. I actually had this conversation with Matt Damon once. He was shocked when people used to watch movies on their laptop. And I was like, that was me in college. And he's like, now I see people watching full-fledged movies on their tiny screen on their phone. He's like, we're not produced. They're not made for this. But that's the direction of travel. And that's why companies like Netflix need to make content that fit on a mobile screen.
Haven't you been doing the same thing on X over the last month?
Yes.
Because of the World Cup?
The messy memes lately,
phenomenal.
the messy memes last night, I probably watched every single one of them.
I've had to limit myself. Okay, let's get you an update on stories worldwide this morning with your Bloomberg brief. Let's get to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thank you. Andy Burnham taking over as UK Prime Minister Monday. Sources telling us here at Bloomberg he's planning a series of public statements in his first days in office to mark a change from the previous administration. Burnham is expected to announce plans for new drilling in the North Sea and public control of Thames water. Apple targeting dozens of OpenAI employees with legal warnings. The Financial Times reporting Apple is looking for evidence to support its claims that the ChatGPT maker stole its trade secrets. Argentina and Spain facing off for the World Cup title on Sunday, but first, France and England play for the third place medal. They'll face off in Miami tomorrow. England eyeing its best finish in the tournament since winning it all the way back in 1966. John, that is your Bloomberg brief.
Vonnie, thank you. I cannot think of a more pointless game in the world of sport. Anywhere, any sport, there is nothing more pointless than the third place playoff in the World Cup coming up on Saturday.
I actually forgot that they do that.
It is absolutely ridiculous.
Yep. And it's kind of like, how do you go play for that?
Any of those players want to be playing a single minute of that game on Saturday?
Absolutely not. They're all just sad. They want to go home and have,
How many people
have a
even want to
European
watch it?
summer. I don't know. I'm not going to watch that game.
Ridiculous.
I'll watch Sunday, of course.
That would be in my manifesto of changes if I was going to be the president of FIFA.
I can't wait for you to run FIFA one day.
Can I still host the show?
Why not?
And run FIFA?
Why not?
Why do we need a shot of him in every game? Why do we need to see the person of the governing body of the sport in every game?
It must be in his contract or something.
What's
Show
that
that
about?
I've made every game.
Every game.
It is, to be
10
fair to
minutes into the
him,
match.
though, it is pretty incredible how he's made almost every match. Is he just not sleeping? Obviously, private jet and all that, but...
Don't want to know. Okay, that's on Saturday if you're interested. I'm not. Maybe someone is. Looking forward to Sunday. Up next on the program, doing more with less.
We effectively just grew the earnings 30%, and we have a little less people we had last year. We want to have more production capacity. We are hiring a lot of people. We have to hire 1,300 people a month to have neutral headcount.
Nita Richardson of ADP joins us in just a moment. Live from New York City, you're watching Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Okay, different perspective. I'm open to it. Rodrigo from Chile says a different point of view. I'm from Chile. We still celebrate the third place in 1962. I agree it doesn't matter, but oh boy, small countries would love for third place.
Okay.
That I appreciate.
That I appreciate too. It's just, For the English fans, and having lived in England, they were desperate for it to come home again. And I think France really, I mean, people had France in their brackets as potentially winning this whole thing. So if you thought you were potentially going to win, playing for third place is kind of funny. But I have to say, as an American, it's kind of funny to see it being France and England.
That's the one half of my bracket that I actually got right. The notable thing I got right was Spain beating France in the semi-final.
So
that was like the one thing.
So who is your bracket?
The rest of the bracket's dead.
Brazil.
Because Brazil was on the other side.
I would have. I didn't fill it out, but I would have chosen Brazil as well because they're just
Rodrigo,
incredible.
thank you for writing in. I respect that. Equity futures right now in the S&P pulling back by 0.8. On the Nasdaq, we're down by 1.4. On the Russell, by 0.5. Some tech jitters. We'll spend the morning talking about them. There's some risk aversion in the bond market too, driving yields lower. 2s, 10s, 30s down by 2 to 3 basis points this morning. 412 on the 2-year. And commodities very much in focus. 6 consecutive days of strikes on Iran. The scope of the strikes broadening is changing. Brent crude this morning close to 86. Under surveillance this morning, let's talk about the jobs market. Doing more with less.
We effectively just grew the earnings 30%, and we have a little less people we had last year. We want to have more production capacity. Our job is to handle it well and redeploy people. Last year, we redeployed 14,000 people. We are hiring a lot of people. We have to hire 1,300 people a month to have neutral headcount.
So here's the latest this morning. Wall Street's biggest banks just had a record-breaking 2Q, even though they shrunk their workforces by the most in at least 6 years. Headcount at Bank of America, Wells, Citi, Goldman, Morgan Stanley falling by more than 10,000 in the second quarter. Nita Richardson of ADP remaining optimistic on the jobs market, writing advances in artificial intelligence are set to restructure formal and informal labour markets, bringing new tools and transitions. Nita joins us now for more. Nita, welcome. Are we seeing a trend here emerge, maybe not just on Wall Street, but elsewhere, that perhaps predates what we saw with AI, that this has been building for a while, that these companies are being able to do more with less?
Well, happy Friday. And this is not a new trend. This is what companies do. They redeploy. They change their talent pipeline. They create new sources of growth through employment change all the time, and we've seen that. What's new is the global nature of the labor market. I'm struck by Brian Moynihan's comments of they have to hire 1,300 a month just to stay neutral. Where that hiring is going, I'll bet, has increasingly changed. It's not just a U.S. labor market anymore. It's a global labor market. And so this low hire, low fire number that we get every week in the initial jobless claims is actually hiding a pretty big structural change of how firms, whether it's banks or even very small, medium-sized firms, are hiring globally. It's not showing up in U.S. employment, but it's keeping the global labor market, the unemployment rate, well below what it was pre-pandemic.
So, Neil, we don't need to worry just yet that AI is taking our jobs, does it? You're saying this is looking healthy, and is there going to be a peak at some point, or is it just all going to continuously to change?
Well, that's a great question. It's a fascinating time period. AI is also a global investment thesis, right? Data centers are not just being built in the U.S. They're being built globally, and that talent that goes with that data center construction will also be global. And so we don't know. I mean, to be very modest on a Friday, we don't know what the ultimate end game of this AI investment will mean for the American worker. But what we do know is that it's not the only game in town. The demographic pipeline is being scrambled in real time. Nobody talks about it because it's boring. It's like a third place game on Saturday. But really, it's that structural change in terms of demographics with all these people rolling off that have to be rehired from talent abroad or younger talent. That's the real story of the labor market, that and how concentrated it is. So AI has not yet made a national dent, though we are seeing pretty sizable impacts when it comes to early career in AI-exposed fields.
You also talk about the informal sector of the job market. Are you seeing a pickup of jobs there?
Yes, and this is data from the ILO, and again, this is a global story. So we always talk about the formal labor market. That's what we have data on. But the informal sector is alive and well and extremely active and not going away. In that informal sector is everything from babysitters and caregivers to landscapers to repairmen. The list goes on, and it translates around the world. And as prices increase, because global inflation is higher than average, people start to turn to those informal structures in order to get goods and services. And so you'll see that pick up as we have this aging demographic in the United States. Home health care aides won't just be coming from hospitals, they'll be coming from next door, around the corner, your neighbors. And so how that structure changes over time will be something I'll be watching very carefully, but it's hard to measure.
Anita, it's hard to measure, which makes it difficult to set policy for. How does this affect and influence monetary policy? How do you think it will in years to come?
Well, I think they're going to be still laser focused on what we can measure. They'll be looking at jobs created every month, but I think it's going to be harder to figure out what the neutral rate is because you have all these cross currents under the surface. There's been talk that the neutral rate was 0. There's been talk that the neutral rate for employment was 50. We really don't know. It's like a unicorn in the forest. We see glimpses of it maybe, but maybe it's just our imagination. But that neutral rate won't be telling. What will be telling is some things that we can measure, like long-term unemployment, which is up. That 27 weeks of the long-term unemployment is the highest we've seen in 4 years. That's a telltale sign that there is some weakness under the surface, and it's really going to be up to more data to figure out where that weakness lies.
Nita, appreciate your time. As always, fantastic explanation of what's happening under the surface, beneath the surface in this labour market. Nita Richardson there of ADP. To Nita's last point, it's been difficult. If you've been out of a job, it's harder to get back into the workforce, and the data backs that up. And when you hear these conversations every day about the labour market being okay, the economy being good, and you're listening to that and you're the outside of the labour market right now, that's certainly not what you feel.
Oh, no, absolutely not, because you're just waiting on potentially getting that break and getting back into the labour market. But if you are in the labour market and you're holding on to your job, Neil has been talking about this for months. We have been dealing with a low hire, low fire environment. What the Fed right now is focused on, though, is squarely on inflation. They're not focused on this labor market right now. They're focused on the fact that we have seen some good numbers this week when it comes to disinflation, but then once again, oil is elevated now, and potentially does that disrupt things?
It's a complicated, nuanced backdrop, but they've got to answer a simple question. Is the labour market a major source of inflation right now? Now, relative to the situation coming out of the pandemic, the answer to that right now on a relative basis is no, it's not, and maybe that's a source of comfort right now for some of the devs on the committee. They'll have that family fight a few weeks from now. Coming up next, we'll catch up with John Stolfus of Oppenheimer, Jeanette Lowe of Strategas, Jeff Curry of Altus Partners, and Dominique Toublin of Barclays. The second hour of Bloomberg Surveillance is just around the corner, with equity futures on the S&P negative by 0.8%.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
We're very bullish at the U.S. economy.
We've continued to see the economy remain resilient.
Financial conditions appear to be extremely easy.
Net a healthy economic backdrop.
I just don't see a recession in the horizon.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action looks like this. Here are the scores. We're down by 0.8 on the S&P. On the NASDAQ, we're down by 1.5. Look at that snapshot. Clear underperformance of the tech trade, not just stateside, but worldwide. Let's get into the why. The chip stocks have been getting hammered recently. As of the close yesterday, the semiconductor index down by close to 20% from the highs of June. Only 3, not even 4 weeks ago. Nvidia down again in the pre-market by close to 3%. You're seeing this elsewhere as well. Anne-Marie, the focus on China this morning.
Yep, the China shock this morning. That's really a cherry on top of the cake when it comes to this trade and the growing scrutiny around this trade if all the spending justifies these valuations and when we actually see all of this come to fruition, because China is out with another DeepSeek moment. It is a new model. They're calling it the Kimi moment, and it's going to be a lot cheaper when it comes to this model versus, say, an Anthropic Mythos, an Anthropic Fable, an OpenAI model. They are basically saying, individuals that are aware of this model, that it is operating on that level, and it looks to be much cheaper, and it's going to be open source.
How difficult is it to justify the spending stateside? That is going to dominate the questioning of all the market guests throughout this morning, with futures on a back foot down by close to 1.5 on the NASDAQ. We also need to talk about crude. WTI and Brent pushing higher once again. On the week so far, higher by more than 10%, up around 11. Could be one of the biggest weekly advances we've seen going back to, I think, April. On Brent this morning, around 86, on WTI at 81.
And as of last night, you had CENTCOM come out and say U.S. forces completed a 6th consecutive night of strikes against Iran. And then this morning, the Associated Press is reporting that those strikes are continuing. And we've seen lots of reporting that they're going after different infrastructure now, the U.S. forces, things like bridges, the infrastructure that the IRGC is very reliant on to move munitions, to move hardware, to move people, to then go after commercial vessels. On top of that, Jonathan, it's a very aggressive U.S. blockade once again when it comes to those Iranian vessels trying to leave ports.
Put the two sources of risk together. You've got some risk aversion. Into the bond market we go, yields declining, down by 2 basis points on 2s to 412. On 10s this morning, down 3 to about 452. Yields have been pulling lower. pushing lower through the week so far, not just on the risk aversion, but also on the data. PPI and CPI softer this week, going into the Fed's next meeting, only a few weeks away. So that's the cross-asset price section. Coming up this hour, we'll catch up with John Stolfus of Oppenheimer, with chip makers facing extended volatility. Jeff Curry of Altis Partners on a 6th straight day of attacks on Iran. And Dominique Toublin of Barclays warning hyperscalers are nearing an inflection point. We begin this hour with stocks adding to losses as Wall Street continues to rotate away from chip stocks. John Stolfus of Oppenheimer writing, some investors appear to expect investments in AI infrastructure to show profitability so soon. In our view, patience is called for, particularly to opportunities tied to dramatic innovation. John joins us now for more. John, good morning.
Good morning,
Is
John.
this one of those mornings where patience is called for?
I think most certainly so. And I can't help but think, you know, when you look at this, if the big story with technology is it always gets cheaper, there's compression. But at the end of the day, if you reduce the unit price cost and you increase popularity or usage across deeply embedded both business and the consumer in any kind of technology, you can make up in volume what you lose on individual
Does China
pricing.
risk derailing that with the developments this morning?
You know, but the one thing, of course, with China is what kind of security do you have if you use a DeepSeek or this latest programming? China's not a great business partner. It's been proven since COVID. That's why we have the globalization process is going through a huge re-diversification where many other countries will participate and all roads will not lead to China.
I would agree with that, and a lot of other people would too, but the question they'd ask is whether China this morning is demonstrating, and whether they have demonstrated more recently, that you can make these technological developments, these leaps, without spending as much money as we've been spending in America. How would you respond to that?
Well, I would likely respond to it. I will respond to that by basically saying I think they're great copiers. So once we've moved ahead, they take what we've got and then they learn how to make it cheaper. That's been going on since Japan and Korea were involved making toys or lunch boxes, what have you, since when I got into the business, before I got into the business, for the last since post-World War II. This has not been atypical, so I think it should be expected.
John, you might be concerned with China and when it comes to national security and how safe your data would be if you were used one of their environments. But I'm not sure the younger generation that's, you know, engrossed in TikTok or other countries around the world actually care. So if China offers a cheaper model, what's going to be the U.S. counter-argument to that?
Well, I think, you know, experience has a lot to do with it, and context is so important, and not knowing that. You know, there's a lot of people today who don't recognize that there was once such a thing known as an analog rotary phone. There was a time when we used to use pay telephones, charge cards to collect calls, and it used to be doing a long-distance call was something you watched how long you were on the phone for. You didn't have a basic price you pay and then talk as much as you like. Same thing, and it's worrisome. I think today, among the things as a capitalist that concerns me is the largesse that's and latitude that is given to communism and socialism, which have been proven failures since they emerged in power. Wherever you go, you see it, and I think eventually people learn. Sometimes they have to get burnt.
Do you think the bar has been recalibrated now, given the fact that the bar was set so high going into earnings, and even if you met the bar but didn't have greater expectations for the future, you were punished sharply and harshly?
Yeah, I think that the problem with the bar this day, especially in this earnings season, for example, is that what you do have is you have, if companies disappoint, they'll be brutalized. If they come in and they beat expectations, but it's not, even if it's super superlative, they'll likely find the traders will say, well, what's occurred here is we bought the rumor, now we're going to sell the news. But that's very typical, and you've got that battle going between the traders who are highly leveraged, looking for an immediate gratification, and intermediate to long-term investors who have the opportunity to pick up babies that are getting tossed out with the bathwater.
So, John, how do you respond to that then? Because it feels like we're learning something about positioning and price this morning, and over the last week we saw it with Samsung, saw it with Taiwan Semi as well. You need to mute your phone, John.
Oh, I'm sorry. You know, I even have the volume off.
I muted your terminal for you mid-conversation too.
It's amazing what John's able to do.
Don't worry about it.
He can speak, type, mute terminals. It's pretty incredible sometimes.
I was hoping the full screens might cover it up when I was doing it. Anyway, let's try and get back on track.
Please.
We've learned something over the last week about positioning and price.
Yes.
That even with fantastic earnings in the tech space, they're not being rewarded. And if you miss right now, you'll get absolutely obliterated. IBM's a great example of that. With that in mind, why would you want to be in tech going into the next week or so when we get those tech earnings?
Well, I think it's because the reality is we're all on the upgrade cycle, whether we like it or not. And the choice is you stay involved or you fall behind. So you need to be diversified, though. So you're not just incredibly overweight and only in technology. You also own things like materials. You're going to want to own some energy. Oh my gosh, energy, really? Financials, healthcare. There's 11 sectors. We find being diversified in a portfolio, and a dividend growth portfolio allows you to ride these storms. You can be a rider on the storm.
I was going through your favorites, and the obvious jump out: IT, information technology, communication services, usually favorites on Wall Street. Consumer discretionary is in there too. What do you like about discretionary right now?
What I really like about discretionary, it's very well hated, even though you see some stores that before were really suffering in this last reporting season. I was looking yesterday, I saw a few stores, because I manage money, I can't mention the name specifically, but I went, look at these guys. All of a sudden, they're catching a bid. You know, there was something we sold last week because it had just been putrid, its performance. And all of a sudden, it caught a bid yesterday. And I don't know if it's just because, you know, suddenly people, it's the traders tend to swing back and forth. There's a usage of the term is stocks bounce between gains and losses. And the pattern that we're seeing now has been repeated countless times before in the last 3 or 4 earnings seasons. It's always as soon as the financials come out, it's spectacular growth, wham, they slam them down, or they at least trim them. And happens with tech, and then they'll buy them back a few weeks later or a month later. But we think the trend is in place. And if you look at technology all along the way, many of these hyperscalers survived the tech bubble and then thrived thereafter. This is not like the tech bubble where you had a group of young people saying, someday we'll have 1 million eyeballs on our website, not realizing you need billions and you need to refinance your debt along the way. They had burn rates. There's a lot of sophistication in this. It's not that there won't be mistakes. It's not that there won't be perhaps even failures. It's not that perhaps some big names will become smaller names or get consolidated. But this is a trend. This is like the smartphone versus the brick or the BlackBerry thing. You know, this is that type of a change, but it's even broader. And as it gets cheaper, usage will become greater across the business space as well as all the way through the consumer, I believe.
John, it's good to see you.
Great seeing you.
Always entertaining to catch up with you, sir. Appreciate it. Thank you.
Thank you for the time.
I'm not sure it's still muted, but we'll try and figure that out. Don't know what happened with it. John, thank you. John Stolfus there of Oppenheimer.
He might have extra
Difficult
phones
to silence those new phones, right?
Yeah, I don't know, maybe it's a watch. My mom's watch is always buzzing.
Oh, it's always buzzing, it's beeping?
Yeah, just put that on silent.
It's a generational thing.
Yeah, maybe.
I wasn't saying that, John.
I was.
It might have been. It might have been. I wasn't.
The phone is insisting on showing there's context.
Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie, I wish I was that popular.
I'm sure you are, John. Well, in other news, American forces boarding a ship in the Gulf of Oman. CENTCOM saying in a post on X, U.S. Marines boarded the vessel, quote, to ensure full compliance with the ongoing U.S. naval blockade. CENTCOM also saying it redirected 3 commercial vessels. Google is months behind schedule on delivering its latest AI model, Gemini 3.5 Pro. Sources telling us here at Bloomberg the company is working on improving its capabilities, particularly in coding. Dense smoke from more than 100 Canadian wildfires spreading across a vast stretch of the United States. According to the U.S. Air Quality Index, alerts have been issued for cities including New York, Chicago, Pittsburgh, and Toledo, Ohio. Residents are urged to stay indoors or limit time outside. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thank you for the update. Thank you very much. That air quality is absolutely Awful. Have you ever seen someone get so many messages in such a short amount of time?
No, I think it was someone saying, look, I see you on TV, you look great.
Oh, is that what it was?
Yeah, but not realizing his phone wasn't silent.
It's good to see him upgrade the phone too, because people who know John will know that he was rocking a 6S up until recently, an iPhone 6 up until very recently.
Oh, no, I actually know people, no offense, of your generation that still have the flip.
Oh, God help them.
Right, okay.
Nokia flip.
Oh, really?
Yeah, old school.
Okay.
Of course, they can't see pictures of their grandchildren or of their.
But you're pretty secure.
Oh yeah, that.
John, thank you, buddy.
Thanks
it's good
again.
to see you. Thank you. Up next on the program, threatening ties with China.
Over a period of years, starting during the 2020 election cycle, the People's Republic of China carried out what is believed to be the largest compromise of election data in history.
Up next, we'll catch up with Jeanette Lowe of Baird Strategas, live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
So here's the week ahead. Later on this morning, we'll get you some economic data going into the weekend, consumer sentiment numbers. One thing on this thing is more important than everything else, and I guess that's Sunday and the World Cup final.
Yeah, I'm still looking at the messy memes.
Who are you rooting for?
Argentina.
Okay.
Who are you rooting for? That's more of the interesting question.
A Brazilian household, I think it's obvious.
You're in a tough spot.
I think it's
you
obvious.
have no choice.
Look, I respect what Messi's done. I think it's amazing. The way he's changed as an athlete is just amazing. I remember watching him more than 20 years ago as a teenager come on for Barcelona. And it was very clear that he had this tight ball control that was reminiscent of Maradona. You could see very early on that this guy was going to be incredible. And everyone at Barcelona was pretty aware of it too. The superstar at the time was Ronaldinho. And the idea that he would get to those heights was like, if he can do that, that's amazing. He has surpassed that and some. And the way his game has changed, he went from that to prolific goal scorer, which is just incredible. Then he goes off to Inter Miami late in his career, and we're sitting there and we're thinking, he's done. This is over. Like, if you could turn up for the World Cup for a bit of a swan song, phenomenal. But look at the way he's changed his game. All of a sudden, he's become a world-class crosser of the ball. 25, 30-yard balls off the right and left foot, just perfect onto people's head. I've not seen that from him before. Usually beat one man, two man, look for a short pass. The way he's changed his game even now, at an age where, like, I'm 18 months older than him. And the idea he's still playing professional football at this level, and not just 45-minute cameos, 90 minutes plus.
Grinding the whole 90 minutes.
Against the best talent on the planet.
That are younger than him. That at one point he was
15,
bathing.
20 years, yeah, literally.
Yeah, UNICEF came out and said that photo's real.
Yeah, I just find it absolutely amazing. For me, being a bit older, the nostalgia of Maradona, for me, that he was the greatest ever. To see what he's doing now, every minute he plays, every game he's played subsequently, it's pretty obvious now, it's hard to deny, the greatest ever.
Yeah, he's the GOAT. And what's interesting is, if you would have known 10 years ago that Argentina beat England at the very end of the game by 2 goals, you would have been like, oh, Messi must have scored both. Actually, he was the assist for both.
You say that, Anne-Marie, you know, if you told me that 10 years ago, I wouldn't have thought he'd be playing the game. 2018, they were talking about him not playing for Argentina anymore. And here we are 2 World Cup cycles later, and he's on the verge of winning the thing again. Just amazing. Let's talk about something more important financial market-wise, shall we? Equity futures on a back foot this morning. Equity futures down across the board. On the S&P down by 0.9. On the Nasdaq we're down by 1.65. On a Russell down by 0.6%. Clear underperformance in tech so far this morning. And China, front of mind, top of mind, not just for the markets, but also for the politics. Under surveillance this morning, threatening ties with China.
Over a period of years, starting during the 2020 election cycle, the People's Republic of China carried out what is believed to be the largest compromise of election data in history, resulting in China's illicit acquisition of 220 million U.S. voter files.
So here's the latest this morning. The president accusing the Chinese government of interfering in the 2020 election, claiming Beijing stole sensitive voter information. The allegations from Trump coming just weeks ahead of his high-stakes meeting with Chinese President Xi Jinping in September. Bloomberg's Tyler Kendall joins us now from Washington. Hey, Tyler.
Hey, John, good morning. Well, the White House's claims no doubt risk derailing what has been the fragile truce between the two countries ahead of both Xi Jinping's visit here to Washington, but also the midterm elections. As you heard, President Trump outlined that one of his claims is that the Chinese government stole nearly 220 million voter files related to the 2020 presidential race, as Beijing is out with a new statement this morning denying those allegations, calling them, quote, purely fabricated. And Bloomberg News found that many of the documents released last night by the administration were heavily redacted, appeared incomplete, or contained information already known. Now, President Trump's comments stopped short of proposing any concrete action against China, as relations have remained relatively stable, I think it's fair to say, since President Trump's visit to Beijing earlier this year. But now we have to add this to the risk of what has been growing tensions when it comes to a few different issues, including trade, but also, of course, technology related to artificial intelligence. John, earlier this week, I caught up with the Palantir CTO, and I asked him if he felt that there were national security risks with U.S. companies using Chinese open source models, and he told me he believes that China is stealing American IP from Frontier Labs.
Tyler Kendall with the latest. Tyler, thank you. That's what we were going to get. How much of this is export compliant? How much of this is borrowed elsewhere, let's say, versus internal development, their own IP? I don't know. I don't think anyone knows at this point.
Yeah, how much is this potentially individuals meeting other individuals, stealing some information, copying it from the Anthropic OpenAI types, and then running it on chips that are actually technically banned in China? These are questions that I imagine everyone in Washington, D.C. will be asking.
Without a doubt. And at the same time, that's the debate we've got to have. But I think you also have to respect that there have been significant technological leaps that have taken place in China. And that it's not just about stealing technological progress that's happened elsewhere, that things aren't being done domestically there, that you have to respect and be aware of. And I've heard that repeatedly from tech CEOs over the past few years.
And it's happening not just in the technology space, but driven by, supported by the Chinese government, plowing money into this.
These have been massive goals. Let's build on some of this. Jeanette Lowe of Baird Strategics joins us now for more. Jeanette, for a moment, things were calm. The relationship between China and the United States, I won't say was great, but I'll say things were stable. What's changed?
Yeah, I mean, I think that this is really important. When you heard the U.S. Trade Representative Greer talk earlier this week about the U.S. and China, he kind of made that point that it is all about stability in the relationship between the U.S. and China. However, before these meetings, we do know that we're 2 months away from the Xi coming to the U.S. It's not like we're 2 weeks ahead of this, but the U.S. does still raise some of the issues that it has with China. Obviously, IP theft is one of them. Doing the race with the AI is going to be a key focus for the Trump administration going forward. So you're always going to see these raising of these irritants, of these issues that we have. He said they're still not getting all of the supply of the rare earths that they're looking for. And I think we're going to continue to see that. It also gives them something to talk about at these summits. Since we're not getting large deliverables, we are just kind of seeing a stability of the relationship. And so I think this is going to be something that's going to continue forward. Stability with also having, some tension points as well.
Do you think Congress has more work to do to look at some of these AI models coming out of China and seeing how exactly they were produced?
Yeah, I mean, you definitely are seeing, at least among some factors within Congress, talking about really focusing more on China. Obviously, Chinese biotech has been a big focus for Congress as well. But the AI story, I think, is going to be important. I do think more of it's probably going to come from the administration than from Congress. You've definitely seen the Commerce Department working more quickly when they've seen like the mythos come out and being worried about what those implications can be. So I think you're going to see the ability more from the administration because they can move more quickly. They can do export controls rather than coming from Congress. But I do think Congress is going to be concerned about this as well.
I was with the president in Beijing, and it was really all smiles, soft, sweet talk from Trump to Xi Jinping, calling him one of his friends. And then he has these pretty spiky allegations last night. Why didn't he bring this up in the Beijing meetings?
Yeah, I mean, there may be that at some point when the cameras are off, they do talk about some of these things. But I do know that this has been, there are a number of issues that the U.S. does have with China. And I know that they probably bring them up at various points. Maybe they bring them up between the U.S. Trade Representative and Treasury Secretary with their counterparts before Trump and Xi get together. Because there is this point about the fact that Trump and Xi do have a strong relationship and that they can keep the relationship on track moving forward. That's been a key to this whole cycle. It's been a key in Trump's first term. But there obviously are issues, and the U.S. does have to raise them. And we do see these things happen behind the scenes. Obviously, last year with Trump's tariffs, that was a big push against China. China reacted with the rare earth and mineral restrictions to the United States and to other countries. So you definitely do see the tensions. But I think obviously when they get in person, there is much more of the trying to placate to having a good relationship and showing the way forward. And that may be one of the reasons why we're seeing this come out now rather than, again, 2 weeks before the actual summit.
What's the top ask, you think, when Xi Jinping comes to the United States?
Probably continued release of rare earth minerals and continued purchases of U.S. agriculture and trying to maintain the relationship. But I don't see much more in terms of deliverables in the near term. Again, both sides continue to be focused on getting their own supply chains separate. Obviously, China is working to have AI models that do not require the U.S., at least in theory. And the U.S. is trying to get away from any reliance on China for rare earth minerals and for other goods. But we need time to do that. And so 1 year is not going to be enough. So we'll probably see a similar relationship happening as we saw last fall, happening again this fall, to how to create another year forward to try to move forward against each other and find their own self-dependency, self-reliance paths.
Jeanette, it's good to catch up. It's good to see you. Thank you. Jeanette Lowe there of Bayer Strategas on the relationship, the evolving relationship, less stable this morning between China and the United States. Up next on the program, Jeff Curry of Altus Partners with crude heading for its biggest weekly gain since April. Plus, Shahira has your morning movers. Hyperscalers sliding in the pre-market on fears of another DeepSeek moment. More on that a little bit later.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Taking some more weight off this index this morning. We're down 0.8 on the S&P. On the Nasdaq, we're down by 1.63. On the week coming into Friday, heading towards the first week of losses for the month, chip stocks, the epicenter of the pain, down on the week by more than 8%, and that's before the losses this morning. That weekly loss, the biggest going back to April of last year. In the bond market, yields lower across the curve, bit of risk aversion, 2s down by 2, 10s down by 3, 30s also. Your 10-year this morning at 452, just slightly lower on the week. On the week, though, on 2s, the front end of the curve is where the bigger move is taking place on a weekly basis, down by some 10 basis points off the back of weaker than expected CPI and softer PPI as well. As we've said repeatedly, in the minds of many on Wall Street, just removing the urgency to hike rates as soon as July. In the commodity market, need to get you an update on what's happening with crude and the latest situation in the Middle East. We're bouncing again by 2%. Brent at 86. Let's round this one up, following a 6th consecutive day of strikes in the Middle East.
Yep, last night they finished at 9:40 p.m. according to SecCom, and this morning the Associated Press says they were continuing as of Friday morning, going after, really expanding these strikes in terms of what U.S. forces are hitting, things like bridges. The president has foreshadowed potentially this is going to come. And then he also put another foreshadow. He said maybe the last thing would hit was energy facilities. Would we actually see that happen? Because that would mean a geopolitical risk premium added to the oil price that obviously this White House doesn't want to see.
86 on Brent, WTI north of 80, 2 hours away from the cash open. Let's get you some morning movers. Yahara has more. Hey, Yahara.
Hi, John. That AI breakthrough out of China is hitting the entire tech trade this morning after a startup out of the country called Moonshot unveiled a model that it says rivals the strongest offerings from the likes of OpenAI and Anthropic. So that is sending all the chip stocks lower this morning because it reignites this concern that if you have AI models that are cheaper to build, that may mean less spending on these chips, which are just getting pricier. Meanwhile, we are also seeing the hyperscalers under pressure this morning on that Moonshot news as well, because of that same question that if these AI models become more efficient, if they become cheaper, will companies need to be pouring hundreds of billions of dollars into AI infrastructure? So the market is punishing the biggest AI spenders, the hyperscalers like Amazon, Microsoft, because altogether they are expected to spend upwards of $725 billion on AI infrastructure this year alone. And there was nowhere to hide in this tech trade because we are also seeing Netflix getting slammed. It is down more than 10% now in the pre-market after the company forecast a second straight quarter of declining sales growth. And with the stock already down some 40% over the past year, patience is wearing thin as investors continue to question whether this company can deliver the hits that it once used to. John?
Yahara, thank you. Thank you for the update. On our radar this morning, let's build on our top market moving story. A new AI model out of China fueling a global sell-off in tech. Moonshot's Kimi K3 is said to rival the strongest offerings from both OpenAI and Anthropic. US semis already heading for their worst week since last year's Liberation Day market rout and adding to the losses this morning. Elsewhere, Meta taking another step towards its cloud ambitions. The Wall Street Journal reporting the company plans on hiring a top executive from Amazon Web Services. The reported move adding to Meta's teased plans to build a rival cloud service. And finally, the US enforcing its renewed naval blockade against Iranian shipping. According to Central Command, forces have redirected 3 merchant ships, boarded a vessel for verification purposes, and disabled a tanker that failed to comply with instructions. Let's build on that and stick with the war. The US and Iran exchanging strikes for a 6th consecutive day.
We're making a record investment in our armed forces. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly.
Crude prices remaining elevated, heading for its biggest weekly gain since April. Jeff Curry of Altus Partners writing bottlenecks in the energy system are growing and widening. The entire energy complex remains underinvested, making the system extremely vulnerable to shocks like these. Jeff joins us now for more. Jeff, good to see you, buddy. Let's get into it. There's 2 words that stuck out for me in your recent work, and that's abundance, illusion. Can you just sort of flesh that out for us and why that's so important, perhaps more so at this specific moment?
Well, I think when we look at round 1 of what occurred in the Middle East, the immediate response was the U.S. to use strategic reserves, and we saw it in Japan, Europe, and elsewhere around the world, and they used it aggressively. China was flexing its system. Between the 2 of these, it created the illusion of abundance. But products are telling you, we don't have an abundance out there. I like to point out, crude oil prices are the noise, product prices are the signal. The crack spreads this morning are $70 a barrel. That means the spread between oil and products is nearly the same price of crude oil. I've never seen it that high in my entire career of over 3 decades. That's telling you this is no longer a question of deficit. This is now a question of shortage. And people are asking, where do you hide with what's going on in tech? Where you hide is commodities. They are the best performing asset class year to date, up 34%. Petroleum index alone is up 81%, and the upside is just that much greater between now and the end of the year, given the shortages that we're seeing across the energy complex. And if you put what occurred, round 1, we got rid of the insurance policies, the cushions. This time around, we're starting from record low inventories. We have the Red Sea in play. We have the Straits of Hormuz in play. We have the Black Sea in play. We have refineries in Russia all out. The list goes on. In fact, I'd argue in my entire career, I have never seen an energy environment this tight, yet the world still focuses on tech that I think is poised for a big correction, and you have the best performing asset class out there being ignored.
Jeff, what we don't have in play, though, is China buying as normal. They're down some 40% in terms of their imports from the start of the war. When do you think China is going to step in again, and what does that mean for the price?
Well, we already see that the teapots are likely coming back because the margins, $70 a barrel. And what do those teapots do? They export to the global market. The profits are too big to ignore. And when we think about, the refinery outages in Russia, we just put it in perspective. It's really nearly 3 million barrels per day. That's almost half of the refining capacity taking out. You lost refining capacity in Venezuela because of the earthquakes. You've lost another 3 million barrels per day that sits behind the Straits of Hormuz. The profit incentive to refine oil into products right now has never been higher. And when we look at a lot of that oil that was, I like to call, the reason why oil went down when the Straits of Hormuz opened with the Memorandum of Understanding, it was like a pimple popping. It burst out into the system, put downward pressure on oil. A lot of that oil is sitting off the coast of China right now and likely going to. Yes, the big state-owned enterprises are slow to respond, but the other ones are a function of the underlying profits.
Jeff, why didn't we see the nightmare scenario, given everything you're talking about, why haven't we seen $150 oil? Why is it still elevated, but it's comfortably at $85?
This is oil. Oil is a transfer price. It's noise. It's meaningless. We talk about it because usually the spread between the products and oil stays relatively constant. We're dealing with, this is unlike anything we've seen before. We've lost the oil. We've lost the refineries. The energy system is severely supply constrained. Product prices are telling you an entirely different story, whether it's prices in New York Harbor, diesel prices, $140, $150. In fact, right now, the product spread, that's all the products together versus the oil. This morning, it was $70 a barrel versus we're 85. So 85 plus 70, what, that gets you to 155? So you're already there. We have a very serious problem. And the consumer doesn't care about the price of oil. I don't know any consumer out there who consumes oil. They consume diesel. They consume gasoline. We have very serious issues. I'm going to go back to the point. The investment returns of owning the energy, a petroleum complex this year, forget oil, is up 81% right now, already year to date, because we have a problem. Everybody's focused on crude oil, but I like to point out, nobody that's focused on crude oil consumes crude oil. Only a refinery consumes crude oil. So when we think about products, it's a much more dire situation.
So, Jeff, let's talk about what's in our future. Gasoline prices right now stateside around $4. It's not great, but it's not crisis. What do you think that's going to look like deeper into summer?
It's going to go up. Where are you going to get the supply? And it's going to go up on a global basis because, again, we're thinking about, take Russia. Just for those who don't know what happened, Ukraine in the last several months is doing drone strikes, precision drone strikes, going 1,300 kilometers into Russia, taking out central, the CDU, crude distillation unit, taking out with precision strikes. Some of this stuff is going to take, years to rebuild. And when you think about what Russia is doing right now, they're supposed to be long energy. They're importing gasoline and diesel from India, jet fuel from Japan, which underscores the severity of their situation. They used to export 10% of the world's diesel market. And then to make sure they can't get the crude out, the Ukrainians are bombing the ships that would come out of the export terminals. And so we're all sitting there focused on, what's going on in the Straits of Hormuz, whether or not these ships, there's no products coming out. There's only, crude oil coming out. At this point, that's very de minimis. We also have the Red Sea at risk. And we have serious disruptions that are occurring in Russia. So again, my point being here, I think as you started to hear, the bottlenecks are shifting, but the trend is the same. And so you ask me what the risks are, they probably have rarely ever been this high right now.
There's one variable we haven't discussed, Jeff, and it's an important one. Anne-Marie and I were talking about this earlier on this morning, that the price of crude, and we'll start with crude and we can get to product in a moment, wouldn't be at 85 without China. It would be closer to 100. The change in China is important here, Jeff. They're not importing like they were. They stockpiled a lot over the last 12 months. They're not processing and refining crude like they were either. What kind of assumptions are you making on what Chinese strategies around crude and crude product is going to look like in the next 12 months?
They can't continue on like this forever. And by the way, everybody wants to blame this on China. China was part of it. But again, let's remember, they also exported the product. So they reduced. So let's say they've taken somewhere, if you do it against what would be a normalized level. And by the way, the rebound, if you look at the shipping data in the last 3 to 4 weeks, suggests there was a substantial rebound there, particularly with the tea kettles. Now, the issue there is China was exporting a lot of transportation fuels. So they have tightened that global transportation fuel at the market the exact same time that we've seen the Russia and the other things. So they're part of the problem. They're not the solution. So they've helped out in crude. Again, I may go, crude oil is the noise. Products are the signal. And so when we think about their incentive to come back, the profit margins are just simply too large for any entity out there that has spare refining capacity. It's nearly the price of crude. So again, yeah, the crude price is off, but the distillate in the gasoline and those product prices are not off. Hence why when you look at the pump prices, they really haven't come down that much. In fact, when you look at the pump prices, The marketing margin, the refinery margins have never been this high. So the question is, will China respond to the economic incentive of record margins? The tea kettles are the ones that have that incentive.
Jeff, it's good to see you, buddy. Appreciate catching up.
Great.
Jeff Curry there. Thank you, sir, of Altus Partners, the latest on energy. To Jeff's point, the abundance illusion, when he breaks it down like that, it's hard to disagree. The problem you've got right now for many market participants, they're ignoring this because they were burnt. They listened so much back in March, April. The gains were elsewhere in chip stocks and all that stuff. And this is back in the front and center of the mind, I think, of a lot of people.
Also, I really like that Jeff brought up what's going on in Russia, because there has been this hyper-focus on the Strait of Hormuz. Russia has banned diesel exports. They're seeing internally one of the worst fuel crises since the collapse of the Soviet Union, and they are a massive exporter. They are dealing with a serious problem right now, and the global market, to Jeff's point, has kind of just ignored it at the moment.
Can I quote crude? I feel like Jeff's going to jump through the screen.
I know, that was... he was like, what are you doing talking about oil, Anne-Marie? It's all about product.
Turn the volume down, Jeff. Brent crude, 86 this morning. Let's get you an update on news elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Andy Burnham, officially the leader of the UK's Labour Party. He's set to become new Prime Minister on Monday. Speaking to the Labour conference, Burnham saying, quote, "This is a proud moment for which I'm ready." US regulators tracing a parasite to shredded iceberg lettuce served at Taco Bell restaurants in 6 states. The CDC is still investigating other cyclosporiasis illnesses that are unrelated to this outbreak. President Donald Trump's media company is offering to sell traders fast access to his social media posts. Trump, who frequently moves global markets with social media posts, has the biggest following on Truth Social with almost 13 million users. That's your Bloomberg brief. John.
Vonnie, thank you. Thanks for the update. Up next on the program, funding the AI boom.
The hyperscalers are issuing so much IG corporate debt.
We used to talk about the debt diet, where companies kind of get restricted. We're not seeing that yet.
These hyperscalers were negligible players really in the IG space several years ago. They'll be up to 7 to 10% by the end of this year.
Up next, Dominique Tablan of Barclays from New York City. You're watching Bloomberg Surveillance.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Welcome to Bloomberg This Weekend. I'm David Hurd.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
China in focus this morning. Equity futures sliding on the S&P 500. We're negative. We're down by 0.8. On the Nasdaq, we're down by 1.6. You see the chip stocks suffering through the week, suffering again this morning. The chip players on the week down by more than 8% through Thursday, coming into Friday. Down again this morning. Nvidia down by 2.5%. Hyperscalers, the big spenders, struggling as well. The question: are we spending too much in America, given the developments that we've just seen take place in China?
Can you justify it stateside, given what we have in this China shock, almost 2.0, DeepSeek moment, as people are drawing a parallel to, a Kimi moment with the moonshot AI startup, and investors are saying this is cheaper, it's open source, and right now what we know is that people are saying this is going to rival the likes of Anthropic's top model, Fable, Mythos, OpenAI. And what does that mean for the models coming out of the United States that cost a lot more money?
The Nasdaq is down by 1.6%. Let's talk about the big spending under surveillance this morning, funding the AI boom.
The hyperscalers are issuing so much IG corporate debt.
Money is still very cheap for these hyperscalers.
We used to talk about the debt diet, where companies are restricted. We're not seeing that yet.
These hyperscalers were negligible players really in the IG space several years ago. They'll be up to 7 to 10% by the end of this year.
So here's the latest this morning. Enthusiasm for tech debt showing signs of slowing. Demand for Amazon's $25 billion bond offering earlier this month underwhelming, with big tech still expected to tap the debt market again this year to fund massive AI spending. Dominique Toublin of Barclays downgraded the US high-grade tech sector to underweight. He writes, hyperscalers are nearing an inflection point in IG. The issuers are already widely owned, suggesting volatility is here to stay. Dominique joins us now for more. Dom, it's good to see you.
Good morning.
Thanks for coming into the program. So SpaceX came to the market. The debt traded softer. Amazon came to market. We saw the secondary market trade softer once again. Can you walk us through what's been happening, these developments of just this last month?
Yeah, so what's been happening, if you look at until the last quarter, what we saw is this new hyperscalers that was very well received. And now the stats on the primary market is weaker. Not only are they getting more discounts when they issue, not new issue concessions, larger than the rest of the market, but also the subscription, how much people want in the primary is actually slowing down as well. The rest of the market is stable. And then the second aspect that you just mentioned, if you look at the performance a few days after it's been issued, if you look until the last quarter, they were performing well. It's not been the case now. And Amazon kind of surprised people a little bit. There was, you had to make space. And so what you saw is people making space using still the TMT sector, not so much outside, but there, to just make room for Amazon there.
It raises questions. How much capacity do we have to take down more supply later this year? And I think the better way to answer that question is, how much capacity do we have at these spreads, at these yields, to take down additional supply later this year?
Look, investing in hyperscalers right now is like sitting down at a 3-star Michelin restaurant and you don't know how many courses are coming. And the food is going to be great, right?
There's always three too many.
You have to pace yourself. So that's a very hard question to answer. But at some point, you think that if so much more is coming at a price that starts to be attractive, particularly for the rating, you're going to have to make space selling other stuff. So the key question is, when do you start to see this contagion, not only in the TMT sector that is really affected by the AI supply directly, but away from it?
Okay, this is important. You think the risk might be elsewhere in IG, in other sectors, to make space for that debt that comes to market?
Correct. So it's not the fundamentals question. It's not like there's, the macro is fine, the credit fundamentals are okay, earnings have been good, the banks this week have been good. But the question at some point is, if too much supply is coming, you're going to put pressure on everything else, right? Historically, if a sector issues a ton, that sector underperforms versus the index. That's what we've seen in hyperscalers. Look, the 4 best hyperscalers, they rated AA. They're now trading wide to the rest of the index. They were trading 40, 50, 60 basis points tied to the index a year and a half ago.
Lisa, if she was here, she's not here today, but if she was around the table, she would be asking about the risk in IG relative to, say, high yield. It's peculiar that we're talking about this in investment grade and not in junk, in high yield.
It's very new. So, look, the way we looked at this, the hyperscaler are punching above their weight here, in the sense that they're about 4% of the index. The big 6 banks are about 8% of the index. But, you know, we like to look at risk in a different way in the bond market versus the equity market. So what is the spread risk, so default risk? What is the duration risk, sensitivity to rates? If you combine this, the hyperscalers, the 6 hyperscalers, are larger than the big 6 banks in the index. And that's happened, obviously, over the last year. So this is just skyrocketing really, really quickly to a big chunk of the risk in the index.
Things are moving fast. So we wake up this morning, we get these developments in China. And for those of you just tuning in, a new model out of China, the company says is equal to the capabilities of the models coming out of, say, Anthropic and OpenAI. And of course, with regards to China, we're thinking about they're able to achieve this and they're spending a fraction of what we spend here in America, raises questions about whether these hyperscalers are spending too much money. What's your view on that at the moment?
It's very hard to predict, right? If you look a year, 2 years ago, I would have not predicted we would be here today with these models. And so what you try to look at is what's happened in the past. So first, if you look at technology, kind of innovation cycle like we have, never seen go that in a straight line. So I would expect some hiccups and volatility. And the second is, if we have a DeepSeek moment now, with the amount of debt we have today compared to a year and a half ago when DeepSeek happened, the impacts should be larger, right? There's more leverage in the system.
This is an important note. The DeepSeek moment happened, we moved on really quickly. This moment's different, the backdrop is different. How different is it? Just explain it if you can in a minute or so. How different 2026, the summer of 26 is for a DeepSeek type moment compared to, say, January 2025? How much has changed in 18 months?
It's just because the amount of CapEx that's being a program spent and the amount of debt that's being raised to finance this CapEx is now, you know, going through the motions. We have probably hyperscalers issuing close to $300 billion this year. That's a big number. When we were at the DeepSeek moment at the time, there was not so much of that going on. This was new. And so now the question is, how do you get from spending money to the NVIDIAs of the world, to hyperscalers, and then to companies using this? Now a company can say, well, this model is cheaper than that model. For this question, I'm happy to use this one versus that one. Because right now, they're just adding costs, right? At some point, you cannot just keep on adding costs. So I think already now the first adopters are optimizing on what model they want to use for what questions. And that's likely to continue.
Dom, this was great. Appreciate it. Come back soon.
Thank you.
I imagine we'll have more supply later this year.
Definitely.
Thank you, sir. Dominic Tublun of Barclays on the latest situation in the credit market. It's a different moment. 18 months later, you've got the hyperscaler spending now that's now shifted to the debt market. To Dom's point, raising far more capital than many people anticipated in both debt and equity over the last, let's say, 12 months. It's a different moment for leverage.
Yeah, and you have a China shock at this exact moment when clearly they're making these models much cheaper. How they make their models, we still have a lot of questions on. But I wonder if what's going on in China kind of means we're going to get cheaper models out of the United States. Do we see some sort of demand destruction in the United States that then brings the whole prices down?
Coming up next on the program, we'll talk about some of these issues for the equity market. Binky Chandler at Deutsche Bank, Dan Ives of Yorkville Ives, and we'll catch up with the former Fed Governor Stephen Myron on the Fed, and Jason Draho of UBS here to react.
Some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks. to external investors.
So you've done secondary sales for your employees, so employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The global economic playbook is being rewritten, and the levers of power are moving in real time.
To see where the world is headed, you have to look where the action is.
I'm Haslinda Amin in Singapore.
I'm Menika Doshi in Mumbai.
Welcome to Emerging the New Economy podcast.
Each month, we dive deep into how the world's most exciting rising economies are shaping the global future.
Join the conversation. Subscribe to Emerging on your favorite podcast platform today.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's been an incredible first half of the year with respect to the equity capital markets.
It's not just one narrow group of companies and everything else is lackluster. It's really broad.
I think you want to be really thoughtful about the positioning that you have.
You want to avoid places that have not had good earnings momentum.
We think that this has legs.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. In your price section, the scores look like this. 90 minutes out from the opening bell, futures decline. We're down 0.8% on the S&P. On the Nasdaq, we're down by 1.6. The chip players hammered all week. Down on the week by more than 8%. Down again, taking some more weight out of a major rally year to date. Nvidia down by 2.4%. Intel down by more than 3%. The hyperscalers struggling a bit as well. The big spenders, are they spending too much? Amazon down by 1.3%. Microsoft off by 1.8%. Alphabet said to be behind on the development of a new Gemini model. That stock down again this morning by 1.5%. It's developments in China spooking this market once again.
Yeah, the latest source of anxiety is coming from Moonshot, this AI company in China, and their latest model called the Kimi model, Kimi K3, I believe it's called. They're basically saying that this is going to rival the best models out of the United States, and it's going to be a lot cheaper, and it's going to be open source. So another question coming into this market, are we spending too much in the United States when China is doing it, as you said, a fraction of a cost?
If they are indeed doing it at a fraction of the cost without having a little look at some of what's happening here in America.
And if they are indeed at the same level the Mythos and the Fable models are, We don't know all of these details yet, but this is where they're putting out, and which is why everyone is drawing these parallels to DeepSeek.
These are really important questions. We're getting some notes from various guests. Southside strategist, this from Jordan Rochester of Mizuho. Bigger picture, as we've seen with the mighty rise of China's car exports, it won't be long until US and European firms embrace cheaper Chinese model alternatives. He goes on to say, it's a risk for Western firms that eventually could see a wave of AI protectionism creep in further down the road.
And then, of course, then how hard is it to justify all the spend we are seeing into this trade, which is why the market is spooked. I push back a little bit on that because there will become a point where I think policy steps in and makes policy decisions on what you can and cannot use. They did it with US models. There was export restrictions on Anthropic. Who thinks they're not going to do that when it comes to Chinese models?
18 months ago, was it? DeepSeek? January 2025, moved on pretty quickly.
Yep.
Can we move on again quickly this morning? I don't know, but the backdrop's changed. This was the point our last guest was making, that there's more leverage this time. Things have moved along in the last 18 months or so. The big spenders are spending a lot more, and they've turned to the bond market to borrow. They're raising capital in the equity market as well. The backdrop has moved in 18 months. It's not the same moment.
The context matters, and what he was talking about is like a Michelin star restaurant. You know it's going to be good, but at one point, is it just oversubscribed your stuff? And I believe you've done this before, and you walk out of the restaurant because you just can't.
Know how many extra courses you're going to be getting.
Yeah.
He was talking about debt supply. Yeah. How much supply is going to be coming from these players later this year? Are they spending too much? I don't know. I really don't know. Equity futures this morning on the S&P 500 negative. We're down across the board. Underperformance on the NASDAQ. You can see that on the screen throughout this morning. Need to talk about crude as well. Brent and WTI pushing higher through most of this morning, up by around 2%. We've got Brent at about 86, WTI pushing 81. 6 days of strikes in the Middle East. Jeff Curry of Altus Partners this morning saying it's an abundance illusion. Don't look at the price of that. Look at the price of crude product right now. That's where the problems are.
Oil is the noise, product is the signal. I feel like he was jumping out of the screen. We were talking about Brent and WTI. He said, don't look at that. It all has to do with what's happening in gasoline, what's happening in diesel, and that cushion we've been living on, well, he says that's pretty much depleted right now. And at the same time, 6 days of strikes, and they're continuing this morning, and they are expanding. They are expanding to different assets when it comes to Iran. The bridges the IRGC relies upon and that they use, the United States is starting to target them as well.
Brent up 2%, 86 so far this morning. Coming up this hour, we'll catch up with Binky Chowdhury of Deutsche Bank on the road to 8K on the S&P 500. Dan Ives of Yorkville Ives with chip stocks on the brink of a bear market. And we'll catch up with the former Fed Governor, Stephen Murren, on why the Fed could be looking at the wrong signals. We begin this hour with stocks pushing lower and chips selling off on deepening AI anxiety out of China. Binky Chowdhury of Deutsche Bank staying bullish, writing extremely positive Q2 corporate guidance has driven consensus S&P 500 earnings growth expectations to more than 26%. We see macro and tech momentum helping earnings clear the high Q2 bar. Binky joins us now for more. Binky, good morning.
Good morning.
You wrote that at the end of June, I believe.
Yes.
Have things changed in the past few weeks?
I would say from an earnings perspective, they've gotten better. We've had, as of last night, 44 companies report. I noticed during the week you've been talking a lot about, you don't want to miss in this market. Well, I can report a rather remarkable fact. We have 44 companies in the S&P 500 that have reported, and not one has missed on earnings. Now, you can take all the derivatives of earnings and guidance, and
sure.
maybe it's not all.
IBM
as far as
that, of course.
but as far as the numbers are concerned, nobody's missed, and that's absolutely that's very, very, very unusual, is the way I would put it.
What's the signal you would take from how the market's responding to it? Netflix this morning being punished as well.
Sure.
People might call that a miss, Binky.
So the price action, you might call that a miss, but I would say the actual numbers, there's no miss so far. We were not really looking for too much from the market during the earnings season. I mean, I would just, remind that earnings seasons are generally positive, basically, for the equity market. Equity market's up 75 to 80% of the time, but it's up by an average 2%, and that's kind of what we were looking for. Our framework for thinking about basically, how much is the market going to move up in a typically positive period is based on really what the market's done going into earnings season and where positioning is, and both of those things basically argued for looking for an average 2%. Now, 2%, would take you from the eve of earnings season, would take you just to 76.50. So, bigger picture, S&P has been in a range 6-7 weeks now. June 4th, 5th was the high. And I think, we're in a range, partly because of the need from a positioning point of view for a rotation in investor positioning, and that's kind of what's happening.
Well, let's start
it's a
positioning.
mini version of October. Sorry,
because
please.
you put out a note in the last week on positioning, and it's important. Bank of America have put this out, their fund manager survey earlier this week, and their note was summer upside for risk assets is limited because of bull positioning. What's the path to 8K right now?
So I think, the easiest path to 8K is, a range-bound period. We've got earnings in terms of the numbers growing at, the consensus says 26%. We say 29% if you take the beats so far seriously. We're talking about earnings growth in the 30s, and I'm not talking about a tech company. I'm talking about the S&P 500 as a whole. Valuations are going to get cheaper, and so the market's going to go up unless some big tail risk is realized. So a summer pause is not really unreasonable. There is the uncertainty, about the midterm elections, and what I would say is, just thinking about 8K, just remember that midterm election years, Q4, so starting before the midterm elections, year end, 21 of the last 23 midterm election years have been positive returns, so the risk reward is positive, and the average return is 7%. The caveat, of course, is that in those two cases when we didn't go up, one was under Trump 1.0 midterm election years. So, but I would say, it's a reasonable baseline view. And of course, 7% from the recent high would take you higher than 8,000. So,
do you think that's also been a pause for the AI trade? Because what we're seeing the likes out of the New York governor putting a moratorium on data centers, policy after this midterm election may directly affect this trade in financial markets.
It might, but I would argue, right now, all this is a positioning story. It's got a little bit to do with fundamentals. If you just think back to the last big rotation that we had from, the October highs in the NASDAQ, basically through the Iran war, you have tech basically continuously underperforming, actually falling, and the market's going perfectly sideways, where they have this huge rotation. And then we have this very, very quick recovery. It is the very, very quick recovery, basically, that is creating many of the issues that you see right now, which is positioning is long in tech, positioning is trying to pull back, but there are huge inflows into tech. It would seem that the end investor is buying the dip in terms of flows, but flows have been strong for a long time. So, you're starting to get into the decimal points of the weekly flows to make that argument.
When I look at the price action in chips, most people would agree with you. This is about price and positioning. The response to earnings tells you a lot about price and positioning. I do want to talk about fundamentals, though. The developments in China could be a fundamental issue, could raise questions, fundamental questions about whether the spending that has driven these gains is justified or not. What's your response to that this morning?
So, I think that at the end of the day, so we are sort of in this new technology world, and what it's going to deliver is a spectrum of things, is the way I think about it, rather than a binary outcome of who's going to win. You need, it's obvious to make the point that you need the more sophisticated models to answer the more difficult questions. So there's going to be a spectrum. There's obviously a race to win the platform that, and that's, it's pretty normal, is the way I would put it. But yes, is it a fundamental risk? Yeah, competition always is.
Big Kiss, good to see you.
Good to
Appreciate
see you.
it. The path to 8,000 on the S&P 500. Biggie Chandler at Deutsche Bank on the stunning earnings we've seen in this country. Pretty phenomenal. Equity futures this morning declining by around 1% on the S&P. On the Nasdaq, you can see it down by close to 2 percentage points this morning. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. President Donald Trump using a roughly 25-minute primetime address to revive claims that the 2020 election was stolen.
Over a period of years, starting during the 2020 election cycle, the People's Republic of China carried out what is believed to be the largest compromise of election data in history, resulting in China's illicit acquisition of 220 million U.S. voter files.
Trump also accusing U.S. government officials of trying to cover up Chinese interference. PayPal's board says the Stripe Advent takeover offer is inadequate. Reuters reporting PayPal thinks the offer undervalues the company and would face regulatory and financing hurdles. PayPal hasn't formally responded to the proposal. New York City Mayor Zohran Mamdani declining a pay increase. The City Council voting in favor of an 18% rise for the city's elected officials, their first pay bump in a decade. Mamdani's salary would have jumped to more than $306,000 a year, but he turned the raise down. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. Up next on the programme, we'll get you some morning calls. Plus, we'll catch up with Dan Ives of Yorkville Ives, with chip stocks nearing bear market territory. Very close on the brink of it, as of the close yesterday, about to cross it, based on the price action so far this morning. Live from New York City this morning, good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The semiconductor trade has been a volatile one. The equity trade through just a week or so ago was heavily momentum driven. The likes of Alphabet, OpenAI, Grok, and others, they are playing the long game. So I suspect that they're not huddling up this morning, altering their CapEx estimates for the coming months.
That was Aaron Cannon of Clear Harbor Asset Management on the tech route, if we can call it that, this morning. We're down across the board. Equity futures on the S&P down by 0.9, down by 1.9 on the Nasdaq 100. A new development from Moonshot, a new model, Kimi K3. Raising lots of questions about whether we're spending too much money in America, Lots of questions about the capabilities of this new model, whether it truly equals the capabilities of the models coming out of Anthropic and OpenAI, but that's sparking a sell-off, reminiscent of what we saw, let's say, 18 months ago, back in January 2025. DeepSeek, is this DeepSeek Volume 2? Things were already pretty jittery for the chips trade. Chips are down across the board so far this morning. The chip players are really struggling. NVIDIA down by close to 3%, Intel off by 4%, AMD off by close to 4% as well. As of yesterday, these chips from the highs of June in just 3 to 4 weeks, down by close to 20%. And I get it, already getting the feedback from subscribers this morning. Can you really call it a bear market when we rallied 90% in Q2 and we're still up on the year by close to 70? I get it. You probably can't call it a bear market. People will talk about getting close to bear market territory, but it's quite the correction of the highs of only a few weeks ago.
And the latest anxiety, as you mentioned, coming from China. But really this week you could have picked your poison, and the bar for these companies is set so high. And this moonshot Kimmy K version is basically questioning whether or not the hundreds of billions of dollars we're spending in AI happening in the United States is needed. Of course there's going to be tons of money spent, but is it that threshold going to be needed if China is being factual and honest on what they were able to produce and put out?
If it's truly export compliant. Amazon, the big spenders down across the board as well. They're spending too much money. Amazon down, Microsoft, Alphabet. Alphabet's a struggle too. Got to talk about the backdrop. We keep talking about the context. The news from Alphabet yesterday that the Gemini model was slightly behind. It's like the 1-2 punch to sentiment from China and from the United States.
Right, Gemini behind now where they were supposed to be when it comes to the likes of OpenAI and some of these other models. Why are they so behind? Can they catch up? We've seen this a lot with these models, though. Each company, remember when they all have their own code red moment, then they catch up?
Alphabet left for dead and then flying high, and then in the last 24 hours, I'm with you, Anne-Marie. Touch grass, Jim Zelter of Apollo. I was reminded of that quote moments ago. Just touch grass, enjoy the weekend, watch the World Cup. We've got to talk about the risks here. The Nasdaq is down by close to 2%. That's the price action. Let's get you some morning calls. First up, Barclays raising its price target on TSMC, expecting AI demand to continue to rise. Your second call from JP Morgan cutting its price target on Netflix, citing questions on the company's subscriber growth. And finally, HSBC upgrading Apple to buy, saying it's at an operational turning point with the AI boost coming at the right moment. They are not a big spender. That stock on a relative basis has been outperforming. Let's stay with tech. The global sell-off in chip makers accelerating with a new AI model in China sparking fears of another DeepSeek moment. Dan Ives, in a brand new role as partner and senior managing director at Yorkville Ives, writes tech stocks are laser focused on seeing the monetization trend for AI in the second quarter. Hyperscalers will be the standouts and remain foundational to the broader tech spending trends. Dan joins us now for more. Dan, good morning.
Great to be here.
New firm, let's start there. For the benefit of our audience, new position, what kind of seat are you speaking from?
Yeah, so again, partner and really be, you know, on a research perspective, that's going to be my main role at Yorkville Ives. But it's a modern merchant bank. I mean, this is something, for me, 25 plus years on Wall Street, it's the evolution, it's the next step. It's something to really build something that I think is going to be special in this market, but really focused in terms of sectors, AI, tech, infrastructure, energy, because where I view the fourth industrial revolution, so excited to do this and found just the best partners to do it with.
These companies are borrowing a lot of money. They're spending a lot of money. The questions we're asking this morning, based on developments out of China, is whether they're borrowing too much and spending too much. What's your reaction to what we've heard from China?
I think this is just called a white knuckle moment, no different than a mini DeepSeek moment to some extent. The reality is, like, look, models, you're going to have 10x more models over the next 5-7 years, vertical, geographic. The reality is that it's Anthropic and OpenAI's world, and everyone else paying rent relative to the models. Gemini clearly narrowing the gap. China, you're going to continue to see, you know, very good models come out of there, but it's my view, when you talk about broader spending, the trillions of dollars spent that you're going to see in AI, it's less about the models, it's about the data, it's about ultimately the build out, and I think that is something that will get validated 2Q earnings.
But doesn't this show that China is not that behind the United States? They're neck and neck when it comes to AI development?
I think for the first time in 30 years, it's not even a question that U.S. is ahead of China when it comes to tech. Now, when it comes to models, in terms of the more of a commoditization, open source, and the way that they're going after it, are they ahead when it comes to robotics, when it comes to energy? Yeah. but there's one chip in the world fueling the AI revolution, godfather of AI, Jensen, NVIDIA. And I think what you see from hyperscalers, what you see from OpenAI and Anthropic, this is going to be an arms race. But I don't even think there's a question where the U.S. is relative to China. When these moments happen, you'll see jitters, white knuckles, stocks will sell off.
Why is China able to do it cheaper?
Because at the end of the day, the open source model, if you look, whether it's DeepSeek or any others, when you compare it to what Anthropic's doing, to what OpenAI is doing, that's tip of the sphere. In other words, OpenAI and Anthropic, they're going after the enterprise market. The models are just really the start of what the broader sort of end-to-end framework is going to be. When you think about where the vast majority of spending is going to be in AI, it's not necessarily in the models, it's in the data center build-outs, the CapEx, what ultimately is going to be physical AI. I just continue to view commoditization will continue to happen on the models. I don't get as sort of nervous when moments like this happen.
That's the spending phase. Can we talk about the end phase? And I know this is really difficult to do. Where do you think the money's ultimately going to be made? The application layer, the infrastructure layer? Where do you think the money will be made?
I think it's the application infrastructure layer that's going to really be the hearts and lungs. Because if you think about today, all the data centers getting built, those data centers are going to be, it'll be like a factory for cars. You build out the factory, but now you actually need the lines. What's the operation? When you look at, as more and more companies on the use cases, that's enterprise, that's software, that's use cases.
Are you confident the app layer won't become commoditized?
I would tell you the more and more companies that I talk to that are deploying AI and going down the AI path, I feel that that's become less and less of a risk. There'll be winners and losers. There'll be ones where ultimately they're on the wrong side of it, and maybe some of those stocks are reflecting some of the nervousness. But the view today is that, look, we're still in the third inning of the AI revolution. Now, we start off, we're in the second inning. This is not seventh, eighth inning because of where this is all going in terms of physical AI. Look what Apple's doing. That's just starting the consumer AI revolution, where they're essentially a toll booth in the AI highway.
What's going on with Alphabet and Gemini? Why are they behind?
I viewed that in terms of everything that they're doing, they'll be behind at points. But the reality is that their end-to-end framework, from cloud to Gemini to what's happened on search, they could catch up pretty quickly. And I just think they've narrowed the gap much more than anyone would have thought. And it goes back to a year ago, New York City cab drivers bearish on Alphabet. Look where they are today. And maybe,
where are they today?
I'd say New York City cab drivers still bearish. Maybe they're bearish on Microsoft versus where,
I think you've got to come up with a new phrase, because in my experience with my New York City cab drivers, they're better on this market than most people I speak to on a daily basis.
And that's very healthy because of ultimately more and more retail.
They've been long and strong.
They have a big seat at the table. And I know New York City cab drivers, now they're driving Bentleys because of this market.
Right, they'll be saying, I remember years ago, they'd be like, I really like Tesla. I'd be like, what, this multiple? That's crazy. And then Tesla just like to the moon, up and to the right.
And that's why a lot of them are driving Bentleys today.
Right, yeah.
Or
True.
Cybertrucks.
Or Cybertrucks.
Many of them don't know where they're going anymore, which is its own problem.
That's a problem.
Did you notice that they hand you the phone now?
No,
to like
I had an
put the
experience
address
recently
into
which
the
is even
GPS.
worse. A taxi driver took my phone and said, do you mind if I keep it up here? And I just thought he needed it for 5 minutes. I was like, I need it back. I have calls coming in. He's like, I need it for the whole ride.
And then there's times you're like, why are you taking the Holland Tunnel? You should be taking the
Yes.
Wooga. And then you have to actually start to, I know.
They don't know where they're going.
It's an issue.
I know. Dan, it's good to see you.
Great.
Thank you, sir. No dress code at Yorkville?
We're gonna be dressing more and more color at Yorkville Labs.
Do they know that?
They do know that, and I think this is all a process for some of them.
Oh,
All right.
interesting.
Quite a process. All right. Best of luck. Dan, thank you. It's good to see you. Who's going to win on Sunday?
I mean, I think it's messy.
Yeah, gets it done. All right. Dan Ives of Yorkville Ives on this tech sector, and a bit of a rout emerging going into the weekend in the equity market. Up next on the programme, we'll catch up with the former Fed Governor, Stephen Myron, and why the Fed should rethink the focus and look back on money supply.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
So we're 60 minutes out from the opening bell. Equities declining here on the S&P. We're down by, let's call it 0.9%. On the Nasdaq 100, let's call it down 2%. The risk has been building in the chips trade for quite a while. It was up and to the right, almost vertical through Q2, up almost 90%, something like that. The biggest quarterly move we've ever seen for some of these chip names. And then things started to unravel. And it's all about price and positioning for a lot of the time. So we're down by close to 20% since the highs of the end of June. You saw some fantastic earnings. We didn't respond to it positively. That reinforces and validates the view that a lot of this was about price and positioning. Then we got some fundamental news out of China overnight, potentially fundamental news, a turn, that you're able to achieve the same technological progress, perhaps without spending as much money. It raises questions for the big spenders, the hyperscalers. It raises questions for the big beneficiaries of those spendings, which are the chip players, and the chips are down again this morning.
And then Dan Ives comes on and says, well, this is all bogus. There's going to be moments like this. It's like DeepSeek. It's going to fade into the background shortly and very soon. But obviously, this just exacerbates some of the questions the market already had this week in terms of the hundreds of billions of dollars being spent on this trade. And is someone able to do it easier, quicker, and cheaper?
Are we spending too much money? We'll get into that in just a moment. Let's turn to the bond market. So a bit of risk aversion. You'll see yields are down across the curve. On twos, we're down again, have been down throughout most of this week off the back of softer CPI and softer PPI, potentially removing the urgency to hike rates anytime soon. That weighs on a 2-year. What's interesting about this decline in yield so far this morning is that it's happening against the backdrop of higher crude prices. So we're kind of ignoring what's happening on the inflationary side of things with regards to energy, and we'll spend more time on that in just a moment. But Brent and WTI higher, given what we're seeing in the Middle East.
Right, and potentially it's going to get a lot worse when it comes to the Middle East in terms of we are at the 6th consecutive evening as of last night of strikes. It bled into the morning as well. And as we've been talking about the entire morning, they have been expanding than just the normal targets for U.S. forces. They are now going after critical infrastructure that the IRGC is reliant on to then go after commercial shipping in the Strait of Hormuz. On top of that, we've seen the U.S. blockade come back. And it's not just for show. It's been very aggressive, according to what we're hearing from CENTCOM, and how they are turning ships away and even having to board one ship.
That's the setup this morning for the price action. Let's talk about the setup for the Federal Reserve with this in mind. A trio of Fed officials sounding the alarm on stubborn inflation, keeping potential rate hikes firmly on the table. Mike McKee has more. Good morning, Mike.
Good morning, John. Yes, I think what we're looking at here is a division at the Fed. The people who want to raise rates very early on because inflation has been going up and we've got this war danger of more are a smaller group now because we've gotten lower PPI and lower CPI. But there is a substantial group of people who think that we've just had enough. We've been too high for too long and we need to do something about that. And you saw that last night with a number of Fed speakers, including Lori Logan and including Jeff Schmidt. Philip Jefferson sort of in in that camp, the vice chair saying that if we don't see movement, I'm prepared to move, which is what Lisa Cook said the other day. So you've got a lot of people who are keeping the idea of rate increases on the table, which is why you still have one priced in between now and the end of the year. And as Marie said, we've got some dangers out there in terms of future numbers. We just got the import price index. Take out petroleum, and it's still up 0.5%. And on a year-over-year basis, it's up 7.1%, was up 6.6% last week. So we still have an inflation issue coming into the country from tariffs that haven't even hit yet. So there's going to be a lot for them to discuss over the next couple of weeks.
Mike McKee with the latest on the Fed speak. Mike, thank you, sir. Enjoy Idaho. Not dressed like a park ranger this week. You notice that? Different shirt from McKee.
Well, I did send him some messages.
Did you? Did you?
Appropriate attire for television.
McKee on tour at the moment, having a good time. Okay, let's talk about the Fed. Recent Fed governor and White House economic advisor Stephen Myron, now a senior strategist at Hudson Bay Capital, arguing policymakers should pay less attention to backward-looking data and potentially more attention to the money supply. He writes, Federal Reserve officials often claim to look at everything. Ironically, in recent years, their data set has excluded measures of monetary growth. Stephen joins us now for more. Steve, it's good to see you, sir.
Morning. Thanks for having me back.
Hey, welcome back to the program. I read the note that you and the team put out. Fantastic read. And I want to say up front before we start this conversation, because I think some economists listening to this will say, oh, not money supply. Here we go. You say in this note, this report that you've put out, that you're not suggesting we should target monetary supply again, that you think there's information that's worth looking at in money supply. So let's start here. This is something we used to do at the Federal Reserve. You had the quantum of money and the velocity of money. Yeah. And because the velocity of money was largely considered to be stable, we could focus on money supply. That changed, and then people stopped focusing on supply. So let's start there. Why we used to look at it, why we stopped, and why you think it's worth looking at again.
Sure. So there's, as you point out, there's this school of economics called monetarism, heavily associated with Milton Friedman, who was a mentor for Kevin Warsh and someone who Chairman Warsh invokes frequently. And monetarism is basically the notion that the money supply determines growth in, or leads to or predicts growth in nominal GDP and in real output and in the price level. And so therefore, by controlling the money supply growth, you can control the growth of nominal GDP. And if inflation seems too high, you can put a damper on money growth and it'll come down. Now, as you point out, that stopped being useful in the 80s and 90s because this velocity of money that enters into the equation, what economists call money demand, started to move around and be volatile. And so if money demand is moving around at the same time as money supply, then you can sort of see on any supply and demand chart, the equilibrium point is going to be jumping around. And so changes in the money supply no longer serve to be useful in predicting changes in inflation and changes in growth. Now, what we did is we looked at, a number things that Chairman Warsh has written and said over the last 10, 15 years, and found that he repeatedly focuses on this as a useful input into predicting inflation, into predicting growth, right? This is not to say we're going back to targeting money growth, but just that it contains information, that information shouldn't be thrown out. And what we did was to sort of survey the literature. There's been an active frontier of research in this in the last 10 years or so, what I would describe as rescuing monetarism. And the way that it rescues it is to say, hey, this stuff still works. It's just that you weren't measuring money correctly. And the reason why velocity started whipping around is because of financial innovation. When you introduce new forms of money, sometimes it's used as a store of value and not for transactions. And if a money market fund is used as a store of value and not for transactions, then an increase in money supply driven by an increase in a money market fund isn't going to predict GDP growth. And so what these new forms of measuring money do is they basically weight the different types of money based on how money-like they are, in the same way that a price index will weight housing more than video games because you spend more on housing than on video games. And when you do that, the whole theory actually becomes quite usable again and serve to predict well the disinflationary pressure after the GFC, which again, people rake these models over the coals because M2 was exploding and yet we were in a deflationary, poor growth environment. Yep. And there were all these hysterical letters and op-eds about exploding money supply was going to lead to hyperinflation. It didn't materialize, and it was egg on the face for monetarists. But it turns out that if you measure money correctly, you actually would have gotten the post-GFC environment correctly. You would have gotten the post-COVID environment correct too.
Let's pick up on that, the post-COVID environment, because money did explode. Money supply did explode, rather like what we saw after GFC, but there was a different outcome. Can you just explain why the outcome was different and why it was still useful to look at supply?
So the money supply exploded after the pandemic as a result of stimulative monetary and fiscal policy, right? There was a combination of rates being at zero for a long period of time, record levels of QE, of Fed balance sheet expansion, and also fiscal expansions, fiscally driven expansions of the money supply. Now, one nice thing about monetarism is it actually doesn't really care what the origin of the expansion of the money supply is. The origin of the expansion could be monetary, it could be a fiscally driven expansion of the money supply, or it could be foreign. You could have a situation in which there's pools of savings abroad that then come and get spent, and that results in increasing money supply. All it tells you is that there's a link between a change in the money supply and outcomes in the economy and outcomes in the price level. And so therefore, these models did a really good job after the pandemic predicting that inflation would be high and predicting that inflation would be persistent. And when you have that type of situation, it leads you to think, hey, you shouldn't look through supply chain shocks, you shouldn't look through negative supply shocks, and you need to start getting policy into a right place for the inflation mandate. Right now, you don't see that at all. You see the model saying that money growth is approximately neutral.
If money was part of the Fed calculus, then would they have risen rates sooner?
I believe so, and I think it's not just rates. I think it was balance sheet stuff too. I mean, the Fed, after the pandemic, the Fed was buying mortgages even when home prices were up 20% year over year, right? Home prices are up 20% year over year, and the Fed is still buying mortgages. They're saying more credit into the housing sector. And because of the way that the inflation statistics are calculated, and again, inflation measurement is an area I spend a lot of time thinking about. The way that we measure housing inflation really filters into the data for years, right? Measured shelter inflation right now is running closer to 3%. Market rents have been running at 1% for about 3 years now. And so as a result, it takes a really, really long time for shelter inflation to sort of pass, for changes in rental markets to pass through completely through the measured inflation data. Measured inflation data today are still closer to 2023, 24 than they are at present. And so as a result, if you're buying mortgages when home prices are already up 20% year over year, it's very obvious that it's going to be persistent inflation. So I do think that looking at this would have been helpful earlier. I think that looking at it is helpful now. And the fact that these things are neutral now tells you the supply shocks that have been elevating inflation recently are a lot less likely to be persistent than they were in 2021, which tells you the orthodox policy response to a supply shock of looking through it is probably right.
You've sat on this committee. How difficult will it be to convince the rest of the committee to look at the same things?
So some of them are there in terms of thinking about the supply shocks like that. So if you look at what New York Fed President Williams said a couple days ago, I think it was a couple days ago, he said monetary policy has to be forward-looking, right? Which is something that Chairman Warsh has also said. The reason you say that is because there are lags with which monetary policy hits the economy. It doesn't hit the economy for 12 to 18 months. To take this back to Milton Friedman again, he had this parable of the fool in the shower. You know, you turn the water temperature in the shower, it takes a minute for the water to get hot, stays cold, you turn it even hotter, and then it finally comes out scalding. And so then you turn it down, but it's still scalding, so you turn it even more down, and then it comes out freezing, and so you never get it right? That's because there are lags with which you change the temperature in the shower and it hits water. Monetary policy is the same.
Long and variable.
Long and variable. And President Williams said this, and I think it's correct. Now, there's another approach, which means you need to focus on where inflation is going to be 12 to 18 months.
Can I ask you, though, your opinion? How long and variable you actually think they are, given the wealth channel now, how quickly we price this story in financial markets? Has that changed?
I think that there's some evidence. So when we surveyed this literature on monetary policy, on monetarism that we covered in the paper, one of the papers that really set off the reinvigoration of research into monetarism through these divisia aggregates actually found that monetary policy lags had lengthened recently, which was surprising to me. So I'm still inclined to go with the consensus of 12 to 18 months. I'm not inclined to change. There's another approach, though, which I think you sort of see from other members of the committee, who basically say something like inflation has been high recently, and therefore I expect it to be high in the future. That, to me, is, you know, treating monetary policy like it's momentum trading. I think that's not, for me, that's not enough. I would want to be forward-looking. I worry that some of these people are basically buying inflation at the top.
Steve, I haven't seen you since you left the Fed. And
Lucky you.
I was wondering if you could just give us some insight. What was it like in terms of going from the White House to the Fed? You had a very close relationship with the president at the White House. Did he call you when you were at the Fed? Are you still have do you still have an ongoing dialogue with him?
I haven't really spoken to the president since I left government. You know, I stopped into the White House to resign, and you know that was a, you know, of course, a great experience. You know, I spoke to him when I resigned from CEA as well. I stopped into the White House then. And then I spoke to him, you know, a little bit about the chairmanship selection, but I wouldn't say that I had
Did he call for advice on who should be the Fed chair?
Well, I shared some of my views about what qualities that I thought were important in a chairman, and I wanted to be helpful in sharing those views. Yeah.
Did you give a specific name?
No, I focused on qualities that I thought were important.
And what were those qualities?
Well, I think, as I said moments ago, I think forward-looking behavior is important. I think a willingness to think deeply and carefully about the data and what they actually say is important.
Did you feel like that needed to come from outside of the Fed, that there needed to be a fresh start?
Not necessarily. I think in my view, the important qualities in a Fed chairman are to think carefully about what the data say and to be forward-looking and to be flexible of mind, enough to sort of say, this works, it doesn't work. In my mind, models are, there's a bunch of different economic models you can use for forecasting and for making monetary policy. They're kind of like jackets. You need to pull out the right jacket for the weather. You don't wear a down parka in July, right? And so it's important to understand that the models aren't universally true in all times and places.
This one wears sweaters in the summer.
It's cold.
Well, in here it's a little chilly, but it's not,
But
I sometimes wear them outside too.
Steve, can we finish on this?
Yeah.
Listening to you, some people will find it controversial that you spoke to the president whilst you were sat on the Fed board. What would you say back to that?
I would say that I think that it's important to hear all views on monetary policy. I actually didn't even really discuss monetary policy with him. But even then, the president has not been reticent to share his views on monetary policy. He shares them with the entire world all the time, right? So, it wouldn't. I don't think I would. I don't think I would have possibly learned anything that everyone else doesn't know. Also, and I'm sure that if you interview him, he'll tell you on TV. Very quickly.
I have no doubt he'll tell us where he thinks rates should be.
Yeah.
Lower.
Right.
That's how he's always felt since the 80s.
Steve, it's good to see you. Thank you, sir. Appreciate it. Interesting report, something we should pay attention to, if indeed it's something the Fed chair is looking at as well. The former Fed Governor, Stephen Myron, there on the latest with this institution. Let's give you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. The U.S. completing a sixth straight day of strikes on Iran. The Associated Press reporting that bridges were among the assets targeted. Iranian state media saying 3 civilians were killed. SpaceX aborting the latest test launch of its Starship rocket. CEO Elon Musk saying some of the rocket's Raptor engines didn't fire, triggering an automatic slowdown. He says the next attempt will probably happen early next week, with 2 of the engines to be replaced. A White House teleprompter operator is facing a federal investigation. The suspect is believed to have profited from wagers on the prediction market Kalshi over the mentions of words and phrases from President Trump's speeches. Kalshi said it froze more than $90,000 in profits. That is your Bloomberg brief. John.
Vonnie, thank you. Appreciate it. Up next, Jason Draha of UBS saying market fundamentals should get the rally back on track. That conversation up next.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the skill set that you would advise every aspiring CFO to develop?
Psychology.
I think analytical skills are important. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers.
Not only for the CFO, but also the company's management. That's a communication
and collaboration.
I spend a lot of time figuring out how to take the complex and make it simple, and then finding a way to be able to communicate that both internally and externally.
I think it's relationships, whether it's working with investors, bankers, with the senior management team, with the board. Having your head down is one thing as a finance person, but keeping your ears open is super important as well. And I think that all of that is what kind of builds out being a successful CFO.
Watch Chief Future Officer only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Valuations are going to get cheaper, and so the market's going to go up unless, some big tail risk is realized. So a summer pause is not really unreasonable. You have tech basically continuously underperforming, actually falling, and the market's going perfectly sideways.
Not this morning, it's not. It's going perfectly south. That was Binky Chadha. Deutsche Bank just down on the S&P 500 by around 1%, on the Nasdaq down by close to 2%. The cash open about 40 minutes away. As we count you down to the opening bell, here's the trading diary for the week ahead at 10 a.m. Eastern Time. UMich Consumer Sentiment. On Sunday, it's the main event for the next week. It's the World Cup final. On Tuesday, Alphabet and Tesla earnings. Thursday, an ECB rate decision and another round of jobless claims. Let's look at the equity market. Stocks pulling back with tech selling off into the cash open. Jason Draho of UBS writing, strong fundamentals should support a continuation of the rally, but we recommend diversifying across equities. Jason joins us now for more. Jason, good morning. Good to see you.
Good to be here.
We've talked a lot this morning about the pain in tech. Haven't talked too much about the all-time high and the equal weight. What are you suggesting people do at this moment?
Well, diversify across equities, right? We've been saying this for a few months. The tech sector, let's call it Tech Plus, has done incredibly well this year. We've seen other parts of the market lag. It's been subtly beneath the surface sort of rotation where you've seen equal weight start to outperform, since mid-May. Small caps have outperformed this year. What we're kind of leaning into is more of a cyclical bias. So some of our preferred sectors, financials, industrials, consumer discretionary on the back of sort of a consumer strength.
It has all felt like one trade at some time. In the last month or so, it's really felt like that. Chips are cratering now. And if you're in this market, you're trying to work out, can this equity market do okay if that part of the market is performing so poorly? What's your response?
So if we go back the past year and a half, and you've seen the rotations in the market, like after the DeepSeek moment, you had semiconductors suffer, software rallied. So you've seen a lot of rotations. The momentum factor, we had sort of this, it's kind of the crash in the momentum factor at the end of June, early July. If you actually track it and look at what was the trade, in some sense it was long semis, short software. It's an underwind. So the surface of equity markets have been relatively calm. I mean, the market's been in a pretty range bound for a couple of months, but beneath the surface has been a lot of churn. But I think that's the churn is within the kind of the tech AI related. The other line, sort of other parts of the market have actually been doing relatively well. I think reflective of the fact that the macro conditions are pretty supportive.
You mentioned DeepSeek.
Yeah.
Do you believe this is DeepSeek Volume 2? Is it different somehow?
I think there'll be DeepSeek 1, 2, 3, 4, 5, 6 for the
just
next
waves of this.
Just different waves, and the markets will have to digest it. At some point, there'll be probably a significant DeepSeek X number, whatever it is, that really is cause a bigger moment. But I think this is the reality of what we're dealing with at the moment.
What happens when we get to that DeepSeek that might be real? In terms of market reaction?
So I think the biggest thing, the markets are constantly worried about the CapEx spend, the return on investment. So at some point you'll get a question like, well, you're going to get the return, and is that going to dial back on the CapEx? You're already seeing the hyperscalers kind of in some sense underperform the markets. It wouldn't necessarily be a bad thing if you saw some capital restraint. You might actually think the market say, this is good, we're finally getting some sort of discipline. But the process of doing that could still lead to certainly turbulence in the market, rotations, and probably some sort of pullback. But I think that ultimately would sort of be a healthy thing if the markets believe the the spend was sort of justified by the returns later on.
Do you think this is purely questions about the AI spend, or is it other macro factors as well, like the Fed weighing whether or not they're going to hike rates, or the conflict that's going on in the region?
So I look at aspects of the equity markets. Intra-equity S&P 500, pairwise correlation, the lowest it's been in 5 years. Dispersion is very high. You have this momentum effect that looks like it's an intra-tech trade. That to me tells me the markets are not being driven by macro factors right now. It's really not the situation in the Middle East or oil. It's being driven by questions about the tech trade. So if that's the case, the macro conditions, that in some sense, whether you believe it or not, the base of the market saying macro is benign. It's fine. Fed, maybe they hike, maybe they don't, but it's not a big drag on the markets.
Backdrop's okay. The threat of imminent rate hikes, got some cold water earlier this week. That's good too. But I think we're learning something about how this market responds to the incoming earnings. Earnings have been tremendous. Reaction to them hasn't been great. You can pick out a couple of names. I think Goldman, BNY, really nice earnings in the bank sector. Bank stocks responded to that. But for the tech trade, ASML, Taiwan Semi, Samsung, just getting the accumulation of data points over the last week, that even though earnings are great, this market's not rewarding them. On the tech sector specifically, what does that tell you about the next few weeks?
Well, I think part of it is stepping back, think about where we've gone in the last 3 months of how much the semiconductors have done, right? So there could be some element of buy the rumor, sell the news aspect where the market's rallied into it. Earnings expectations weren't cut going into earnings season. They actually kind of went higher. So it's not necessarily surprising when the bar is relatively high. You have to have not just really, really good numbers, but spectacular blowout numbers to move the markets. I think I'd look less day to day, but more sort of big picture. The trend has certainly been higher. If we get some period of consolidation and a sort of relatively quiet summer Friday, then that doesn't surprise me.
It's hard to call it a bear market in chips when the chip index is still up 70% year to date.
Exactly.
After a 90% move in Q2, which is just crazy. Who knows what it turns into? Spain or Argentina? Last question.
Argentina.
Okay.
They're the New York Knicks of FIFA right now.
Yeah, feels that way. Jason Draho there of UBS.
They were at that last game. They came out, what was that, 83rd, 85th minute? I just hear my dad screaming, and I was like, oh gosh, someone just scored. Let me go see this.
You could just feel it was coming. It was like wave after wave of attack. And once they had the substitutions, and then once England retrenched and just sat there trying to suck up that pressure.
And once Messi made that face,
what
that was it. It was over. I'm actually looking at tickets right now on Ticketmaster. 8 handle for bleacher seats.
The get-in price now is $8,000.
That's what I'm seeing. Yesterday I saw 7 on StubHub.
Can you imagine $8,000 to sit up there, which is really, really high, with the air quality right now in New York, which is absolutely abysmal, incredibly low.
Well,
imagine what that's going to feel like.
That's why I was hoping ticket sales would actually drop, because people don't want to go if the air quality is so poor.
I think they're still going to go.
Yeah.
On Monday, we'll catch up with Laurie Calvasina of RBC, Kay Hurt of JP Morgan Asset Management, Peter Cheer of Academy, and Ozan Taman of Deutsche Bank from New York City. Have a wonderful weekend. Stay safe. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
The semiconductor chill is getting chillier today. 30 minutes until the start of trading. I'm Vonnie Quinn.
And I'm Isabel Lee. Danny Berger is off. Bloomberg Open Interest starts right now.
The chip sell-off accelerates as a surprise AI breakthrough from China rattles markets.
And streaming giant Netflix is also weighing on sentiment after delivering a disappointing forecast.
Also, oil continuing to rise as the US and Iran intensify their attacks beyond military targets.
We're looking at a lot of stocks today, Vonnie, but we have to look at chip makers. The AI trade is really showing signs of fatigue. You're looking at sky-high valuations, leaving traders very little room for disappointment. And now they're also weighing on the markets, and you're looking at a threat of a new low-cost AI model from China overnight. This is what rattled investors because it could send a lot of pressure and profits and margins across the sector.
Yeah, the stock's definitely down for a third day. It's been down 2 days in a row, and this is not helping. Also, Netflix, absolutely at the lows of the session now, down 11 and change after earnings last night, plunging after it forecast slower growth and higher costs for new programming efforts, including live events.
Let's begin with the AI sell-off. So China's moonshot is out with a new model that could threaten the standing of the U.S. as the global leader in AI. Bloomberg Tech host Ed Ludlow joins us now. Ed, there's no better person that I think we can talk to about this. So talk to us about the significance of Chinese models now being compared to the likes of Anthropic and OpenAI. And is this really just another DeepSeek moment or something bigger?
Yeah, it has a lot of the characteristics of the DeepSeek moment of January 2025. Kimi K3 is a highly performing model, but the economics of it are what's spooking the market today. In very simple terms, China is able to say, here is a model that is on par with some of the best from Anthropic and OpenAI, but on the training side, you are talking historically on the Kimi models, low single-digit millions of dollars on a dollar basis to train. And the token economics of Kimi K3 are priced like a mid-tier. So they're charging basically $3 per million input tokens and $15 per million output tokens. In simple terms, it's much cheaper to run. It's priced like a sort of medium, middle-of-the-road US model, but performs like the top tier. And so that is spooking markets, and you're right that at the core of it, if you look at where the pain is, both on the logic and the memory side, the capital expenditure deployers and the capital expenditure recipients, everyone's now saying, well, why are we investing so much at such a high level in NVIDIA compute if it's just not necessary to get a $2.8 trillion parameter model that can perform to that level?
Well, Ed, Silicon Valley must have known that something like this was coming or would come very soon, and that there will be another one, right? So is it enough to cause hyperscalers and boards all over Silicon Valley to maybe rethink CapEx spending, or no?
We're saying in the Bloomberg News story that this is a surprise release from Moonshot. And, you know, the market seems to be taken by surprise. You know, the way I'm going to answer that is later in Bloomberg Tech, we're going to speak to a very prominent venture capitalist. And I'm going to ask to him, was this a surprise, right? You know, there's been so much focus on how AI in China is approached on the basis of getting to the lowest dollar per token, getting the cheapest tokens. In the United States, the focus has been getting the highest quality tokens. That's been the state of play for some time. So the net result isn't a surprise. I think it's just the timing and sort of how it was released that the market's focused on today.
All right, well, we'll watch that interview and find out more. Ed, thank you so much. That is a Bloomberg Tech host, Ed Ludlow. Brent edging higher, above $85 a barrel now as the US and Iran intensify their attacks. President Trump addressed the nation in a primetime speech.
We're making a record investment in our armed forces, and we have the strongest and most powerful military by far anywhere in the world. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly. America is back and doing really well.
For the latest, Bloomberg Washington correspondent Tyler Kendall joins us now. Tyler, has there been a shift in the administration's thinking in the sense that it's now targeting things like bridges and other types of infrastructure?
Right, Vani, I think it's fair to say that the U.S. has really expanded the scope of its efforts, both by targeting Iranian infrastructure, but also the fact that we're seeing the U.S. enforce its naval blockade deeper into the Persian Gulf. If we start with this latest wave of attacks, we heard from Iranian state media confirm that the U.S. targeted and hit at least 6 bridges as part of what appears to be a bid by the U.S. to disrupt supply routes to a key Iranian port city and naval base that the IRGC uses to disrupt traffic in the Strait of Hormuz. Now, CENTCOM came out and said that they are actively working to ensure freedom of navigation in the strait, and they put out this statement last night listing essentially everything that they've done so far this week, including redirecting at least 3 vessels, disabling 1, but then boarding another additional vessel for verification purposes. That happened in the Gulf of Oman, seeming to indicate that the U.S. has essentially expanded its boundaries of operations. Now, so far today, according to the data, the observable traffic remains very subdued, and Bloomberg News looked through the satellite imagery, and it is interesting because we're seeing there are now more Iranian-linked tankers actually getting through because they are trying to use that IRGC-approved route that gets them closer to that country. So it's definitely something that we should be tracking here because at this point, Vanya and Isabel, we haven't really seen much indication that Iran is willing to give up its leverage when it comes to the Strait, as Iran itself is escalating its own retaliatory attacks against now U.S. allies in the region. That includes Kuwait this morning, confirming that Iran hit a water desalination and energy generation plant, which is now risking access to clean water in that country.
So, Tyler, do you think we're entering a significantly more dangerous phase of the conflict? Because, to your point, this is something like the 6th straight day of hostilities.
Right, exactly. The 6th straight day of the U.S. striking Iran. So at this point, we're going to have to see where it goes from here, Isabel, because President Trump has said that he would give Iran until next week to come to the negotiating table before we could see an even further escalation in attacks with the U.S. targeting more energy infrastructure. We had this reporting earlier this week from the Wall Street Journal that President Trump could be leaning toward expanding military operations, which could include an operation around Karg Island or even putting ground forces into play. But we've sort of seen some administration officials temper that reporting, like the Vice President J.D. Vance saying in an interview earlier this week the U.S. isn't looking to put boots on the ground. At this point, the White House has said that they would still be open to diplomatic channels with Iran, but it is very clear that the patience is running thin, particularly as we see these supply disruptions continue. The domestic pressure is only going to keep piling on to this administration as we get closer to the midterm elections.
All right. Thank you, Bloomberg's Tyler Kendall, for keeping us updated with all things Washington. As always, thank you for joining us. Now, on the earnings front, Netflix forecasts a 2nd consecutive quarter of slowing sales growth and is pouring money into new kinds of programming like live sports and video podcasts. Bloomberg Intelligence senior media analyst Geetha Raghunathan joins us live. So, Geetha, thank you for joining us. Is this a sign of Netflix slowing growth, rather, a short-term pain, or do you think that it's a sign that maybe the streaming industry is maturing?
I think definitely, Isabel, the streaming industry is maturing, and we're kind of seeing that definitely all across the board. We saw that when, a lot of these streaming services stopped disclosing their subscriber metrics. But then what they did was they kind of shifted the focus to revenue growth and operating margin. Now, Netflix had basically promised, low double digits to mid-teens revenue growth, and we had seen that in many quarters, including, the second quarter, which they reported. I think the real problem that investors are having with is kind of wrapping their heads around the guidance that they gave for third quarter, which is a considerable slowdown from some of the quarters that they reported before, because we saw 16% revenue growth in the first quarter, close to almost 14% in the second quarter, and then now you see this guidance for 11.7%. And it basically just kind of really complicates the formula, because we have projected, or the Netflix model basically assumes at least a 12 to 13% revenue growth CAGR to get to some of their internal metrics by 2030, and that now seems to be in question.
What shifted, Geeta, that we didn't see? I mean, it is trying to take on YouTube TV, it is going shorter form, it's still investing in content and so on, but it seems that that's not enough to grow engagement anymore.
Exactly, Bonnie. So, they did put out their first half of 2026, What We Watched, which is their engagement report. And while we did see an increase in the total number of hours viewed, so there was a 2% increase, and it's the highest ever, number of hours viewed at 97 billion. The problem is that on a per subscriber basis, that number, the viewing number, is actually coming down. And so that is what is causing all of this, nervousness, because if you have declining engagement, does that, ultimately lead to a deceleration in the top line growth? And then that, of course, sparks fears about whether they'll be able to keep pace with their, operating margin expansion targets.
Well, investors certainly punishing them this morning in the pre-market. Geeta, thank you so much. Geeta Ranganathan from Bloomberg Intelligence. Let's get a check on the broader market now. It's not looking too much better. For the rest of the market, we have S&P, Dow, Russell 2000. All of those indices, their futures are pointed to lower opens. None more so, though, than the Nasdaq 100. It's a big sell-off for chips once again today, and not just chips, but also hyperscalers, and really almost everything tech, bar a few names, which we will get to. We have the VIX trading almost at 19, so a little bit more fear as the sell-off gains steam. Bitcoin, which cracked 65,000 yesterday, is right back down below 63,000. We have gold below 4,000 as the prospect of rates staying higher for longer enters this market. And that's all with the backdrop of the Iran war escalating and crude oil prices back above 85 for Brent, in fact above 86 now for Brent and above 80 for WTI. Let's get a look at some other movers on our radar now. SpaceX down after delaying the first Starship launch since its IPO.
And Apple upgraded to buy at HSBC on its agentic AI and hardware pipeline. And Apple, I believe, Vonnie, it's outperforming for the highest since 2006, outperforming the NASDAQ.
Doing so well, but there's such a chill in the market today that even that is causing Apple to just be up less than 1%, a tenth of a percent, in fact. Google is also lower. It delayed the launch of its newest AI Gemini model because it didn't meet standards, and that stock is down almost 3%. Coming up, sweet greens stuck in the red as investors grow worrisome about that parasite outbreak in produce. More on the restaurant industry next. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. in our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Now to high interest, a look at what's making headlines around the world. Trump Media will begin selling real-time access to Truth Social posts from its highest profile accounts through a new service called Trump API. So the feed, aimed at high-frequency and algorithmic traders, launches next month as the company looks to create a new revenue stream. Pricing wasn't disclosed. And wildfire smoke from hundreds of Canadian fires is choking cities across North America. Air quality has reached hazardous levels in Chicago, Detroit, and Minneapolis, while New York remains very unhealthy. In Texas, flash flooding has killed 2 people and forced evacuations as heavier rain is expected overnight. And the CDC says a Xylospora outbreak has been traced to shredding iceberg lettuce served at some Taco Bell restaurants in 5 Midwest states. Taco Bell has pulled the supplier's lettuce nationwide as a precaution while FDA investigates. Over 1,600 lab-confirmed cases have been linked to the outbreak.
All right, Elizabeth, thank you so much to Isabel there. Executives across the restaurant industry are taking precautions due to the parasite. We spoke to TGI Friday's global president on how he's handling it.
Number one priority for us is safety of our guests and safety of the team members that work for us. But what we are watching is where does the parasite potentially come from? There could be certain ingredients coming through the supply chain that could be more prone to it. And as we get more and more advice, if there are certain products that we think could have a more susceptible to cause this issue, we'll withdraw it from our supply chain to protect the team.
Well, joining us now is Bloomberg consumer editor Emily Cohn. Emily, how bad is this going to get for Taco Bell? How long will it take them to recover?
You know, it totally depends on how they handle it. I think we've seen cases like the McDonald's E. coli incident of 2024, where very quickly we learn what the cause is, where it's coming from, and it's able to be contained pretty quickly. McDonald's did not suffer long-term consequences of their foodborne illness outbreak in 2024. But then you look at a chain like Chipotle, which suffered for a really long time from a series of foodborne illness outbreaks that had everything, E. coli, cross-contamination, and I think that was not contained. That took a really long time to recover from. The brand was really impacted by that. So it really depends what Taco Bell and the other chains that are tied up, that could be wrapped up in this, do to identify the source and contain it as quickly as possible.
From your team's reporting, how are companies like Sweet Green, Taco Bell, and Cava maybe changing their sourcing, food safety, or how they're serving clients? Have you been hearing anything?
So far, none of the big chains besides Taco Bell have actually changed what's on their menu. We've heard from some independent restaurant owners, which are the bulk of restaurants in this country, that they are removing lettuce from their menus or that people simply aren't ordering it. I don't know about you, but I haven't been eating.
I had a sandwich yesterday and I said, hold the arugula.
Yeah.
No arugula.
So it changes. It'll be interesting to see if anything changes today. But so far, the only chain that really changed its menu, its supply, so far has been Taco Bell.
Is that the end of it now as we know it, Emily? I mean, this one supplier in Mexico apparently was responsible for these iceberg lettuces or what have you. Can we all just go out and eat everything again?
Well, I'm not in the business of giving people health advice, but I don't think we know all of the answers yet. I don't think we know, you know, if this is being removed from the system now, people who ate this lettuce might only be, like 2 weeks ago, might only be getting sick right now. So I don't know if we know the full extent of the reach of this. We don't know how many people are sick and if it's linked to this lettuce. And I don't know if we will ever know that because this is a parasite that is really difficult to track. And it sometimes takes a week, 2 weeks to even feel the symptoms of it.
And I don't think there are confirmed cases in sweet green, but the stock is at least being punished by investors.
And I just want to mention that Taco Bell has said it voluntarily removed lettuce from a supplier and it will replace it within 24 hours at restaurants in affected states.
Okay, so I guess eat at your own risks. Thank you so much, Bloomberg's Emily Cohn of the consumer team, for joining us on this Friday. Coming up, we discuss the faltering AI trade with Sarah Hunt of Alpine Saxton Woods. This is Bloomberg Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
AI stocks getting pummeled once again as investors look for returns on investment, but one stock in particular standing out as a winner. Sarah Hunt writes, we have seen several of these AI wobbles and recoveries from them, but it's hard to miss that while these stocks are seeing a drawdown, Apple has reached new highs. Alpine Saxton Woods Chief Market Strategist Sarah Hunt joins us. So is it the time for Apple to recover its mantle, Sarah, between now and, you know, when it starts releasing all of these new products that we're awaiting?
Well, I think that you saw a large period of underperformance for a while, while all the other stocks that were so exciting because of AI and people kept criticizing them because of their strategy. I think at the moment that is not the problem for the other stocks, are not the problem for Apple. Apple is now, because it's got a hardware cycle coming and because people still look at it in that way, I think they're looking at AI as something that it can solve. The question is how exactly are they going to solve it? But at the moment, the excitement is not about that right now. And they haven't done to the same extent to their balance sheet what some of the other companies have done in raising cash to spend all that money.
So Apple may be a bright spot in the AI trade, but what do you make of the AI trade? Because as much as, I mean, these companies obviously have a real business proposition, they're also really whiplashed by a lot of headlines quite easily. I mean, overnight we saw the Chinese AI startup Moonshot, and now you see the global chip sell-off affecting U.S. equities.
Well, I mean, it reminds me a lot, and not surprisingly, of the DeepSeek moment, too, which was like, this is all going to upend everything, and everything's going to change. And then the question is, how is they being trained, and is that the same thing? You know, I don't know the underneath answer to all of that. I do think that there was some vulnerability just on how much these stocks had run and what people were pricing in from a linear standpoint about earnings. And I think that there is going to be a question exactly both on the cadence of how fast you can build data centers and how fast everything can be put to work. And it may be that you see a little bit of a slowdown, but you're also seeing companies getting punished for CapEx now, where they used to be rewarded. So there may be a silver lining in the fact that it slows down a little bit. We just have to sort of see how that plays out. And I'm not sure that the question on the business model continues to be, what is it? Is it token prices? Is it this? Is it that? And I don't think we know the answer yet.
No, and we also don't fully know, and maybe investors don't even know what they want. Do they want continued spending, or would they actually, in the end, prefer if some of these hyperscalers and other companies were a little bit more reticent to spend and maybe pull back on some CapEx plans?
Well, and that's where I think that there might be, I mean, it doesn't feel like a silver lining, but there may be in the slowing of a cadence to spend. You know, I think that the debt offerings have not been as well received as some of the equity offerings because there's a limitation there about how much that can run. And I think that there may be some CapEx exhaustion that you're seeing. And if it becomes a more regular cadence that you can say is repeatable as opposed to it has to go up by 40% every year, that might be more acceptable from an investor standpoint. But I think, again, we're in that space where the stocks have run so much, it's not a surprise to see some profit taking. And it's also really, we continue to look for what exactly the business model is going to be and how we can gauge whether or not that ROI is coming in. And I think that question is just going to continue.
Where then are you seeing compelling pockets of growth in this space, other than maybe the AI trade?
Well, interestingly, there's a whole bunch of places that are trying to catch up, right? You're looking at places like healthcare. You're looking at places like financials. You're seeing a big interest in biotechs. You're seeing some very early stage companies either get bought by larger companies and or people are starting to look at that space again. You know, we look at instrumentation in a company like Danaher. We look at cash flow for companies that are managing to thrive in an environment where it's not just dependent on one spending track. And I think that there are parts of the market that have been ignored in favor of the AI trade, and you may see some money start to rotate back into them. There's been a lot of rotation in this market.
And of course, we have to keep our eye on inflation because hostilities have escalated once again.
Yes, and I think that that's also something that there was a big relief when oil prices went down. There was some great CP that we got some very good numbers. There's no stability to those numbers with the price of oil coming back over $80 and getting closer to 90 on Brent. And I think that that's something that the market had decided for itself, and investors had decided that this was going to happen this way, and then it did, and there was some relief in that. And I think there's some real concern now on the inflation front and whether or not that's going to do anything from the Fed's perspective. I think it's hard to raise rates and think that that's going to solve this particular inflation problem, but it doesn't mean that those odds don't change, and as those odds change, that makes investors very nervous.
Certainly, the rate hike in July almost pretty priced out of this market, but not potentially for the rest of the year. All right, Sarah Hunt is sticking around with us. We're going to get a quick check of the market before the opening bell. Obviously, equity indices pointing to a lower open.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
She owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Moments away from the start of trading and what's very likely to be a down Friday for equities. This is Bloomberg Open Interest. I'm Vonnie Quinn, and as you can see, we are pointed lower. And as we wait for the beginning of equities to start trading, I can tell you very much down now. A chill in the air thanks to chip stocks. Not though perhaps for those who are ringing the opening bells, who have waited some time to do this. And we're looking at a couple of companies that are involved in the fusion and nuclear spaces. So if we take a look at the New York Stock Exchange, there you have Standard Nuclear ringing the opening bell today with big bright smiles, even though it might be a down day for stocks. And then we had this man on the show just a few days ago. In fact, on the occasion of his IPO, Greg Twinney of General Fusion. It went public via a SPAC just the other day. GFuzz was the ticker, GFUZ, and high fives all around because it did pop the first day by 21% as well.
I do love when I look at those shots because everyone is indeed so happy. But maybe the markets, to your point, Vonnie, is not that happy today. You're looking at red on the screen across the board for me. We have the AI trade really showing signs of fatigue as sky-high valuations leave little room for disappointment. And investors are weighing a new threat overnight that came out. The AI model from China called Moonshot has could pressure spending and profits across the sector. You're looking at NVIDIA down by more than 2%. SanDisk even lower by nearly 4%. And Advanced Micro Devices, or AMD, down by nearly 4%. So really red across the screen, Vonnie.
All right, Isabel, thank you. Netflix plunging after forecasting slower growth and higher costs for new programming efforts, including live events. We're back with Alpine Saxon Woods Chief Market Strategist Sarah Hunt. So Sarah, Netflix lower, but it's just another example of investors really punishing a stock that doesn't match expectations. It's going to be a great earnings season. It's already been a great earnings season. Why are investors so demanding?
Well, I think that this is just a sign of the fact that people are very willing to step away from something where you think that there's a disappointment. I think that for Netflix, it started with the whole arguing over who was going to buy Warner Bros. Like that whole thing sort of took the directional question of where they were going. And I think, I mean, anecdotally, I've just heard people complain about how long the next season comes to come when you've got a season that people are involved in and the content and switching to more live. I mean, I think that it's a question of strategic direction and whether or not there's some issues there. But I mean, other metrics are very good for Netflix, right? So it's not like there's something terrible happening here. It's just that expectations were sky high and they've come down a bit. And that punishment right now is people are moving out of stocks that disappoint and moving into the stocks that they think are going to do better very rapidly.
I want to pivot a little bit to the Fed. So markets seem to be pricing in a tougher Fed under Fed Chair Kevin Warsh. Do you think investors are overestimating inflation risk, or maybe they're underestimating a growth potential in the economy?
That's sort of been the argument for the last year or so, right? Which is where would the economy be if it wasn't for the Iran war? Where would the economy be if it wasn't for some of the things that were limiting it? I think that we have to collectively, investors are looking at what is the reaction function of the Fed going to be, what is the cadence of communication going to be, and how are we going to be able to understand, as the data comes in, both what the Fed is looking at and how they feel about what they're looking at. And all of these changes are ones that are probably necessary, but they're also ones that are, in the near term, take away from what we looked at as historical relationships, because we're now looking to see what data they want to use more seriously.
Just want to point out that it looks like the Philadelphia Semiconductor Index is about to enter a technical bear market, although bear in mind it's up still 99% year over year, right? So that's the thing, we've had some massive gains, but there had been this rotation trade that was really, taking some investor money away, or at least some of these profits, right? Does that resume once we get over this whole, market wobble with the stocks?
It's going also to depend on what happens with some of the big AI IPOs, which people have talked about, right? Are we going to get some of those large IPOs? Because you could argue that maybe some of the rotation is people coming out of one place and going into another, but then you look at where SpaceX has landed, which is now below their IPO price, and it's hard to say exactly where that rotation is going to come. I do think that there will be a relief if people start to feel like they understand how spending is going to go. And right now, that question is, have we been counting on too much spending, and it's going to come down, and what is that going to do? But these stocks have moved so much, it seems reasonable to take some money off the table and then sort of recalibrate. And I think that that's where we are. And then any bad news or any news that makes it look like, what are we going to do with this model? It just exacerbates that. So I would not be surprised to see sort of like it start to roll back into favor, but we sort of have to see what happens in the next couple months.
We have this red headline just now, Apple overtaking NVIDIA to become the world's most valuable company. So that's quite a headline we're seeing. And earlier you enumerated the bull case for Apple. You highlighted why it is a bright spot in the AI trade. Maybe talk to us a little bit about the bear case. Like, what could make this reverse?
Well, I think for Apple specifically, or for so I think that any problems with unit growth or any of the issues that people have been looking at now, it's like, okay, well, if the hardware is good news, then it better have good news on hardware. They've got a lot of stuff coming out. There could be a question about timing. I think just in general, again, people are looking to stay with the companies that have massive cash flow, that are not necessarily spending that cash flow. And what happened to the rest of the Mag 7 is that they started spending all of that cash flow. So I think that people are looking for that. But again, if you see expectations, this is a market that is running on a lot of high expectations. And if expectations are not met, and or people have things to say about the future that are less secure, I think that's going to give people pause.
Just want to point out that Sweet Green is actually just charging ahead. It's up almost 17% right now. So I guess the whole idea that it is not Taco Bell and that is a potential Taco Bell solo problem is helping here. But it does bring to mind the question of the consumer. How healthy is the consumer, Sarah? I mean, we saw some of the luxury names really outperform this quarter so far. And curious, is the K-shaped economy still very much in place?
I think it is. I mean, and I think that that's, the cohort that has the most trouble with higher gas prices, the cohort that has the most trouble with inflation is not the highest spending cohort, which is why you see luxury outperforming. You sort of see the other side of that because it's the stuff in the middle that has more trouble. And I think that the consumer is generally speaking fairly healthy, but I also think you're starting to see people dip into savings. You're starting to see credit card balances go higher. And all of that is a little bit of a question about, okay, so what is that spend going to be? You may see spending elevated because people are worried about memory price things. So you're starting to buy, you're looking, maybe I'll buy a laptop now instead of in 6 months because I don't know where prices are going to be. So I think that there may be an acceleration because of concerns about different
It's too
layers.
late for the laptops though, right? Didn't Apple already up their prices?
It's too late for the laptops, but it's that idea of inflation pulls forward spending, right? Yeah. Because you're worried that it's going to be more expensive later. And when I saw that announcement, I had done that almost a year ago. I was like, I know I kind of need a new laptop. I'm going to just do this before things get worse. But I do think that whether or not that pulls forward too much and then you get a backlash to that is something that remains to be seen. But that higher end consumer is driving most of the consumer spending, and that higher end consumer is doing fairly well.
We have another headline, which is SpaceX set to wipe $1 trillion from their peak value, about a 40% drop. A lot of headlines because you were here on set with us, Sarah. Maybe just very briefly for 1 minute. Or even less. Talk to us about the M&A, the IPO pipeline. I mean, we have Anthropic waiting in the wings and maybe OpenAI, and these are valued very, very richly. Is that evidently going to bite us afterwards?
Well, so this is a different cycle. We haven't had an IPO cycle in a long time. There are a lot of companies that didn't go public in the way that most of us who have been around for longer than we'd like to admit took the time to go public or came public earlier. So there is this whole question about what does that mean for valuations and what does that mean for the market. The fact that we haven't had an IPO cycle in a long time also says that we've had a lot of money that has been concentrated as companies, buy each other and buy back their shares. So maybe the market does need some new blood in there in terms of the IPO. The question is those valuations and that richness, and a lot of that is predicated on things that we can't quite linearly extrapolate at this moment, but there's an awful lot of excitement about it. So there is a push-pull to that, and I think that you saw that with SpaceX, and it's also like they're not putting all that supply out on the market at once. So the question is the scarcity factor enough for investors to keep chasing that? And the answer is we are waiting to see how that plays out in the next few months and the next year. I think there's a lot that's going on that's very exciting. I think investors get excited by that, but there's also a question, to your point, of how much of that valuation is already in there before they even go public.
Yeah, all right. Well, Sarah, it's been a morning. Thank you so much. Good luck with your Friday trading. That is Sarah Hunt of Alpine Woods. Let's get a check on the stock market right now, because it's going to be a deep red day. It feels like about half and half in terms of higher and lower, but the ones that are lower in terms of stocks are potentially the most important ones when it comes to the weighting in the index, right? So you have all of the semiconductors. 28 out of 30 in the Philly Semiconductor Index are lower right now, and the ones that are higher are just barely holding on to gains. And you have all of the mags, 7. You have just tech in general, with the exception of Apple, as we were talking about a moment ago, performing badly. Here on the other side, you have, some consumer staples, for example, Walmart. You have some of the oil companies on higher oil, ExxonMobil and so on. Some of the health insurers and biotech stocks, United Health and Eli Lilly, with a little bit of a halo effect after earnings. And then obviously some of the companies that didn't suffer from the problems that we saw Taco Bell suffer from are also higher today, and they make up some of the 284 companies right now that are higher in the S&P 500. But if you look at sectors, it's probably more obvious, because we do have all of the chip-related tech sectors all lower. Financials index actually giving some back this week after some great earnings. And then outperforming, you have energy and consumer staples, utilities, healthcare, all of the ones that benefit from higher oil prices, and perhaps a consumer that's hanging in there just a little bit better than we expected. All right, coming up, Citi's Jason Bazinet talks about the disappointing outlook for Netflix amid a major shift in the media landscape. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
And it's time now for our top calls. Some of the analyst action in focus this morning. First up, JP Morgan upgrading 3M, saying growth is starting to take shape thanks to AI data center demand that's spilling into other parts of the economy. Next up, a good day for Apple as it overtakes NVIDIA to become the world's most valuable company. It's also getting upgraded at HSBC, of course, the firm saying Apple has a stronger product lineup coming and better AI tools. And finally, a down day for Netflix, down almost 10% now after a weak third quarter guidance overshadowed an inline quarter. Jefferies saying today the report strengthens the bear case as growth and engagement slow. Evercore ISI pointing to softer revenue and profit guidance. Piper Sandler saying investors are focused on slowing growth. Isabel.
Let's discuss Netflix further with Citi Media and Entertainment Research Analyst Jason Bazinet. He has a buy rating with a $100 price target on the stock. Jason, thank you for joining us. It's really I was going to say a great day to talk about Netflix, but maybe not so much with the stock down. But do you think that Netflix still has major growth runway, or maybe are the easy days of gains behind Netflix?
Well, the bears are certainly in charge, and when we speak to institutional investors, they want to put sort of a traditional, PE multiple on this of something in the low teens, and that seems to be the direction of travel. What I suggest to clients is there's quite a few levers that Netflix has at their disposal that are sort of underappreciated. The company talked about in their public call about new high-end tiers, new low-end tiers. So I could imagine things like paying extra to binge watch, right, and not giving that to every consumer for free, charging premiums for early access to their films. And so there are absolutely levers that they have at their disposal. Is the growth going to re-accelerate? I don't think so, but can it stay in this, double-digit range for a number of years? I think the answer is yes.
Yeah, I mean, that's actually a great point. I think a lot of people would pay a little extra to be able to binge watch, or just, they would tell themselves they wouldn't do it, but just to have the option there, right? So,
That's right.
Obviously these are things that the company is thinking about, and it's implemented so many new things. Why would it have a problem implementing these new things, Jason? Why are investors losing confidence?
Well, on this particular quarter, I think they lost confidence because Netflix has very carefully trained the buy side to sort of follow this simple algorithm, which is Netflix spends money on content, they drive engagement, that engagement allows them to ask for permission to take a price hike. And so what the buy side is looking at is the engagement numbers are falling, and so that makes investors very nervous that they're not going to be able to get pricing. That's sort of the soft hypothesis. What happened in the quarter that they just reported is in the United States, they announced a price hike that took effect in the second quarter, but the U.S. and Canada's division of Netflix missed street estimates. And so what investors think is, oh, they took the price hike, but because the engagement is down, they must have lost subs. Now, the company says that's not true, but it was a tactical data point that fed into that buy-side narrative, and that's why you're seeing downside performance in the stock today.
What about other initiatives of Netflix? Do you think live sports, podcasts, or even ads can become meaningful growth drivers? And if so, by how much?
Yeah, so, we've argued for a number of years that the direction of travel, if you look more broadly in the entertainment landscape, is what I call open platforms. That is, content that is not curated by some sort of expert. And so what does that mean? In the video world, it means YouTube grows faster than Netflix. It means in the publishing world, Substack grows faster than a lot of other publishers. And you can just go through the list of any sort of media vertical. It's the same pattern. Open beats closed. This is probably one reason why there is this visceral reaction to Netflix trying to go out and buy traditional media, because much like generals are often accused of preparing their battle plan to win the last war, the future direction of travel may be more around user-generated content. Netflix used to sort of scoff at this notion 2 years ago. They clearly have made some JVs where they're bringing in more podcast content and more content from content creators. And I think they just need to go in that direction, but probably go faster than what's been announced so far.
Yeah, I mean, it lost out most recently on Roku. Are there any other assets like that it might pursue again? Or were these, two particular assets that they wanted, and if they weren't available, it's not that they're just going to acquire for acquiring's sake?
Yeah, I mean, there's a number of potentially traditional media assets that they could buy. The one investors are talking about now is NBC Universal, which is getting spun off from Comcast in about a year. I think what would be more intelligent for Netflix to do is not to go back and try and buy IP or buy a traditional film and TV studio. The direction of travel should be, if Netflix goes out and makes some documentary about some crime that occurred, maybe give that content earlier, like a sneak peek, to content creators that will go do things on YouTube, right? And then put that user-generated content next to Netflix early, right? And then allow the consumer to go in, watch the Netflix show, but if they want to go deeper, not pop out of the app and go to YouTube, stay inside the Netflix app and sort of watch user-generated content that's been created around something that Netflix has built. So this is a strategic, I think, shift that Netflix needs to go through. And then it's not necessarily it doesn't necessarily require M&A. What it requires is just a reorientation of how they spend their content spending to lean more into content creators.
Yeah, capture and keep. Yeah, exactly. Jason, thank you so much. City Media and Entertainment Research Analyst Jason Mazanet there. Coming up, South Korea changing the rules on leveraged ETFs to help curb market volatility. We'll break down the details. This is Bloomberg Open Interest.
To the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. You're looking at a screen behind me that is going to be red because we're seeing a global chip sell-off spilling over U.S. equities. We have traders really rushing to exit their positions as they exit into these big names that have, yes, powered the bull market higher the past months, but have also become extremely expensive. You're looking at an S&P that's down by more than 1%, or maybe nearly 1%. The NASDAQ 100 down by session lows, down by more than 2%. The Russell is also down, and the Dow Jones is down, and the Philadelphia Semiconductor Index, this is a gauge of chip makers. It's entering what is called a technical bear market. It's down by 20% from its peak in June. So it's really all red in this space for me. A Bank of America fund manager survey this week said that the most crowded trade is, guess what? Long semi. So we're really going to see how the rest of the day plays out. And overnight, we saw news from a Chinese startup, Moonshot, that rattled investors. So again, that's adding jitters. And here, let's look at some single names in this space. NVIDIA is edging lower, down by nearly 4%, as well as Intel and AMD, all significantly lower. Apple actually is in the red, but it just overtook NVIDIA as the most valuable company in the world, which is a big deal for Apple. And Apple also was upgraded to a buy at HSBC, so it's really a good day for the stock. Netflix is down by 11%. They reported disappointing earnings, and they said that they're expecting slower growth. I don't know about you, but I still binge watch Netflix. And SpaceX, obviously, it shed $1 trillion from its peak. So in an attempt to curb market volatility, we have South Korea temporarily halting new listings of single leverage stock ETFs, and the county's Financial Services Commission said that they will raise the minimum deposit requirements for ETF trading. And joining us with more is James Seyfert of Bloomberg Intelligence. He follows all things ETFs from the US to Korea. So James, what do you make of this news, and do you think that this tighter regulation in Asia may spill over in the US?
Yeah, I mean, I've been writing about for a few weeks now about how some of the single stock ETFs here in the U.S. might become the tail wagging dog, or in some instances are the tail wagging the dog of the underlying stock. I mean, it's unquestionable that it happened in South Korea with SK Hynix and Samsung. They just allowed these things to launch at the end of the May. As you mentioned, the regulators are trying to basically pour some water on this fire. I mean, what you have to realize here is that some of these single stock ETFs, they're the most traded ETFs and securities in Korea. It's not like they just became very big. Like, they became some of the biggest things happening in Korea. So that would be like a single stock ETF here in the US, I don't know, trading as much as SPY, which is the most traded security on the planet. I mean, maybe that's a little extreme, but we're talking unprecedented levels. And the regulators themselves have been like, we regret approving these things. And part of that just has to do with the South Korean retail traders. They just love to gamble and bet on these things. And it really was creating volatility in their markets.
Yeah, and that's partially because their markets weren't as big as ours, so maybe we don't see the volatility quite in our markets, James, but these are absolutely, I mean, they are multiplying at a rate that's terrifying, and I'm curious what they serve beyond the idea that a retail trader could get double the exposure to a stock, but why would they want to if they didn't have enough money to put down and invest in that stock anyway?
Yeah, so I mean, what do they serve? I mean, what you end up getting is, one, you can do this. It's a lot easier to do than doing margin. It's cheaper technically to get the exposure because you're getting basically institutional cost when you're getting these margin trades. There are plenty of reasons to be, you know, hedging or betting on a single event that you want to have a short-term trading vehicle. The ETF industry is a massive tent, right? Like, you can have these vehicles that are built to be trading vehicles. The question is, are they being used properly as trading vehicles? And in the vast majority of cases, the answer is yes. But as I've written in the past, there are some instances of some of these single stock ETFs, which, as you mentioned, are exploding. We have, I think, a few hundred of them now. They didn't exist before 2022, where they are getting a little bit too big for the size of the underlying stock.
Yeah.
It's not the case that this is happening with NVIDIA or some of these other larger stocks, but from the small mid caps, it actually is an instance that I think the SEC is probably going to start paying attention to.
Yeah, and it's not just single stocks either. I bet today there's a lot of trading going on in SOXL and SOXS, right? James Seyfert of Bloomberg Intelligence, thank you so much for joining. And do tune in to ETF IQ on Mondays at 12 p.m. New York time. Coming up in the next hour of Open Interest, Joanne Su from University of Michigan walks us through the latest consumer sentiment data.
Today, Wayfair sees immense potential in brick-and-mortar stores.
When we got into physical retail, our view was that, even if the market continued to grow for e-commerce, probably a large chunk of the market in the space would stay offline.
Kate Gulliver showed me around Wayfair's new 150,000 square foot Atlanta flagship store.
When customers who have seen us online come into the store, they're generally a bit surprised by actually the breadth of what we offer. Often if you're going online, maybe you're looking for something particular. But when you come into the store, you walk in, you see the market square, you see all these pillows, you see the decorative accents. So what we're seeing actually is that in store, we do really well in some categories that online are, less a percentage of the total.
How does technology help in kind of making it seamless online to store?
I think
and vice versa.
The biggest thing is for the customer on the front end, that she can be in the store, that she can actually shop here, go back home, complete that purchase. And if you look at these sort of price tags and everything, they're all these digital tags. That's because they're the exact same prices they are online. So you're not going to be surprised that you saw something in the store and then you decided to purchase it online, that it's somehow different and that the offering is different. It's actually very consistent. But when she's here, she can have her app open, and everything that she's doing here can be very similar to what she's doing at home. And I think that consistency is quite important.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Millions of people from the mid-Atlantic to the upper Midwest being impacted for a second straight day by hazardous air. It's a result of wildfire smoke from Canada. The mayor of New York City, Zohran Mamdani, said,
"We are reaching into a level of air quality that is dangerous for every single New Yorker."
President Trump has used social media as a key element of his rise to the White House, and now his own social media company is selling some of that access, as ABC's Rachel Scott explains from Washington.
The president's media company will now sell quicker access to President Trump's social media posts on his social media platform, Truth Social. Users will be able to pay for immediate access to what the president says. The president has a history of announcing major things on Truth Social, from military action to domestic and foreign policy trade deals, long before we even get an official statement from the White House. And that's what has watchdog groups particularly concerned, that this could give another way for President Trump to profit off of the presidency.
Thursday, the president, in a speech from the White House, said that foreign countries have hacked the nation's election infrastructure and have information on voter registrations. He said this shows the law he wants must be passed.
Addressing this crisis of election security demands that Congress must pass the Save America Act.
But he offered no proof that it's had any impact on elections. The flooding in the Texas Hill Country has proven deadly, says ABC's Jim Ryan.
A Black Hawk helicopter hovers over the Guadalupe River in Kerrville, one of nearly 24 search and rescue aircraft assigned to the Hill Country flash flood response. Unlike the 2025 disaster that took over 130 lives, including dozens of children at summer camps along the Guadalupe, the fatality count this morning stood at 2. Both victims were adults.
You're listening to ABC News. New information about the cyclosporiasis outbreak that's infected thousands of people across the country. Maria in the Bay Area had to miss 3 weeks of work because of the stomach bug.
I had low-grade fever, and then the abdominal cramping. I don't even know how to explain it. It's nothing like I've ever had before.
Now the FDA and CDC say the outbreak may be linked to shredded iceberg lettuce that was served at Taco Bell locations in Kentucky, Michigan, Ohio, West Virginia, and Indiana. Taco Bell says it's removed that supply from its chain. New recall for Pillsbury rolls could pose a danger to anyone eating them, says ABC's Sophie Flay.
More than 700,000 Pillsbury dinner rolls are being recalled because they could contain glass. The rolls were distributed in 18 states from California to New York. They were marketed to businesses like bakeries and delis rather than individual consumers.
U.S. investigators are going to take the lead into looking into a disturbing European aircraft incident, says ABC's Dave Packer.
The U.S. National Transportation Safety Board says it's taking over the investigation into a Ryanair incident where a passenger was almost sucked out of the plane due to cabin decompression midair shortly after taking off from northern Greece. The 61-year-old man who was partially out the window was pulled back into the plane by fellow passengers. A Greek hospital official says the man suffered neck and shoulder injuries and friction burns. Dave Packer, ABC News.
ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning, TGIF. This is Bloomberg Intelligence, broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Isabel Lee, Scarlett Fu, and Alexis Christophorous with you on this Friday. Paul Sweeney is at the beach taking a well-deserved break. There are no more summer Fridays, as one of our guests just said out loud, and it feels that way because there's a ton of news flow. We're going to get to all of it, including the University of Michigan's latest consumer confidence numbers. We're going to check in with Mandeep Singh, our global tech of research, global head of tech research, there we go, on the latest developments out of China, which are surprising investors and driving this sell-off in tech stocks. Nathan Dean, our senior policy analyst in Washington, will join us to talk about Trump's speech last night, and we'll get an outlook on the market from Shelby McFadden, portfolio manager at Motley Fool Asset Management. She'll give us her outlook. Geetha Raghunathan will join us to break down Netflix's latest results as well, with earnings season in full swing. All right, before we get any further, let's hand things over to Alexis Christophorous for a check on our Bloomberg Business Flash.
Thanks a lot. I guess the good news is we're off our lows of the morning, but we are still much lower as investors continue to rotate out of the semiconductor stocks and the AI trade. S&P 500 down 48 points. Dow Jones Industrial Average down about 51 points. And the NASDAQ Composite down 347 points, or more than 1 1/3%, being led lower by companies like Micron Technology, Marvell Technology, and AMD. We've got Apple, again, the biggest company in the world after wresting that title away from NVIDIA, putting its valuation at $4.9 trillion, while NVIDIA's stock has been sinking along with other chip makers, its market cap now at $4.8 trillion. Shares of SpaceX tumbling today, putting the rocket and AI giant on track to wipe out more than $1 trillion in market value from its all-time high. Remember, SpaceX initially rallied after the largest initial public offering in history, but has lost ground since. It's now trading below that $135 price. And today's decline comes after the company aborted a launch of its Starship rocket due to an engine issue and said it would try again in the next few days. SpaceX down more than 3%, now trading at just under $127 a share. Netflix down 9%, the most in 4 years after the company forecast a second consecutive quarter of slowing sales growth. Over to the oil pits we go, and Brent crude is up better than 3% at $86.93 a barrel. WTI crude up 3.5% at $81.71 a barrel, and Bitcoin down more than 1% at $63,208. Spot gold is down about, or up rather, about 0.5% at $39.98 the ounce. that is your Bloomberg Business Flash. Back over to Scarlett.
All right,
and
thank you
Isabel.
so much, Alexis Christophorus. It certainly feels like we have a risk-off morning on this Friday. So let's get you to our market drivers. Market drivers is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That is goldencrestmetals.com/guide. Let's bring in Jordan Fitzgerald, our Bloomberg Equities reporter, for some stocks on the move. What do you have, Jordan?
First and foremost, we have to talk about Apple. Apple is once again the most valuable company on earth. It's wrestled the title back from NVIDIA, which had held the first place slot since May of last year. Apple has been relatively quiet today compared to the route and chip stocks that's really taken down NVIDIA. Also got an upgrade at HSBC this morning. And the market cap is nearing $5 trillion. That's 5 Elon Musks, to put it in context.
Oh, I like the way you put that.
And speaking of once most valuable companies on earth, SpaceX wiping out $1 trillion from its peak after the IPO. SpaceX briefly usurped Amazon as the 4th most valuable company that we have here. And this comes as they aborted a Starship launch last night. There were engine issues, also some problems with weather. People were kind of predicting that things wouldn't go smoothly yesterday. And shares are trading below the 135 level that we saw earlier this week. And now the market cap is coming more in line with Tesla, Elon Musk's other famous public company.
That's what a lot of investors were pointing to, that it closed below 135. Because, I mean, remember when they went public, they didn't have a range. They just had this one number, take it or leave it. And that's why it's so memorable. Even I know that it's 135, June 12. Like, everyone just really knows it.
This week it dipped below that 135 price, and now we are well below that 135 price.
We are well below. And 1 trillion is a lot.
Historically, when Tesla IPO'd, it actually had fallen below its IPO price. And we know what's happened since then. Of course, very different situation. Tesla IPO'd at around $1.
Yeah.
And we're very far from that now.
We are.
But you never know what's going to happen when we're dealing with the universe of Elon Musk.
Okay, last stock that you're watching?
Netflix, of course. Netflix shares are down to the lowest level since 2024 after results. They're forecasting a second straight quarter of slowing sales growth, and that's really spooked investors, even though results were otherwise relatively in line.
I don't know. I still watch Netflix. I binge watch, and that's what I do. So
yes, but it's a utility now for so many people. The
That is
growth
true.
is not there because almost everyone has a Netflix account.
That is true. That's why they're trying to expand into live events, podcasts, and all of that. I mean, I feel like everyone these days have their own podcast, but Bloomberg podcasts are the best. Should we say that? They are the best.
Isabel Lee, always doing God's work. Thank you so much. Jordan, thank you so much for bringing us the stocks to watch today. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Jordan Fitzgerald, our Bloomberg Equities reporter. It's a pretty light day in terms of data, relatively speaking, given what we had seen earlier this week, right, with CPI and PPI.
Definitely a light day, but like Jordan was the one who told us that summer Fridays don't exist anymore, because as I was looking at the terminal earlier today, there were so many headlines that are stock driven and maybe about stock moves like SpaceX and all of the stuff she talked about. But it's been busy.
It's been busy.
On that front, yes.
And one of the data points that came out at 10 a.m. at the top of this hour was on consumer sentiment. U.S. consumer sentiment climbing thanks to cheaper gas, and so that came in better than expected. Joanne Shu, University of Michigan Surveys of Consumers Director, joins us now from Ann Arbor. So, Joanne, how much of this is really just tied to oil prices coming down and therefore gas prices coming down and people feeling better about that?
This is largely being driven by those fluctations in gas prices. I mean, gas prices is a major part of the budgets of American consumers, so it's not really that much of a surprise. That being said, the increase that we saw this month was really broad-based. We saw it across all 5 index components, and we saw it across a lot of demographic groups, across the political spectrum, across the age distribution, the income distribution, the wealth distribution. Consumers, very broadly and universally feel a little bit better than last month. But still, these are not positive readings. They're still 12% below where they were a year ago.
And Joanne, the bounce was also broad across the political spectrum. So at least this looks more legit. I don't know if that's even the word that's the most appropriate, but
talk to us about that and how, I mean, it's the highest since February. So maybe are we reaching a turning point, do you think?
When we say it's highest since February, February is important because it was right before the Iran conflict started. So how sustainable this increase is really depends on how sustainable these gas price declines are. And in the last couple of weeks, we've seen gas prices come back up. We know the same. We're seeing the same in oil markets more generally. So if gas prices start to climb again, it's very likely these gains will be pared down. But if gas prices start falling again, consumers will start to feel some relief in their budgets, and that will pass through to their views of the economy.
Right, gas prices depending on what happens to oil in the Middle East, and those are unanswerable questions, really, and investors have kind of come to some kind of peace over that. Joanne, before we let you go, talk a little bit about inflation expectations. These are consumer-based measures of where they see inflation headed as opposed to market-based measures, which is what we often talk about. What are you seeing in terms of the outlook for price increases?
Largely speaking, we saw a decrease in short-run inflation expectations from 4.6% last month to 4.2% this month. That's a pretty sizable change, but it's still much higher than what we were seeing in February, let alone what we were seeing in 2024 when inflation had really slowed down from the post-pandemic peak. So consumers are seeing a little bit of relief on their pessimistic views from before. Long-run inflation expectations flat at 3.3, but that also not where we want it to be, still higher than it was before the Iran conflict began.
There's been pretty scant relationship between you, Mitch, and actual spending data. So do you think that we should read this more as vibes than anything else, or do you think that for maybe this time around it'll translate into actual spending?
Well, one of the reasons why we are seeing a bit of difference in terms of spending as well as sentiment, there are a couple of reasons. One is that despite the pain that people feel with high prices, if people feel stable in their incomes, if they are feeling that their wealth is supported by strong stock markets, they are going to be willing to spend through that. So at this point, we have a lot of spending that's coming from upper income, upper wealth people with sizable stock portfolios. And when you look at our data, those are the ones who feel much more positively about the economy. But again, that really depends on those parts of the economy remaining strong to support spending, despite the fact that consumers, by and large, they hate high prices.
Yep, absolutely. And that's something we see over and over again in the data and in earnings as well. Thank you so much, Joanne Shu. She is University of Michigan Surveys of Consumers Director, joining us from Ann Arbor on the U.S. consumer sentiment for July. This is the preliminary release here of the July consumer sentiment, climbing to a 5-month high, big distinction because of lower gas prices. And lower gas prices, especially over the summer, makes a huge difference. Joanne, thank you so much. All right, we have a lot of news on the tech front, Isabel, and it feels like this week we've seen a lot as it relates to Chinese tech as well.
A lot based on that, and overnight there's a Chinese AI startup called Moonshot, which I thought the name was kind of apt. It sent jitters across markets, and this is why partly we're seeing, or largely rather, we're seeing an S&P and a NASDAQ that's down on the day, and that's why you're seeing the stocks on a bear market because of that. And for that, we have no one else better to talk to than Mandeep Singh. He's with Bloomberg Intelligence. Mandeep, do you think this is another DeepSeek moment, or do you think that this is something bigger, changing, maybe in the AI race?
I would say neither. I'm of the view that, every time there is a new model release, every model provider would highlight, what is unique about this release. And in this case, they talk about token efficiency, the fact that they have caught up in terms of certain types of functionality that the model can provide. And look, we were in an environment where everyone is talking about how expensive it is to deploy these technologies, the LLMs. And this model seems to be good enough at a low price, which is what is catching attention. But that doesn't mean, they've caught up to the frontier models that Anthropic and OpenAI have released. And so it's really a function of pricing. And to my mind, you can create news, but the actual adoption, we'll have to wait and see.
And it speaks to the nervousness that consumers and investors have over who is prevailing in this AI race. It very much feels like an AI race. Mandeep, why have we gotten to the point where even though the cutting edge development and technology is happening in the US, it feels increasingly like Asian markets are dictating where things go in terms of price action?
Yes, I think you bring up a very good point that, what's going on in Korea right now seems to be affecting, the indices here and how stocks are trading. And that's part of the nervousness that you alluded to, that, when things go parabolic, as they did with some of the stocks, for no reason whatsoever, yes, the fundamentals have been great, but that doesn't mean, things have to go up in that fashion. And that's what creates nervousness around valuations. I mean, we are seeing even news like Apple asking, China for qualification of, the US government for qualification of a Chinese memory name is creating a lot of downside for the US memory names and, your Micron and even SK Hynix. So that's the kind of environment we are in, where any sort of news creates that sort of action where, if stocks were trading at a high valuation, it's going to have an impact. And I think the fundamentals haven't really changed in a big way, which I think will be validated when these companies report their earnings and guide for CapEx, which I expect numbers to go up. But we are in an environment where news will have an impact on day-to-day volatility.
Mandeep, do you think that this is a sign that investors should see this as a threat to U.S. AI leadership, or is it just simply more competition, which is what we should expect anyway?
I think the overall message here is you can't have two companies dominate the LLM race. It's never going to be good from an ecosystem perspective. They will have very high margins, which is definitely not something that all the other companies want in the ecosystem. So there is a desire to have more LLMs and cheaper pricing for these LLMs, and that's why if the option is available through open source Chinese models, people are looking into it now, and it's across the board, and it's no different from any other technology trend. You want to see the cost come down as adoption goes up. That wasn't happening here. And I think that's why you are seeing so much interest in open source LLMs right now.
Okay, so China with DeepSeek and now Moonshot, these developments, when we hear about it, kind of feels like it comes from out of nowhere, mainly because we haven't been following the incremental news on it. Are there other places or other companies that could surprise us in the same way, where suddenly they come out with a fully formed AI model, LLM, that we didn't know about?
Yeah, I mean, look at Meta announcing the Muse models and, trying to become a cloud provider and selling their APIs externally. We've heard about Grok, SpaceX Grok, and now with the merger with Cursor, they have released a new model. So all these could be viable options in terms of using LLMs at a lower token pricing than what the frontier models are currently giving. And so that's where the competition is going to increase. But I go back to that functionality point. All these LLMs are still trailing in terms of the functionality that Fable or, the OpenAI models have. So that gap needs to close, and then people will route the query to the LLM that's most appropriate for that task. And you don't need the frontier LLMs for every query. And I think that's the direction we're headed.
Okay, got it. Thank you for laying that out for us. Mandeep, always a pleasure. Have a great weekend. Mandeep Singh is our global head of tech research. He's resting up because Alphabet reports earnings next week. And then after that, the rest of the Mag 7 names and the hyperscalers do so the following week. All right, let's get a reset of the markets here and a check of our top headlines with Alexis Christoforous with our Bloomberg Business Flash.
All right, thanks very much, Scarlett. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. A sell-off in chip makers is driving the group toward a bear market on worries that the artificial intelligence spending spree is becoming harder to justify. The The Philadelphia Semiconductor Index is down more than 18% since its recent peak in June. A bear market is defined as a drop of 20%. Right now, S&P 500 down 41 points. Dow Jones Industrial Average has managed to turn things around and is now in the green by 20 points, but the NASDAQ Composite decidedly lower this Friday, down 313 points or 1.25%. The regional lenders are closing out a big week for bank earnings. Truist Financial up about 0.5%. Higher investment banking and trading and wealth management income helped to drive a rise in revenue last quarter. And Fifth Third Bancorp recorded a step up in revenue and profit as the integration of its recent Comerica acquisition translated into some major gains. The results were just in line with estimates, and that could be a reason why shares of Fifth Bank are down more than 3%. Brent crude at $86.85 a barrel, up 3%. WTI crude up more than 3% at $81.60 a barrel. The Bloomberg Dollar Spot Index little changed at $1216.86. Shares of Sweet Green up as much as 20%, halting a 4-day losing streak after U.S. regulators linked a multi-state diarrhea outbreak to shredded iceberg lettuce served at Taco Bell locations in 5 states. Shares of Taco Bell, by the way, are higher by about the Yum Brands, which is the parent company, up by about 2%, and the other big fast casual salad chain, Cava, also gaining this morning. And that is your Bloomberg Business Flash. Back over to Scarlett and Isabel.
All right, thank you so much, Alexis. So it's a relief that we've figured out what the causes of that lettuce
which is
outbreak.
maybe why the stock is Taco Bell, Yum Brands is actually rising today.
Okay. So the unknown has been resolved, at least for now.
There you go.
All right.
Wall Street likes certainty. This we know.
Well, salad eaters like certainty too. So I'm glad to know that. So I can go ahead and get my $20 salad from Sweet Green after saving up for it all week.
Sad but true, yes.
You had a Sweet Green salad this week,
I had a
right?
Sweet Green before this whole news, or maybe it was during and I wasn't paying attention, but I'm fine.
And you're relieved to hear that they found
so
the
far,
source.
I'm fine. But the results they say are the after effects you'll know just a few weeks out. So
Okay.
TBD, ladies, TBD.
All right.
I'm praying for you, Isabel.
Thank you.
All right, let's get to the developments that kind of are set up for today, because President Trump held a primetime address last night, speaking on, as usual, all kinds of things. So we want to bring in Nathan Dean. He is our senior policy analyst joining us from Washington. Nathan, what was this primetime address meant to be about? What was it actually about?
So the address was about election interference in 2020. This is really President Trump signaling that by declassifying information that was largely already known, that there could have been election interference in 2020. And as a result, he was pushing Republicans in the Senate to really embrace this idea of the Save America Act. This is the bill that actually would put additional restrictions and identification requirements on voting. And, President Trump has had very little success in persuading Republicans to embrace that. But I think it's also a signal that President Trump isn't really addressing the one issue that a lot of voters are talking about, and that's affordability. And that's a problem for the president, because every day between now and the election that he's either focused on election interference or the conflict in Iran, it's not a day that he's focused on affordability. So ultimately, I don't think that speech last night really changed the narrative, nor did it really bring any new catalysts. It's just a signal that President Trump isn't really addressing affordability at the moment.
And then he also mentioned that he claimed the Chinese government stole voter files, and we have the Chinese Foreign Ministry saying that that's purely fabricated and they are malicious smears. So then talk to us about how this seems to be just President Trump doubling down on the fraying relationship that the U.S. has with China. Are we at a point where there's no return?
We're not there yet. I mean, obviously, things are going to get a little bit more awkward between the meeting between President Xi Jinping and President Trump that's scheduled for later this year. But there's a lot of time between today and that meeting where things can be walked back. I mean, this wasn't really a speech that was designed for people outside of the United States to look at. This was a speech that was designed for American voters. And, President Trump right now has a very low approval rating. His approval rating is around 37%, according to the most recent Washington Post poll that just came out. And if you look at the prediction markets, the Kalshi contract, for example, has an 82% chance the Democrats take the House of Representatives in November. Now, President Trump is trying to change the narrative on that. But like I said before, it's very much a struggle because affordability is that one message that voters care about. And when he's talking about China, obviously there are tariff issues, there are issues with the price of oil, et cetera, but President Trump still isn't taking those issues and then correlating it to what's happening on Main Street USA.
So when it comes to this Save America Act, and this is something that he has really been hammering home, in fact, not even signing the housing bill because he wanted the Senate to move on the Save America Act. Did this speech, has his lobbying paid off in any way? Is there any movement on it in the Senate?
None whatsoever. I mean, there is a little bit of movement on a specific provision of Save America. So where we're at right now is President Trump wants the Senate to embrace the Save America Act by getting rid of the filibuster. That's not going to happen. Senate Majority Leader John Thune said, look, it's not there. The votes aren't there either just to have a pure up and down vote. You wouldn't even get a 50-person vote on this. So President Trump now wants this to be part of the Reconciliation 3.0 package. Now, the House Republicans released their blueprint on Reconciliation 3.0 earlier this week. It's a $95 billion package, $60 billion for the Department of Defense, $11 billion for farm aid, but it also includes $10 billion for the Save America Act. Now, you can't include Save America in reconciliation. The Senate parliamentarian is going to throw it out. But if you give $10 billion to states to implement Save America or to incentivize states to implement Save America, that actually could fly. So you're not going to get a Save America Act, but you're essentially going to get grants to states that will implement it. And as a reminder for a lot of folks watching outside the United States, voting rules are dictated by the states. So certain states can look at that and just say, you know what, we're not going to implement it. Thank you, President Trump, but we're going to have other issues.
Got it. Nathan, thank you so much for clarifying all of that. Nathan Dean is our senior policy analyst joining us from Washington of Bloomberg Intelligence.
A quick reset in markets, Scarlett. We're seeing a sell-off in chip makers pushing the semiconductor index into a bear market, and that's because of worries of AI spending and having to justify that with investors. And our next guest will maybe help us clarify all of that. We have Shelby McFadden, portfolio manager at Motley Fool Asset Management. I'm so pleased that you can join us today, Shelby. Can you help us make sense of the overnight surprise of the Chinese AI startup Moonshot and how that's causing fears to reverberate in markets? Talk to us about the vulnerability of the AI trade to headline risks.
Yeah, I mean, one of the primary issues is something that we've seen sort of in the network effects of some of the other companies we follow. So looking at a video game company that we follow closely, they make hardware and software. And one of the main issues was, what is memory cost going to really do for them? And so if we lived in a world where we didn't have a big sort of influx of supply coming out of China, then the answer was this could be really detrimental. We could be talking 90% cost increases. But then when we're starting to see, wait a second, we can get some demand fulfilled out of this space. A lot of these different U.S. export bans and things are not the end of the story. And it does appear to me that we are seeing the beginnings of, wait, we could see some price compression here if we are able to have a little bit more global competition. So I think that's one of the things we're seeing, is that it doesn't mean that this is the end of sort of U.S. primacy in most of global stocks or in chip making or designing, but it does mean it's the beginning of a challenge.
So with this mindset that we're at the beginning of a challenge and that, things are shifting long term, how does that set us up for earnings season? Because we've got Alphabet reporting results on Wednesday, the first of the hyperscalers to do so. Are investors going into this set of earnings in a mindset where you have to show me in a way that you haven't before, or are they willing to give these companies the benefit of the doubt?
Scarlett, I think it's absolutely show me in a way you haven't before, because what valuations come down to is time value of money. It's when am I going to get the payoff of all of the value that I believe that you're going to provide? And what we are starting to see is that's getting pushed out a little further and further. And when we have inflation and uncertainty, we get a rise in discount rates. So if you're then pushing out the payoff, increasing the discount rate, today's valuation is going to come down. And so I think investors are definitely itchy to be shown what's happening, because it's been a bit in the most layman's terms, right? It's been a few years of allowing these premiums to keep succeeding. And folks are starting to realize, okay, there are effects to this. There are first and second order ramifications to the high cost of memory design, manufacture, and then compute. So I do think investors will be saying, show me a bit, because they want to know where to put their money. The concentration we're living in right now is very much a choice. And investors want to know, should I go back to some of these blue chips? Should I go back to a little bit of income? Show me why I should stay here.
The stakes are definitely high for next week. And you also write in your note that Intel expanding its Google Cloud partnership. So consolidation is the name of the game right now. And we've talked about that for a bit, that it seems to be like this ecosystem of the same names powering each other. Anything you're looking out for next week when it comes to Intel? And maybe pick a stock that you want, because there will be a ton reporting next week.
Yeah, definitely. I mean, for one, you're usually just stronger together. Not always. Sometimes it doesn't work out completely well. And then, of course, there is the shareholder side of it. So again, seeing that consolidation is definitely not shocking to me. I think what we're seeing with Intel is what a lot of us investors hoped for on that day. Gosh, I can't remember if it was spring or summer, but I remember getting the breaking news that, wow, the U.S. government's making an investment. And so we are seeing a bit of that turnaround. So I am actually really interested in what the story is going to be with Intel, because it could be such a success story for the United States in this space. So I would expect to hear, maybe even if not this quarter, over the coming quarters, Q3, Q4, about more partnerships, because it is a way also to just get yourself in the queue. And to reach certain customers and certain enterprises that you wouldn't otherwise have access to. And knowing how big these companies are, they can't exactly just buy each other. So they have to be able to work together at a subsidiary level and a partnership level in order to experience all those benefits and network effects.
Okay, so watching the hyperscalers, watching Intel, we also get a read on the consumer, the high-end consumer, because American Express reports earnings next Friday. And I know that the consumer and consumer spending is something that we all watch carefully because it's a driver of the economy, at least until recently when it seems like CapEx became the big driver of the economy.
Yeah, absolutely. Consumer spending is going to be interesting. You know, I had a discussion yesterday where, you know, we said 1 month of CPI does not a Fed decision make, right? And when it comes to retail sales, the question for me in the spring was, let's see how summer goes, right? If we see a soft summer, then we might have some reasons to be a little bit concerned. 1 month of softer retail sales is not a soft summer, okay? We still have to see July. We still have to see August going into back to school. We still have one more hot holiday that spikes up retail sales that we need to get through. So we still have some time there in terms of like the broad consumer. On the upper end, American Express and a lot of the larger banks and card issuers have done a phenomenal job of shoring up their balance sheets. So I'm not expecting to see like a lot of concerning net charge-offs or loan loss provisions. More so probably maybe a little bit of softness in things like travel, but also maybe not, because we did just have we were in the World Cup, right?
Yeah,
so I would expect to still be seeing that K-shaped sort of behavior where the average to below average American household is probably still battling the woes of inflation in a pretty difficult manner. Yeah. But then seeing some of the higher income customers in American Express being able to sort of bring everything up at the aggregate.
Yeah, absolutely. Shelby, really well said. Shelby McFadden, portfolio manager at Motley Fool Asset Management. There's anecdotal showing that people are increasingly using their credit card reward points to pay for everyday essentials like kitty litter or gasoline, as opposed to spending it on discretionary things like travel.
That's interesting. And I also saw a report that said that the K-shaped economy, the upper K, is fragmenting a little bit. So everyone is really just having a tough time, I think, Scarlett. But we now turn our attention of the coverage to the Aspen Security Forum. It's happening in Colorado this week. Bloomberg This Weekend host David Gura is there, and he had a chance to sit down with Democrat Senator Chris Murphy of Connecticut. They spoke about the influence of President Trump on the Republican Party and the impact of the Iran war on the midterm elections. Take a listen.
The most significant foreign policy disaster in the last 20 years. Iran effectively has control of the Strait. They are going to have control of the Strait for the long run. As a price of opening that Strait, they want all of the sanctions released, which is going to put a lot of new money into their economy, but also allow them to send money out to their proxy groups in the region. This war should have never started. It's hard to figure out what to do now, because it's kind of like asking somebody, now that the raw egg is splattered over the floor, how do you put it back together? But it seems as if the United States is going to have to pay that VIG, billions of dollars to Iran in sanctions relief, and we're going to have to prevail upon the Israelis to permanently stop the war with Lebanon. And if those two things happen, maybe we can get that strait reopened. I have no confidence that ultimately there's going to be any bigger deal between the United States and Iran. I don't think they're going to make any commitments on a nuclear program. So I guess the best we can ask for right now is to just stop the shooting, get the strait reopened, and we're still seemingly a far away from that.
As we look at Humpty Dumpty there on the floor, do you think the administration gets that? Are they still confident that they can stare down Iran, I guess, and find some solution by doing that?
Yeah, I think we sort of can't overhype the degree that just plain old incompetence plays in this story. I mean, the Trump administration doesn't know what it's doing. Its primary diplomats with Iran are the president's son-in-law and a guy who was a real estate developer 2 seconds ago who's never done diplomacy. So it's not surprising that they're failing. They're going to either have to put actual adults, like experienced diplomats, in charge, or they're just going to have to step out of the way and ask our European friends or our Gulf friends to come in and, try to seal an ultimate deal on reopening the strait. So I have very little confidence that this crowd that's in charge of our national security is going to be able to get anything done.
We've seen in recent weeks your colleagues on the other side of the aisle, many of them expressing more reservations about this. Do you detect a real change kind of in their position as this is attenuated, as it plays out?
I mean, this is, of course, a deeply unpopular war. The American people don't support the war. They want it to end, and they're paying the price, not just in higher gas prices and higher diesel prices and higher fertilizer prices, but also in the cost to the budget. This is $100 billion to $200 billion. And what is going to happen is that Republicans are going to cut funding for schools, for transportation, for nutrition, in order to pay for the war. That's part of the reason that the American public don't want it. So as you get closer to the election, this becomes an issue that Republicans are going to have to deal with, because this will be an issue where voters are going to say, are you for the war or against it? And it's going to matter in their choices. So yes, I expect that you will get more Republicans saying, time to end the war. For the first time ever, about 3 weeks ago, we passed a resolution in the Senate to end the war. It ultimately was stymied by some procedural moves in the Senate, but there is evidence that Republicans are starting to wake up.
You mentioned Israel a moment ago, and I go back to that memo of understanding, which it seems was not worth the paper that it was printed on. I think the president would agree with that now. Israel, of course, not a party to those conversations, and I'm curious how you look at the U.S.'s power to persuade Israel to scale back, pull back its campaign in Lebanon, and change tack.
I think you'll have to use the leverage that we have, and the leverage that we have is our defense relationship. So long as Israel believes that the Trump administration is going to continue to feed them the weapons and the intelligence that they need to carry out war on Lebanon, they're going to continue to carry out that war. That's a very blunt tool. It took me a long time to accept it as a tool to try to influence their behavior in Gaza. But if it is a precondition to getting the strait open, then we have to consider using that tool, because as long as the strait is closed, it is American citizens, families, that are bearing the cost.
Let's talk a bit about that. Pull to domestic politics here, and you mentioned it's a deeply unpopular war. How do you see that playing out in the months ahead, and how do you and your fellow Democrats kind of maybe capitalize is not the right word to use there, but highlight the fact that it's as unpopular as it is with the electorate?
What I found in my time in politics is that most of the time foreign policy doesn't matter in elections until it's sometimes the only thing that matters. And I do think that this election, it's going to be on the ballot. Even if Trump were to get the strait reopened today, the cost of a gallon of gasoline or fertilizer is not going to come down to any reasonable level by November. So it will be a voting issue, and the president's foreign policy incompetence. And that agreement you mentioned, that ceasefire agreement, was just an example of incompetence, right? He signed an agreement committing Israel to do something without Israel at the table. He apparently by accident signed an agreement that actually gave control of the strait permanently to to Iran. His foreign policy disasters are, I think, going to be relevant this November.
All right, that was David Gura speaking with Chris Murphy, the Democratic senator of Connecticut, talking about President Trump's influence on the Republican Party. Let's get a reset of everything and check in with our Alexis Christoforous for our Bloomberg Business Flash.
All right, thanks very much, Scarlett. And this Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That is goldencrestmetals.com/guide. Another day where we are seeing the rotation out of semiconductor stocks and into other areas of the market not powered by artificial intelligence. The NASDAQ Composite down nearly 300 points or more than 1% at 25,584. Dow Jones Industrial Average down 46 points. Actually, it was in the green just a short time ago. S&P 500 down about 43 points or 0.5%. We've got Brent crude up nearly 3% at 86.69 a barrel. And West Texas Intermediate crude is up more than 3% now at 81.42 a barrel. The Bloomberg Dollar Spot Index up slightly, 1216.94. Yields coming under a little bit of pressure today. The 2-year yield at 4.13%. The 10-year yield down 2 basis points at 4.52%. We've got our eye on shares of Netflix. That stock is down about 9%, the most in 4 years after the company forecast a second consecutive quarter of slowing sales growth. This is just contributing to investor anxiety about the streaming giant's future and whether or not it has peaked. SpaceX shares tumbling another 4%, putting Elon Musk's rocket ship company on track to wipe out more than $1 trillion in market value from its all-time high. SpaceX hitting a record low here today after the company was forced to scrub the 13th test of its Starship yesterday. It hopes to give it another go next week. And Apple is once again the most valuable company in the world, unseating NVIDIA as it barrels towards a $5 trillion market valuation. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christophorous. That's a Bloomberg Business Flash. Scarlett and Isabel.
Thank you for that, Alexis. Let's stick with Netflix because I myself am a binge watcher when it comes to Netflix. But you made a point earlier, Scarlett, that there are already many people with Netflix account, and where do they take their growth?
Yeah, well, aside from making sure that your brother or your husband is not using your account.
That is true. And that's why you're seeing the stock down, as Alexis alluded, more than 9%. It's the biggest intraday decline since April 2022. And joining us now to help us make sense of this is Geetha Ranganathan, Bloomberg Intelligence Analyst on U.S. media. Geetha, thank you so much for joining us. Do you think that this slowing growth is a short-term issue, or do you think it's a sign that Netflix maybe is becoming a more mature market?
Definitely, Isabel, we are seeing signs of maturity across the entire landscape and definitely for Netflix as well. So, moderating revenue growth is definitely a big red flag here. And we've seen the revenue growth actually come down pretty substantially, which is what I think is really spooking investors, right? Because in the first quarter, you had about 16% revenue growth, almost 14% for the second quarter. And now when you look at their guidance for the third quarter, it's 11.7%, which was well below what consensus was expecting. So this really, I think, feeds into that whole investor anxiety about, what the catalysts are going forward for this name.
And this is not something that can be solved with more spending on content and making sure you have the latest hot show or the latest franchise, is it?
Well, they actually, Scarlett, to that point, they're actually boosting content spending pretty significantly this year, almost 10% to $20 billion. That's the highest ever that they would be spending on content. But, if you look at the engagement report, which they published yesterday, yes, they do have, this very broad swath of content. But at the end of the day, we're not necessarily seeing that resonate into what the metric that all investors are focused on, which is engagement. Because while the total number of hours viewed did grow slightly, 2% from last year, the viewing hours per subscriber is actually declining. And the big worry, I think, for investors is that as we get disruption from short form video, from YouTube, from, Instagram, TikTok, and all of these other social media platforms, can Netflix actually retain that, engagement metric? And is it only going to slip further?
So, Geetha, do you think we're heading towards a more consolidation in streaming, maybe as companies chase scale and profits?
I think we already saw that, right? So Netflix actually did go after Warner Brothers, Discovery, streaming and studio business last year pretty aggressively until they finally lost to Paramount Skydance. I think, at this point, yes, Netflix is doing little things, whether it's adding, short form content, whether it's going into live events, whether it's, doing a little bit more in gaming, but none of these are transformative enough. We need some kind of a step change catalyst here, and we're really not seeing anything. So maybe M&A, maybe some kind of a transformative partnership, maybe some kind of a big acquisition will finally move the needle for Netflix, but we have to wait and watch.
That's so interesting, and I know this is something you've written about, Geetha, this idea that Netflix now has M&A ambitions when it had kind of denied that it was looking to do that. It's always prioritized organic growth and reinvesting in its own business. What does that say about the state of the streaming wars overall, that Netflix needs to buy to consolidate its grip on the market?
Yeah, I mean, we're really seeing competition kind of intensifying, and we're going to see that only intensify further, Scarlett, once Paramount closes on its acquisition of, Warner Brothers and HBO. And Netflix really needs to kind of beef up the content, because obviously it's the lack of those breakout hits. Yes, they did have great content. They did have a great pipeline. Yes, we did see good growth in viewing hours, but that's just not enough. As we have more and more of, it's not just competition in streaming, though. That's the problem. It's competition from all kinds of platforms. We talked about the social media platforms, and that's really what Netflix has to kind of defend its turf against. And for that, they have to come up with bigger, better, more engaging content. And they might very well need to buy a studio for that.
What about the live sports, podcasts, and ads initiatives? How meaningful are those when it comes to driving growth? Are you bullish on them? I feel like Scarlett and I were talking about it, and almost everyone has a podcast these days.
Yeah, so on the margin, I think it definitely helps because, at the end of the day, Netflix is, something you go home to in the evening and then you're watching it. But I think with podcasts, it's something that they're trying to build on through the day, right? They're trying to build on engagement. Anytime you pick up your phone, you have some content that you can kind of listen to or look at. And that is really what they were trying to go after. But at the, again, it's on the margin. Yes, it helps, but doesn't move the needle.
Yeah, I think it would take a lot for me to switch over to Netflix to listen to a podcast rather than get it on Spotify or Apple Podcasts. Geetha, thank you so much. Geetha Ranganathan is our go-to expert on all things media, joining us from Princeton, New Jersey, where she is our Bloomberg Intelligence analyst. What's the latest show that you've been streaming on Netflix? What do you watch?
It's not even Netflix. It's Amazon Prime, and it's very delayed. It's Marvelous Mrs. Maisel.
Oh, okay. I like that throwback.
I know. I always watch when it's out 7 seasons, and I'm like, let me watch season 1.
Then you can binge, right?
Yes. What about you?
I'm watching Little House on the Prairie because I liked the books and I watched the originals, which I'm, revealing my age by doing so. But I like it because it's a reboot and it strips away all the, feel-good saccharine part of the TV show that starred Michael Landon. This one is like grittier.
I do get paralysis when it comes to options. Sometimes I wish there are just 10.
Yeah.
1,000.
Totally.
It's too much.
All right, we have much more coming up on Bloomberg Intelligence, a conversation with Randall Williams on the World Cup next. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Happy Friday. This is Bloomberg Intelligence. Paul Sweeney is off. He's at the beach enjoying a long weekend, a long-deserved long weekend. And Isabel Lee is here with us. Isabel, do you have any plans on Sunday at 3 p.m.?
I actually was planning to get coffee with a friend. So no, I'm not watching sports. I'm going to get coffee with a friend. Not vegetables and not salad, just coffee.
Okay, yeah, that's good. Although, we now know the problem there. The lettuce grower Taylor Farms will recall products tied to that outbreak that you were discussing. Okay, so Isabel's not watching the World Cup. I'm going to be watching the World Cup. Randall Williams will be watching the World Cup.
I'm much more in favor of your plans than yours, Isabel. I do plan to be there. FIFA has not yet granted my ticket, even though I'm credentialed. So long as they think I've been good, I'll be there. I'm excited.
There's no reason for them not to think you've been good.
Yeah, I think so too, but you never know.
Okay, so FIFA makes this decision, and a lot of people are blaming, maybe rightfully so, maybe not, on all the things that haven't gone well in this World Cup on FIFA. The president will be attending this game as well, so you're going to have to line up 4 hours in advance.
I think he's following me at this point. I mean, when he went to the Super Bowl last year, he's been in several UFC fights. He was in NBA Finals Game 3. Now he's attending the World Cup. And the reality is he's just a big sports fan. And I think that these TV products and these shows and that you call them, these sporting events, they draw a large audience. You put President Trump on the screen, I think nobody likes that more than him. And it brings a spectacle. So it is what it is.
I know you have a lot of news stories to talk about, but I'm just curious what it feels like when you watch and you know the president is there. Maybe not personally, but is security tighter? What is it on the ground?
Oh, yes. It makes getting into whatever stadium, outside of the UFC events, he comes in for the main card for the most of the time. And so by that point in time, everybody's in their seats. But for the Super Bowl, for the NBA Finals, for I imagine the World Cup, it's going to be a madhouse, and it just means that there's Secret Service everywhere. There's people with, that are armed everywhere, and it just creates very long lines, very, very long lines that I feel is a bit unnecessary.
Right, and everyone just has to kind of wade through it and kind of wait it out.
Exactly.
Okay, so there's a story here where you guys put out a weekly newsletter, and the headline is FIFA, not Argentina or Spain, who are, of course, playing for the final, is the real winner from this World Cup. FIFA really called the shots on this World Cup, didn't they?
Yeah, they did, and I think that I would consider them a big winner too. There are a lot of critiques about FIFA and how they ran this tournament, whether it be the public transit, whether it be the ticket prices, but how much of that has actually been a discussion over the last 6 weeks? There hasn't really been a lot of controversy outside of President Trump asking them to review Flo Balogun's red card, Flo Balogun playing, and then Belgium putting belt to the USA's behind on the pitch. And so outside of that, the matches have not been all that controversial. There's VARs and those conversations. But if you ask every single sporting organization, what type of controversy do you want? You want it to be on the field.
Right.
You don't want it to be off the field. And so FIFA's a big winner of that, and they're going to make a boatload of money.
And you also had this great scoop of Yankees saying to be in talks for $3 billion in financing with Apollo. Talk to us more about the significance of that. I would just ask Scarlett off air, why would they do that? And she said diversified returns.
Yeah, I think that if you're Apollo, it's the Yankees. Who does not want to be in business with the Yankees?
It's a meeting of the Titans.
Right, and I think that the $3 billion, as you reported, is going to go towards debt. They'll receive some equity. What that looks like, I'm not so sure yet, but that's a lot of money. And I think the MLB's cap for private equity is 15%. So whether it be $2.5 billion in private equity dollars, or $3 billion or $2 billion, it doesn't really matter. That's a lot of money in terms of total valuation of the Yankees business.
Well, how much is the Yankees business worth?
We'll find out when it closes. I would
Is it the most valuable franchise in the world?
In the MLB,
franchise?
I'd say. I think the Cowboys have held the top rank for most valuable franchise in the world. I think the Rams are in there. The Lakers should be in there. Warriors. And then it's the Yankees are undoubtedly the baseball team that is in the mix.
As long as we're ahead of the Red Sox, I'm happy.
But there's a big gap between the Yankees and the Red Sox in terms of valuation.
And this is the biggest investment Apollo would have made in the U.S. sports to date if it goes through. Why now, though? I mean, you said, Scarlett said it's a meeting of the Titans. So, I mean, why didn't they do this last year or 2 years ago?
I think that it has to make sense, the timing of it all. And I think that the Yankees as we've reported, there's some debt in there. And I think if you go to a private equity firm, the Yankees print money. Like they have so many games. You think of outside of the games themselves, Jay-Z just had 3 nights of sold out dates there and concerts. They have NYCFC matches there. They have a lot of different outlets to generate dollars. And so even if Apollo is giving this money, the Yankees and Apollo are inevitably going to make it back in a short amount of time, whether that be 18 months, 2 years, 3 years. They're both going to get a return on investment unless there's a lockout.
Okay, dumb question here. With all this institutional money, private equity money, can Apollo ever get to a point where it starts calling some of the shots on the field?
I don't think that we will live long enough to see that. And the reason, all of these structures for private equity do not allow private equity firms to have controlling ownership, at least in U.S. sporting teams. And the reason for that is because it's the same fear that everybody has with private equity, that they will come in, they will extract dollars, they'll cut star players, they'll make business decisions that aren't fan-driven.
But they're very impressed with their own ability to operate businesses. I feel like at some point it seems inevitable that they're going to want to have a say.
I think that it's more likely that there are some sports franchises that go public before handing over. Now, I think that the limit will definitely increase, but taking over, I don't know about that.
All right, Randall, you are wearing light blue and white. What does that say about what you think is going to happen Sunday?
I'll say Lionel Messi is my favorite player, but I'm rooting for the best match possible. So let's just do a repeat of last time.
All right, sounds good. Randall Williams, our Business of Sports reporter. You can catch him at the World Cup on Sunday at 3 p.m. in New York/New Jersey. For listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel. It's brought to you by Golden Crest Metals. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
GIF. This is Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Brokers studio in Midtown Manhattan. We are also streaming live on YouTube as well. Paul Sweeney is off for the day. He's at the beach. Isabel Lee is in. So it's Isabel, Scarlett Fu, and Charlie Pellet to take you through this next hour of Bloomberg Intelligence. We're going to check in with Liam Knox. Some big news on U.S. student visa holders and how they now face new restrictions, and it begins almost immediately. So we're going to talk about that. And it's also Friday, which means we have to focus on munis. We're going to check in with our guest there to discuss munis and where the best investments are when it comes to that asset class. We're also going to check in with Tom Keene. He, of course, is a co-host of Bloomberg Money, which begins 12 p.m. Eastern Time on Bloomberg Television. It's a look at personal finance, wealth management, and retirement. So a lot of that is going to come up in the next hour. Shree Taylor, our Bloomberg News Airlines reporter, will also join us to talk about airline lounge crowds and how there's a lot of confusion, and high-spending flyers who have all the cards and all the memberships are finding themselves not able to get into the lounges right now, which is extremely frustrating. Charlie Pellet knows all about that, and Charlie Pellet has our Bloomberg Business Flash.
Hi, thank you very much. And we are looking at a down day. Come in today, we have got the stocks nearing a bear market. Netflix shares, they are plunging after earnings last night. The Dow, the S&P, NASDAQ, all in the red right now, with the S&P slumping 63, dropped there of just about 0.8%. That sell-off in chip makers picking up steam. The NASDAQ Composite Index down 1.6%. NASDAQ 100 Index down 1.7%. And yes, the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by another 2.5%. All of this with a VIX back above 18, a 10-year at 4.52%, the 2-year 4.13%, and right now we have got spot gold higher by $25 the ounce, flirting right around the $4,000 threshold, up 0.6%. West Texas Intermediate crude up 2.2%. 2.4%, 80.88 a barrel. Brent, 86.28. Barrel of Brent crude up by just about 2.4%. Speaking of crude, speaking of energy, speaking of gasoline, Americans feeling just a little bit more upbeat thanks to a recent drop in gas prices. Will it stick? That is the big question. Consumer sentiment up in early July to a 5-month high. Joanne Shu is Director of Surveys at the University of Michigan. She was a guest last hour right here on Bloomberg Intelligence.
It's largely being driven by those fluctuations in gas prices. I mean, gas prices is a major part of the budgets of American consumers, so it's not really that much of a surprise.
Joanne Shu of the University of Michigan, interviewed right here on Bloomberg Intelligence. By the way, you can hear more of that conversation on the Intelligence podcast. The stocks, again, down by 2.6%. Among some of the companies that make up that index, Micron down 0.1%, Qualcomm down 2.1%, Applied Materials down almost 5%, Intel down by 4%. Checking golf, we do have round 2 of the Open Championship underway at Royal Brookdale Golf Club in the United Kingdom. And right now, 8 under par. We've got Lucas Herbert of Australia atop the leaderboard. I'm Charlie Pellet. Isabel and Scarlett, that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Isabel Lee, Scarlett Fu on Bloomberg Intelligence. Paul Sweeney has the day off. And Isabel, there was a headline yesterday that came out that really got my attention on how life is going to change very quickly for folks who are in the U.S. on a student visa.
I actually came here on a student visa, Scarlett. So every time I see a student visa story, it's just close to my heart, and I just feel for them. I mean, it's tough.
It's tough, and this is something we're going to discuss in length with Liam Knox, our education policy reporter, shortly. But before we get to that, I want to bring in Tatiana Darie for our look at some stocks on the move. She's got 3 of them for us this morning. Tatiana, what do you want to start with?
I also came here on the student visa, by the way. But yeah, let me start with Micron shares because the stock recovered. It was up about 2% earlier. We're giving back some of that rally. It caught my attention. I thought with Micron turning green and the Philadelphia semiconductor pairing those losses, I thought that we're starting to see some of those dip buyers coming in after the heavy sell-off. Obviously, the index now down 20% from its highs technically in a bear market. If you look at history, it shows you that we are near to a threshold where reversals happen. So sell-offs have rarely gotten deeper without a big macro catalyst. We've had some exceptions, including the tariff tantrum of last year, but other than that, in the past 3 or 4 years, these sell-offs have resolved fairly quickly when they got so steep. So the buyers should be around, but obviously probably everyone is looking to hyperscaler earnings starting next week.
Absolutely. That's going to be the big focus. And you should stay around, Tatiana, for this conversation with Liam Knox about U.S. student visa holders. Isabel?
What about, yes, that would be great if you can, but because it's really an important topic, I think. And Scarlett, I'm so happy we're talking about it. Okay, back to stocks. What about Sweet Green? I've been saying this for a long time. I ate Sweet Green this week, and I'm
so far so good.
Fine so far.
We are happy that you are well. Well, the stock is up about 17%, 19 now. It's sort of a relief rally after the stock got really hammered in the past few days, lost a quarter of its market value in just 4 days as investors dumped the stock due to fears about that outbreak of an intestinal infections caused by parasites and raw produce. So this sort of holds that 4-day losing streak. There isn't much there that really prompted. We're seeing, Chipotle shares higher, Yum brand. So it's sort of a relief rally broadly across the board. And there's a lot of speculation which supplier is exposed to Taylor Farms, which just announced they will recall products tied to the outbreak. So everyone's sort of trying to zoom into the supply chain, understand who has, which company has exposure and how much.
Yeah. In the meantime, Isabel, we wish you luck that you continue to be fine with all of this. Final stock, Tatiana.
Netflix shares down 8%. That's a big mover. Today was down more than 13 or more than 12% earlier, the most since April 2022. Forecasting a second consecutive quarter of slowing growth here. It was a slight miss there on revenue, EPS a modest beat, but guide for the current quarter was a little shy of analyst expectations, which sort of, tells you all you need to know about where earnings expectations are this earnings season, particularly when it comes to anything that relates to stock. And the company still has more subscribers and viewership than any other paid streaming service, but sales growth is slowing, even though they are investing in new kinds of programming such as live sports and video podcasts. But investors are asking, is that paying off? What's next for Netflix?
All right, Tatiana, thank you. And stick around for the next conversation. But in the meantime, for conversations like what you just heard, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Stock Movers is available on Apple Podcasts, Spotify, or anywhere you listen.
So let's now go to the story that we've been teasing for a while now. Obviously, the three of us are very excited to talk about it. It's the Trump administration scrapping a decades-old policy that allows international students and exchange visitors to remain in the U.S. as long as their studies last. And there's no other person better to talk about this than Liam Knox. He's an education reporter with Bloomberg. So this new rule was published Friday. And I mean, a lot of students and scholars are coming to the U.S. on visas that are F and J, and it's ahead of the start of the school year. What do you know about this so far, Liam?
Yeah, thank you both for having me. This is a hugely consequential change in student visa policy. For a very long time, you said decades old, the policy has been to allow F and J visa holders to stay for what's called the duration of their status. So as long as they're enrolled in enough credit hours in a program, or as long as they have some, research fellowship or employment extension, they can stay in the country. There's no set deadline or end date to their student or research exchange visa. That is all changing now. There's a hard 4-year limit, at which point students will have to apply for a special extension with the Department of Homeland Security, or they'll have to leave the country. And it's a big change that affects, it affects undergraduate students who don't always just take 4 years to finish their degrees, but it especially affects graduate students, medical students, PhD students, people hoping to stay here for a little longer after their studies. And just further complicates an already pretty bleak crackdown on student visa holders.
So, Tatiana, let me just bring you into this. These changes that the Trump administration is making, where there's now a 4-year hard limit that will require all these student visa holders to seek federal permission to stay. You mentioned you came into the U.S. using a student visa. How would this have affected you if this was in place?
Well, I think it just adds a lot more effort, a lot more headaches to the bureaucratic process, which is already a cumbersome one. I came on a J visa, which I then had to go to the Romanian government at the time to ask for permission to, because I had a requirement to go back to the country after having an exchange in the U.S. This is sort of an agreement between the two countries. So I had to go to all parties and ask them, can you please waive that? Because I like it here in the U.S. I want to stay. So I remember that was very, very stressful. And in general, when you talk about students trying to get jobs, trying to get visa, it was hard enough when I did this 10 years ago. I cannot imagine being a student, entering an entry-level position today and trying to convince a company to pay for your visa and go through this cumbersome process. I remember, all my eggs were in one basket years ago. So if Bloomberg weren't to work out, I don't know where I would be today. Probably not in the U.S. because there's only limited number of companies who still want to put up with this.
Definitely hear you, Tatiana, and I feel you also. Liam, can you talk to us about how this will affect the U.S. as becoming like most of the students all over the world, they want to go to the U.S. It's the place for them to study and hopefully work after. Will that change the status of the U.S.? Are students going to be seeking out other places then?
It's already changing. Student mobility and migration around the world is starting to shift away from the U.S. The U.S. is still by far the most popular destination for students around the world. But the past year and going into the future with these new visa restrictions are certainly going to test that the strength of that pull. And I think the implications there are, they're certainly dire for students who were hoping to come to the U.S. to study here, to make a life here potentially. But there are also have serious implications for the American economy, for worsening labor shortages in fields that are really struggling to fill demand, like healthcare workers, like, we've been hearing about shortages in semiconductor engineers, a lot of whom come out of these more than 4-year-long graduate programs, a lot of whom are international students.
Yeah.
And so the implications for American global competitiveness are sure to be pretty significant.
Liam, fantastic to get your analysis on this. Liam Knox on this very important story. He's our Bloomberg education policy reporter based in Washington on how U.S. student visa holders face new restrictions under changes made by the Trump administration announced this week. And it looks like it's going to take effect pretty quickly. Everyone's going to have to deal with a lot more bureaucracy in the meantime. Liam, thank you so much. All right, it's one of the backdrops to our conversations about managing money, your personal finance, and how you move forward with your money. And my Bloomberg Money co-host, Tom Keene, has decided to grace us with his presence in the 11 a.m. hour. I thought you were done.
I'm so done. I'm so done. Thank God my people saw your people up in the food court. So it worked out well.
It worked out well. Well, thank you for coming on because we're going to check in with you again, of course, at the top of the 12 p.m. when you and I co-host Bloomberg Money on Bloomberg Television. You do such a great job of bringing in the Wall Street experts that we have on surveillance and bring them to the personal finance angle. Who do we have today?
Well, like today is Amanda Lynham with Goldman Sachs, just rejoining there from BlackRock. And so you go to Amanda Lynham and you go, look, I'm really looking at the first derivative of the 30-year yield, or, you look at some credit default swap or whatever. That doesn't work in personal finance retirement. And so what we're going to talk to her about is basically the failure of bonds. The great unspoken here is the bond crater of 2022, well over 4 or 5 standard deviations. Bloomberg has the best series in the world of those, a Bloomberg Total Return set of series off of Lehman and Barclays' wonderful work. And the answer is it's been price sell to yield up. And now we've come back. Bonds have come back, Scarlett, but we're not back on track to what we saw in the Great Moderation.
Absolutely. And this is something that, especially young people who are only now beginning with saving for retirement, they're thinking, why would I ever put any money in bonds? You just look at the stock market and I'll do really well there.
I'm reading Justin Beer's wonderful book, House of Fidelity, and you see it back 50 years, it ebbs and flows. And the answer is there's a point where you wouldn't be caught dead in anything but bonds. And then there's stocks. And, someone with the history that we have, Nora Rubini today, who's wonderfully encyclopedic. I had a very famous evening with him at a bar in Davos, I think in 2005.
Wow.
Where he shockingly laid out 07, 08, 09. We have Nora on today, will be great.
The reason why I love this show, and not just because both of you are in front of me, is because it's actionable. For example, my friends are in their 30s and 40s, and we have conversations like, should we get a banker? Or should we just put everything in SPY, where it's like dirt cheap and just watch your money grow? But then I think we're spoiled because we live in a world where the markets just kept on going high. But then that's why bonds are supposed to be the ballast, supposed to be. But I feel like the actionable insights is one of my favorites in your show.
And that's a really good point, especially given how important the stock market is increasingly to people's savings and retirements. And it's something that Eric Balchunas will talk about too, because
he's maybe, don't tell him, don't tell him, man. Don't tell L'Oreal.
Okay,
Balchunas is maybe the most important guest on the show today.
I agree. Yeah. He wrote something that really got your attention, Tom, and it was about whether the U.S. stock market is too big and too important to fail at this point.
We have the history of this, folks, quickly. I don't have a clock in front. I have Charlie Pellet's computer in front of me. Look, it says right here, stand clear of the closing doors. What's that about? But, I think, folks, you go back to ERISA of 1974, and the company gave you a pension.
Yeah, those days are gone. Yeah.
And so 40, 50 years down the road with Bloomberg Money, it's okay, now what? And there's this huge now what thing going on. And, I just met with the numbers people on the show, and just for Scarlett, we're absolutely humbled by the initial response to the show.
That's right.
Our
so
worst show was you weren't there 1 week.
Yeah.
It was the lowest rated show.
Well, obviously.
And you guys bring in big names also. And then again, they talk about different things compared to other shows because they make it actionable. I don't know.
We try to make it relatable. That's the goal.
Yeah, we're not talking to Amanda Lynham about 2-10 spread.
Yes. No.
We're talking to her about what do you say to your grandmother over Thanksgiving dinner?
Exactly. That's true. Buy Bitcoin, maybe.
That's
no, we're Bitcoin free unless you're Greifeld behaved herself last week. She did not mention Bitcoin.
That's because she was obsessed with Trump accounts, which we will get to as well this week.
Good.
Tom Keene, my co-host on Bloomberg Money, airs every Friday at 12 noon Eastern time on Bloomberg
today.
Television. That's today. Also available on Bloomberg.com on demand. You should check it out on our website and on our YouTube channel. Bloomberg Money every Friday at 12 noon. Tom Keene, Scarlet Fu. All right, much more coming up in this remaining hour of Bloomberg Intelligence. We have Munis in Focus. Margot Kleiman is head of municipal research at Nuveen. She will join us along with Shree Taylor, our Bloomberg News Airlines reporter, on airport lounge crowds. Do you belong to any airport lounges?
Through my credit card, but Scarlett, you have to line up, and so I just never go.
I know, you give up after a while because it's discouraging. All right, we're going to talk about all of that and what those credit card points really get you at this point. This is Bloomberg Intelligence on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are selling off, and we have got chip stocks declining again, with the stocks down another 2.4%. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. S&P right now down 63 to 7470, drop there of 0.8%. Dow Industrials down 0.2%. NASDAQ down 1.5%. NASDAQ 100 index down 1.6% as a sell-off in chip makers gathers pace. Right now we have got the NASDAQ 100, as I mentioned, down 1.6%. The SOX down 2.3%. All of this on concerns that the AI spending spree is becoming harder to justify. The 10-year 4.52%, with the 2-year currently yielding 4.13%. Spot gold up $33 the ounce to $4,010, up by about 0.8%. West Texas Intermediate crude 81.03 a barrel, now up 2.6%. Barrel of Brent up by 2.4%, 86.29 on Brent crude. SpaceX shares are declining today, well below the IPO price. SpaceX now at $123.99, down another 5.5%. The aerospace company last night scrubbed their first Starship launch since the IPO, citing engine failure. SpaceX says it is targeting coming days for the next attempt. Again, SpaceX shares, they are tumbling now by just about 5.6%. Round 2 of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, atop the leaderboard, Lucas Herbert of Australia at 8 under par. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. All right, for this week's Muni Moment, we want to welcome Margot Kleinman, Head of Municipal Research over at Nuveen. She joins us from Chicago. Margot, it is good to speak with you again. You were in our office not so long ago talking about the World Cup, but I want to get your take on this Connecticut water bond debut. We know that the Aquarian Water Authority sold about $2.4 billion of tax-exempt bonds in Connecticut, and investors placed more than $70 billion in orders. I mean, this is massively oversubscribed. What is special about this issuance?
Yeah, absolutely. Well, thanks for having me on the show. It's great to be back with you. I would say just take a step back for a moment. I think this transaction is really a testament to the strength of the muni market and investor appetite to put money to work in stable sectors like water and sewer. So this is a bread and butter sector of the muni market, and a sector we continue to favor due to its essential service, strong credit metrics, and higher issuance levels this year that have led to some attractive relative value opportunities such as Aquarian. And so turning to this transaction, I would say 3 things really stand out that made it attractive. One is a solid credit profile. So really just reflecting its position as an essential service provider of water to more than 50 towns in Connecticut with independent rate setting authority. And that's a really important factor because the authority now can raise rates going forward in order to fund debt service and to finance future capital needs. I would say number 2, it's a large deal for a brand new credit in the muni market in a state, Connecticut, that has had more limited supply year to date. You mentioned the deal was $2.4 billion. There's been about $5 billion issued in the state of Connecticut year to date alone. So this is a huge increase. And number 3, very attractive yields. As you said, the deal received more than $70 billion of orders for $2.4 billion of bonds, and some maturities saw yields decline as much as 38 basis points as compared to preliminary pricing.
Got
I
it.
think so, really reflecting that strong investor demand.
Margot, thank you for bringing us the latest on that. I want to get your take on this news from the Trump administration replacing a decades-old policy on U.S. student visas. International students and exchange visitors will now no longer be allowed to remain in the U.S. for as long as their studies last. There's going to be new limitations, new requirements. People will have to go through the red tape and bureaucracy in order to be able to stay in the U.S. This is huge news for the higher education sector, which of course are some of the biggest issuers in the muni market as well. Tell us about this latest headwind for the higher ed sector.
I think it's a great point. And when we're looking at the higher ed sector, we very much see it as a sector of haves and have-nots. And so you have these large, comprehensive, wealthy, very selective universities with insatiable student demand that are incredibly stable and highly rated. And then you have sort of everyone else that is really facing these challenges. And something like this policy, really adds to the challenges surrounding international students. International students tend to be very valuable for higher education institutions in the US because they tend to pay full freight versus receiving sort of some of those large scholarship dollars that go to a lot of the domestic students. And so to the extent that you have universities in our market that are more dependent on international students, that's something that from a credit perspective, we really need to understand, analyze, and be aware of, and talk to those institutions and understand how they're going to be navigating these different dynamics. Just to also say the kind of dynamic here and challenges around international students has been something that we have been paying attention to for some time now. And so the new policy going into effect here is something kind of a new wrinkle, but it is a trend that we have been already looking at.
In your note, you did say that you're more cautious on higher education and hospitals, but more constructive on sectors like water utilities and airports. Can you talk to us very briefly about what's driving that divide, other than the headline today and, to your point, like the all or nothing kind of theme in education?
Absolutely. Yeah, absolutely. I think higher education and hospitals, we're really seeing that bifurcation from a credit perspective between some of the larger, wealthier institutions that are well positioned to manage through some of the challenges that we see from a federal policy perspective, let it be international students, student loans for higher education, or on the healthcare side, changes to Medicaid that are coming down the pike next year that will go into effect in 2027. When you look at some of the sectors that we favor, like water, sewer, essential service monopolies, as I said earlier, strong credit metrics, state and local governments, again, very strong credit metrics going forward with tax collections increasing and reserve levels at all-time highs. Airports have seen passenger levels grow, substantially here since the end of the pandemic. And so those are some of the these sectors that we are favoring and looking at for those relative value opportunities.
Margot, thank you so much. Margot Kleiman is head of municipal research at Nuveen with our Munis in Focus. And Margot ended with airports. So that's where I want to go next, because it is Friday in the summer. In July, a lot of people are heading to the airport or are already there, and they get there early and they want to go to the lounge. And Isabel, you've got a bunch of credit cards. Can you get into a lounge?
No, the line is so long, which is why I love this next story. Fantastic photos, by the way, to our next guest. It's a topic that a lot of my friends are talking about, because you think you get credit cards for various reasons, but huge part of that is the lounge. And now it feels like there's no point.
Shree Taylor wrote our story, and it's about airport lounge crowds, confusion, infuriating, high-spending flyers. So, Shree, was it hard for you to figure out who can get in where? Because they keep changing the rules on us.
Yeah, it was, as we were writing the story, was when Delta kind of rolled out that basic business product where you can actually get, you can sit at the front of the plane, but you can't get access to the Delta One lounge starting in January. So they're just, kind of moving the goalpost a lot, and it's very convoluted.
And you interviewed a person here. He has had the membership since like 1990s.
Yeah.
Can you talk to us more about him and tell us his insights? Like, is he fed up, or is he still like, nope, I'm loyal?
I think, well, that's kind of how they get you, right? Because it's like, if you, his status goes way back, almost, 20, 30 years. So once you're kind of in it and you've built up those miles, it's like, I can't really transfer my miles anywhere else. Like, why would I might as well keep going. So it's kind of like you have to put up with the airline that you kind of pledged allegiance to like years ago. It's really hard to change it over.
It's really hard to change it over, but every airline is out there trying to mimic what Delta's doing. United is a little bit farther along in that effort. Others are trying to play catch up, including JetBlue. And now you're talking about Southwest, which, you know, once upon a time, you didn't have to pay to check in a bag or get a seat. And now they're going to build lounges?
Right. Southwest leased some space, I think, in Honolulu and in Houston just to kind of get ready for that lounge space. And it's so funny because when I was talking to CEO of Southwest, Bob Jordan, he said that the customers are actually loving the new fees and the new premium perks.
They're loving it?
Look at that. It's like a running joke that they're loving just having the option to pay for a better, more...
No, actually...
What economy do we live in?
I hate it because when I book a ticket, I'm like, okay, I got a deal. And then bam, you add the luggage, bam, you add this, you add that. And it turns out so much more expensive. And I miss the days when it was just all in.
Right.
It's a bit pricier, but you know that 400 or
you know
whatever
what you're
dollars,
getting.
That's it. Yes, and you have everything.
Right. Yeah, exactly. You know what you're getting, but now it's all these, you know, it's the bag
Optionality, I
fees,
guess,
it's the extra fees to get priority checking and
It's like
you know.
media. It's unbundling and then bundling all over again. There's going to be an airline that comes in and says, you know what, we're going to give you everything all at once under one price, and this is revolutionary and innovative, and everyone's going to flock to that. And then the business model isn't going to work, and then they're going to say, you know what, we're going to tear it apart. We're going to break it down into little pieces, and you can pay a la carte for everything.
Exactly. So the airlines are seeing a big boost to their revenue from all of these, you know, extra perks that they're adding and the extra fees. So, you know, and people keep flying. So, you know, even as airfares have kind of gone up, especially with the conflict in Iran, people are still traveling and they still want that premium experience. So airlines aren't gonna bring it back together anytime soon, but we can hope.
How big of a lure is airline lounge to airlines? Like, I mean, I have no loyalty. I've said this on air. No one will probably like me because I just buy the cheapest all the time, no matter what it is. Well, maybe I avoid some and prefer some, but you know, I don't have like a lot of my American friends who were born here. They're just like, I fly this. And that's it. Like the guy in your story.
Right, right. I mean, yeah, it's like it kind of in the long run, it's almost cheaper to just keep flying one airline because you have those points. But then it's like, well, you know, if I need to take a connection, if I have to get to a certain place, you know, I have to cough up even more money to, you know, go on an airline that I don't have the loyalty points for.
Okay, quick poll. How many of those premium credit cards do you have? Which ones do you have?
I actually don't have any. I don't believe in them.
That's good for you. Good for you.
Wow, that is so telling as someone who covers this. Interesting.
Yeah, it's just, I mean, even writing this story, the editor and I were just kind of going back and forth about, wait, what can you do with this card and how many cards? And you know, it's just too confusing for me. So I try to just keep it simple.
People have spreadsheets. They use AI to help them figure out
My husband and I
use.
have some, but we suck in maximizing. Are you good at this?
I try to, but
I think you're good at this,
I lose
Scarlett.
out at the
I
in the
think
end.
you're good.
Shree Taylor, thank you so much. Shree Taylor is our airlines reporter here at Bloomberg News. Thank you. Great story on the Bloomberg Terminal about airline lounges. This is Bloomberg.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all declining right now. This Bloomberg Business Flash is brought to you by Gold and Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. S&P 500 index trading lower right now. We are looking at a sell-off in chip makers. That is gathering steam. S&P down 0.7%. Dow Industrials down 45, a drop now of just about 0.1%. The NASDAQ Composite Index hard hit, down 1.3%, also down 1.3%, the NASDAQ 100 Index. All of this with the SOX tumbling another 1.6%. The VIX just below 18 right now. The 10-year 4.53% and a 2-year 4.14%. Gold up $36 the ounce, holding above 4,000 now, up by 0.9%. West Texas Intermediate Crude 81.49 a barrel. WTI surging 3.2%. A surprise breakthrough from Chinese AI startup Moonshot has driven today's sell-off. Investors likening the decline to the market shock that was unleashed by DeepSeek's breakthrough last year. Reaction from Dan Ives, Senior Managing Director at Yorkville Ives. He was interviewed this morning on Surveillance.
I think this is just called a white knuckle moment, no different than a mini DeepSeek moment to some extent. The reality is, like, look, models, you're going to have 10x more models over the next 5-7 years, vertical, geographic. The reality is that it's Anthropic and OpenAI's world, and everyone else paying rent relative to the models.
Dan Ives of Yorkville Ives interviewed on Surveillance. We've got Apple and NVIDIA going back and forth for the title of the biggest company in the world in terms of market cap. NVIDIA, by the way, back on top right now, $4.95 trillion. Apple, by comparison, $4.90 trillion. I'm Charlie Pellet. Let's talk lounges. That is a Bloomberg Business Flash.
Charlie Pellet, how many lounges do you have access to?
Not as many as I'd like to, and I'll tell you why. Whenever I go in, the lines, like we just heard from Sri, the lines are out the door, and if I've got a 90-minute layover in, say, Amsterdam, the wait to get into the club is 90 minutes, which doesn't help me at all.
They're always talking about a waiting list. Like, you have to sign your name up on the waiting list, but like you said, your flight leaves when it leaves, so how can you get in there?
And quote-unquote sign up for the waiting list, that's only part of the story. That implies that there's somebody there with a clipboard.
Yes.
That doesn't happen. You have to download the app, get on the list, and you may or may not get a notification, or you just go and get a Starbucks coffee, relax by the gate, and don't bother with the club.
Or even when you get in the lounge, you just don't feel like it's
relaxing
premium anymore, because it's almost like it's packed. The buffet has a line. You have no seat. It's one thing. You get into the room, but you have no seat. It's just...
Yeah,
I just sit in the commoners area. I'm a commoner
all right,
after all.
well, I'm a commoner too, and just let me say, I should not be in the lounge to begin with, because very often I'm traveling on discounted flights. I'm also using credit cards to get access. I am part of the problem. So I fully understand why they're trying to limit access to people who are not premium flyers.
They don't want Charlie Pellet's, Isabel Lee's, and Scarlet Foo's in the lounges. That's what it feels like right now.
We will make our own lounge.
Yes, there you go. We're going to come up with our own lounge. All right, Charlie Pellet, thank you for that Bloomberg Business Flash. It's time to go back to the markets. It's a Friday, and we have a bit of a sell-off here in equities, certainly when it comes to tech stocks. The Philadelphia Semiconductor Index entering a bear market. That means it's down 20% from its recent high. Rebecca Walzer is here in studio with us. She is president of Walzer Wealth Management. Rebecca, does it feel like we're at an inflection point with this AI trade and the frenzy over memory chip makers?
I mean, it's a great point, Scarlett, and I'm not sure if we're at an inflection point. It reminds me of, we got the first preliminary information about DeepSeek, and we thought, oh, they said only $5 million they spent, and then we found out later that maybe they probably actually spent a little bit more, and it wasn't as streamlined as they said it was. So all of these things usually seem to be a little bit overblown, and then we sort of digest it. What does concern me is how volatile people are and how quick people are to pull the trigger. Like, what tells me is that they don't have true confidence that this is really a long-term play, that they're like, oh my gosh, this isn't the hot stock of the quarter, so let me get out of it. I mean, that can't be. You can't be in this this is monetization of a new technological frontier. It's uncharted territories, and it's going to be choppy. It's going to be 3 steps forward, 2 steps back, 5 steps forward, 5 steps back. That's what happens. That's what this is. We don't have GPS coordinates for how this is going to frame out. And so I think that people need to stop and really say, hey, I am committed to this long term. We know China is an IP stealer. Look at Xi Jinping's statement last night. And then obviously all this, the moonshot came out. So that is an issue. And people need to just say, I need to have the wherewithal to stay the course.
It's true, though, because as formidable as these companies are, it seems that they're also very vulnerable to headline risk. I mean, as you see with the markets today. Do you think that this suggests, though, that maybe we may not need to spend as much when it comes to these AI companies?
I mean, I hope the answer is yes, because all of these investors are really kind of a little bit leery about, wow, you know, CapEx spending used to just be free cash flow, and now it's debt, and now it's new stock issues with dilution, and that's a problem. And normally that would be a negative sign, right, Isabel? But now we're basically saying, hey, we need more. We need so much more capital to build this out that if we could get that it's a little bit cheaper than we expected, I think that would be a win for all of us.
How much do you look at what's happening in the credit market, especially the reception to these hyperscaler bonds, for an indication of, you know, where sentiment is versus the equity market? Because these companies have to raise money in both credit and in equities, and there's definitely a bit of pushback in the credit market, right? I mean, we're seeing wider spreads.
Absolutely. And I think that speaks to the fact that, again, we do not know the frontier that we're going at. And so, it's really hard for credit lenders to assess the risk when there's no barometers. There's no actual, this is the frontier of where it ends. And so, it's hard for us under the old school methodology of seeing everything to think that this is worth it, that these trillions of dollars of CapEx over the next couple of years is actually going to deliver ROI, And so I think that capital markets are right to be skeptical and to charge risk premium.
Let's zoom out a little bit, because markets have largely shrugged off higher oil prices and the Middle East tensions. What do you think gives investors just enough confidence, a lot of confidence, to keep buying risk assets?
It's a great question too. I mean, I think we saw with the CPI and PPI going from 4.2 to 3.5 and 6.0 to 5.5. We see, wow, it really dropped precipitously once we got the MOU and then the 60-day. But then again, guess what? It all went away and we're back to full-blown war. So I do believe that it's just so volatile, and I think investors have confidence. They've been looking past the Iranian conflict because they keep thinking there is going to be a resolution because we keep inching towards it, right? But then obviously we get to that very final breath and something else happens. Iran's economy is collapsing. They need money. So I think any kind of settlement with the United States is going to involve the fact that economically they're desperate, and that's why they're going after these vehicles to charge money. They need money. So unless Trump and this administration can actually address that, I think it's going to be them keep forgetting that, oh my gosh, they're desperate, they need money, and that's the issue.
I mean, we spend so much time talking about tech, and rightfully so, because they're so influential, that we forget about the other sectors in the market, the other stocks in the market. What other sectors has your attention right now?
Well, obviously energy for the reasons we just spoke of, but also I think industrials. Industrials really are going to be an ancillary support to the new tech and the new infrastructure, the new things that we're looking at. So I think if you look at infrastructure stocks, they're going to get a big play just as the perimeter on the outside of supporting the space frontier, supporting all of these things. And so I think industrials, energy, and tech, obviously the financials have done really well, but I will note that this week's the earnings report, where I bifurcate the line, see a demarcation line between capital market investment activity and those kinds of outsized, supersized returns versus the more traditional bank, which is Wells, Citi, Bank of America.
Right, and of course that might give some indication of what we hear from the regional banks when they start to report, because they're much more exposed to just basic borrowing and lending as opposed to the equity market or the debt market. Rebecca, thank you as always. Rebecca Walzer joining us in studio. She is president of Walzer Wealth Management. Thank you so much.
Thank you.
Isabel, thank you for joining us this morning,
almost the afternoon. It's always a pleasure. I love the show, and I love co-anchoring with you. You're really amazing, Scarlett.
Well, likewise. It goes both ways. I'm saying goodbye now because I'm going over to host Bloomberg Money, but Charlie Pellet and you will take this show to the close. You've got a lot coming up. You're going to talk about Apple.
We are going to talk about Apple, now the most valuable company in the world, and I'm excited to be sitting next to the legendary Charlie Pellet.
Charlie Pellet and Isabel Lee on Bloomberg Intelligence. We have equities in the red right now. The Nasdaq leading the way down, lower by 1.3%. The S&P 500 losing 0.75%. And we also have oil prices moving higher. WTI approaching 79.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Welcome to Bloomberg Intelligence. I'm Isabel Lee, sitting in for Scarlett Fu and Paul Sweeney. Both are away at the moment. Paul is at the beach, I think, and Scarlett Fu is with her TV duties. But beside me is the legendary Charlie Pellet, so I am in fantastic company.
I'm very glad to be here. We got just a few minutes together, but we are going to make the most of it and let us talk about one of the most popular stocks to cover, and that is Apple.
Apple, and we have no other than Mark Gurman, Bloomberg News managing editor for global consumer tech, on Apple and all things Apple. He is what I call in my world a scoop machine, because anytime I see an Apple headline, I know it has to be Mark. So Mark, first of all, we have to talk about Apple briefly, or at one point surpassing NVIDIA as the most valuable company in the world. Maybe talk to us about the significance of that. What is Apple doing right? Because the rest of the big tech is kind of languishing.
Apple stock's been on a tear lately. I think investors might finally be reading my articles where I talk about that we're about to enter a tremendous new period for the company with so many new products, home devices, foldable iPhones, AI wearables, integrating AI deep into the hardware. Apple's a hardware company. They make basically all their money from hardware sales. If you're an Apple investor, it's a good time because they're about to make a boatload of more money. And so you'll probably have some success there on the days they announce announced their.
All right. I go to the Bloomberg. I look at Apple shares up 22.5% year to date. I look at NVIDIA by comparison up 9.9%. When a story like this, saying Apple is now #1 in terms of market cap, clears the Bloomberg, what is the reaction, respectively, in either Cupertino or in Santa Clara? Are the folks at NVIDIA looking, going, oh my God, what a terrible day this is? Folks in Cupertino, are they going woohoo, or is it really a case of nobody cares other than the folks who own those stocks?
I think it's the latter. But if you're NVIDIA, right, this might be a little bit of a wake-up call. I mean, they were the hard-charging company making all the money with insane revenue growth over the past couple of years. And now investors are beginning to become a little bit more skeptical over AI and how AI is being driven. I think there's a little bit more optimism for what Apple's doing because of their decision to go more on-device for AI processing. And so their CapEx is slim compared to the competition. And I think that the lower spending that Apple's doing, I think, makes investors actually pretty excited. But again, the quality of the AI that you're getting from the cloud versus on-device, there's still a big, deviation there. But the gap will close at some point, I think.
And then you said that Apple is set to make a boatload of money. Where will that come from? We do know that they're raising their prices across devices. Is that coming from there?
Well, the revenue will go up because of the price increases. I don't think the price increases are enough to slow unit sales to any significant degree. Profit, not going to change much because the offset, the price increases are designed to just simply offset the memory. They're not making additional profit on that. We're talking about new iPads. There'll be a new OLED iPad, so better screen like the iPhone and iPad Pro this fall. The foldable iPhone is going to be about $2,500. I'm super pumped.
I want to see that in real life.
I can't wait. Yeah, it's going to be the biggest change to the iPhone in the product's history. So it's a really big deal.
I'm not necessarily a skeptic with things like this, but why do I need a folding phone? Thank you, Isabel. Regardless of whether it's Apple, regardless of whether it's Samsung.
And is that Gen Z influence?
Well, I would say you need a foldable phone like you need a hole in your head because it doesn't really make, it's not really that necessary. Yeah. It's sort of a technology showcase. Right? It's over the top.
It's very cool. I mean, when I've seen these foldable phones, I'm always looking for the line.
Yes.
And I don't see it. I don't see the line between the two screens.
They've gotten better, and Apple's going to be pretty much industry leading in how, invisible that line is going to be. One of the problems you've had with foldable phones over the past several years is durability. Apple's is not going to be as durable as, the slab phone. Right?
Oh, slab phone is what
I mean,
call it. Yeah.
the Pro Max, the 17 Pro Max, this thing is built like a tank. You can throw it across wherever. You can throw it in the pool. This thing is not going to break. It's a tank. At the same time, what you really need to understand is that Apple's foldable phone is going to be more durable than the competitive devices.
Yeah. Okay, so we have around 1 minute left. And as Apple invests more in AI and new devices, do you think it can maintain its premium position? Because we also know that smartphone growth is slowing a little.
I think that Apple, if you look at it as a complete package, you look at the hardware, software, services, they still think they have the most competitive phone on the market on a global scale. I think it's the best combination of user accessibility, interface, services, things like iMessage. So I think it remains an elite product. And I don't think the phone is going away as quickly as some people do.
Mark, very briefly, Isabel asked about revenue. Whenever Apple earnings hit the Bloomberg, one of the first things I look at is China revenue. Speak to us about what is happening in terms of Apple and China. I know there was some news announced about the iPhone in China. What's going on there?
So Apple will finally be able to roll out its AI in China.
Wow.
This is the first generation version of its new AI. So the Apple Intelligence that got the head of AI fired. So I don't think this is a needle mover. I don't think people in China are going to want it. But the second generation, the new Siri AI and the new Apple Intelligence is pretty good. So we'll see how long it takes for that to get approved.
All right. We do have Apple shares right now trading lower. Almost since we began the conversation, Apple declined now by 0.3%. NVIDIA, by the way, lower by just about 1%. You're not saying anything. It's what investors are saying, Mark Gurman. Thank you so. It's great having you in New York, by the way. Thank you so much for joining us. Isabel Lee.
Pleasure.
Short and sweet, but I loved it.
Thank
you so
Charlie.
much.
Always fun.
All right, coming up at 12:05 Wall Street time. Yes, we got Balance of Power. We'll have reaction to President Trump's speech last night. President Trump, by the way, accusing China of election meddling. And of course, we will have the very latest on the war in the Middle East and what it means for politics, inflation, and energy. Also, don't forget that for our listeners in the U.S., you can tune in to listen to us on satellite radio on Sirius XM channel 121. Business headlines, top world news coming up right now.
From ABC News, I'm Wayne Cabot. The air quality in the eastern U.S. is so bad, FIFA is monitoring for any impact on Sunday's World Cup final in New Jersey. Canada now reporting 893 active fires, only 156 crews to fight them. Meteorologist Ginger Z sees improvement for some.
The wind shift is what we're going to wait for. So Chicago tonight, you see clearing. A southwest wind takes over. Then it's bad. Cleveland, Pittsburgh tonight to Washington, D.C.
The smoke is so bad in Philadelphia, they've declared a code purple, the most serious, meaning the air is very unhealthy for everyone. Other side of the state, Allegheny County canceling tonight's free summer concert with the 70s band Orleans. A bridge in Uvalde, Texas has collapsed from historic flooding that brought 200 water rescues and claimed 2 lives in Texas. Major quake now reported near the border of Mexico and Guatemala could bring a tsunami. The U.S. Geological Service monitoring a 7.3 quake that just hit. For the first time, Iran says that it attacked a U.S. base in Syrian territory. Iran also attacked in Kuwait, hitting power plants and water desalination plants. International oil prices up again right now, the highest price in a month. DHS Secretary Mark Wayne Mullen has sent letters to 4 states claiming non-citizens on voting rolls.
President Trump is correct when he said that election security is national security.
He says DHS has found more than 250,000 potential non-citizens registered in California, Nevada, New Jersey, and Pennsylvania. The Bipartisan Policy Center finds that most of them are citizens who are misidentified by outdated information or clerical errors. Apple just surpassed NVIDIA in market value, putting it back on top, the world's most valuable company. NVIDIA was the most valuable until just now it overtook Microsoft last year. You're listening to ABC News. Well, cases of that parasitic illness keep on growing, and there's new information from the feds about the origins. ABC's Sam Champion has details.
The FDA and the CDC saying the outbreak has been linked to shredded iceberg lettuce served at some Taco Bell locations in 5 states: Indiana, Kentucky, Michigan, Ohio, and West Virginia. The FDA identifying a single supplier of the lettuce from Mexico used by the restaurants where sick people say they ate.
After an abysmal May, U.S. housing starts picked up in June, but ABC's Jim Ryan says there's trouble that may loom for the industry.
Home builders have been reluctant to start new projects this year, knowing that home buyers are facing sky-high interest rates. Still, overall housing starts in June came in at a seasonally adjusted annual rate of 1.42 million. That's 19% higher than in May. The same report from the Census Bureau hints at trouble ahead, though. Building permits last month fell by about 3% from the previous month.
In the UK today, Andy Burnham is officially declared leader of Britain's governing Labour Party, clearing the way for Burnham to take over as Prime Minister. Target issuing a recall. For thousands of children's sandals, there are decorative pearls that have been found to present a choking hazard to young kids. No one's been injured or thankfully killed by this so far. Target recommending customers stop using any of these recalled sandals and keep them away from children. Wayne Cabot, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Smoke 'em if you got 'em. Welcome to the Friday edition as smoke envelops the nation's capital a day after the president laid out his dystopian view of the American electoral system, accusing China of election interference and threatening a fragile truce with Beijing. We'll unpack it all from a primetime address with Bloomberg's Tyler Kendall, with election integrity expert Stephen Richer of the Cato Institute, all ahead. Iran tells people to turn off the air conditioner due to extreme heat and attacks on power supply facilities. It's getting hot in the Middle East. We'll have details on a sixth straight day of hostilities with our political panel, and we start, as always, on Wall Street, where we've got some trouble. Charlie Pellet takes it from here, from World Headquarters in New York. The great AI unwind. Charlie, what do you have?
What I got is it takes AI to spell pain for Wall Street. We've got the Dow, the S&P, NASDAQ, all in the red right now, Joe Matthew, and tech stocks being hit especially hard. Semiconductors being hit very hard right now. Got to begin with the SOX, the Philadelphia Stock Exchange Semiconductor Index. Yes, it is well off session lows, but still trading lower. We've got the SOX down by roughly 1%. This with the S&P 500 index down 54 now, drop there of 0.7%. Specifically techs, the NASDAQ 100 index down 1.1%, and we have got the NASDAQ Composite Index down 1.3%, down, not doing much, lower now by just about 0.2%. All of this with the VIX back above 18 now. We've got the 10-year 4.54%, with the 2-year 4.16%. Spot gold up $39 the ounce, 4,016, up by just about 1%. And West Texas Intermediate crude, heightened Middle East tensions again. WTI up 3.7%, closing in now on $82 a barrel. Barrel of Brent 87.21. It is higher by just about 3.55%. But tech does remain the major focus right now. A surprise breakthrough from Chinese AI startup Moonshot has driven the sell-off. Investors likening the decline to the market shock that was unleashed by DeepSeek last year. So how is the AI story playing out in Washington? Jeanette Lowe is Managing Director for Policy Research at Baird Strategas.
The AI story, I think, is going to be important. I do think more of it's probably going to come from the administration than from Congress. You've definitely seen the Commerce Department working more quickly when they've seen like the mythos come out and being worried about what those implications can be. So I think you're going to see the ability more from the administration because they can move more quickly. They can do export controls rather than coming from Congress. But I do think Congress is going to be concerned about this as well.
Jeanette Lowe of Baird Strategas. And again, we've got the SOX trading lower now, down by just about 0.7%. Semiconductor names, including Micron, reversing up by 3.4%, but Qualcomm down 1.2%. Intel now lower by 1.6%. Round 2 of the Open Championship is underway at Royal Birkdale Golf Club in Southport, the United Kingdom. And at last check, sitting atop the leaderboard at 8 under par, Lucas Herbert of Australia. I'm Charlie Pellet. That's a Bloomberg Business Flash. Back we go to Washington. Smoky Washington, Joe Matthew. Has the smoke hit you yet?
Yeah.
Hit you yet?
Serious. I can't see across the street. It's just like what you had. Is it still that bad in New York? Charlie, give me a quick
It has gotten a
here.
little bit better here in New York, but I got to tell you, it just seemed like, just a matter of weeks ago, we were going here in New York from Knicks in 5, enthusiasm about the World Cup, and now it's, I had lettuce, I got to find a bathroom, or also worrying about the air that I breathe. So certainly a major change in what's going on outside.
Listen to you. Could you smell it at home? I could smell it at home.
You know what happens, though, Joe? You get immune to it. You start smelling it. It's all over the place, and then you get so used to it that you don't start to notice it anymore. But I got between the heat and the smoke, the dog was reluctant to go out this morning, so it's bad.
See, they know best. The dogs. We don't deserve them, Charlie Pellet. He'll be back, thank you, sir, in 15 minutes with more on the markets. Look at that. Get on YouTube and look at the sky cam and our view of the Washington Monument. Just like the Statue of Liberty was yesterday, a mere silhouette.
This is already 100-degree swamp down here. This is gross. I got to tell you what, this code purple is what they say. Do you even know what that means? I love the language in the Washington Post. It's poetic. A toxic shroud covered Washington Friday. Indeed. This is, by the way, from the wildfires, in Canada. Oh, yes, and in Minnesota. The acrid air prompted residents and tourists to don face masks. I haven't seen masks yet. Are people wearing masks? The day began ominously as the sun rose, a milky orange blob fighting through the haze hanging over the district. It's true. This dystopian view, this post-apocalyptic Washington we wake up to with the milky orange blob reminding us there is a sun. It would be clear out, right, without all this smoke? The Washington Council of Governments, the Metropolitan Washington Council of Governments, because we have so many governments around here, we need a council of them, issued a code purple air quality advisory. Very unhealthy conditions for everyone. Code purple, so if this is like the DEFCON scale for air quality, there's only one level worse than this. I'm looking this up now. Purple, very unhealthy. With values of index between 201 and 300, the only level left from here is maroon. Did you know there was a code maroon means hazardous? That's like plaid speed. Never been realized. So thanks for joining us on this Friday. Whether you're in Washington, smoky New York, they were choking in Boston. Either way, we're on Bloomberg Radio and on YouTube, where you can find us by searching Bloomberg Business News Live. Charlie is right. You get outside, you breathe for a while. You don't even notice it once you burn all the hairs out of your throat. The environment in Washington today was peculiar, though, coming off of the night that we all had, with the first primetime address from President Trump in some time, and one that veered into what some believe to be conspiracy. The mood around Washington feels a little weird this morning as we go back to the future, to 2020. Election security was the theme of the speech. Of course, he accused China of interfering in not only the 2020 but the 2018 elections, and accused Beijing of any number of offenses, including stealing Americans' voting records, only weeks before President Xi is due here in Washington for a visit. We have big questions this morning about so many things, as we recall the president's speech last night in the East Room. Listen.
I'm proud to report that our country is safer, stronger, and far wealthier than it has ever been before. We're making a record investment in our armed forces. Unfortunately, we're forced to use it now. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly.
Citing newly released raw intelligence, the president claiming China carried out the largest compromise of election data in history. 2020, obtaining 220 million U.S. voter files and creating what he called ballots for Biden. Tyler Kendall was up early this morning. Imagine you wake up in the dark here before you see the smoke, and you get punched in the face by this acrid burning rubber, wondering where it's coming from, only to realize America's hat. Tyler Kendall, our Washington correspondent, comes over to see us in the bureau at high noon. It's weird, right? Were you coughing out there on the north lawn?
It's very jarring. To your point, when it's dark out too, and you can't see the smog, but you just smell the burning. It was confusing at first because we hadn't had that here in Washington until really today. We knew our colleagues in New York had it, but today's our day.
They're all laughing at us right now. It's a brand new day. It feels a little bit different politically speaking. White House put up a whole page dedicated to this. People can go review these documents. What's going to come of this? The president put forth, as I mentioned, a lot of raw intelligence, but not a lot of evidence.
Right, and Bloomberg News went through almost all of the documents and found that many of them released last night were either heavily redacted, appeared to be incomplete, or contained information that was already known. But there's a few different points of context that we know about the timing of the president's remarks here, including that he made a big push for that Save America Act, that voter ID law that he would like to see enacted
Is
before
that what
the
this is really
midterms.
all about? Is it greasing the skids for Save America?
Maybe, although it doesn't really feel like there's appetite on Capitol Hill to get it done. The numbers aren't there. It doesn't seem like we're going to get it over the finish line unless maybe somehow some provisions could be stripped out and put in a reconciliation package. Senator McCormick told me that earlier this week that he would be in favor of such a move. The other, though, context is the allegations against China, which has denied them. They called them completely fabricated in a statement earlier today. But to the point that you made at the top of the program, this is coming just weeks ahead of an expected visit here in Washington.
When's he coming? Do we have a date?
September 24th,
It's September.
I think, is what the White House said, because that is the same week as the United Nations General Assembly.
Wow.
Like a lot of these visits, though, China hasn't confirmed that. We've seen with this White House that the Trump administration often confirms before China. China likes to wait until the last minute. I mean, even when we saw President Trump go to Beijing earlier this year, China didn't confirm it until like a day before the trip happened.
How about that?
But President Trump's comments stopped short of proposing any sort of concrete action against China in response to these allegations, which raises the question as to, what the motive may be. Is this posturing or leverage ahead of that visit? Things like that we heard a lot of talk about, because I think it's fair to say that relations have been relatively stable since that visit, but tensions have been creeping in, whether that is about trade, whether that is about technology and AI and, competition in that sphere. So a lot to keep our eyes on.
Sort of ironic that it looks and smells like Beijing outside today in Washington, right? That's kind of like every other Friday for them with the smoke and no masks though, like I said. The fact of the matter is, the president called out his own intelligence agencies, right? This happened on his watch in the first term. CIA Director John Ratcliffe was his DNI. How do we rationalize all of that? Were they lying to him or keeping information away from him?
I don't know the answer to that, but we'll see how it evolves. I will point out, and to this point, a 2021 report by the U.S. intel community concluded that there was no indications of any foreign actor attempting to alter any sort of technical aspect of the voting process in the 2020 election. So these are claims that had previously been debunked. I will point out, though, and we also heard that statement, you mentioned it the other day, from Jim Himes. We heard from Mark Warner on Senate Intel. There had been a push when it comes to bipartisanship for China infiltrating U.S. infrastructure and cyber attacks, things like that, but not related to the election. And you're seeing officials in Washington today draw that distinction between election security or broader, U.S. security related to some of our critical defenses.
We should also note the difference between interference and influence, right? It's one thing to be putting up dummy ads on Facebook. It's another thing to be getting into machines and changing votes. Fascinating color from inside the room. You won't hear this anywhere else. This came from our TV pool reporter who was in the room in the East Room last night. Ready? When it was all over, because he had a crowd with him. The cabinet was in there, broke into applause after the cameras turned off. And get this. I'm reading directly from the pool note. The president joked with the crowd and spoke to the audience about election fraud and other topics for another 20 minutes. He was only halfway done when the speech ended. Fascinating stuff. In the room, Navarro, Mullen, McMahon, Patel, Pulte. Hey, thanks, Tyler. Look at that thing. Get on YouTube. We can't find the monument. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story. We've got Meta said to be in talks to lease computing power to Anthropic. Now, this is according to a report from the New York Times. Shares of Meta right now, they are declining by 3%. But again, the headline moments ago on the Bloomberg, Meta Platforms in talks to lease computing power to Anthropic, and according to the New York Times. We're looking at a tech-led sell-off today on Wall Street. Friday, stocks lower. Ongoing concerns about chip makers and, of course, corporate spending for AI. Right now, the S&P down 50, drop there of just about 0.7%. Dow Industrials down 127 on the Dow, a decline there of 0.2%. NASDAQ down 295. The NASDAQ Composite Index down 1.1%. NASDAQ 100 Index also down 1.1%. The SOX right now down by 0.7%. And, of course, the Philadelphia Stock Exchange Semiconductor Index. All of this with a VIX now above 18, a 10-year at 4.54%, the 2-year 4.16%. Gold is at $4,019 the ounce, up 1.1%. Yesterday was below 4K. West Texas Intermediate Crude rallying up 3.8%. WTI closing in on 82 a barrel now. Barrel of Brent 87.34. Brent crude up by about 3.7%. Yes, NVIDIA is now back on top, but for a while this morning, Apple was the biggest company in the world based on market cap. Apple shares down 0.8%. NVIDIA shares trading lower by 1.5%. We do have a round 2 of the Open Championship underway at Royal Birkdale Club in Southport, England. And atop the leaderboard right now, Lucas Herbert, 8 under par, tied at second. We've got Cameron Young, Jackson Suber of the United States. They are both 6 under par. Again, recapping, S&P down 55 now, down 0.7%. Back we go to Smoky, Washington. Once again, your host. Here he is, Joe Matthew.
All right, thanks for sending it our way, Charlie. He'll have more on the markets coming up in about 20 minutes' time. It's kind of a weird market today, and we'll have more as we make our way through the session. SpaceX, well below its IPO price. It's down almost $7 or 5%, $124. Probably would have jumped on that price on IPO day if you could have. Now they can't seem to sell it fast enough. The big fight over Micron, bulls winning. It's been up and down $10, $20 in each direction. This is a really shaky situation here. My gosh, it's up 3%, $28, getting ever closer to 900 again. It's been a real downturn. But what are they buying other than the aforementioned? It's really funny the way the moods swing. Remember, it couldn't sell GE fast enough after the earnings report the other day. It is now one of the top gainers on the index, up 2.5%. Same for J&J. Put up their earnings the other day, beat and raise, couldn't sell it fast enough. Now they can't buy them fast enough, back above 250, up $3. It's just, I don't know, it's another Friday on Wall Street. As we choke our way through this trading session, Charlie's right. We got the smoke here today. We've been showing you images of it. If you're with us on YouTube, search Bloomberg Business News Live. We'll be on the TV network coming up at the top of the hour here, but you can barely see across town. You can't see across Potomac River. Look at the White House there. Oh my God, it looks like a scene out of Blade Runner. Actually, it's going to be raining tomorrow, too, so it'll really look like that. Just got a tweet from broadcast and radio legend Dan Raviv. I love this. He says, Joe, a lot of people near GW found their COVID mask collections and are wearing them. Oh, yes. Snappy picture, Dan. How cool is that? Listened to Dan Raviv for years. Now he listens to us. And yeah, everybody's got the N95 mask out. Have you reached for the mask? I didn't see anybody with them coming in, but maybe that's because I'm a driver. So we get back to the speech last evening. President was about 25 minutes, as they told us it would be. East Room, gold curtain behind him, a couple of American flags. He started by talking about some of the achievements of the second term, and then went deep on election interference. And it turns out the reports that we heard going into this were pretty darn close to true, as he not only described vulnerabilities in the system, easily compromised, he said, when it comes to electronic voting machines, vulnerable to being rigged and stolen. We've heard him talk about all of this, but to cite raw intelligence that he had declassified for this occasion. He says China carried out the largest compromise of election data in history in the 2020 election. Not Russia, Russia, Russia. China, China, China. He says Beijing stole 220 million American voter files, created ballots for Biden, accusing China of an illicit acquisition, including names, addresses, phone numbers, and party affiliation. Where is this going to lead to? We do not know. The White House has put out some documents, as we mentioned, on its website, but we are very short on evidence here. As the president spoke to Americans in their living rooms in prime time. Now, we wanted to spend some time with somebody who has made a career out of this issue of election integrity. You might have heard the name Stephen Richer. Widely known for his staunch defense of election legitimacy when he was Republican recorder for Maricopa County, Arizona. Yeah, we'll go to the source. 2021 to 2025, successfully managed voter registration and early voting administration in what is the second largest voting district in the United States. Gained national prominence and went through hell defending the integrity of the 2020 election results. He's now at the Cato Institute, where he is Robert Levy Center for Constitutional Studies legal fellow. Stephen, it's good to see you. Welcome back to Bloomberg.
Very much.
Did the president make
Yeah.
things better or worse last night?
Well, he certainly stirred the pot, as he is apt to do when it comes to election administration. But I think that the headline is what you said, which you said, scant on details, light on details. And the president made a number of very serious allegations about the general functionality of our election system. But then when you went to the White House website and you downloaded the documents, they didn't really match up in some instances with what the president said. In fact, in some instances, they undermined what the president said. And then in some instances, there simply wasn't the sufficient body of work that you would expect to make such extreme allegations.
Yeah. Well, he did make extreme allegations. Have you seen any evidence supporting them since last night?
Well, so take one of the concerns about tabulation equipment.
Yeah.
And in the United States, we, of course, tabulate at the local level. There is no central hub by which you can corrupt all tabulators. And, of course, importantly, 98% of Americans have a paper ballot when they go to cast their vote. They either hand fill it out on paper or they touch a screen that prints off a paper ballot. And those paper ballots are important because you can't hack them and you can audit them. And so if there were any machine manipulation, it would be revealed in that. Even so, even by the reports that the president himself put out, I want to read to you one of the conclusions, which is, quote, "We assess that vote tabulation systems would be difficult to manipulate on a wide enough scale to compromise election results," end quote. So even the documents that the president is revealing as his blockbuster debut into reopening cases of massive election fraud come to the same conclusion that the election community has come to for 6 years, which is there is no there.
Wow. Were you surprised we got nothing about Fulton County last night? You remember Tulsi Gabbard was down there seizing ballots. There were no real specifics that some expected as the president described vulnerabilities, but never got down to details.
That's right. And a lot of people thought it was going to be really targeted at Georgia. Obviously, the FBI raided Fulton County Elections Department earlier this year. Director of National Intelligence, Tulsi Gabbard, was down there. There's been a lot of talk about the 2 U.S. senators, both of whom are Democrats, and whether President Trump would contest their lawful election. But this president spoke in generalities far more than he did in specifics. The only state he really called out specifically was Michigan with respect to one voter registration group, and then Los Angeles County because of the recent statewide primary that they had. But even with respect to Los Angeles, he just said, you know, I don't like that it takes a while to tabulate their votes. And while that might be frustrating, that's not evidence of unlawfulness. That's not evidence of mass fraud.
President talked about China's illicit, the word he used, acquisition of U.S. voter files. When you consider what's on those files, as he said, names, addresses, phone numbers, party affiliation, all of that is publicly available, isn't it?
That's right. All of that's publicly available. We might not like it.
That's not illicit.
Yeah, well, I mean, you can obtain it in illicit manners. So for instance, the appropriate way to get it in Arizona is to make a public records request. But there's no serious obstacle to getting it, and I don't see there being any serious danger to getting that stuff.
We think Beijing put in a FOIA request for 220 voter files? I don't know. Don't mind me. I'm tired from last night. What is the sort of general effect of a speech like that last night then, when it just comes to overall confidence in our voting system? You had to put up with death threats. You had to put up with a lot of angry interviews, people screaming in your face for a lot of time after 2020. Are we going to go through this again?
Yeah, so I don't know why President Trump did this and why he did this last night, but I can tell you one of the effects that it will likely have, and that's likely that it will damage confidence among President Trump's base. And that's a darn shame, because we've been working awfully hard to bring up that confidence since the 2020 election. We want those people on board. And following the 2024 election, in which President Trump won and everyone agrees he won, confidence went up. It was as high as 80% among Republicans. Confidence is as high as 80% among Republicans. Confidence in U.S. elections. Wow. That's now down to about 60%, and I would imagine last night didn't help things out. And when people lack confidence, they get far more confrontational, and they sometimes get far uglier towards their local election administrators, including yours truly.
Oh, man. Does the SAVE Act, if it were passed, would the SAVE Act address any of the issues the president laid out last night?
Yeah, so to the extent that the president really made a push for anything, or there was a reason for him to do this, it was his promotion of the Save America Act at the end. And the Save America Act could potentially relieve concerns as far as non-citizens participating in American elections, which is unlawful in every single state. But what the president would like to require is documented proof of citizenship in every single state. That's not true currently of every single state. Most investigations, in fact, all investigations except for this one to date, have revealed that to be a minuscule number, the number of non-citizens participating in elections. And even the president was careful last night to say that they had registered to vote. He didn't say they had voted, but they had said he had registered to vote. And then going back to that homework matter, he didn't offer any documents as to how they did this, or the number of voter files affected, or any details on the voter files affected. And so this is one where I'm gonna wait to see the proof before coming to a conclusion.
Well, I appreciate that, and I'm glad that you could spend some time with us today, Stephen. Thank you for the insights, and come back and see us again. Stephen Richard, Cato Institute, former Maricopa County recorder, back in the good old days, 2021 to 2025. I'm Joe Matthew in Washington, where we're coughing our way through the Friday edition. Breathe deep. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are with us the day after the big speech. We've got a lot to talk about with Iran. We haven't even gone there yet. Day 6 of attacks. The U.S. is dropping bridges. We'll play it to the panel next, only here on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down Friday here with the Dow, the S&P, NASDAQ very much in the red. We're also looking at a sell-off in chip makers again. However, it is picking up steam, driving the group that has led this year's stock rally toward a bear market. Right now, we have got the S&P 500 index down 49, down by about 0.7%. NASDAQ now lower by 1.1%. The NASDAQ 100 index down 1%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 0.6%. The VIX continues to push above 18 with a 10-year at 4.54%, the 2-year 4.16%, and gold is up $37 the ounce now, holding above 4,014 on the precious metal, up 0.9%. West Texas Intermediate crude back above 82 a barrel, up by 3.9%. Barrel of Brent, 87.41. Brent crude up by 3.8%. President Trump last night accused China of interfering with U.S. elections in 2020, claiming that the Chinese government stole voter files, including names, addresses, and other sensitive data. Henrietta Trey's is co-founder of Veda Partners.
The president's speech was best in sort of the first 60 to 90 seconds when he was talking about transgender issues and immigration. And then the election stuff really just sort of started to fall flat. There wasn't new evidence presented that folks could really grab their hands around. The website that he directed people to didn't provide further details or any kind of concrete backup to the 200 and some odd thousand people he claimed falsely voted.
Henrietta Trey's of Veda Partners, a topic we'll have a whole lot more on coming up on Balance of Power. So again, the Dow, the S&P, NASDAQ all declining, keeping an eye on Meta platform shares down 3% right now, according to the New York Times. Meta is in talks to lease computing power to Anthropic. Netflix, after earnings, stock plunging now by 7.3%. Round 2 of the Open Championship underway at Royal Birkdale Golf Club in the United Kingdom, specifically Southport, England, at last check. We do have Lucas Herbert of Australia atop the leaderboard at 8 under par. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
He's a news machine. Charlie Pellet, thank you so much. And Charlie, we'll be back at the top of the hour, 1 p.m. Eastern time, with another read on the markets here. It's not feeling too great out there, though. A couple stocks are getting a bid after being beat up earlier in the week. Look no further than GE, J&J. Nothing related to AI at the moment, although Micron seems to be getting a bid. We'll check back in 5 minutes and we'll see how that's coming together. Welcome to Friday. Thanks for meeting us at the threshold of the weekend on the Friday edition of Balance of Power on Bloomberg Radio. Streaming live, as always, on YouTube. Search Bloomberg Business News Live as we try to get our arms around everything we heard last night and everything that's happening with Iran, where the government is telling people to turn off the air conditioner, particularly in the southern part of the country where the U.S. has been striking targets. We went through a 6th straight day of hostilities with the U.S. hitting southern Iran specifically. We knocked down 6 bridges. Wow. According at least to Iranian state media. Separate reports of attacks in the area of Bushehr, that is home to the country's only nuclear power plant. The Ministry of Energy, indeed, calling on households to turn off the air conditioner due to extreme heat and attacks on power supply facilities. I'd like to hear more about that, because that would be a big development if it's true. And of course, Iran's not sitting around. They keep pounding our bases in the area, or at least targeting them. Bases in Kuwait, Jordan, and Bahrain. Kuwait, by the way, is reporting, more specifically, strikes on a water desalination and power generation plant overnight, which really ups the ante here. Donald Trump has already threatened to do that in Iran next week, telling Fox News, if we roll through the weekend, next week the power plants and the bridges are struck, but Iran says we're already hitting the bridges. We assembled our political panel for their take on what's happening. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano meet us once again here on the Friday edition. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. What do we call this right now, Jeannie, if not all-out war? I keep asking lawmakers if they support that idea, and they suggest that it's something other than that. But if we're getting to the point now of moving beyond strictly military targets, how do we characterize this escalation?
Yeah, I don't think there's any other word but war. Some people like to say it's a tit for tat, it's a back and forth. I mean, we are at war with Iran, and the president told Congress that. And I think what you just said, Joe, is the really frightening part of this is Donald Trump's threat that next week he's going to go after Iran's energy infrastructure. And Iran has said, as a result, they will hit back. And what we think they might do is push the Houthis to close the strait at the Red Sea. And that means that the two pipelines that have been bringing about 7% of the world's oil via Saudi Arabia and the UAE would both now be shut down. And let's not forget the reason Donald Trump said he was forced to sign that ridiculous MOU was because he didn't want to be Herbert Hoover, and it was going to be an economic catastrophe. Well, this would be an economic catastrophe. So I certainly hope the president doesn't follow through with this, but that is what we are looking at next week. And those are potentially devastating consequences for the world economy and the U.S. economy, and of course, President Trump and all of us by extension.
Are we looking at a new target set here, Rick Davis? And if we are, if in fact it is moving beyond civilian targets, realizing that in many cases they are shared by military and civilian populations, what would that mean for the trajectory of the war, Iran's likeliness to respond by targeting more U.S. targets in the Middle East?
Yeah, look, I mean, this is a classic escalate to de-escalate Trump move, right? And by the way, he forecasted this in May, Project Freedom. Yep. Remember that? The thing that never actually happened? You know, he announced this is how we're going to get the deal done. We're going to bring them to the table by going after these economic targets. And then Saudi Arabia talked him out of it. We're right back where we were in May. And the story is different. It's not about nuclear sites and their ambitions in Iran to be a bomb country. It's about reopening the strait and creating some economic stability around the world. And that pox on the Trump administration for mission creep, but we're there. So now we got to open up the strait. So you're right. I mean, he's going after economic targets. That is different than just going after the military targets that the previous bombing strategies have tried to implement. And the hope is that that kind of activity will start to bring the Iranians back to the table. Jeannie's right. They've got lots of options, right? I mean, you know, like they have a vote and they could decide to escalate, to de-escalate themselves. And that would include potentially the Houthis coming in. But they're likely to go after these oil and gas sites in places like Kuwait and Qatar, like what they did last night. You know, they have to husband their resources in Iran. They don't have unlimited supply of rockets anymore. And so, you know, it is far beyond, though, a tit for tat. The impact that the current bombing campaign is having on the Iranian economy and the civilian population is meant to elicit pain. And I think by the reporting we're getting, that's starting to happen.
And we're hitting them during the day as well now, which was an interesting development over the past 24 to 48 hours. Jeannie, I guess we'll all pretty soon be used to saying the Bab el-Mandeb Strait, which is the gateway to the Red Sea. This is where Iran has pointed the Houthis for the next choke point. If we're going to be hitting targets like this, that's inevitable, right? And we're talking about, is that how you get $150 a barrel oil?
I hope not, but that is absolutely what we are hearing, and it's no surprise. And let's not forget, the United States is in a much weaker position than Iran because they see us as an existential threat. They are hardliners, and they will fight to the bitter end. They've withstood pain for decades, pain like we haven't felt and we wouldn't want to withstand. That's why the president on June 17th signed that MOU, which was a ridiculous document. Some people call it a surrender document. And then he tried to get out of it by opening up the Omani Strait. So we are right now back where we were on June 16th before he signed it. We have tried in this war since February an air strategic bombing campaign. That failed. We moved to a blockade. That failed. We signed the MOU. What is left is a land invasion. That is a joke. We cannot invade Iran, a land of 93 million people. There is no option there. So we are back now to this escalate to de-escalate, the strategic bombing campaign. We're going to see that strait closed at the end of the Red Sea if the president keeps his plan. But what ends this war? None of that is going to end this war. And we are right back where the president said he was right. It is an existential threat to the economy of the world and us, and nothing about that has changed, except potentially it's going to come faster and worse than we thought, particularly if they shut off that the Red Sea Strait that you're talking about.
You know, a lot of folks were expecting the president to get into some of this last evening as he found himself into Americans' living rooms for a primetime address. What's your thought on the fact that he didn't really go there, Rick? Was that speech in part to turn our attention away from the conflict in the Middle East?
No, I don't think so. I must say, I mean, I was surprised he didn't have something to say about the ongoing campaign in Iran, but he's trying to sell a piece of legislation that's dead on arrival. I mean, like, this is the hardest thing for a president to do. And why his advisors haven't just told him drop it, but the idea of having a presidential address to thump a dead piece of legislation by trying to scare people into the loss of our democracy because the evil China is doing something with our ballots. I mean, it was not even good theater, and certainly not accurate by anybody's stretch of the imagination. So, yeah, missed opportunity for Donald Trump to talk to the American public. He chose to do, sort of a Trumpian thing and try to explain why we need this law to require proof of citizenship, which didn't even come up really in last night's conversation as to what the vulnerabilities were. So I don't know. I was shocked and very disappointed that he would try to create this amount of alarm with really one of the best election systems ever created by man around the world.
If that was theater last night, Jeannie, what's the performance going to be when President Xi comes to town the end of September, or is that going to get canceled now?
Yeah, apparently when he met with Xi last time, he didn't say anything about this horror that he's talking about. But look, I think both you and Rick missed it. At the beginning of the speech, he said, the economy is great, the country is great, everything is great, never been better. I think he said that like 6 times in the first line, except the fact that Maduro stole some votes in the Venezuelan election, and we've got to take action on that. It was a horrendous speech. It was a horrendous waste of time. And the only thing it did was scare Democrats to get out to vote in November, because they're worried if he'd go to this extent to deliver this speech about Maduro and empty China threats, then what's he going to do in November as this election gets closer? He's going to try to meddle with it more. So, Joe, I have to tell you, he seemed a little tired during the speech, and some people said maybe Pete Hegseth needs to give him some of that tea to wake him up, because he seemed very exhausted. Yeah, Joe, I went there.
So it was a low, all right, so a low T speech is the review from Jeannie. Wow, I'll tell you, that's tough. I don't know if the president's going to like hearing that. Rick, does anything come from this? I mean, they put a page up on the White House website, but is there some sort of investigation? I mean, if he didn't show up with evidence, do we just walk away from that speech now and kind of think about it? Or is there going to be a federal government probe or some action that's taken?
I would run, not walk away from that speech. You can't get it far enough away from it fast enough. Look, I mean, they sent down all these investigators to Fulton County, along with the head of the Director of National Intelligence, Tulsi Gabbard. The whole world was scratching their head going, what's going on in Fulton County? We didn't even hear about that last night. What is happening in Fulton County? We weren't even open the door to these investigations that are ongoing. So look, the president's trying to undermine the integrity of the democracy. The strongest thing we have is our elections. I don't get it. I don't know why, other than the fact that he knows he's going to get beat in the midterms, and he's trying to fall back on this idea that it was rigged.
I wondered if Tulsi Gabbard was going to appear around the corner at some point in the East Room. Rick Davis and Jeannie Shanzano, we've got Apple News set to settle talks with the DOJ over the antitrust case. More ahead.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The U.S. and Iran move beyond military targets. Welcome to the Friday edition. As American strikes roll into a sixth straight day, dropping 6 bridges, while Iran fires on U.S. bases in Kuwait, Jordan, and Bahrain, sending oil prices higher once again today. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us on the Friday edition. Kaylee, it's interesting that none of this seemed to come up last night in the president's address.
No, he largely focused in his address on the question of election integrity and suggestions based on evidence or intelligence, rather, that he was unveiling that China meddled in our elections in 2020, suggesting that Americans' electoral systems may be unsecure ahead of the midterms in 2026. Of course, we don't yet have full evidence to substantiate a lot of those claims. Some of those claims weren't even necessarily new, but previously known information. But yeah, Iran did not feature heavily in that primetime address, but Iran certainly is what seems to have the market's attention today, as once again we are seeing oil prices spiking as this list of targets that the U.S. and Iran are willing to hit seems to be expanding.
Yeah, we'll have a lot more for you on the latest on the war with Iran, which has been somewhat overshadowed by politics here in the United States. State media from Iran suggesting we dropped 6 bridges overnight, which would be a pretty remarkable escalation. The president saying next week it's power plants and other civilian-oriented targets. Iran, by the way, apparently hitting a water desalination plant in Kuwait. So this is starting to reach a new level.
Yeah, we've also seen reporting from Axios today that the U.S. is sending more refueling planes to Israel, which could signal that the U.S. is prepared to ramp something up in some way in the theater. So obviously it's a lot that we have to pay attention to, and we'll get into it with Alon Goldenberg from J Street in just a moment. But we begin, as always, with a check on the markets on this Friday. Charlie Pellet has a look from New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lines. You mentioned oil spiking. Let me put a percentage on that. West Texas Intermediate crude right now higher by 4%. We're at 82.13 on WTI. Brent, the global benchmark, 87.57 right now. Barrel of Brent up by 4%. All of this with stocks selling off, and the SOX just turning around, have been lower for much of the day, but right now we do have the SOX up by just about 0.2%. Do want to begin, though, with a developing story involving Apple. Apple and the U.S. Justice Department said to be in early discussions about settling a 2024 lawsuit that alleges the iPhone maker violated antitrust laws. Our Mark Gurman says the discussions are active. There is no guarantee that the two sides will reach an agreement, and no trial date has been set in the case. We will have Mark coming up for you in just a moment to tell you more about Apple. Apple shares right now down by just about 0.9%. So the Dow, the S&P, NASDAQ, they're all in the red, looking at a sell-off in chip makers again. I mentioned the SOX, bears repeating, have been lower for much of the day. Right now we are looking at the SOX, a little change, but still higher by about 0.2%. S&P down 40, drop there of 0.5%. NASDAQ down 0.8%, and the NASDAQ 100 index down 0.7%. The Bloomberg Mag 7 index, though, down 1.3%. The VIX back below 18 right now. 10-year 4.54%. The 2-year 4.17%. And gold up $41 the ounce to $4,017, up now by 1%. You recall yesterday we did have spot gold trading below 4K. Crude bears repeating, up more than 4% right now. 82.15 a barrel. Barrel of Brent 87.60 right now. Brent crude up by just about 4%. Micron Technology shares, they are rallying right now among some of the other semiconductor names. Qualcomm down 0.1%. Applied Materials down 3%. Intel down by 4%. Golf news. Round 2 of the Open Championship underway at Royal Birkdale Golf Club in Southport in the United Kingdom. Right now, 8 under par on the leaderboard. Australia's Lucas Herbert. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets from New York on this Friday. Thank you so much. Of course, the smoke that New York was experiencing and is still experiencing today has migrated down to the district, and Joe and I are experiencing it now. It's creating quite the scene here in Washington, obscuring the Dome of the Capitol, the Washington monuments. After you couldn't see the Statue of Liberty in New York yesterday, it is certainly something to behold. It is not something, however, that the president took the time to address in his primetime speech to the nation last night. Primarily, as we've told you, that was a speech around elections in this country. He did take some time, though, at the very beginning of the speech to touch on other issues, including the economy and the war with Iran. Listen.
I'm proud to report that our country is safer, stronger, and far wealthier than it has ever been before. We're making a record investment in our armed forces. Unfortunately, we're forced to use it now. We are likewise winning big in Iran, and you will see the fruits of that labor very, very shortly.
We seek the insights of Ilan Goldberg with J Street, where he's the Senior Vice President, Chief Policy Officer, having spent years working in the State Department. In fact, was the department's Iran team chief, advising leaders on all issues pertaining to the nuclear program at the time. He served as part of the small negotiating team supporting then Secretary of State John Kerry's initiative to conduct permanent status peace negotiations between the Israelis and Palestinians. It's great to have you back, sir, on Bloomberg TV and radio. Kaylee pointed me back to a tweet that you had put up roughly 3 weeks into the war with Iran, in which you listed a number of observations from your view as someone who spent years wargaming these scenarios. All of this still reads fresh today as we essentially reset the clock and go back to the beginning of this conflict, yet both sides are threatening real escalation that would start involving civilian targets. Ilan, is that what's next?
Yeah, I mean, and I think you're right that we are really back to the beginning in many ways. What I argued for, and I did spend years looking at different scenarios and planning for these possibilities at the Pentagon, and when we really looked at what happens at the end of a war with Iran or how it goes, our most central conclusion was essentially this ends up looking a lot like the first Iraq war, going back to the early 1990s, where at the end of it, you're going to have a wounded regime, but it's still there. In some ways, it's weaker, but in many other ways, it's angrier. And then you're just in a new normal where you have instability and bouts of violence, and a war starts every few weeks, or small wars. Maybe it's not full war. Just this is the new normal. And that's absolutely what we're doing. But actually, the one thing I'll say is, it's actually a lot worse than what I'd even predicted, because the one big difference is Iran has a lot more leverage over the Strait of Hormuz and has been able to grab that leverage as a result of this war that none of us really anticipated was going to be as effective. We thought they'd be able to try and close it and use it as a tool, but their ability to sustain that leverage and control of it over time has really been a wild card and has made things even worse. So I thought this was a terrible idea from the start. That's what I wrote at the very beginning of the war for precisely these reasons, that there's no positive way to end this in a way that works for the United States. But it really has turned out to be even worse than I thought it would be.
Well, so if there's no positive way to end it, what in your mind is the least bad way?
Yeah, so I'll tell you, we have three options. Again, they're all terrible at this point. And I don't know if any of them are viable, but this is what I would do. I think the least bad way is cut a deal. It's what we tried to do a few weeks ago with the Memorandum of Understanding. It was a bad deal, but it was better than the alternatives because essentially it's financial bribery to Iran, right? How much money are you willing to give them in terms of sanctions relief, in terms of, their ability to sell their oil in order to stop this? We thought we'd given them a fair amount. Turns out it wasn't enough. And there's still, I think, such a desire inside of Iran, both because I think a lot of anger because of the way this all started, especially taking out the supreme leader, but also a desire to really humiliate Trump at this point in the U.S. by demonstrating to the world, don't do this again. And I think that any deal that financially has enough incentives for Iran probably doesn't work for Trump because it's too humiliating. The alternative is military options. Put more pressure on Iran, which is what Trump is trying to do right now. That's the purpose of this blockade and now starting to go even further, attacking bridges and infrastructure. The problem is Iran has shown tremendous resilience. The regime doesn't care that much about the population. It's also capable of striking back and causing a lot of problems for the United States, certainly for American partners in the region, for global oil prices. Trump isn't willing to go far enough to actually change the regime. That's not a real option. And so basically, there are no good options. Those are your two possibilities.
Let's talk more about oil prices. You mentioned this in your note going back to March, and this is interesting to rewind the clock. 3 weeks into the conflict, you referred to modeling that you did at CNAS with a group of security, energy, and economic experts. The Strait closed 4 to 10 weeks, with 1 to 3 years, you said, required to restore oil production. Once you factor in infrastructure damage, that sends oil from around $65 at the time you said to as much as $200 a barrel before settling back into an $80 to $100 range, which we're actually in right now. Do we still have the potential for $200 a barrel?
I think we overestimated or how much the market, well, maybe I would say we underestimated how much the markets were resilient and the ability to build alternative slack.
But
so
if you've got the
200
Houthis threatening to shut down the Red Sea, this could get a lot more intense.
It could, and a lot of the slack that was in the system 4 months ago, things like the strategic reserve in the United States, things like China reducing its demand temporarily, a lot of those mechanisms are gone. If we go back to where we were at the start of the war and it sustains for a while, yes, I think prices could still really explode. The more likely scenario is, again, we're just in this new normal and prices remain elevated at $80, $90, $100 a barrel, still significantly higher than where we were when all this started in February, and we're all dealing with that. So there's the potential for it to get a lot worse. There's also the possibility that we're just in this new normal of 80 to 90. The only positive thing I'll say long term, everybody's already starting to look for alternatives, build alternative pipelines, find other ways to get the oil out. Saudi Arabia is doing that. UAE is doing that. It's going to take some longer for some other countries like Kuwait and Iraq to do that. They're going to have to, that's like 5 or 10 year kind of propositions. But everybody is now going to look for ways to find ways to get things out of the Middle East without going through the Strait. So over time, this becomes less of a tool of leverage for Iran. It's a depreciating asset.
Well, and of course, there's a lot of political sensitivity around oil prices at the moment because of this conflict. But we also have a lot of political sensitivity around this conflict and Israel's role in it. And I wonder what the view from J Street is right now on the Netanyahu government's continued desire to see more change than has been brought to the Iranian regime and Iran's capabilities, especially at a time and in a week in which the U.S. House had more than 100 Democrats vote to restrict aid to Israel this week.
Yeah, I'd say a couple of things about this. First is, I will just say that Donald Trump is a president of the United States and he makes the decisions to take Americans to war. So it's clear Israel wanted this. It's clear Netanyahu convinced him and pushed him forward on that. It's also, at the end of the day, Netanyahu tried to convince Biden. He tried to convince Obama. They said no. Trump did not say no. So at the end of the day, I put the responsibility first and foremost on this whole disaster on Trump. But it's also true that Israel would like us to go further, and Netanyahu would like us to go further. A scenario where you have regime collapse and total chaos in Iran is good for Israel because they're not targeting, Israel. But it's bad for us and it's bad for the rest of the region. It's so destabilizing. And then in terms of that vote this week, I do think that was a very important moment. I don't think Democrats are looking to walk away from Israel altogether. But I think what that vote said was we need a whole new way and approach to this relationship. For years, the American approach has been to support Israel on all things, no matter what. That doesn't make sense anymore. We need to treat this country like a normal country and have a normal relationship. We need to walk away from the blank check, and we need to get to a place where, we have a more balanced and responsible policy towards Israel. And that's where I think we would like it to go. And also where we have a place where we can support Israel as a Jewish democratic state and support Palestinians and their freedom and their rights to, a state of their own. That's the kind of policy I think Democrats are going to push for, and that's certainly where J Street is.
All right, joining us from J Street, where he is Senior VP, Elon Goldenberg, thank you so much for being with us on Balance of Power on Bloomberg TV and radio as we track developments out of the Middle East, but we're also tracking breaking news here at home, and Bloomberg's reporting that hit just moments ago that Apple is in early settlement talks with the DOJ to settle a 2024 antitrust lawsuit. For more, we turn now to Mark Gurman, our Apple guru, and one of the bylines on this story for more. So, Mark, walk us through what this suit was about, how Apple may have already tried to address it, and what the settlement could look like.
Yeah, so Apple was sued by the DOJ in 2024. The Biden administration at the time was going after all the big tech companies, Meta, everyone got swooped up in this. Apple antitrust violations related to a few things. One was the NFC chip, that's the payment chip inside the iPhone. The DOJ wanted that opened up for any iPhone app, wallet app, finance app to be able to use that chip, not only Apple Pay, Cloud streaming apps were banned, so streaming games over the cloud, the file not being installed on the phone itself. A few other factors related to super apps, so being able to build something like WeChat in the United States. They wanted more interoperability between third-party smartwatches and the iPhone to get some of the same tech you could use with an Apple Watch. Over the past 2 years, Apple has gone line by line, and it has resolved all of those complaints. And so now it wants to settle with the DOJ. And a settlement would look like Apple probably paying some sort of fine, combined with what Apple already did to even the playing field for consumers and rivals.
Just like a rounding error for Apple. I mean, the stock's down 1%. Nobody seems too worried about this on the day that, at least for a moment, topped NVIDIA as the world's largest company.
Yeah, I don't think investors have really cared about this lawsuit from the beginning. I'll be honest with you, it was kind of frivolous, given that 3/5 of the lawsuit was actually about things that Apple had already resolved by the time the lawsuit was filed. Since that happened, they've knocked out the other 2 over the past 2 years. And I'm referring to the 5 items that I listed out in terms of the main bullets as to why the DOJ was filing this suit.
What do you make of the stock recently, Mark? It's not often we get Gurman on the air here. This is like a celebrity journalist who breaks news in his sleep. The fact of the matter is this company has been rewarded for not jumping into the pool and overspending on AI. At one point, people thought it had been left behind. Now it's being rewarded for not taking part?
They're being rewarded for falling bleep backwards into not spending on AI. They've completely failed in artificial intelligence. They're only starting to pick up the pieces. I think there's a lot of optimism on the stock because we've been talking about this major new product portfolio that's coming. Got a foldable iPhone, new home devices, new AI wearables, and I think there's a lot of excitement about what's to come hardware-wise. Remember, 80% of Apple revenue comes from the products, the devices that you can buy, and there's a lot to love about the upcoming stuff.
Well, and of course, the purchase price of those devices is going to be higher because of the memory chip shortage. Right, Mark? Is there any indication that they're going to be able to backtrack on that, or is Apple simply not able to get what it needs cheaply enough at this point?
Yeah, the ship has sailed. Prices are not coming back down, even if the memory situation is resolved. They're going to get some pressure relief on that by moving to memory chips for China-sold phones, in all likelihood, from 2 of the Chinese memory suppliers. Apple has been trying to get sort of a quasi-blessing for the Trump administration on that. I think they're good to go there, so they're testing that. We'll see if it ends up happening. The other factor here is that the products are going to get better. And the other thing to keep in mind is the consumer of iPhones. I don't really know that they care that the price is going to go up a couple $100 in September. They'll pay on installments. They'll figure it out. It's a very...
As long as the camera's better, right?
Well, the camera, but also you got the foldable coming. That's pretty exciting.
That's going to be huge. Come back and see us when that takes place. We don't get to talk to Mark Gurman every day, managing editor for consumer technology, chief correspondent for Apple. And the shares right now, as we mentioned, are down just a bit, 1%. We'll keep tabs on Apple stock as we make our way through the session. We'll assemble our political panel coming up. I'm Joe Matthew alongside Kaylee Lines in Washington. This is Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at a down Friday here with the Dow, the S&P, NASDAQ all in the red. The SOX, however, has turned around. That is the Philadelphia Stock Exchange Semiconductor Index. We did see weakness in semis for much of the morning, but right now that index is up barely, but up under 0.2%. S&P putting it all in context, setting a baseline down 0.6%, down 47 right now. NASDAQ and the NASDAQ 100 index, both lower. NASDAQ down by about 0.9%. The NASDAQ 100 index down 0.7%. But that SOX is important. Again, up now by just about 0.2%. The VIX right around 18, the 10-year 4.54%, and the 2-year currently yielding 4.17%. Gold up $37 the ounce, up 0.9%. Major move for West Texas Intermediate crude up now at 82.26 a barrel. WTI up by 4.2%. Oil traders certainly watching fast-moving developments in the Middle East. Brent crude 87.69. Barrel of Brent up now by about 4.1%. As we heard from our Mark Gurman, Apple and the Justice Department are in early discussions about settling a 2024 lawsuit that alleges the iPhone maker violated antitrust laws. Apple shares, they do remain lower, down 1.2%. A Meta platform said to be in early discussions to lease computing power from its data centers to Anthropic, a deal that could be worth as much as $10 billion over 2 years, that according to the New York Times. Meta platform shares down 2.5%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. At last check, we've got Lucas Herbert of Australia sitting atop the leaderboard at 8 under par. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
Charlie Pellet in New York, thank you so much. I'm Kaylee Lines alongside Joe Matthew in a smoky Washington, and a Washington, of course, that woke up this morning and started pouring through files that were newly unclassified and announced yesterday by President Trump in a primetime address to the nation that focused on election integrity and what he alleges was Chinese meddling in the 2020 election in particular. It's interesting timing, given just about 2 months from now, the president is expected to host the Chinese President Xi Jinping at the White House on September 24th, the same week, of course, as the United Nations General Assembly will be taking place. And there is the question as to whether or not the president's accusations does affect the U.S. relationship with China, and especially the very, at least stable for now, but still questions as to how it will move forward trade detente between the two countries.
I see where you're going with this. It's tariffs, which is something that we haven't talked about in a while following the Supreme Court's ruling. There's been this sort of opaque, or at least hard for me to understand, process to get refunds. And this is something that we've just recently been talking about in the newsroom, needing to update. Remember when Costco wanted its money back? Yeah. This is something that our colleague David Weston is actually investing in and starting to explore, and it's going to be part of this week's Wall Street Week with David Weston, who joins us right now live from New York. David, did Costco ever get its money?
Well, there's been some money given back, I'm happy to report, but a lot of it has not been given back. Yeah. And before we start talking about the next round of tariffs, whether it's China or somebody else, we have to think about cleaning up the mess we had before with those so-called IEEPA tariffs. So we did go back and try to figure out, did those people who paid those tariffs get their money back? We talked to various, particularly smaller businesses who really got hit hard by this. And one of them was out-of-the-box manufacturing, a small business out in Washington State. And Allison Budvarson is the co-founder of that. We asked her specifically how much of her money's been given back and why hasn't she gotten what she expected. And this is part of what she had to say in my conversation with her. Now the Supreme Court has ruled, and there's a fair amount of money, according to press accounts, that has been refunded of those tariffs. How much of that have you realized?
None.
Well, how does that work?
It's pretty frustrating, actually. So I have to contact my vendor, who is in turn waiting for a refund from the shipping company so that I can still pass through that refund to my customer as well. It's just really a big mess all the way around.
But what about now, going forward, putting aside for the moment what's already been paid, has your business largely returned to where it was before the tariffs?
I want to say it's different. So prior to tariffs and prior to the expiration of R&D tax credits, we did a fair amount of work in R&D. That went away. I believe that the tariffs had the effect of slowing down the pace of innovation because there was so much waiting and unpredictability in components. So that really slowed that process down. The tariffs are not doing anything to move the supply chain in the way that they are intended to move the supply chain. The reason is that the tariffs simply aren't high enough to make it painful enough for behaviors to change. I'm not advocating for higher tariffs. What I would advocate for instead is predictability, stability, and then support to regrow those industries within the United States so that we're treating this problem with a carrot rather than a stick.
Listen, Budvarsson of Autobox Manufacturing. We also talked to the wine importer whose name was on the case who actually brought it up. He actually has gotten his money back, but he said nonetheless that those tariffs have changed things forever. And in case you're worried that we'll run out of things to talk about on tariffs, we talked to the woman who runs the public interest law firm out in Chicago who brought these cases on behalf of a lot of small businesses, and they're already preparing them for the so-called 301 tariffs just around the corner. So I'm afraid we're not out of this yet.
Oh, it never ends. David Weston, thank you so much for joining us, of course, host of Wall Street Week, which airs every Friday after Balance of Power at 6 p.m. Eastern Time here on Bloomberg TV and radio. Now, as we mentioned, the tariff question always looms large when it comes to the U.S.-China relationship in particular. And we just saw a headline cross from NBC as the White House press secretary Caroline Leavitt tells NBC, confirms that Xi Jinping's visit to the United States in September remains on track, even despite the accusations against China and its election meddling, allegedly, that the president wielded last night in his primetime address. And that's what we want to discuss now as we turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are back with us. Rick, of course, Republican strategist and Stonecourt Capital partner. Jeannie, a Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Welcome to you both. Rick, this was about China 2020 election meddling that the president says some intelligence suggests happened, not necessarily Russia, which we thought we might hear about, even though it's in the documents, or Iran. I just wonder what you make overall of the 25 minutes that the president spoke yesterday evening.
Yeah, I thought his speech kind of echoed the damaging messaging from our adversaries on trying to undermine our democracy. I thought, where did they get this speech written? In Moscow or in Beijing? I mean, it really was stunning to me, the approach that the president took. I mean, look, let's face it. He was elected in 2016 under a cloud of foreign involvement in the elections. He was well briefed on it. The intelligence community was spot on their concerns. They told him all about it. He had an entire administration to do something, and then is somehow now shocked that China was involved in the 2020 elections. I mean, China hacked our computer system in the 2008 election for John McCain. They also hacked Barack Obama's. So it shouldn't shock or surprise anybody that our adversaries want to undermine our democracy. So I just don't get why he is echoing their messaging.
Pretty wild as well to hear him refer to the 2018 elections, Jeannie. That's not been part of the stump speech until now, but suggesting that it too was compromised by China. So what happens when President Xi comes to town? They have an airing of grievances, or could this still be canceled?
I was just thinking about that, Joe, while I'm listening to you and Kaylee and David talk about Xi Jinping come. And what is Donald Trump going to do? Sit him down and say, wait a minute, you accessed voter files. Now, I know that those are publicly available, and Jeannie Zaino could get them as well as anybody else in the world, but shame on you. And oh, by the way, this was hidden from me by a deep state that was controlled by a DNI director. Oops, where did he go? Oh, wait, he's now my CIA director. I mean, the whole thing is so absurd. I can't imagine even Donald Trump would raise it to Xi Jinping. So what's he going to do about it? Nothing. He is going to meet with Xi Jinping, I assume. He is going to go on his merry way, and he is going to continue to complain about the 2020 election, the 2018 election. And I think Democrats have this all wrong. I think they should be welcoming this. Last night was an absolute joke, and the only people he enticed to get out to vote in November are Democrats worried about his election meddling. So, you know, I hear when Rick says he's, you know, who wrote this speech? you got to think the Democrats did, because that served no Republican that I can imagine is anywhere in this country.
But does it not, Rick, rev up the president's base at least a little bit, try to get them out to vote in a year where he's not on the ballot?
Well, you know, the portion of the Republican Party or MAGA that believes in this kind of conspiracy theories is you know, whether they turn out or not, they're not going to make a difference in the election, right? They're his base vote. They have to turn out, and it's already factored into the numbers that we're looking at, which include, you know, historic unpopularity and what everyone is predicting, a big shift toward Democrats, certainly in the House and potentially in the Senate. So, yeah, I mean, like, we already know that, and I don't think it's gonna. And there's nothing new that the president put on the table last night in this speech that's going to get anybody more revved up. He talks about it all the time. So, what was the difference between having this talk on national television versus every rally that he's done for the last 10 years? So, no, I don't think there's really any cause and effect. I would say the one thing I would disagree with Jeannie on, you know, undermining our democracy should not be a partisan issue, right? We should all say that that's a bad thing to do. It's what really the rest of the world hopes to be, and we need to be that shining star. And I know that is, you know, very unorthodox these days to actually be proud of a democracy here in the United States. But I wish the president, who loves to talk about his patriotism, would endorse democracy from time to time.
You know, it's really interesting. As people watched this, as opposed to listen to it, you'd see the president standing alone behind the podium in front of the classic golden drape in the East Room with a couple of American flags. But if they had turned the camera, Jeannie, you would have seen an audience of 55 people. Once again, the president filled the room with supporters. J.D. Vance, Susie Wiles, Marco Rubio, Todd Blanche, Howard Lutnick. I could keep going on. Wright, Duffy, Loeffler. The whole cabinet was there, along with other supporters, including Bill Pulte, who many believe generated some of the material for the program last evening. But after the president rapped, this is behind the scenes, there was a big round of applause in the room. This is after the cameras are off. And the pooler who was there said the president joked with the crowd, talked about election fraud, America 250, and other topics for another 20 minutes. You just saw the opening act, Jeannie. What does that tell you about the president's state of mind last night?
You know, I have long said these speeches don't work for Donald Trump. He is much better on the stump. He's much better in front of a live audience. I think his handlers were absolutely right to pack that room as much as they could and to try to give him the sense of speaking live. I think they would have been better off not doing a primetime address and letting him do what he likes to do, which is get up and talk and wind and weave and all those kinds of things. So I think that would have been better. In fact, Joe, anything would have been better than what we saw last night. So that's not really saying a lot.
Wow. Jeez.
Jeannie Shanzano, not holding back today, joined by Rick Davis, our political panel on this Friday. Thank you, as always, for joining us here on Balance of Power on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding in the red right now. Chip makers, though, bouncing after a plunge right to the edge of a bear market. We've got the SOX, the Philadelphia Stock Exchange Index, has been swinging between gains and losses. Right now it is lower, little change. Perhaps the key takeaway at this hour, the SOX now down by about 0.2%. S&P down 50, 74.83 where we stand on this Friday afternoon, down by about 0.7%. We've got the Dow Industrials down 230, a decline there of 0.4%. The NASDAQ Composite Index down 0.9, NASDAQ 100 down 0.8%. The VIX right at 18, the 10-year 4.54%, the 2-year 4.17%. Spot gold now higher by 0.9%, 4,010 the ounce. Yesterday we did have spot gold below 4,000. West Texas Intermediate crude 82.29 a barrel. WTI up 4.2%. Barrel of Brent 87.82. Brent crude up by about 4.3%. Among the economic reports out this morning, housing starts in the U.S. surged in June after a sharp drop a month earlier, driven by a rebound in apartment construction. Among some of the home building names, we do have shares of Toll Brothers today. They are trading lower. We've got Toll now down by just about 2.4%. Lennar lower by 2.8%. Pulte Home trading down by 2.3%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. At last check, we do have Lucas Herbert of Australia, 8 under par, sitting atop the leaderboard. I'm Charlie Pellet. That's a Bloomberg Business Flash. Now back to Smoky Washington. Once again, Joe Matthew, Kaylee Lyons.
Smoky indeed, Charlie Pellet, though, of course, you had to experience that in New York yesterday. Millions across the country, frankly, are experiencing it due to those wildfires in Canada and northern Minnesota as well. It is truly quite a moment that we are in. Speaking of moments that we are in, remember the DeepSeek moment from last year and this concern that China was going to make advances on cheaper artificial intelligence and the things that power it and potentially disrupt the U.S. companies involved in this space? Well, now apparently we're in a Kimmy moment, or perhaps a moonshot moment, as we have fresh reporting today, Joe, on a surprise breakthrough from Moonshot, which is a Chinese AI startup, and its new model, the Kimmy K3, which the company says rivals the strongest offerings from OpenAI and Anthropic.
What could be bad with something called Kimmy? It sounds so not threatening, but indeed, this massive new AI model has just gone to the top of the heap here, beating Anthropic's Fable 5, OpenAI's GPT 5.6 Sol in front-end coding tests run by AI evaluator Arena. This has upset the space once again. We call it a moonshot. It's maybe another Sputnik moment for China, and that's why we want to spend some time with Shep, who's with us right now in our studio. Mike Shepard, Senior Editor, Technology and Strategic Industries. This all comes down to the U.S.-China AI race, and if you ask Anthropic, they say China's taken technology from us to lead the way, but of course that doesn't prevent them from winning. How important is this development?
Well, this really is another, as you said, moonshot moment, DeepSeek moment, Sputnik moment. You can call it what
That's a big
you
deal.
will, but it really is another step-level change in China's effort to not only keep up with the U.S., but really assert its own global dominance in this space. And yesterday we did see Xi Jinping, the president of China, lay out his vision and his country's vision for trying to assert that leadership worldwide, calling for a more open and accessible approach for artificial intelligence, one that would be available more widely to the global south, which has long been felt left behind by technological advances in the past, and AI is no exception there. And this development really just punctuated that argument for Xi.
So is this evidence that export controls that are meant in part to hold China back in strategic technology like artificial intelligence aren't working as effectively as the administration would hope?
Well, that's a great question, Kaylee, because the U.S. really has cracked down on making the cutting-edge chips needed to power the training and an actual operation of advanced frontier models as they're known. And to some extent, yeah, that has worked. We haven't seen nearly as many NVIDIA chips get to China. Some have managed to sneak through smuggling and other manners, but really you don't see vast data centers powered by NVIDIA chips in China. But one of the issues that the top labs in Silicon Valley have raised is that, look, in China, they're essentially taking our models, running them improperly at a mass scale through a process known as distillation, and then using the results to build rival chatbots that undercut us. They undercut us on cost, and that means that all that we have spent here in the U.S. To build those data centers here is actually backing China's developments.
Moonshot says it's going to release Chemi as an open weight model before the end of this month. How does that separate it from these sort of frontier models that we talk about so often?
Well,
here in the US?
this really gets to the different approaches that China and the U.S. have kind of picked so far. The labs here in the U.S. have really pushed what's called a closed weight model. In other words, they keep the program, the software, the product on their servers or on servers that they lease or rent, and you pay to access it through an API or through a website. And sort of like if you sign up for Claude, that's kind of what you're doing. With something like DeepSeek's R1 or with the newer product from Moonshot, Chemi K3, you would actually be able to download the model on your own server. Now, what that would mean, Joe, in this case, though, if you wanted to get K3, you and I would have to put together probably $500,000 to $1 million to buy a server big enough to run it.
Wow.
So
do you need Blackwell to run this? Or?
You would need some really powerful server space. If not Blackwell, then maybe a whole lot of Huawei chips, for instance, maybe many more stacked up. But the idea is that you would then be able to download it and run it. Now, some of the other open weight models that have been distilled or broken down for smaller, very specific purposes don't require nearly as much server space. But just in this particular instance, you would need a lot of volume and computing power to run it.
Well, I know I asked you about export controls on chips, but we also saw the slapping on of export controls for some of these models over concern that they could be jailbroken. Do we have a sense as to whether Chemi or frankly any AI model coming out of China has those kind of capabilities or have been able to copy the cyber capabilities of U.S. models?
And this is one of the most urgent questions surrounding these, and this is why Anthropic really reined in the distribution of Mythos back in April, and why the government really tapped the brakes in June on wider releases of Fable 5 and Mythos 5. That has since, those restrictions have since been pulled back. But you also see actually in China discussions of the same kinds of restrictions on models developed there. They are also worried about security and safety, and this is something that came up in Xi Jinping's speech yesterday, that they want to make sure that there are some guardrails in place. Of course, just like here in the U.S., what those guardrails look like, how they take shape, which companies they target, and what kinds of capabilities are they specifically seeking to rein in, that also remains unclear too. And we're going to have to see how that develops. Xi Jinping also called for more cooperation on AI. And now with the president's speech last night, not exactly the U.S. president's speech last night, that was not exactly an olive branch to China. And it really risks precluding any kind of cooperation in this area.
All right. Our senior editor for technology and strategic industries, Michael Shepard, thank you so much, as always, for joining us. And of course, these concerns around potentially cheaper Chinese AI undercutting U.S. companies and U.S. capex in this space is what led chip stocks to be near a bear market at one point in the session. We've rebounded a bit, though the stocks is still down just about 0.1%. Where we're seeing larger moves today, though, is in the oil spaces. WTI and Brent are both up in the ballpark of 4.5% on what is escalating strikes between the U.S. and Iran in the Middle East. And that's where we go next as we turn to Rebecca Babin, a senior equity trader and managing director at CIBC Private Wealth. Rebecca, welcome back to Bloomberg TV and radio. Right now, we're around $88 on Brent, $82 on WTI. If we continue to see this escalation and widening of targets that are being hit, how high could these numbers go?
Thanks, Katie. So I think when we look at the escalation, we need to be really careful of how it plays out. I think the way we go back to, I would say, over $100 a barrel in crude is if the Houthis engage in this conflict, which they have not done so far, and start to target flows that are being rerouted from the Strait of Hormuz into the Red Sea through the port of Yanbu. That would be a very significant escalation and would definitely cause crude to re-rate higher, I think closer to that $95 to $100 a barrel. The second thing that we could see that would spark a rally back to those prices would be if Iran starts to target regional energy infrastructure, including refineries, which they had hit at the beginning of the conflict, or other kind of production facilities. LNG facilities have also been targeted. So I think those are the two kind of flags that the market is looking for, or two signals to say, okay, we need to reprice higher than this high 80s into the kind of high 90s, low 100s. At this point, I think, unless we see that, I think we stay within this kind of 80 to 90 range, as the market has become a little bit conditioned to the fact that these negotiations and escalations can be ebbs and flows and transits and can be dialed back very quickly. And that when they do dial back, the market immediately goes from pricing scarcity, which we're starting to see now, to pricing surplus, which is what we did about 2 weeks ago when we traded back down to around 70.
Everyone's talking about crack spreads at home like they're energy analysts these days, Rebecca, and I'm curious your thoughts on gasoline. We're at $3.98 today. I suspect we wake up to $4 a gallon next week. Is that going to be the price for the summer? And when you look at diesel, do we hold over $5?
Yeah, so you're so right. The crack spreads are the kind of hot topic these days. And listen, there's a reason for it. We have lost about 5% of our refinery utilization through the course of this conflict, as well as in Russia, as well as China reducing their refining utilization. So we have in products here a situation where supply is reduced, demand hasn't come off the way you would have expected with the kind of prices we've seen, and we don't have the buffers that we have in crude in place for products. So yes, I do think at least over the course of the next month, when summer driving season is still in full effect, prices will be around $4 gasoline and $5 diesel. I don't see that reverting quickly, even if we start to see some flows come through Hormuz, just because the Russia constraints have really put another kind of tightening screw into the product market. And the U.S. refiners are running flat out, 96% right now. They are doing everything they can to supply the market and take advantage of these crack spreads. We just don't have a lot of spare slack in the refining system. So I don't see those backing off at least till late fall, and if flows start to resume through Hormuz.
Well, I'm glad you mentioned Russia, Rebecca, because obviously they've seen a number of refineries hit by Ukrainian drones. They banned exporting diesel as a result. And now we have a live conversation on Capitol Hill, a reinvigorated push to pass a Russia sanctions package due to the death of the architect of that, late Senator Lindsey Graham, which would allow for the president to tariff up to 100% countries that purchase Russian energy products. If that goes through and you therefore see less of a desire to buy Russian crude and product on the market, what could the impact of that be?
That's a great question. And the way I'd frame this is Russia, even under the most stringent sanctions package, was able to get crude out to the market through their shadow fleet. So it does sound extreme when we read the headline, and it would absolutely tighten the market. We've had some Russian sanction waivers in place throughout this conflict. They've since been unwound. This would be more aggressive. It would tighten the market, but I don't think it would completely take Russian exports to zero. I think they would continue to find ways to get barrels in the market, and there are buyers that will buy discounted crude, China and India in particular. One reason China has dialed back its imports of crude has been the fact that there aren't as many discounted barrels of Russian crude available. They used to get these discounts under this when they were sanctioned of the kind of dark barrels, and they haven't been able to access that. So it would absolutely tighten the market. I would say would probably add another $5 a premium into the price, but it wouldn't necessarily mean we see a full reduction of exports. The market has become fairly resilient under sanctions regimes, and it all comes down to enforcement, and you have to be willing to spend the money to enforce those sanctions.
It's great to have you back on the program, Rebecca. The Senior Equity Trader, Managing Director, CIBC Private Wealth, Rebecca Babin. Thank you so much for the insights. When you look at the stocks involved here, Kaylee, think back to what Rebecca said about the refiners. Marathon and Valero both hitting all-time highs today, even as the integrated oils pull back. This could be a real trend for them for months going forward.
Yeah, it certainly could. And of course, we'll have a cleaner look on what the ultimate close of the trade today looks like in the late edition of Balance of Power from a smoky Washington here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. Carol Masser, along with Bloomberg News credit reporter Emily Garfeo. Emily in for Tim, who is off on this Friday. And you are joining us on a day where we see chip stocks poised for a bear market, the AI trade continuing to unwind. I'm obsessed with, yes, there's news locally, right? And companies that we watch here in the US, but there's also some news coming out of China, and I really want to get to the bottom of it.
It definitely feels like the market was waiting for a DeepSeek moment 2.0. And are we in it right now? We're going to ask multiple guests this hour, Carol.
It's definitely a theme for us on this Friday as we get ready to wrap up the trading week. So more in just a moment. Also, from the C-suite, as we like to do on a Friday, Samantha Greenberg, CFO over at AlphaSense, she's going to join us with our own Nina Trentman, who writes the CFO Briefing newsletter that comes out every weekend. We're going to talk agentic momentum and also being a platform that makes AI useful in finance. We know a little bit about that.
And we're wrapping up the World Cup. It's not over yet, but as it wraps up this weekend, it's been a ratings boom, we hear, for Telemundo. We'll find out by how much from Miguel Lorenzo, Senior VP of Sports Content at NBC Universal, Telemundo Enterprises. Maybe we'll get his game prediction as well.
Our Sebastian Escobar saying that so many people, he caught something read from AP that everybody is tuning in, even if you don't speak Spanish, because you just love the coverage that Telemundo has been doing. All right, we're going to get to it, folks. A lot coming your way over the next 60 minutes here on Bloomberg Business Week Daily. Let's get you going, though, with a check on the trade. Here's Charlie Pellet.
Hi, thank you very much. And we're looking at a whole lot of red right here with the Dow, the S&P, NASDAQ, all declining. Yes, on track for a losing week after 2 up weeks, but the S&P right now down 61, mid-afternoon 74.71 where we stand, just under 2 hours to go ahead of the close. Right now on the S&P 500 index, looking at a drop there of just about 0.8%. Dow Industrials, they are lower by 287, down by about 0.5%. We've got NASDAQ lower by 1.1%. The NASDAQ 100 index also down by 1.1%. The Russell 2000 index of small cap shares down by 0.4%. Interesting day for the stocks. Last hour, the index, the Philadelphia Semiconductor Stock Index, actually was trading higher, little change, but right now the stocks once again resuming its losses, down now by 0.7%. The VIX now above 18, a 10-year yield at 4.54%, the 2-year 4.17%. Gold up $33 the ounce, 4,009, up by about 0.8%. Crude, major story there. We've got West Texas Intermediate, 82.37 a barrel, up by 4.3%. Traders certainly keeping an eye on developments in the Middle East. Brent crude, 87.93, up by 4.4%. All of this with gasoline heading back to $4 a gallon. Semiconductor shares, as I mentioned, trading lower. Again, bears repeating on the stocks. Right now, that index is down by 0.7%. Among some of those semiconductor names, right now we've got Qualcomm down 0.2%. Applied Materials down 4.5%. Intel lower by 0.6%. Interestingly, though, Micron up by 3.4%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. Now we have Lucas Herbert leading on the top of the leaderboard at 8 under par. Herbert, by the way, from Australia. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along here with Emily Grafeo in for Tim. All right, so let's get to it. There's a lot of stuff going on. As I said, I'm obsessed with some of the news out of China. A surprise breakthrough from Chinese AI startup Moonshot rippling through global markets. We're seeing that play out. It started overnight in Asia. Semiconductor stocks, Charlie just talked about it, sharply lower. We're kind of thinking, is this another DeepSeek moment? You had President Xi Jinping also overnight, his first appearance at China's premier AI summit, lending his support to the country's push to become a global leader in AI. And, you know, you've also got Alphabet tanking. There's another story kind of at play here.
Right. Shares of Alphabet tanking as Google is months behind on schedule on delivering Gemini 3.5 Pro, its most powerful flagship AI model. It's trying to improve its capabilities, particularly in codings. And then the credit markets are also reacting to this AI trade. We got to talk about credit, Carol.
The bonds sold by hyperscalers to fuel their AI ambitions have become a drag on investor portfolios, with falling prices and wider spreads to negative total returns. That is certainly your world. I feel like it's a lot, but it is always when it comes to what's going on with AI. We wanted to check in once again with Mandeep Singh. He's Bloomberg Intelligence Global Head of Technology Research. Mandeep, I feel like we have the same conversation with you over and over again, but there's stuff that keeps coming at us. SK Hynix ADRs too are bouncing around. The Kospi route feels like nervousness continues to grow increasingly out of this AI trade. Is it fundamentally based? Is it valuation based? Is it just a little bit of fear of people being on the wrong side of the trade? You watch the fundamentals. You always remind us what matters. So how do you see it?
Yeah, I would agree with your assessment that it is fundamentals that are still holding up, and it's the valuations and the nervousness around positioning is what is driving this sort of volatility. And look, we know AI being expensive has been raised as a concern by a lot of companies lately. So it doesn't surprise me that, you know, a model like Kimi 3, which is an open rate model, much cheaper to use, is gaining traction. And there are companies out there that have explored using this model, notably Cursor, which is a company that xAI and SpaceX bought. You know, they use Kimi 3 under the covers. And so from that perspective, open source will have some sort of adoption, but fundamentally nothing has changed. Everyone wants to use LLMs. It's just that they were expensive. That's why we had concerns around memory pricing. And, you know, now we are talking about open source adoption, but I don't think fundamentally anything has changed. It's just a function of how folks were positioned when it comes to the valuations, and certain sectors have gone parabolic within the tech space, and you're seeing a drawdown over there.
Mandeep, tell us about this new Chinese AI model, because as Carol and I were discussing just a few minutes ago, it wasn't too long ago in markets that we had that DeepSeek moment, that scare when a new model from a different country comes out and spooks the market. Is this just a DeepSeek 2.0? Is there something different about Moonshot? And when you look at the market right now, is it really reflecting the same type of fear that we saw when the DeepSeek model was released a little over a year ago?
Yeah, I mean, look at how far we have come since that DeepSeek moment. We had a company like Anthropic grow from, you know, 9 billion revenue run rate to 47 billion run rate in 6 months. So that's despite DeepSeek. And so, look, open source gaining traction is something that has carried forward. I should stand corrected. It's open weight, not open source. But all these companies are looking for ways to reduce their, you know, inference pricing, which is very expensive for frontier models. And we have been compute constrained. Those are the things that reflect the fundamentals. Everything else around, you know, nervousness around DeepSeek and new types of models just shows that there is a lot of investment being made. Companies are exploring how to reduce their costs, but they want to consume more capacity and deploy as much of LLM functionality as they can. So from that perspective, the fundamentals are still good. And that's what's reflected in the revenue run rates of these companies and the demand that we have seen, you know, in terms of the backlog. And we'll hear more from hyperscalers when they report, you know, over the next 2 weeks in terms of how they're guiding around their CapEx numbers.
All right, so we're gonna talk a little bit more too about the China angle with a member of of our AI team in just a moment. But I want to talk about one of the hyperscalers, and as you said, we got to watch and see what they say on earnings. But we've been watching shares of Alphabet. Stock has been down almost 3.7% at its lows today. Down right now, still about 3%. Talk to us about this news. We highlighted yesterday late the delay of that Google Gemini launch. What do we need to know about this? What does it indicate for Alphabet and more broadly for the AI story?
Yeah, I mean, this is such a fast-moving space that if you have a delay in the release of your model and your competitors have rolled out, you know, new models that are getting a lot of attention, like Kimi 3 did with, you know, some of the new functionality in terms of coding agents and established use cases, that is where Alphabet, because maybe they lost, you know, some of their key researchers on the LLM side, that may have had an impact. I don't know the reason for the delays, but for a frontier model company like Alphabet that has a lot going for them in terms of the chip side and, you know, the cloud business, a delay of the model is certainly a setback. I do think they will release something soon, but for now, I think it's right to see that getting reflected, because you can't afford to, you know, not be on the frontier if you're a hyperscaler right now.
All right, so Mandeep, a good buddy, you're watching the World Cup this week and turns to you and says, Mandeep, what the heck's going on? Like, should I pull all my AI investments? What would you say?
No, I think you just got to write out these volatile phases. And look, there may be some changes in terms of what's going on in the memory complex. If Apple is like they're looking to get CXMT qualified for use, that is a big deal. Now, those are the type of things that have a bearing on the market. But on the demand side, when it comes to LLMs and the need to deploy LLMs and inference tokens, that I think will hold good, because everyone knows that there are established use cases around these LLMs.
All right, so I'm going to read that as Mandeep Singh saying, take a chill pill for a little bit, everybody. All right, Mandeep, thank you as always. Have a great weekend. Mandeep Singh, he's Bloomberg Intelligence Global Head of Technology Research. We lean on him so much, and we did a lot this week because of the news flow. Hey, we're going to stay on tech, Emily and I, and the AI build, trade, and threats and concerns. I want to go a little bit more into what is going on when it comes to China and AI. I'm like, perplexed, and I know Mandeep just addressed it. Let's get to a member of our team on the AI Watch. That is Seth Fiegerman. He is Bloomberg News AI editor. Seth, good to have you here with us. We just talked with Mandeep about the trade today, the news out of China, President Xi kind of being all in, no surprise, right, when it comes to building up China's presence in AI and moving along. The AI race and nervousness from you and the team's reporting, what's your take on all of this? What are you hearing from those in the industry?
Yeah, I think a lot of the narrative for the last year and a half post DeepSeek was that we were seeing Chinese rivals put out credible models for lower costs that can undercut top US AI firms, but we weren't really seeing any of these firms compete at what they call the frontier, the absolute cutting edge of AI technology. And so I think part of what's jarring about this announcement, at least at first blush, is whether Kimi and Moonshot are now at that level. And I think there's mixed reactions in the industry so far as we continue to report this out. And there's a joke sort of that, it takes the worst time to review a new model is the day it comes out. You need to kind of live with it and see how it kind of socializes and gets used day by day. But it's clear that the capabilities of this model from what they publicly disclosed match or exceed those of models from US firms that were released as recently as a month or two ago. So suddenly the question is China 6 to 12 months behind, as some had thought, or is it really just 1 or 2 months behind? And the difference could be pretty monumental.
And talk about just what makes the product so competitive, because it's not just competitive on price, right? They're going for more of a premium kind of high quality model and looking to attract buyers who maybe aren't as price sensitive.
Yeah, this is, as you said, priced like a premium model. I think is the most expensive model that we've seen come out from China at this point, certainly among the open weight sides. It's comparable to some of the mid-tier offerings from Anthropic with its Sonnet models. This is a little bit different than what we've seen with DeepSeek and others, where it's really and fully a pricing game. What this is more saying this model can compete on the more advanced tasks, the agentic task, doing coding, for example, which has become really the lucrative and key selling point for AI technology right now. And again, it comes at a moment when we're hearing more and more that there's cost consciousness emerging among developers and businesses of how much they're spending on AI models. And I think there's a growing awareness that maybe you don't have to bet entirely on one model. Maybe you kind of have a little bit of a buffet of models that you rely on, and you can use different ones for different tasks. You may not need the absolute top of the line ones for every task. That way you can save costs. So if it prices at a premium way and starts to draw away customers who might have turned to top of the line offerings for those AI agentic tasks, that could be a meaningful hit to some of these US firms.
Seth Fiegerman, you guys follow this stuff inside and out, but I keep thinking about the EV race and the EV industry and how China is now what we are talking about, kind of non-stop, high-end, low-end, more affordable. And so I do wonder, China's lead when it comes to EVs, is that kind of a lesson for the US and kind of for everybody who's looking to stake their place when it comes to AI?
It's funny that you mentioned it, because again, I think that the sense has been that China is following a playbook that it's used in other industries, that it's flooded the market with more affordable models. And at least until today, the thinking was it didn't have to have the best model. It could still siphon away meaningful market share. and potentially destabilize or undercut U.S. firms who are trying to make as much money as they can to offset their heavy investments here. But with this model, I think the question becomes not just whether they undercut you on price, but whether they actually are able to create comparable capabilities that compete at the cutting edge tier of AI development. And we're still not quite there, but we could be heading there sooner than we thought.
What is that going to look like in practice? How are investors going to be able to judge when they look at the various LLMs that come out of China? Is China just catching up to the US, or are they actually surpassing the US in the technology?
I don't think anyone yet thinks that China has surpassed the U.S. But the narrative until today had been that we thought China was a bit further behind than they might have been. Now, again, this is early days. This model just came out. People need to play with it. And one of the challenges throughout AI is that there's not always agreed upon benchmarks and leaderboards to really say this one is definitively better or worse than that one. But the initial tests that they publicize certainly suggest that it ranks near the top of models out there, but still behind the most recent offerings from OpenAI and Anthropic that came out in the last couple of months. So again, China has not surpassed the U.S., but it is certainly competing at a closer neck than we might have thought.
Listen, the team, though, reminding us that Airbnb runs a mix of Chinese open source models along with Western vendors. Pinterest touted their utility. Even Microsoft, one of OpenAI's biggest backers, CEO Satya Nadella saying he's considering using DeepSeek models in its Copilot Cowork product. So yeah, I get it. And I feel like there is now the discussion of where are cheaper models. And you're right, not everybody needs the top of the line because it's expensive. Having said that, are there security issues? Where's the U.S. government? Do companies need to be concerned that the government is going to maybe clamp down on this?
Yeah, I mean, I think there's a couple of different ways to answer that question. One is that the Trump administration, if they do feel that China is on the cusp of overtaking the U.S., might decide that that in itself is a national security concern and weigh whether it makes sense to have more restrictions there. The other is, and I think this comes more from the AI labs in the U.S. and certainly companies like Anthropic, that a lot of this year has been defined by models that are more advanced at, say, cybersecurity capabilities and what the risks are there. And the belief has been, well, if Anthropic is the market leader, they can help kind of set precedents around what steps should be taken, what safeguards should be offered, and ultimately they can deploy their models to trusted partners first before other bad actors might exploit them. If we enter a world where China has one or more models that are more advanced or equally advanced than what we have from, say, Anthropic, would they follow those same precautions? And if they don't, what might be the societal impacts of having a widely available, more advanced open source model through a Chinese firm that hasn't gone through that same rigorous safeguarding process? We're not there yet, but those are questions I imagine folks would be asking.
A lot of questions, right, with everything and anything to do with AI still as we move forward. Hey, Seth, thank you so much for jumping on with us. Seth Fiegerman, he is Bloomberg News AI editor, joining us here on Bloomberg Business Week Daily. All right, I'm Carol Masser, along with Emily Grafeo. Coming up next, our weekly view from the CFO suite, from a company that says it's not just a search engine, it's the CFO of AlphaSense stopping by. They're going to talk about what they're doing, their platform.
Are they going to go public? Are they going to remain private?
It's been a good market, but don't talk to SpaceX right now. Actually, we get to that in our 4 o'clock hour. All right, stick around. Emily and I are coming back to you right here on Bloomberg Business Week Daily.
It's 2:20 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all remaining in the red. We're on track for a losing week for the U.S. equity market. We're also looking at wild swings hitting chip makers. Right now, the SOX, the Philadelphia Stock Exchange Semiconductor Index, is down 1.5%. Briefly, it was positive earlier in the session. S&P, putting it all in context, now showing a loss of 1%. Again, on track for a losing week. We've got NASDAQ down 1.3%, with the NASDAQ 100 index full of big tech names down by 1.3%. The Bloomberg Mag 7 index also trading lower today, down by 1.8%. The VIX now above 18, a 10-year at 4.53%, the 2-year 4.16%. Gold is up $35 the ounce to $4,012. Spot gold up 0.9%. West Texas Intermediate crude continues to push higher as traders keep an eye on Middle East developments. WTI now up 4.7%, 82.62 a barrel. Barrel of Brent, the global benchmark, 88.13 right now, up by 4.6%. Apple and the U.S. Justice Department are in early discussions about settling a 2024 lawsuit that alleges the iPhone maker violated antitrust laws. Our Mark Gurman says the discussions are active, but there's no guarantee that the two sides will reach an agreement. Apple shares today, they are trading down by 0.2%. Meta Platforms in early discussions to lease computing power from its data centers to Anthropic. It's an agreement, an arrangement that could be worth as much as $10 billion over 2 years. That, according to the New York Times. Meta Platforms, part of a broader tech sell-off, down now by 2.5%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. Atop the leaderboard right now, Australia's Lucas Herbert at 8 under par. Recapping stocks lower, S&P down now by 0.9%. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Well, Bloomberg's Nina Trentman recently writing in the CFO Briefing newsletter about global IPOs being strong in recent months. It's certainly something, right, we've been talking about a lot, how the IPO market has come back, and then SpaceX didn't help or hurt.
And there's more coming down the pipeline as well, potentially.
Yes.
There are planned ones, Anthropic, OpenAI, I mean, those are the big ones.
Yeah, so like the market has finally opened up. She pointed out first-time share sales through July 10th up 250% from the prior year period, according to data compiled here at Bloomberg. One company that might be moving and working toward that is AlphaSense. It's a market intelligence and AI search platform whose CFO, Samantha Greenberg, was recently highlighted in the newsletter talking about it. So let's get to it and let's get more. Samantha joins us right now. She is, again, AlphaSense CFO. She joins us from New York. She held leadership and portfolio management roles at Citadel, Goldman Sachs, Paulson & Co. She also founded the investment firm Margate Capital Management, growing it into the third largest female-run hedge fund in the United States. So, Samantha, great to have you here. Also with us is our Nina Trentman, Bloomberg News senior editor of the CFO Briefing newsletter, which you can subscribe to at bloomberg.com/CFO/briefing. Welcome, everybody. Happy Friday. Samantha, I want to kick it off with you. And we do want to talk about that possible IPO. But first up, you guys say your platform makes AI useful in finance. Talk to us about that. That is something certainly near and dear to us here at Bloomberg. Remind us, too, exactly what you do.
Yeah, the quick answer is we are an AI market intelligence platform, and we're vertically integrated, which means we solve the full stack of automating research all in one place. We've aggregated and indexed the world's most valuable business content. We've built a context graph on top of that. We've built the AI orchestration layer and tools for reasoning and synthesis, and workflow agents that agentically perform entire research workflows in one click. And importantly, and this is a theme we're seeing in how the markets have acted recently as concerns around the cost of AI have emerged, because we, AlphaSense, own the full stack, we're able to optimize the system so that AI harness, tools, context graph, and data all work seamlessly together. And that not only makes searches and research smarter, it's a much more token efficient solution. And lastly, today we serve around 70% of the S&P 500, half the Fortune 500, 7,800 customers across all segments of the economy.
Yeah, Samantha, nice to have you. I'm just wondering, you just closed another funding round. How much more should we expect before you're considering an IPO? I know that that it's on the agenda for the company at some point.
Yep. So so as you noted, we recently announced a $350 million fundraise, nearly double the valuation of our last round. We also announced a large partnership with Accenture, where our AI market intelligence and workflow automations will be available to Accenture's enterprise transformation clients. And sharing our excitement about that partnership, Accenture became a large investor in the fundraise. And so today we are focused on accelerating our product roadmap, expanding rapidly internationally, and continuing to drive innovation, and just really pleased that that product innovation and momentum are recognized by these top tier investors. And lastly, we recently announced Super Analyst, which we believe is the next step change in the value and impact of our platform.
Just to follow up on that public market idea that we put out, and then you and I have talked about this before. I'm wondering, sort of in this current environment, of course, there's a lot of companies that have AI products and that are offering those to enterprise clients. I'm wondering, if you were to be a public company, what would that do to your relationships with customers?
Yes, great question. So, you and I have spoken about the ingredients that companies consider in coming public. There has to be really compelling commercial logic, and then totally outside of companies' control, it's what's happening in the regulatory backdrop, macro market conditions, and so on. So on the commercial logic side, we, like many other companies, I'm sure it's not lost on you all as a financial audience that the number of public companies is down 50% from the 1990s, and that's because companies like AlphaSense have had no trouble accessing capital in the private markets and are getting larger and larger in the private markets. But as you think about where we sit today, selling to half the Fortune 500, the business increasingly international at 21% of ARR and rapidly growing, it certainly makes sense in shortening sales cycles. And this is true generally for companies, for international customers to not have to make it easy to diligence one's financial health by simply being able to pull an SEC filing. And similarly, while most of the innovation on our platform we've built, over time, we've made some very successful acquisitions. And again, the public markets give you that permanent capital and that at-the-ready acquisition currency, and that makes a lot of logical business sense too. So
wait. So the scale, is it tipped in favor of the IPO or not the IPO?
You would have said that's a board decision. And along those lines, this SEC proposed rulemaking is groundbreaking for private companies. It's the most significant regulatory advancement we've seen in 20 years with respect to Sarbanes-Oxley, and it explicitly removes a lot of the particularly onerous, just very expensive administrative burdens that companies have to consider in coming public.
So we talk about kind of the willingness to access capital for private companies. I'm wondering about how you're thinking about credit markets right now. Is it better to access the public bond market or the private one? There's a lot of talk right now about the growth in companies of all shapes and sizes going to the private debt market.
Great question. So fundamentally, CFO's job is to increase value creation for shareholders, and that means optimizing the cost of capital, and credit can be a very attractive tool along those lines. I will say we are primarily equity financed. So like many other tech companies, I suspect that the credit side will always be an important but much smaller part of our financing. But it has been fascinating to watch the emergence of private credit. It has become an extremely attractive source of financing, particularly for businesses that have a large TAM, really attractive unit economics. The private credit market is just as discerning in recent months as the public markets. So you need to have that right combination of growth, market opportunity and unit economics. But so long for companies that do, the private credit markets remain quite open alongside the public credit markets.
So wait, so then are you tapping private credit?
We have in the past. For now, and as you look at our financing history over the last year, we've primarily looked to equity finance the business, like the $350 million fundraise.
Samantha, one thing we talked about is your plans to expand internationally, use some of the funds that you raised for that. What does that entail, and which markets do you think are the additional ones that you want to tackle?
Yeah, great question. We are expanding in hubs and markets like London, Singapore, India, opening facilities in Sydney, Australia. So I joke that even AI companies have actual facilities, and so we are rapidly expanding in any number of different markets internationally, and that also includes our go-to-market engine and our customer success and sales engineering motion, as well as product and engineering.
What's your CapEx spend? And I'm just curious how that is impacting you or the cost structure of that.
Yep. So as an AI native company, our capital expenditures, are fairly low.
Okay.
Most of our R&D spend, which is quite significant, goes directly into building and shipping product.
Okay, that makes sense. Just to kind of clear it out when we are talking so much about AI and anything related. Just to wrap up, we've got about a minute or so.
I'm just curious, thinking about the current market situation that we talked about earlier. I'm wondering, of course, you have a business that gives you a little bit of visibility into contracts a little longer. I'm wondering, sort of like, what are the implications that you see from these market volatility related to AI? Does it impact your business, and if so, how?
Yeah, I think that's such a great question, Nina. So one of the things you can see loud and clear in the market action this week, but in the last couple months generally, I would say a theme that jumps out is that this era of AI at all costs is over. And in fact, enterprises are demanding evidence that their AI spend is actually producing returns. And there's this laser focus now. It's almost like waking up in a departed reality versus where we were 6 to 8 months ago, where there's laser focus on token efficiency and how to manage AI compute and token costs. And that is the ideal backdrop for exactly what AlphaSense's core value proposition is.
Yeah.
Because we're a vertically integrated platform, that's token efficient.
All right, we got to run. Hey, great to check in with you. AlphaSense CFO Samantha Greenberg. She's highlighted in the recent CFO briefing newsletter. A new one is out this week, and our thanks always to Nina Trentman. She's Bloomberg News senior editor of the CFO briefing newsletter. Find it at bloomberg.com/CFO briefing. World Cup is up next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks do remain in the red, on track for a losing week for the S&P. Right now, 74.61 where we stand, down 72 on the S&P. A drop right now of just about 1%. Dow Industrials trading lower by 354 points, down by about 0.6%, while NASDAQ is lower by 1.3%. The NASDAQ 100 index down 1.3%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down by 1.2%. Has been bouncing around. Earlier in the day, we did see the stocks higher briefly, but right now looking at a loss of just about 1.3%. The VIX below 19 now, with the 10-year at 4.53%, the 2-year 4.16%. Gold is advancing $34 the ounce, up by almost 0.9%. 4,010 where we stand on the precious metal. You recall yesterday we did see gold trading below 4,000. West Texas Intermediate crude now up 4.2%, 82.25 a barrel. Barrel of Brent 87.83. Brent crude up by about 4.3%. SpaceX shares remain lower. In fact, not just lower, but below the IPO price after the aerospace company scrubbed their first Starship launch since its IPO, citing engine failure. Shares of SpaceX right now down by 4.6%. Round 2 of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, we are looking at Australia's Lucas Herbert topping the leaderboard at 8 under par. I'm Charlie Pellet, and Bloomberg Business Week Daily continues now. Back we go once again to your hosts, Emily Grafeo and Carol Masser.
All right. Charlie, thank you so much. Hey, hard to believe. The World Cup wrapping up this weekend. I kind of can't get my head around it.
Who are you rooting for? Are you allowed to say?
No, I'm not going to say.
Oh.
Sebastian, who should I be rooting for?
Spain. Give Spain a chance.
Yeah. Okay, give Spain a chance.
If you already won, just
well, I have to
recently.
say, it's been fun to be around the newsroom. People are watching everywhere. They're watching their phones, streaming networks, you name it. And as AP reports, every match of the tournament has been available for U.S. viewers in English on Fox or FS1 or Telemundo or Universo in Spanish. And there are streaming options such as Fox One or Peacock. And what caught our attention from this AP story, thank you, Sebastian, for pointing it out for us, that the American Spanish language TV network owned by NBC Universal, we're talking about Telemundo, points to Nielsen ratings to show that roughly half the World Cup viewers in the United States have watched at least some portion of some matches in Spanish. We wanted to know more. So joining us to talk about it is Miguel Lorenzo. He's Senior Vice President of Sports Content at NBC Universal Telemundo Enterprises. He joins us from New Jersey. Also with us is our Vanessa Perdomo Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. She joins us right here in our studio. Welcome, Miguel. Great to have you here. Sounds like it's been a great run this round of the World Cup. Tell us about the ratings, who's watching, and how do you know that roughly half of the World Cup viewers in the U.S. have watched at least some portion of some matches in Spanish? Talk to us about that.
Sure. Well, thank you for having me. The audience in this World Cup has been an amazing story, and I think it speaks to many things. It speaks to certainly Telemundo and Peacock's coverage of the World Cup across many different platforms. I think it also speaks to the World Cup tournament itself, whether it's the expanded field, where there's more teams and there's more games, the legends like Messi and Ronaldo, the stars of the World Cup. And we can't discount the fact that it's a World Cup taking place in our backyard, in our communities. And a World Cup that is a world away is still interesting to all audiences of soccer. But when it's taking place in your country, it's hard to replicate that excitement, knowing that whether there's matches in your city, in your communities, watch parties, it's another level to it that we haven't seen since the last World Cup here in 1994. And certainly, whether it's on social media or through our coverage, the response from audiences with these matches have been amazing.
Miguel, obviously one of the things we can't ignore when we're talking about Telemundo is the iconic voice of Andres Cantor. I mean, everyone knows that goal, everyone knows what that is and everyone knows from. Do you think that's one of the reasons why people are so invested to tune into Telemundo? Because even people who don't speak Spanish are tuning in.
Absolutely. Hispanics are about 20% of the U.S. population. Yet, as you mentioned, nearly half of the World Cup audience in the United States has been on Telemundo and Peacock. And so the excitement and the passion that our talent and that our production brings, Andres Cantor certainly being one of them, it's certainly one of the reasons why audiences are watching on Telemundo. Andres is a very important part of it, and certainly, his calls of these various Argentina comebacks have been very viral. But
the last one, he almost lost his voice.
I love that.
We joke with him like he needs to really make sure he's taking care of his, drink some honey and some lemon. We got to save you. There's a lot of games to go through. But it's been him. It's been other talent on the team. I mean, we've had some major names join our team, whether it's Andres Guardado, Carlos Salcido. These are big names with the Mexican national team that have played with that team. And we saw when Mexico beat Ecuador, the Mexican team came over and started throwing them up into the air in celebration. So there've been so many great moments like this. Maxi Rodriguez is another one. Messi has given him like a celebratory hug before every game. It's worked out. It's been good luck because obviously Argentina has made it this far. So when you look at all of our talent and all the excitement that they bring and the passion into that coverage, and that's just not just during the game, but everything before and after and everything happening across our platforms, it's no surprise that to us that audiences are gravitating towards our coverage and watching these matches on Telemundo.
Hey, Miguel, so the Spain versus Argentina match, this is featuring two Spanish-speaking teams facing off in the World Cup for the first time, World Cup final, since 1930. What are the expectations? Are we going to see record viewership? Just talk a little bit about, what to expect for the game.
Yeah, I mean, any World Cup final is a dream scenario, but it's extra special for Telemundo and our audiences that the final features Argentina and Spain. I mean, these are two teams with massive followings, a tremendous history. It's the defending world champions against the defending European champions. That's never happened before. The possession dominance of Spain, the overwhelming will of Argentina, and of course, arguably the GOAT, Messi. Spain is the slight favorite, but I don't see how you can doubt this Argentina team with the way that they've come back so many times in this World Cup. This really does set up to be one of the greatest World Cup finals in history. And we certainly think we're going to set some records in this final come Sunday.
Miguel, after the World Cup, finishes up, we're going to be very sad. I'm going to be very sad. But obviously, we're going into the rest of the soccer season. Telemundo has some Liga MX games, as well as just signed a deal with Bundesliga to have some Spanish-speaking, telecast for that league. Tell us about all of the other soccer people can tune into on Telemundo once the World Cup is over.
Absolutely. I mean, Telemundo is home of the biggest sporting events in the world. Obviously, now with the World Cup, we have the Summer Olympics in 2028, which of course include men's and women's soccer. We're the home of Premier League, along with NBC Sports. You mentioned Bundesliga, which we announced earlier this week. We have a couple of teams in Liga MX, Chivas, Tigres, and Juarez. And Telemundo is also the Spanish language home of U.S. soccer for the men's and the women's team. So there is a lot of soccer coming down the pike, even after this World Cup, that we're really excited about. And having not just Telemundo and Universo, but Peacock as our streaming platform to be able to distribute all of this high-class and elite soccer properties for our audiences is something that we're excited about.
All right, so I've got to ask you, and this is courtesy of our Sebastian Escobar, because there is this running joke, as you know, Miguel, I think, on social media, that all the English-speaking fans who switched to Telemundo for the World Cup are now hooked on their primetime telenovela, El Señor de los Cielos.
Very nice.
Thank you. Muchos años, yo estudié. Are you tracking this telenovela fan crossover? I'm just curious. And Sebastian, by the way, is a fan of the show. I did not know that about him. But anyway, are you tracking this crossover?
Yeah, absolutely. I mean, if you've seen our World Cup coverage, we certainly were promoting El Señor de los Cielos, Operación Triunfo, El Turco, a bunch of Spanish properties that are really important for Telemundo that launched on July 7th. So we're certainly tracking it. There's been a lot of great crossover from World Cup audiences watching these properties on Telemundo and even also on Peacock itself. We've seen a lot of World Cup audiences on Peacock sampling and trying other non-World Cup content. which is actually really impressive when you think about it, because 104 games, that's a lot of commitment for World Cup soccer fans to watch. That's a lot of hours of soccer. There's not a lot of time left in the day, and so they're still finding time to watch these other properties. There might be some agreements there with wives and husbands, some trade-offs, because it's a lot of commitments for soccer this summer. But we're absolutely tracking that, and it's been great to see.
So after this World Cup winds down,
speaking of commitments,
what are you guys going to be thinking about for the next few World Cups? Is Telemundo interested in securing the media rights for the next one, the one after that?
Right now, we're just focused on producing Sunday's World Cup final. And let's not forget, we also have a third place match. We've talked about the final, but we do have a game tomorrow in Miami between France and England. So our focus is there. If I can, maybe Sebastian will appreciate this, but if I can quote a go-to athlete response, we're taking it one day at a time, and we're focusing on what we have in front of us these next 2 days.
Miguel, I think one of the other interesting things when we're talking about France and England is that game is just as competitive almost as this Spain and Argentina game. Some people saying that it actually could be the final. Do you expect to see viewership for that as well as just as high as the final almost?
Well, I don't know that we would see it just as high as the final. The final is on its own level. But we're certainly going to see tremendous audiences for the third place matchup. And I think for a lot of reasons. One, as you mentioned, it's England and it's France. These are two elite teams. They have some of the biggest stars in the world, whether it's Mbappe or Harry Kane or Jude Bellingham. One of the other things that we've seen in this World Cup is the tremendous viewership that we've seen across these 104 games ultimately hasn't been tied to one particular team. Absolutely, we've seen record and historic numbers for Mexico, for Team USA, but it's really been across multiple teams. It really speaks to the quality of play in this World Cup. Matches with England have set records.
Yeah.
I mean, Cape Verde, Cabo Verde, those were some of the best World Cup matches in this tournament. And before the World Cup, a lot of people didn't even know where they are on a map. So, yeah, we definitely expect great audiences for this matchup tomorrow between England and France. But, the World Cup final, it's in its own category.
Hey, Miguel, just got about 30 seconds left here. Any regret not cashing in on the hydration breaks and running ads during them?
None at all. We have monetized the hydration breaks, and we made a commitment to our audiences to stay on the feed as soon as the game starts, make sure that audiences don't miss any moment of the action. And it's actually one of the many things that audiences have come back to us as positive.